Yes, and day 1, day 2, and day 3 of the DT fast track course. Looking to start, and pretty exciting a day because something which is pretty scary for most CA students, PGBP, will happen today. But don't worry, guys, I have got you guys. I'll tell you a very different way of doing PGBP revision that will happen today. We also started clubbing of income concepts period. One small concept I want to explain to you guys, which I will do right now. And after that, guys, we can do clubbing sums. We'll start with that today. So clubbing sums and that little concept we'll do. Then we will move on. I hope you have looked at some sums which were supposed to be looked at. Whatever you can do. I'll tell you the agenda for the next day already. So if you can go through your own books, your own notes, wherever you studied from, or you studied from my books, then go through it and come to class. So better discussion will happen. Clubbing sums, PGBP, and if possible after that return of income, we will try and do whatever maximum. Good that we started a little early, so we can also end at a decent time. Yes. While we are at this, let's try and see what is clubbing of income, guys. There is a section called 64(1) that if you transfer asset to your spouse, will the asset come back? No. Asset, no. Income will come back. Only which level, guys? First level. Not the second, not the third, not the fourth, only the first one. And if there is any CN, do you remember CN? Control and that not linked, then will that amount also come back? Yes. Do you remember butterfly? Yes. Both husband and wife both have what interest, guys? Substantial control. Then that income will be taxed in one person's hand, whoever is higher. And we also saw business. If you transfer any asset, or in fact even give cash to your wife, or wife gives it to husband and they introduce in business, will it be like a partnership firm? Yes. But proportion to be seen on which day, guys? 1st April. Next, guys, 64(1) was also for son's wife, not very important. Next, 64(1)A was for minor children. Every income of minor child will be clubbed in the hands of the higher parent. Make sure you minus 1,500. For child, there is no first level. Every level you have to see. But SIM income, no clubbing. It will be taxed, but no clubbing. And disabled minor child, also no clubbing for any incomes. Yes, minor married daughter is minor child here. Next, 64(2) is with HUF. This has come in the exam. We'll be solving exam questions today. That when you transfer asset to HUF, whether HUF is partitioned or not, will the income come back? Yes. Which income will come back? The first income or the final income, guys? Final. After you compute, example, house property, will you give all the 3 deductions? Yes, and the final amount will come back. Exempt income will never be clubbed. Alright, these are main concepts, guys, here. And how do you identify in the exam? This sum is from clubbing, guys. They'll give you a husband, they'll give you a wife, and they'll give you a minor child. And they'll give you incomes, and you have to figure out the income. Yes. Now I want to move to one small thing, that how is it possible that every time I transfer an asset, income comes back? So the government says, then how do people donate money? Example, I am Narayan Murthy and I want to donate shares to a trust. Yes, who am I? Narayan Murthy. I want to donate what? Shares to a trust. Now, if I donate shares to a trust, you are saying that a dog will always go back to its owner. So they say, no, it doesn't work like that. It works like that only in 4 relations. Spouse, son's wife, minor child, and for everything else, they have made 2 kinds of transfers. One is called revocable transfer. Which transfer? And one is called irrevocable transfer. Let's first see irrevocable transfer means. Irrevocable basically means you can never get the asset back. So this is Narayan Murthy. He is donating shares to Tirupati Trust. Which trust, guys? Tirupati Trust. Now who has the shares? Tirupati Trust. Is it an irrevocable transfer? Yes. Means can Narayan Murthy ask for the shares back? No. Now the dividend from these shares will be taxed in whose hands, guys? Tirupati Trust. So in case of irrevocable transfer, repeat, which is the word? Irrevocable transfer, will the income come back? No, never it will come back because these are pure donations, pure gifts. Yes. On the other hand, guys, it is a very smart move. You are making a revocable transfer. What kind of transfer? Example, this is me and I am transferring some debenture, some house property to a friend. And this is revocable transfer, means I have the right to take it back. That's revocable. Revocable has 2 things called RB. What is the shortcut, guys? RB. You have the right to revoke, means take it back, or you have the right to enjoy the benefit. Repeat, you have the right to enjoy the. Then that kind of transfer is called revocable transfer. Example, guys, if it's my house and I've given it to a friend of mine, yes, the income should go in whose hands? Friend's hands. But the government says, what kind of transfer is this? Revocable. You have the right to take it back. You still have some control over that asset. So in this case, will clubbing apply? Yes. So the only time clubbing will not apply, it's when an irrevocable transfer. I am giving you some examples. You tell me, does it sound like revocable or irrevocable? People online can also participate. I am transferring some shares to Tirupati Trust and I can never get them back. I'm giving a building to an NGO, and the rental income from the NGO building will never come back to me. I'm giving shares to a friend with the right that I can take the shares back. Revocable. I'm giving shares to a friend with the condition that dividend will come back to me. Revocable. Benefit also. I'm giving shares to a friend with the benefit that 20% dividend will go to my mom. Revocable. How much percent? 20%. No. Even if it's part, the entire transfer is revocable. So guys, hear me out again. I'm giving shares to my friend. Dividend 20% will go to my mom. This transfer is revocable transfer, not 20%. Full transfer is revocable, and any incoming coming to my friend will come back to me because revocable transfer clubbing applies. So please tell me the only transfer where clubbing does not apply, guys. Irrevocable. Now something very sentimental happens in the exam paper. Watch this, guys. There is a person called A who has an FD. Guys, who has an FD? A. FD of 10 lakh, interest of 2 lakh. Now A says, listen, yeah, this is B. He works in my house. This is his child. He calls up the bank that, listen, bank, I have an FD of how many lakhs? 10 lakh. Interest you pay me how much? 2 lakh. You don't pay me interest, pay the interest to the guy's Mr. B's child. Everyone. Complicated? No, different. Everyone. Who is the person? A. He has an FD of how many lakh? Interest of how many lakh? This is the B. Let's say he's a servant in the house, or he's a maid in the house, or working in the house, and the child, let's say this is B's child. I call up the bank. I don't want the interest. Pass the interest to whom? Child. Is the government understands sentiments? No. The government has a very clear philosophy. If there is income, there will be tax. How much is the income? 2 lakh. They only say that this is not the child's income. This is whose income? A. So it will go back to A. Yes. Confused. Okay. We'll take another reference. This is Mr. A. This is his brother. Guys, who is it? Brother. He has an FD of 10 lakh, interest of 2 lakh. Guys, you're not getting to the basics right. You get your basics right, you'll get the answer right. Guys, who has the FD? A. Interest 2 lakh. Will it be taxable? Yes. He calls out the bank that, listen, bank, I have an FD with your, I don't want the interest, give it to my brother. Give it to whom? Brother. Everyone, is it spouse? No. Is it son's wife? No. Is it minor child? No. Is it HUF? No. Still, the government says, listen, if the FD is in your name, why is interest going to someone else? Everyone. If you are doing a job, why is salary going to your friend? If it's your house, why is rental income going to some Mr. X? So they say that if you don't transfer asset, repeat with me, guys. If you don't transfer, but you only transfer income, then that income will come back to you. Yes. And if you are very confused, the dog will go back to its owner, guys. Everyone. I'll repeat one last time. So these three things that is new. You're not transferring what? Asset. You're only transferring the income will come. You're transferring asset but revocable transfer. It will come back. You're transferring asset but irrevocable transfer. Income will not come back. Are we okay? See guys, in clubbing, the question is only about who will be taxed. Will there be tax? Yes. But who will be taxed? Tell me in this case, guys, who will be taxed? A. Yes. So are you transferring asset? No. You only transferred what? Income. Yes. So don't worry, in the exam, if it's too much difficulty, go back to a basics and ask, is there income? Yes. Will there be tax? Yes. In whose hands will it be taxed? A. Yes. Alright, I don't want to confuse you more. Let sums confuse you now and we'll find a solution to it. Don't worry. Don't overthink about this. I'll tell you something, guys. 5 lakh rupees income. Everyone. 5 lakh rupees income. Think like the government. If there is income, there will be tax. Just you have to figure out in whose hands it will be taxed. And for that, it's very simple. The dog always goes back to its owner. Simple. Yes. Alright. Let's start with the sums. I'm going to take ICI material. Everyone, please open your ICI materials. We'll take the entire paper only together. Not right now. Once we finish, we'll take the entire paper only and discuss together. Yes. Right now, guys, this is DT fast track. I'm looking at ICI material. What you can do is all questions you can note down at one place, and then at one go we can discuss all your doubts, questions, etc. All right. Here we go. This is clubbing of income. Let's start. We'll first start with these questions. There are, let's see how many questions. 5 of them. Let's start with the first one. Here we go. Everyone read, guys. This is page number 4.24. Let's start. Mr. Sharma has how many children, guys? 4. 2 daughters, 2 sons. The annual income of the 2 daughters is how much, guys? 9,000, 4,500, and sons is how much? 6,200, 4,300. Guys, repeat the statement with me. Every income of minor child will be clubbed in the hands of the higher parent. But here there's only one parent, that is Sharma. The daughter who has income of 4,500 is suffering from disability. Now tell me guys, what about 4,500? This will not be clubbed. Will I club this? Yes. The others I will club guys. Yes. So and while we club, we'll minus how much? So everyone, I'm not even doing this, very simple. 9,000 minus 1,500. 6,200 minus and 4,300 minus 1,500. Are we okay with this? Please tick mark, mention E. He has exercised the option of shifting out. What is shifting out? That means which scheme? Old scheme. In the new scheme, only one small change is. I'll tell you now only. In the new scheme, you don't get that 1,500 exemption. That little exemption, they remove that also in the new scheme. Yes, minor child. Yes. But we'll talk about the new scheme soon. All right. Guys, looking at the next one, question number 2, very interesting. See the first one only, guys. Who are these incomes of Mr. A? Everyone answer 2 questions. If there is income, there will be tax, and just figure out who is the dog belonging to. Mr. A has a FD of 5 lakh in Bank of India. He instructed the bank to credit the interest at 9% from the year to year and to the savings bank account of Mr. B, son of his brother, to help him in his education. Guys, is it a good thing you're doing? Yes, great thing you're doing, helping someone in education. But guys, Income Tax Act is beyond all these sentiments. They feel there is income, so I want what? Tax. Simple. So please calculate the interest, everyone. 5 lakh into 9%. 45,000. Now repeat with me, guys. If there is income, there is tax. Only thing you tell me, guys, whose dog is it? A. It'll go back to whom, guys? A. But sir, I've given it to B. If you truly want to give B or B's child, then give the FD also, give the interest or irrevocable. You truly want to help him in his education, give the money also and the interest. Only then it will not come back. Are we okay? So who will be taxed, guys? A. How much? 45,000. Which head of income, guys? IFOS. Please read the next one and tell me what will happen. We've already discussed this. Guys, is there control? Yes. And is it not linked? How do we know, guys? She possesses no technical or professional qualification. So will it go back? Yes. In whose hands, guys? A. How much, guys? 25,000. Read the next one. Very simple, guys. The more you read all this, no, the more it will confuse you. The more you ask, is there income, is there tax, who handle taxes? It's commission, no? Commission, so IFOS. Alright, guys, the next one. Yeah, will it be club? Yes. Is it computed? Yes. How much, guys? 52,000 IFHP. Guys, I'm just changing question number C. They were separating. Then it will not be club. What if she paid added consideration? Not club. Next. Will it be club? How much, guys? 18,500. Yes, minor child. This is PGBP, business income. And the last one. Why not? Guys, using skill and talent. So this will not be club. Where will it be taxed, guys? In the hands of the minor child. But guys, minor child has a basic exemption limit. So it is taxable, but he'll not pay tax. Yes. Alright, that's question number 2. During the year, Mr. A got a monthly pension of how much? 10,000. Guys, pension is taxable, everyone. PT. Shortcut. Pension is, guys, how much is the pension? Please take your calculators. 10,000 into 12. 1,20,000. Pension is goes in which head? Salaries. Minus 50,000. How much is that, guys? 70,000. Guys, all this is basic. When you come to a fast track course, all these basic concepts should be clear, or at least you should be reading it before you come to a class. Next, guys, he had no other income. Mrs. A received a salary of how much? 20,000. Everyone do 20,000 into 12. 2,40,000 minus 50. 1,90,000. Oh, by the way, we did not check this before we added. I thought there was no other person only. So, guys, I'm going to check this again. Everyone take your calculators. Let's check Mr. A's income. 45 plus 25 plus 52 plus 70. 1,92,000. And wife has how much income? 1 lakh. So minor child's income will go in whose hands, guys? A only. 18,500. Guys, where did I do minor child right in the end? Higher parent. So first you solve the parent's income, whichever is higher, then you add it. Everyone okay with this? Yes. Please do question number 2, tick mark and write D. Do it once again later on. Especially the first one, right? First one important. Yes. Let's look at the third one. Read the question. A lot of permutation combination happening, but the dog always goes back to its owner. Keep reading. Forget everything else, guys. First, calculate the income. What is the income? 25,000 per month into 12. 3 lakh minus 30%. 2 lakh 10,000. Guys, is that the final income? 2 lakh 10. If there is income, there will be tax. Who's earning this right now? C. Who's the son's wife? So how much? 2 lakh 10,000. The dog goes back to its owner. C. Who gave C? B. So it will go to whom, guys? B. How much? 2 lakh 10. Who gave B? A. It will go back to whom, guys? A. Very simple, guys. They can give you 5 other relationships. It will go back to the owner. Yes. But it has to be amongst the 4 relationships. Minor son, son's wife, spouse, or HU. Alright. See the next question. Very smart. What will be the, so in the first case, guys, who will be taxed in? Mr. A. He will be taxed on how much, guys? 2 lakh 10. Will your answer be different if the said property was gifted to his son? Guys, it's not son's wife, it is major son. Which son? Major son. Guys, what is the income? 2 lakh 10. Will it go back to B? No, it will not even go back to B. It will not even go back to A. Why, sir? Guys, I told you, only how many relations? 4 relations. Are we okay with this? So this is question number 3. Tick mark, write D. Only the second part is important, guys. Question number 4. Read question number 4 with me, guys. Who started the business? The wife. Guys, which year did she start the business? 2021, and on 1st April 2022, her capital was how much, guys? 3 lakh. Any contribution from husband till now? No. Her husband gifted 2 lakh on the 10th of April, guys. Guys, how much from the husband? 2 lakh. I want more contribution from all of y'all, guys. I want more answers. Otherwise, I will not know whether understanding or not. How much did the husband give? 2 lakh. So wife had 3 lakh, husband gave 2 lakh, but that amount came on which date? 10th April. All right. So 2 lakh plus 3 lakh. That year, what is the profit? 1 lakh 50. Guys, please tell me any clubbing on 1 lakh 50. Excellent. Why no? Because the proportion has to be seen on first April. So this amount will go to whom? Wife. Wife had how much amount? 3 lakh plus 1 lakh 50. 4 lakh 50. So now the wife's contribution is 4 lakh 50. Husband's contribution is still 2 lakh. Now, guys, second year. In the second year, what is the profit? Everyone. Will clubbing apply? Yes. Let's find out the proportion. First, tell me what is the total investment? 5 lakh. No, wrong answer, guys. 2 lakh plus 5 lakh, 4 lakh 50. Everyone. Everyone do this maths. 2 lakh plus 6 lakh, 4 lakh 50. How much is the total contribution? Guys, all this is not tax. This is maths. I can't teach you maths. I'll once again ask you. Guys, in the second year, how much has the husband contributed? 2 lakh. How much is the wife's contribution? 4 lakh 50. What is the total contribution? 6 lakh 50. Now take the number of profit, guys. 3 lakh 90. Everyone on your calculator. 3 lakh 90 into 2 divided by 6.5. How much? 1 lakh. 1 lakh 20 will go in the hands of the husband. And everyone again take 3 lakh 90 into 4.5 divided by 6.5. 2 lakh 70 will be taxed in the hands of the wife. Guys, if you're not understanding all this, I'm telling you, go for dinner. Let your friend order a non-veg large 12-inch pizza. You order a mini pizza and see how you divide the money. Yes, when the bill comes. You are just unnecessarily overthinking this. There is a proportion. Guys, I can't teach you proportion. There's a fast track batch happening of CA Foundation just on 1 floor above. You can sit in that. I'm trying to kid about it, but please don't overthink, guys. Get me the proportion. Guys, in this year, what is the proportion? Yes. What is the proportion here, guys? 2 by 6. Excellent. What is the proportion? 20 by 60. What is the proportion here? 45 by 65. Yes, or 65. Sorry. Yes, you're smiling a lot. Yes. Did you understand it? Tell me how you understood. What is it? Yes. Capital. Perfect. Yes. Yes. See, guys, they are giving you a different number, but you have a calculator, guys. There'll be nothing difficult. Forget proportion. Even if you don't do proportion, if you do 2 lakh divided by 6.5 lakh, still your calculator will give you answer. 4.5 lakh divided by 6.5 lakh, your calculator will give you the answer. Are we okay with this, guys? Yes. All right, guys. Please take mark question number 4. I thought it was easy, but please mark it as D, considering the responses that I got. I'll tell you guys what has happened. This is in my book as well. Now you have not looked at that book. Yes, you have walked into probably, I'm just assuming, you've not looked at that book, you've not looked at the question. I've marked it. I'll tell you the question number also. This is question number 10 of your book. You've not looked at that. You've not watched the revision video, maybe. You've not done the solving sum, and then you're surprised that if you don't understand, there's a problem at your end as well. Yes. So make sure if you know the chapter which is happening, go through the sums before you come to class. It will be a better discussion. Yes. All right. Let's go to question number 5, everyone. Yes. Yes. No. Husband's cap, that depends on husband whether he's removed the money or not removed the money. That discussion we cannot do because they've not given us the detail. Yes. But if they don't give anything, yes, you can add 3 lakh plus 1 lakh 20. And wife will be 4 lakh 50 plus 2 lakh 70. Yes. All right. Everyone, next one is very, very simple. Question number 5. Let's see who are the two people. Mr. Karta. Mr. B is the Karta and Mrs. B. I'm reading, you tell me, guys, where will it be taxed? This is husband and this is wife. Guys, B's profession. B, 45,000. Mrs. B's salary. Mrs. B, 76 minus 50,000. By salary, guys, you have a standard deduction of 50,000. How much is that, guys? 26,000. Sorry, 26,000. Next, minor son, minor daughter, D. So all of them are minor children. Who has a higher salary or who has higher income, guys? Husband, guys. Who has the higher income? Husband. All right. Now let's see, guys. Minor son D, interest on FD with a bank which was gifted to him by his uncle. Club. In the hands of uncle? No, in the hands of the higher parent. Who has the higher parent, guys? So 10,000 minus 1,500. How much is that? 8,500. Minor daughter P is earnings from sports. Not. Why? Because sim income. But it will be taxed in whose hands? Minor daughter P. And D, guys, is D coming second time? Yes, guys, you will not get 1,500 exemption again. You get it only once. So D is winning from lottery. Again, will it go into husband's hand only? Yes, 1,95,000. Guys, can someone tell me why did I not minus 1,500 here? Because only per child you can minus it only once. Are we okay with this, guys? Yes. And your answer will be completely different if you don't take standard deduction of 50,000. Because then who has the higher income? Wife. So please make sure you're doing that. Unless the word is computed, otherwise you always minus standard deduction and stuff like that. Yes. I think this is very simple. Question number 5. Please mark it as E. Yes. 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 No. There he only gave the interest. Here he is giving the money also and he is giving the interest also. Yes, getting it? Perfect. There also I told you, you want to help someone in education, don't tell the bank only to pass interest. Give him the 10 lakh also, let him have the interest also, it will not come. Are we getting it? So example, let's say there's some fund you want to help for education. You have shares, you call up the company, the dividend you pay. No. You want to truly help him, give him the shares also, let him earn the dividend also, then income will not come back to you. Are we okay? Yes. Alright. That's question number 5, guys. We'll look at the illustrations now. We'll solve in fair also, but first we'll discuss all and then we'll solve a few in fair. Interesting question. Let's read and let's make a diagram, guys. Everyone, can you take a rough paper before you? If you want, you can do it here also, but you can do it in rough paper also. Keep a pencil handy, keep your ruler, calculator around you. Alright, it always helps to do rough work. Let's read, guys. Mr. V gifted a sum of how many lakhs? 6 lakhs to his brother's wife. I'm writing here as V. We forgot to discuss this concept called cross transfer. Let me quickly discuss cross transfer with you guys. I know if I transfer asset to my wife, will the income come back? Yes. And my friend also knows that he transfers the asset to his wife, the income will come back. So very smartly, what people do is will transfer the asset to his wife, and he will transfer the asset to mine. So that basically they're trying to avoid clubbing. This is called cross transfer. What is it called, guys? Cross. And the government knows that you're trying to avoid tax. So hence they say that in that case, example, I'm just telling you, here is his V, here is his friend. V can transfer to whose spouse? Friend spouse. And friend can transfer to V spouse to avoid tax, because the clubbing is only with respect to spouse. So the government has already caught this kind of transaction and they say this is called cross transfer. What is it? Right? And cross transfer clubbing will apply. But the only thing, the income does not travel all the way back. So example, this income will be taxed in whose hands? V. And her income will be taxed in whose hand? So in your closest relation, it will not go all the way back. Don't worry, this concept will apply in this sum. Let's start reading this. This is V, Vasudeva. He gifted a sum of how many lakh? 6 lakh to his brother's wife. Let's call the brother B. And the brother's wife, I'm calling wife of B. How many lakh gifted, guys? 6. Next, on very similar, guys, next month, his brother gifted a sum of 5 lakhs to Vasudeva's wife. So I'm writing wife of Vasudeva. And how much is gifted to the wife, guys? 5 lakh. Is this cross transfer? Yes. What you need to do is, what is the common amount, guys? 5 lakh. On 5 lakh, first find the income and it will be clubbed. And what about that 1 lakh? I'll tell you about that later, guys. Right now, 5 lakh. Yes, let's see. First, let's see what is Vasudevan's 6 lakh on that, guys. How much is he earning? The gifted amounts were invested as FD in banks by Mrs. Vasudevan and wife of Mr. Vasudevan at 9% interest. Right, so 5 lakh into 9%, 45,000. Everyone okay with this? Guys, what happens to 1 lakh? Don't focus on that. Focus on what happens to 5 lakh first. Yes. So please tell me 45,000. Now will it be clubbed? Yes. The wife of Vasudevan, that 45 will be going into whose hands? Vasudevan. Guys, 1 minute. August. So it will go for monthly. Everyone do the months. April, May, June, July. 4 months it will not happen. So how many months, guys? 8 by 12. Can you do the maths? Yes. Yeah, a little more confidently. Yeah, or you can email me also the answer, guys. What is this confidence? No, 31. Exactly 30,000. Okay, 30,000. Guys, will this amount be clubbed? First, answer me, yes or no. And will it go back to the friend's wife and all that? No. Guys, with your respective relation. So this 30,000 will go into whose hands? Vasudevan. And this 30,000 will go to whose hands, guys? The brother. Are we okay with this, guys? Yes. All right. Now, what happens to that 1 lakh? Let me give you another example. Your minor child earned a quiz contest and won 1 lakh rupees. Everyone. Minor child, 1 lakh in which contest? Quiz. What happens to that 1 lakh? Guys, yeah. So who will pay the tax? Same way, guys. That 1 lakh extra, who's getting it? Wife of the brother, she will pay the tax. Are we okay with this, guys? Yes. So clubbing happens only on the common amount. Only on which amount, guys? Common. Everyone okay? Yes. Read it. If you have any doubts, happy to help. Quickly recapping. Is this a cross transfer? Cross transfer on 5 lakh or 6 lakh? Why 5 lakh? That's the common amount. So what happened to that 1 lakh? Who got that extra money? The wife or brother. That income will be taxed in her hand. Yes, everyone. And clubbing will happen with your friend's wife all the way, or your relation only. Your wife will come, that income will come to your hands, brother's wife will come to the brother. Yes, everyone. All right. So this is cross transfer. Have a look at it again. Please mark this as D. This is illustration number 9. Illustration number 8 is very simple. What you can do is, I'm writing husband here and wife here. You can also make 2 columns, guys. Try to read and put the park the numbers in respective columns. Yes, everyone. Yes, no problem. Yes. The first one is salary income. In whose hands? Wife. So 2 lakh 30. I says Mr. and Mrs. A will confuse you. So husband and wife. Yes. Next. Why did I not minus 50,000? It is already computed. Yes. Next. Income from profession. Husband. 3 lakh 90,000. Income of minus on B. Yes. Who has a higher income? Husband. So 15,000 minus 1500. 13,500. Income of minor daughter C from special talent. No clubbing. Yeah, they've only asked us for two people's income, guys. So I'm not even looking at C, but no clubbing. Interest of C on deposit made out of a special talent. Isn't this SIM income? Guys, this is indirect income. Guys, SIM means directly. This is indirect SIM income. This is not SIM income. So will it go back? Yes. So 1,500. And gift received by C from friend of Mrs. A. Why exempt? Yes, it is not more than 50,000. Changing, guys. 12,500. No, 52,500. And you'll minus how much? Entire 50 to 500, but you'll minus 15. Why not? Superb, guys, because you've already done it here. So per child, you can do it only once. Everyone okay with this? Yes. This is a good question, but I honestly found it very simple. So please write question number 8 as E. Question number 7 we'll do at the last because there's some small thing here which is house property also and clubbing also. It's a mix of both. So we'll come back and we'll do question number 7. Question number 6. All right. Mrs. Kasturi transferred her immovable property to a company called ABC Limited, subject to a condition that the rental income of 36,000 shall be utilized for the benefit of her son's wife. What kind of transfer is this? Super. I'm just drawing the diagram. This is K. She transferred the property to whom, guys? ABC. Is this transfer revocable transfer? Yes. What is the rental income? 36,000 per annum. As will this income come back to Kasturi? Yes, because this transfer is revocable transfer. Mrs. Kasturi claims that the amount of 36,000 utilized by son's wife should be not be included in her total income, guys. Is it wrong? Yes. Because the transfer is what, guys? Revocable. And in case of revocable transfer, clubbing provisions will apply. Everyone. Okay. Please tick mark this. Write D because it will give you a sense of what is revocable. Shortcut is RB. What is the shortcut, guys? RB. Right to revoke or the right to enjoy benefit. Yes. All right. Of course, when it will be taxed, no, it will not be taxed on entire 36,000. You will give standard deduction and all that if it's a house property. Question number 5. Again, good question. And something similar we've already done. So I'm hoping we can give good answers here. Yes. Everyone. Who is the person? He started a business on which date, guys? 1st April 2022 with a capital of how many lakh? 5 lakh. I'm just writing here web of, guys, 5 lakhs. He incurred a loss of how much? 2 lakh during the year, guys. Any amount given by wife till now? No. So 5 lakh minus 2 lakh, guys. So his capital reduces and becomes how much, guys? 3 lakh. So 5 lakh minus 2 lakh is equal to 3 lakh. This is web of year 22-23. Now cut to the next year, guys. 23-24. Everyone watch what is happening in next year. Guys, the wife is very sweet. She gave a gift of how much? 5 lakh. Everyone, I'm writing V here. V's contribution is 3 lakh. Wife's contribution is 5 lakh. I want more people to answer, guys. If you don't answer, I will not enjoy this. I can move this online also, guys. Then there's no point coming to a class if you're not going to answer. So wife has contributed how much, guys? 5 lakh. Weber has contributed how much? What is the total investment in the business, guys? 8 lakh. Guys, can you do the proportion later on? Yes. Now, guys, profit of how many lakh? Please tell me, will clubbing provisions apply? Yes. On the 1st of April, guys, what is the ratio? 5/8 and 3/8. Please take your calculators. Yes. 4 lakh into 5 by 8. 2,50,000 will be taxable in the hands of the wife, and 1,50,000 will be taxable in the hands of wife. Can you tell me why did clubbing not apply in the first year? Because there was no contribution. There's no contribution, there'll be no clubbing. Clubbing only happens when there is contribution. Yes. This is question number 5. Tick mark, guys. Write D. Read it again. If you find it difficult, mark it E. Once we finish, we'll take 2-3 questions from exam perspective and we'll practice the writing also. Question number 4. Just saying CN. Everyone start reading question number 4. This is B and this is wife, husband and wife. Let's read. Guys, B holds how much percent? 30. So does he have control? Yes. And Mrs. B is working as a accountant getting salary of how much? 3,44,000 without any qualification. Is it already computed? So don't minus any 50,000, guys. This amount will go back in whose hands? Husband. How much, guys? 3,44,000. Next, Mr. B also receives 30,000 as interest, so that 30,000 also in his hands only. Mrs. B owns a house property. She has let out. Rent received is how much? 6,000. Guys, everyone, 6,000 into 12. 6,000 into 12. 72,000 minus 30%. And if you can tell me the final number, 50,000. All right, stop this. Now, if they also had given you minor child, whose income will they tax it in hands? Mr. Sorry, husband. Forget Mr. and all that. Husband. Yes, because he has hired this. Mr. B, Mr. They'll confuse in the exam also. So in the exam also, they write Mr. Champak, Mrs. Champak. So in your mind, full Champak. Yes. So in the exam, guys, husband, wife, you do it, you'll get it easily. And then finally, when you write, of course, you can write Mr. Champak, Mrs. Champak. Yes. All right. That's question number 4. Definitely very easy, guys. So please mark E. Yes. I'm not even reading or doing this, guys. Very, very simple. Just check if CN is applicable, guys. Here, Mr. A holds how much shares? So, is there control? Yes. And Mr. A, Mrs. A is working as a software engineer. She is not qualified for the job. Is it CN? Will the amount come back? But please minus standard deduction because it is 30,000 per month. Let's do the math, guys. 30,000 into 12. 3,60,000 minus 50,000 is how much? 3,10,000 will be clubbed in the hands of the husband. Please tick mark question number 2. Please mark it as E. And question number 1. Very, very simple. Please read question number 1. Guys, if you work in KPMG, will salary go to your cousin? No, should not go, right? Same thing, something is happening here, guys. Mr. Vansal, through a duly registered document, the income arising from a go down to his son. Guys, what did he transfer? The income. Without transferring what? Good. Guys, if you transfer income without transferring asset, the income will come back to you. If you really want to give income to your son, transfer the go down also, and the income then will not come back. Yes, everyone okay? So this is section 60, guys. What is the section 60? Transfer of income without transferring asset. Yes. All these shortcuts, all these sections, all of this is also there. RB, all of that is in my quick book. You can refer to it. But I think clubbing from a ICI material perspective, I think they're not very difficult questions, guys. Let's look at exam and let's see what kind of questions come there, and then we will write 1-2 questions as well. All right. Taking the exam questions. Just I have to upload the exam questions also here. I think I have not done that. That folder is not there. Okay. Let's see. We'll take a certain older paper and then we'll go to the newer papers. Clubbing is not there here. Yes. Here we go, guys. This is the next clubbing of income sum. This is for 5 marks. There are two people, husband and wife, with very funny names. Mahadev is the husband, so I'm writing husband here. And Darya is the wife, I'm writing wife here. Yes. So we will solve this question, ignoring the names for now. Yes. He's a bhajan singer, so they make all this so that it sounds very complicated. But guys, ultimately, if there's an income, you put them in the right column. Over to you all, please read. I think this third one should be a little problematic, otherwise, it'll be all good, guys. Over to you all, please. Take your time, 2-3 minutes. In your rough book, pencil, guys. No mental maths, guys. Take a pencil, paper, put husband, wife, and start putting the numbers. Yes. The third one actually is not from this chapter, it's from IFOS. So if you don't know this, it's okay. Let's see first one, guys. Guys, which is the income? Husband or wife? Husband. 5,65,000. Next one, guy, husband or wife? Wife. How much, guys? 3,80,000. It's already computed. Next, I'm not discussing third one right now. Income of minor son Golu. Cash gift received by Golu. And interest income of minor. So is it all minor income, guys? Yes. So before that, let me discuss question number 3. So we know who is the higher parent. Guys, loan received by whom? Darya, from a private limited company in which Darya holds how much percent shareholding, guys? 35. I'll give you some shortcuts, guys. If you want a loan in real life, whom do you go to? Bank. If you want a loan, go to a bank. If you go to a private company and you take a loan, if you go to which company? Private company and you take a loan and you're a beneficial interest holder there. Beneficial means 10% or more. Guys, there's a section, if you remember, it is called 222E, deemed dividend. Everyone. Who has the money? Company. Everyone. Who has the money? Company. And who's removing the money, guys? The shareholder, who's a beneficial interest holder. And by taking a loan, the government says, listen, if you want a loan, go to a bank. By removing money from the company, you are removing it without calling it what? Dividend. So we'll call it what? Deemed dividend. But we'll tax deemed dividend only if the company has profit. Does the company have profit? No. So all this discussion is waste because if it's not no profit, guys, there's no deemed dividend, nothing. Changing the answer. Guys, what if there is profit of 2 lakh? Then deemed dividend will be up to how many lakh? 2 lakh. What if the profit is 3 lakh? Then deemed dividend will be of 2 lakh 50. Yes. This deemed dividend concept we'll do in IFOS, but right now, guys, there's nothing. So who's the higher parent? Husband. Income of minus son Golu from singing reality com. No, same income. Cash gift received by Golu. No, because not more than 50. And interest income of minor married daughter. Treated as minor child. Perfect. Will I club it? How much, guys? 38,500. Are we okay with this? Yes. Please add the number. 6 lakh 3,500 is Mahadev's income and 3 lakh 80 is the wife's. Yes. If the third point is something you've not understood, when we do IFOs, you'll get a revision of deemed dividend as well. Are we okay with this question, guys? Yes. So this is question number 4A of November 19 paper. We'll see more. I just open all the papers here. Yes. Guys, there is Dharmesh and Anandi. Very easy, very nice question. I'm going to leave this question on the screen and should not take you more than 2-3 minutes to discuss and do this question. Here we go. Take a rough paper, write husband and wife again. And before you go to minor's income, just make sure you're deciding who's the higher parent. Over to you all, please. Yes, that is very simple. I'm just going to read the income, not even discuss detail. Salary income, who will be taxed? Wife. Garment business trading, who will be taxed? Husband. Who has the higher income, guys? Husband. Disability, no clubbing. Script writing, no clubbing. Story writing competition, no clubbing. Scholarship, no, scholarship is exempt. But school also is all registered and all. Anyway, scholarships are not taxable. And even if you say skill sim income, because skill intelligent manual work, yes. But anyways, it's not taxable. And minus and B from FD, guys, is this taxable? Yes. So how much will you minus, guys? 3,500. Only that much will be. Are we okay with this, guys? Yes. All right. So that is question number. It's generally at 4A only. So this is 4A. We'll do a few more, and we'll try and write, and we'll see how it works. We'll see later papers, guys. Right now, let's see this paper.
Scholarship from political parties also.
Scholarship from any registered sources are exempt. Yes, I'll give you a small pro tip. The examiner does not go into that kind of detail on. So if they give you scholarship from a school, college, trust, etc., it's all exempt. Yes. We'll see how clubbing works in this. Generally, it is a question number 4. Let's set off. There's nothing in May 24. We'll go to November 23. The September 24 paper we'll do entirely only. So after we finish a few chapters or we finish GT, we'll take the paper and we'll do it entirely. Clubbing. Capital gain. J. No clubbing here. Go to November and May 23. Guys, there is clubbing here, everyone. Let's start doing this question as well. This one has some amount of capital gain implication, but I think we should be able to manage it, yes. Yes, it's a good question. This is the one we'll write also. Everyone, this is question number 4A. I'm writing husband and wife. Of course, they've also asked for the minor children income. So I'm writing your husband, your wife. They have a minor son and a daughter as well. So I'm making 4 columns here. As in when you read the income, start putting them in the respective heads. Yes, you can also do the same. Read the first one, first, second, third, guys. Guys, all the amounts are already computed. See the line here, all the amounts are already computed. So you will not minus that 50,000 and all. Yes. Let's see the first few, guys. Which is the first income? Salary. This will be of the husband. This second Kathak performance, wife. Next, wife's long-term capital gain, 5,50,000. Next, the fourth one we'll discuss in a bit. Next, fifth one. Is a minor daughter getting some quiz competition? Who will be taxed, guys? Minor daughter. In this question, guys, they've asked for everyone. Right? See here. Total income in the hands of Mr. and Mrs. Chaman and their minor children also. So this will 3,56,000 in the hands of minor daughter. And what about the savings interest? Higher parent. Guys, everyone. Which parent? Do we know the higher parent yet? No. So I parked this 13,500. Master Neelab, the minor son on 35,000 from fixed deposit was made out of cash he received on his birthday. Guys, is this 35,000? He suffers from disability. Will there be any clubbing, guys? No. So this is 35,000. Everyone okay? So 6th point okay. 5th point okay, except this 13,500. Now let's go to this 4th point. Everyone read this 4th point and tell me who's given the gift. Wife. To whom? Husband. Guys, how much is the gift?
2 lakh.
For some reason, this number seems a little odd actually, but we'll ignore the number and we'll use the concept, guys. Wife has given 2 lakh. Husband introduced how much money? Nothing. So husband's contribution 0. Entire amount is of wife. and he made a loss of how much? So profit or loss doesn't matter, guys. The dog always goes back to the owner. Who's the owner, guys? Wife. So 5 lakh 50 minus 5 lakh 10 loss. Can I minus this loss, guys? Yes. So what is the net impact, guys? 4,000, 40,000. I'll repeat again, no problem, guys. The dog always goes back to the owner, whether it's profit or loss. Who gifted the amount? Wife. To whom? Husband. Husband made a loss of how much? This will also go back to the wife. So wife has a profit of gain of 5 lakh 50. I'm minusing a loss of 5 lakh 10. Now, why is this number wrong? I'll tell you guys. From 2 lakh, no one can make a loss of 5 lakh 10. Yeah, unless you do futures, options, etc. So I'm assuming that kind of thing. But if they're given the number, guys, we can't deny it. Now we have to solve it accordingly only. So 5 lakh 50 minus 5 lakh 10 is how much? 40. This is there. 2 lakh 50 is there. Husband is 11. Please tell me who is the higher parent? Husband. So this 13,500 will go in whose hands, guys? Husband. Yes. Sorry, didn't understand. Which one? Hmm. And made a loss. So casual loss is to be ignored. So if it's to be ignored here also, even if it goes to the wife, it will be ignored only. Getting it, right? Like agriculture income. What if the husband has used this 2 lakh to do agriculture? Then exempt, so there will not be tax only. Yes. Alright, just checking the numbers again, guys. 11 lakh have been taken care of. 2 lakh 50, 5 lakh 50, 5 lakh 10, 13,500. This is the 35 and this is 3 lakh 56. Are we okay with this? Just asking you some things, guys. Why did 5 lakh 10 go back to the wife? Yes, so profit or loss, same treatment, guys. The dog always goes back to the owner. And why did we do 3 lakh 56 in the daughter's hand? Because same income. And why did we not club Mr. the mind? Because disabled. Yes. All right. Guys, I'll show you how to present this. This is question number 4A of May 23. Because very common thing about husband wife, guys. We've seen 3 questions husband wife, husband wife. So this is pretty common. Let's start question number 4A 23 paper. Here we go. Sorry, handwritten notes is not there. No, the drive I shared, I think handwritten notes is not there. I'll update it. It is there. Okay. It was not. I'll tell you how to open it. If it is there, I'll tell you how to open it. All right, let's start. Clubbing of income. This is May 23, question number 4A. Let's start writing so that we get some handwriting practice also how to present. I've not put the children's columns here. I'm only restricted to husband and wife. We write slightly better. So write the heading, question number 4A, May 23, ICI paper. How do you figure the first line, guys? Take the last line from here. What is the last line? Computation of total income. So please write computation of total income of Mr. and Mrs. Chaman for PY 22-23, AY 23-24. For PY 22-23, AY 23-24. Please make 3 columns. Particulars, Mr. Chaman, Mrs. Chaman. Particulars, Mr. Chaman, Mrs. Chaman. And the first one. Salary income computed 11 lakh. तब तक performance is PGBP 2 lakh 50. And guys, don't leave spaces empty since you're looking for an exam preparation perspective, guys. All these empty spaces have to be a dash. So there's nothing here, put a dash, dash, and 2 lakh 50. Capital gain 5 lakh 50. Next, there is a loss. Loss is made by Mr. Chaman, but it will be clubbed in the hands of Mrs. Chaman since she gave the money for it. Yes. Short-term capital loss of Mr. Chaman clubbed in the hands of Mrs. Chaman. And wherever it is spouse, the section will always be 64.1 since entire amount gifted by Mrs. Chaman. Next, guys, income from skill, etc. will not be clubbed under section 64.1a. Ideally, we should make two more columns, guys, but I have not made them here. Yes. If two more columns don't fit, guys, you can actually make a new table also below after this, and you can put those incomes there. Yes. Because fitting 5 columns is difficult. Yes. No, you can just refer it. Refer below. Refer table below. Or instead of making another table, you can just write working note and explain that in a working note that this amount will be clubbed in the hands of minor daughter. Basically, somewhere you have to just indicate who hand is being taxed under. That's all. Some people say which sections to remember. So 1032 has to be remembered, guys. It gives an exemption of how much? 1005. Very common in the exam. So these are the kind of sections you should remember because they're very commonly found in the exams. To 10. Yeah. Yes, while we're writing this, guys, we've done 5 questions from Test Your Knowledge of ICI material. We've done 9 illustrations. So 9 plus 5, 14. And we've done about 3 sums here with one writing. So that's about 17 sums from only clubbing of income chapter, which is a good thing. What you could do is when you go back home today or tomorrow morning, of course, or today evening, the choice is yours. Go to my folder of handwritten notes, see which other papers there are exam questions, have a look at that, solve it, open the handwritten notes. I'll tell you how to open the handwritten notes, guys. You can't open it directly sometimes. So first, there are two kinds of files. One is corrupted, which has a dollar mark. So don't open those, of course, otherwise the virus will spread. Yes. So open the other ones. The same has copies. So open the non-dollar ones and download it. If it not doesn't open, download it and then it will open. Yes. And try and see. I'll tell you how I would do this. Everyone okay writing it? Yeah. That's because you download and open, or you give it some time. Here, guys. Guys, have we done this one? Then there is July paper. There is May 22 paper. I've written the question number also. So all you need to do is take that paper. A paper is also solved, downloaded and kept in the folder. You can open that paper and see, have a look at the question. Yes. So we'll try and as many questions, but some things you can also do and we can discuss. All the doubts, keep them plugging in on one page. And then once we are a little comfortable on the portion, we'll have a doubt solving session on whatever doubts you have in whichever chapter. Yes. All right. So I'm calling to an end to clubbing of income. Yes, we've solved one sum. We could solve one more, but I want to do PGBP and I want to pay a little more attention there. Try solving it on your own as well. Yes. The fast track batch, I'll tell you what happens here. First up, we are trying to do more sums. Even in my actual regular lectures, we don't do 19 sums from clubbing. So we're trying to do as many sums as possible. And that comes at a cost of we doing concepts faster and you doing some sums at later at your pace as well. Yes. So are we comfortable doing the sums? Yes. We now will start with PGBP, about 2-3 minutes for everyone, and very interesting way we'll do PGBP today. Something that is very very exam oriented PGBP discussion we'll do today. Yes. Guys, can someone check and tell me, have I uploaded the ICI material in terms of questions on the fast track? ICI material, no, that I think has only the material. Do you see papers, ICI papers and all that? No. So just I'll upload that as well. All right, guys, not keeping a track of the 5 minutes, but keeping a track of the chapter, which is supposed to be started right now, which is called PGBP. Yes. I feel, of course, PGBP gets a lot of, it's like that one unfortunate chapter which gets a lot of hate from people. Yes. So maybe we'll try and reduce the hate of that chapter today. We'll see how, what, and what we can do. But it's a chapter where it's very important from the exam perspective because which question number? One. Guys, first question number has PGBP. So we'll try and see how we can tackle it better. I have a very unique way of looking at PGBP guys here. So I'm going to start PGBP right now. This is PGBP. Let's start our discussions right now. And I'm going to put the top 50 adjustments. Guys, what am I putting? Top 50 adjustments from PGBP that are regularly asked in the exam, and you should be able to address them really well. Yes, with you only I'm thinking, guys, and as and when we discuss one adjustments, we'll discuss how it's tackled. We'll list them down so that later on you can refer to these before the exam. Yes. All right. What are the top things that come in my mind, guys? The first thing, of course, I've written top 50, but I'll just write top adjustments because I don't know if it goes to 50. Yes. So we'll write top adjustments. That means when a PGBP sum is asked in the exam, guys, so these are the top adjustments that are asked. First, guys, they never ask you to calculate the profit or the loss. They always give you the P&L, guys. So which account is always given? P&L account, or they call it income and expenditure. What do they call it, guys? Income and expenditure account is already given. Income expenditure account is already given. So we don't actually have to calculate the profit. We have to pick up the net profit. Guys, what do you need to pick up, guys? Pick up net profit, and we need to start from there. Are we okay with this? And if possible, we'll try and see a paper also along with that so that I can show you how what I'm trying to talk. So let's take a recent paper, May 24. This, guys, manufacturing, trading, and P&L account. They already, almost every paper, guys, they already give you this, and then you need to pick up with this number, guys, which is net profit, and then start working on the net profit. So that is something that you should always remember. The P&L account or income and expenditure account is already given, and you need to start slash, slightly better handwriting has to happen. So start or pick up from which profit, guys? Net profit. So this is the first step that you should be looking at. Yes. Now second, some common adjustments. They will put a lot of other incomes into this. Yes. So remove the other incomes, guys. Remove other incomes. And let's typically which other incomes will you see in PGBP or in PNL? I'll show you also, guys. Example. First up, they'll have interest income. Guys, which income? Interest income. You'll remove it and you'll put it where, guys? IFOS. How will you remove it, guys? I'll show you an example. We'll keep looking at this as an example, guys. Is it dividend from domestic companies? Yes. Is it already added? Yes. How do I know it's already added? Because I've taken which profit, guys? Net profit. So I have to minus it and take it to which room, guys? IFOS. So, guys, that way you have to remove the other income. So first focus on the incomes and remove all the other income. Example, interest income, you'll see very common. Next, very common, what you'll see, guys? Dividend income. Where will you put dividend income? IFOS. Next, very common, you'll see house rent earned, guys. House rent earned, where will you put? House property. And then very common, you'll see salary also. What will you see? Salary earned. Where will you put? Which room will you put, guys? Salary. So this is a very simple part where you go to the incomes and whatever is the incomes, you remove it. Let's try and see which incomes you can remove from here. Gross profit belongs to PGBP. Dividend will go to winnings from lotteries will go to IFOS. Profit on sale of shares will go to capital gain. So I'm just writing here, very important, guys, casual income also. So all these you will take to the respective heads, guys. I'm not saying which head, it cannot be only IFOS, but whatever the respective head will go there. So remove other incomes. For people who just joined us, what we are trying to do is we are going to list down all the top adjustments which are asked in PGBP. And instead of doing PGBP the traditional way, we'll try and see, because they are very common, repeatedly year after year, these adjustments are asked. All right. So first start with which profit? Net profit. Then first remove all the other incomes and put them in the respective places. Yes. Which other incomes have I seen? Typically, I have seen these incomes only. And guys, when you remove whatever has been added, you will remove. Example, guys, here, how much is the casual income? 10,500. So how much will you remove, guys? 10,500. But when you take to IFOS, we will always take the gross amount. Which amount, guys? Gross. So I'm just writing that third one also. Remove incomes not forming part of PGBP. This is continuation only. I'm just writing it here. Remove incomes not forming part of what, guys? PGBP, and include at other places, at other heads. But what amount will you include? At gross value. At which value, guys? Gross value. So let's take an example. Every time we do an adjustment, we'll try and take an example, guys. How much will be minus from here? Casual income 10,500. But when we take to IFOS, no, we'll not take 10,500. We'll take 10,500 is 70%. Everyone on your calculators. 10,500 is 70%. So what is 100%? 15. So we'll take to IFOS how much, guys? 50. Very common, you'll find these kind of adjustments. Are we okay? Everyone taking stock again. First, we'll start with which income? Net profit. Then you'll remove all other incomes, and where will you take it? At what value will take it, guys? Gross value. In case they've given you net value, you'll take the gross value. All right. Third, a very common adjustment is income tax. Everyone. Very common adjustment is what? Guys, income tax refund. Guys, first don't write, first watch. This document I'm saving for you only. I'll save it and it'll be there. So use this time to actually pay attention to what the concept is. Very common, guys, they write here which income? Income tax refund. Let me take you to a paper where income tax refund is discussed. Let's see if income tax refund is discussed here. No. 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 Screen off, guys. Okay. Not there. I think it's some RTP, MTP, I think is there. All right. Anyways, so we'll talk about income tax refund. Let me write that here, guys. Now, let's take a number, guys. Income tax refund of 15,000. Everyone, income tax refund. Now, guys, as a businessman, imagine Yeshas Academy, guys. Do we pay GST? Yes. Can we ever pay municipal tax for this building? Every tax is like an expense. Every tax is like a. Can I minus any tax? Yes. So if tomorrow they say Reliance has paid GST of 1 crore, guys, can they minus it? Yes, it's an expense. Except income tax. Except which tax, guys? Income tax, when you pay, it's not even an expense. Everyone. So as a businessman, I paid 2 lakh income tax. Can I take a reduction? No. Same way, when you get a refund of income tax, that's not even income. So if it's by mistake put, guys, income tax refund, you have to remove it, guys. Income tax refund. is not an income. Everyone, income tax refund is not an income and will be removed. Everyone will be removed. So in case you by mistake have taken it as income, will be removed. This is very common. Of course, I can't see it here in the questions, but it's a very common concept overall. Yes. Except guys, interest on refund. Guys, did you know that if you pay extra income tax to the government, they refund it along with what? Interest. Only their interest, everyone. Only what? Interest on refund. Yes. Interest on refund of what? Income tax. That you will remove, but you will take it to IFOS. Take to which head, guys? IFOS. So I'm giving you some examples. You tell me what will do happen. In your PGBP PNL account on the credit side, there is income tax refund of 1 lakh. Yes. No, but they've added it already. So remove it. Excellent. Out of that 1 lakh, 10,000 is interest on refund. Take it to IFOS. So you'll remove 1 lakh and take 10,000 to IFOS. Next, guys, interest paid on income tax. Guys, everyone, interest paid on income tax. Let's talk a little about this because again, something that is very common in the exam. Guys, as a businessman, can I take loans? Yes. And on the loans, what do I pay? Interest. You take loans, pay interest, no problem. Every businessman does that. But if you pay interest on what? Income tax, that is not allowed as a deduction. That is not allowed as deduction. So let me summarize this point for all of you guys. If income tax in the exam, guys, you have to ignore. Unless you are earning interest on what? Refund, then you will take it to where, guys? IFOS. Everyone, I'm giving you some examples. GST paid 20,000. Allowed as a deduction, not allowed as a deduction. Allowed as a deduction. Municipal tax on office building 3,000. Allowed. Income tax 3 lakh. Not allowed. If you minus it, add it back. Interest paid on income tax 7,000. Not allowed. Interest paid, not allowed. Interest earned, IFOS. Refund of income tax, not an income. So that means income tax wholly I will ignore except interest on the refund. Everyone. Next, fourth one. Something that is very common, again, adjustment in the exam. But for that, I'll give you a little background. Guys, can I follow accrual system of accounting? Accrual means what? As and when the transaction happens, guys, follow the year. The shortcut is what? Follow the year. I'll give you an example, guys. I need to pay rent of this year 10 lakh rupees. How much? 10 lakh. And rent of next year is 2 lakh. Next year is 2 lakh. Guys, how much deduction can I take? Follow the year. 10 lakh. Everyone, accrual system means follow the year. How much deduction will I take? Whether you pay or payable, can I take a deduction of that? Yes. Cash system of accounting is called follow cash. Follow cash. 10 lakh this year paid, 2 lakh of next year paid. 12 lakh. Follow cash. Everyone. That's the difference. I'm just putting here, guys. If you follow which system of accounting? Accrual system of accounting, if you follow, and which is mainly the case, you follow the year. What do you follow? I'll give you another example. Don't worry. Income of the year 1 crore. Income of the year. Income of next year 20 lakh. 1 crore because you follow the year. But if you follow cash system of accounting, income of this year received 1 crore, next year received 20 lakh this year only. 1 crore 20. So this is follow cash. Everyone, can we repeat? This is called follow the year. This is called follow cash. Now this is a very common adjustment. Mostly it is accrual system accounting. This is the more common system of accounting. I'll just show you guys. Mostly except one paper has all accrual system of accounting. Here we go. Guys, here this is accrual system of accounting. I'll show you the one which is not accrual system of accounting so you get an idea. Yeah. One second. Yes. Guys, here, what is it, guys? Receipts and payments. And let's check this adjustment, guys, here. He keeps his books of accounts on which basis, guys? Cash. So if he has paid, even if it's paid for next year, guys, will you take a reduction? Because follow cash. I'm giving you some 2-3 examples, guys. You have paid rent 10 lakh for this year, 2 lakh for next year, 12 lakh. You have paid electricity expense only 9 lakh of this year. 9 lakh. But actually expense is 10 lakh. Because follow cash. You have earned income of 1 crore for this year and 10 lakh for next year received. 1 crore 10. You have 1 crore income this year but received only 80 lakh. 8 lakh. Because this is called follow cash. Everyone okay with this, guys? So cash is not very common. Accrual is the one which is very common. So I'm just writing the accrual system follow the year. Cash system is follow what? Cash. All right, now next. Just guys, let's list down all the adjustments, very common adjustments, so that in the exam you don't have to go traditional way of recapping. You can recap with these adjustments. All right. Next, the government has said, listen, yeah, you follow accrual system. Which accrual? Example, electricity expense of Yeshas Academy for the whole year is 10 lakh rupees. How much? And they follow accrual system of accounting, guys. Can they take a deduction of 10 lakh? Yes, follow the year. Everyone follow the. What if they paid 8 lakh? Still, they can take deduction of 10 lakh. But there are five expenses. How many expenses, guys? Five. This is called M3. Everyone. What is the shortcut called? M3. I'll tell you what the shortcut means, but first M3. Guys, these five expenses, the government has said, listen, if you want a deduction, even if you follow with system of accounting, accrual, these five expenses will give you deduction only when you pay. So this is basically deduction on payment basis. Everyone, what is it? Deduction on which basis? But sir, I am following accrual system. Doesn't matter, guys. This will only be given on which basis? Payment basis. Let's talk about M3. Guys, you are paying some money to an MSME. To whom? Micro, small, medium enterprises. You need to pay 1 lakh. How much? You paid only 20. Sorry, you'll get deduction only of 20. That 80,000 whenever you pay. I use a shortcut, guys. That you basically pay, send the screenshot to the government, only then they give you a deduction. Yes. Next, T is for tax. T is for GST, municipal tax, customs duty, other taxes. In a business, can you have tens of taxes? You will get the deduction, but only when you pay. So I'm giving an example, guys. Municipal tax for my office building, 10,000, paid 6,000. 6,000. Next, if I'm paying something to the railways, not very common. If I'm paying to the employees, what is this? Employees, they are BPL. What is it? BPL. Their bonus, their provident fund, and their leave salary. Everyone, their bonus, provident fund, and leave salary. You'll get a deduction only when you pay. And last is interest to banks. This is what, guys, you've taken a business loan. What are you paying on it? Interest. 1 lakh interest payable, you paid only 60,000. Only 60,000. So only when you pay. But you don't have to pay tonight on 21st November. Tonight you don't have to pay. You can pay by June. You can pay by. That means, guys, when does the year end? 31st March. After that, whenever is your due date, whether it's July, October, November, you pay by then. When you file your return, we'll know that you've paid and we'll give you a deduction. So, guys, you don't have to pay today. You have to pay by when, guys? June. Now, guys, I'm giving you example. It'll take some time because I have to fetch those examples, guys. So please accommodate here. I'll just keep showing you those. Whatever I'm discussing here, I'll keep showing you here. No, not in May 23. In one of the later papers only. Yes. Here, look at point number 3, adjustment number 3. Rates and taxes include. Include means they've already minus. Everyone, rates and taxes include means they've already minus. GST liability of how much, guys? 5,000. Stop. Is GST a normal expense? Yes, I want more responses. GST normal. Every tax is a normal expense. Repeat. Every tax is a except income tax. So, guys, GST liability. But have you paid it? Yes, 5,000 has been paid. If you paid, by which date have they paid, guys? May. Guys, they have to pay by John. Have they paid it? Yes. Will they get a deduction? Have they already minused it? Yes. What do you do, guys? Nothing. I just changing the question here. Rates and taxes include GST liability of 5,000 unpaid. No deduction. Have you minused it? Add it back. Are we okay? Guys, this is a very common adjustment called M3. Everyone, what is it called, guys? Can we repeat what is M3? MSME, taxes, railway, employees BPL, and interest paid to banks, NBFCs, etc. You will get a deduction only when you and you have to pay by. So in the exam, if they write the word unpaid, not allowed. And if they minus it, add it back. But don't worry, just check for John, guys. They should have paid by John. Everyone. All right. Next, I'm just keeping a stock of what all deductions we can take, all adjustments. Yes, very common adjustment, guys. Next one. I'll show you at least 3 papers where this adjustment has been asked. Guys, opening stock with stock and closing stock has been mismanaged. So opening stock and closing stock is wrong, guys. What is it? Wrong. Now let's understand how to do this adjustment. Guys, your closing stock and your profit, everyone. Your closing stock and your profit, CP, everyone. Closing stock, profit. I want more responses, guys. Closing stock and profit, CP. What is CP? They always go hand in hand. Yes, that means if your closing stock is high, profit will be high. Closing stock is low. So guys, I'm giving you adjustment, guys. Closing stock by mistake is higher by 10,000. By mistake. So if closing stock is higher by 10,000, profit is also high by mistake by 10,000, what will you do? Minus. Guys, everyone changing. Your closing stock by mistake is lower by 18,000. Your profit is also lower by 18,000. What do you do? Add. Everyone okay? And the opposite impact you'll do for what, guys? Closing stock, opening stock. So I'm just writing here, guys, that closing stock and profit in same direction. In which direction, guys? Let's see this adjustment, guys. At least 2-3 papers have this adjustment. I'll start with the May 23 only, since it's here only. No, it's not here. May 23, November 23. Yes, here we go, guys. The opening stock and closing stock have been overvalued by how much, guys? 15 and 20. Guys, only watch on the screen. Yes. First bench also here. I'm writing this. You can use this Word document at home if you want, convert it later. But right now, I only want everyone's understanding. Guys, which one will you focus on? Opening or closing? Closing. Guys, by mistake, it has been overvalued. So if the closing stock is overvalued, profit is overvalued, how will you do it? Reduce by how much, guys? And for opening stock, you will do the opposite, guys. So what is opening stock? 15. So I'll add 15. Are we okay with this, guys? Yes. This is one more adjustment has come here. This is May and November 23 I've done. Not here. Not here. Yes. Opening and closing stocks have been undervalued. By how much percent, guys? 10%. So we'll focus only on one, guys. We'll focus on what? Closing stock. Guys, closing stock is right now how much? 5,58,000. And is it undervalued? That means by mistake it is low. Everyone be patient and have a calculator around with you. Check if you have a calculator with you. If 100 is the right closing stock, by mistake you have shown it as 90. Guys, everyone, I want more responses. I don't want new participants, guys. Otherwise, please watch at home online. You can join the online gang also. If you are here, I want participation. If 100 is the right closing stock, by mistake you have shown. What is the right closing stock? If by mistake you've shown 5,58,000, do the cross multiplication. 6 lakh, 6 lakh 20. And right now it is how much, guys? 5,58,000. Can you tell me the difference? 62,000. Everyone now again doing the maths. Guys, it is undervalued, means it is lower by how much? 62. So your profit is low by 62. So what will you do, guys? Add how much, guys? 62. And same impact opposite direction. So if this is add, you'll minus whatever the difference you get for which stock, guys? Opening stock. Yes. So this came in which paper? December 21. One more paper. It has come in one more paper, guys. I'll just check. And the last paper is here. Okay, I can't find it, but at least twice it has come. So this is another very important adjustment. All right, so 6 adjustments done. Let's move to the next one. That is the 7th one. Very, very, very common adjustment again, you guys here. Guys, you have made a donation towards scientific research. Everyone, what have you made? Donation towards scientific research. Let's discuss this and then let's see it from the exam papers. Guys, as a businessman, Yeshas Academy, guys, what is the business of Yeshas Academy? Education. Of Geo Telecom, Telecom. Of McDonald's, Burger Food. Of Wonderla, amusement park, entertainment. Guys, no matter what your business is the government says that if you donate for which purpose? Scientific research, then you are special for the government and they will give you a deduction no matter what is your business. So in the exam, guys, they will make the PNL and they will write donation towards what? Scientific research. Will you allow the deduction? Yes. I'm just showing you those kind of deductions, guys, here. Here we go. First paper only, guys. Who is this person? Let's see, guys. Mrs. Mithul. She's a qualified medical practitioner. Basically, she's a doctor. And guys, read here. Amount paid to Scientific Research Association. Guys, is it scientific research? Are you allowed this deduction? Yes. And have you already minused it? Yes. So is it perfectly right? Yes. This is November 19. Let's see some more papers. Next one only, guys. See, two papers we selected, both have the same adjustment. I'm telling you, guys, top 50 adjustments if you do in PGBP, you will get your answer right. Yes. See this. Guys, who is this person again? Krishna. Who is he? Furniture manufacturer. He paid 48,000, contributed to a university, approved to be used for which purpose, guys? Scientific research. Has he already minused it? Yes. Can he minus it? Yes. Guys, in spite of his business, doesn't matter what business he is. I told you, Vandala, he's minused it, debit. We don't need to minus again. That's what I'm saying. He's already minus it. So what do we need to do, guys? Nothing. Everyone okay with this, guys? Yes. So this is a very common adjustment. I'm just writing it here. Donation towards what, guys? Scientific research. This is under section 35. What is the section, guys? 35 will be allowed as deduction. Will be allowed as what, guys? Irrespective of business. So doesn't matter what your business is, irrespective of business, you'll get the deduction. Before we lose this sheet, 1 minute. Before we lose this sheet, I'm just going to store this. This is PGBP recap. Top adjustments. Yes, your question. Full amount deduction. Earlier, guys, it used to be funny. If you pay 100, they used to give deduction on 150. But that has changed now. If you give 100, how much deduction you'll get? 100. Yes, that magic is over now. 100 becomes 150. All right. Now, guys, the eighth adjustment. I'm just thinking what next adjustment can be. Very common adjustment I'm taking first. Yes, very, very common, guys. You have spent some money on advertisement. Everyone, you have spent some money on. But this advertisement is not in Bangalore Times, Times of India, Bombay Times. It is advertisement on political magazine. Guys, where have you made an advertisement? In political magazines, everyone. Political magazines. And they use another word, political souvenirs. Political souvenirs. Guys, if you make a donation towards political magazine or political souvenir, guys, is that allowed as a deduction? No. And what if you minus it? You'll add it back. Let's see if you can spot something to do with that. Not in Jan 21. Not here. Not here. Yes. Not here. No, it's not there. I can't spot it. I'll just check this last paper. No. Yes, but I've got my other adjustments, guys. So this is one adjustment. When I spot it, I'll add it, guys. Otherwise, political magazines, advertisement. If it's minus it, what do you do? Add. All right. Next, ninth. Very, very common adjustment, guys. You have made some expense, guys. You have made some payment, guys. It is what? Payment. Everyone repeat. What is it? For an expense. For what? Expense. Example, you are paying a CA. You are paying a bank without deducting TDS, guys. Without deducting what? Very, very, very important. Without deducting TDS. If you know this, great. If you don't know it, with me, guys. Let's keep an amount of 1 lakh. What is the amount? You are paying someone out of India 1 lakh rupees on which you should have deducted what? TDS. You forgot. So the government has a rule and they get very upset if you forget deducting TDS. If you paid abroad 1 lakh without deducting TDS, the government says I won't give you deduction. I won't give you of that 1 lakh. And or if you already taken deduction, add it back. This is abroad. But if you make the same payment to someone in India without deducting TDS, the government doesn't get very upset. It gets 30% upset. How much percent? That means, guys, if you pay to someone in India 1 lakh without deducting TDS, they will disallow how much percent, guys? 30. So if you not minus, you cannot minus 1 lakh. You can only minus 70,000. But sir, I have minus the entire 1 lakh. Then add back 30,000. How much will you add back, guys? 30. Very, very, very common adjustment, guys. Payment for an expense without deducting what, guys? TDS. Yes. So what we'll do is we'll keep adding some adjustments. Then we'll go to the papers and we'll see in common. Yes. Next, very common adjustment again. Yeshas Academy buys a new projector for 1 lakh rupees, guys. Where should it go? P&L or balance sheet? Guys, revenue expense or capital expense? Yeah, accounts professor crying in the background, guys. Give a right answer, please. Please tell me, guys, when you buy a capital expense like a new project, a new laptop, where should it go? Balance sheet, and you should get what? Depreciation. What you should get, guys? By mistake, a lot of times they take the capital expense and put this in P&L. Example: laptop purchase 60,000, debited to admin expense. Have you minused it? What will you do? Add. Then take it where? And you will get depreciation. You get what, guys? So I'm just adding here, guys. Capital expense. Everyone, what is it? Capital expense. Example: purchase of laptop. Repeat, guys. Capital expense. Example: purchase of laptop. By mistake, guys, where do you put it? In P&L account. In which account, guys? P&L account. I'll show you one adjustment of that here. Not in May 23. Yes. Guys, in November 23. Read the fourth point, guys. Admin expense include. First, tell me what does include mean? Already minus 25,000 paid as donation to National Children's Fund. I'm not talking about that right now. And a payment for laptop purchased on 15th May. Guys, how much? 60,000. Guys, have you purchased a laptop? But by mistake, where did you minus it? Admin expense. So what do I do, guys? Add how much? 60,000. Take the 60,000 to the balance sheet and take depreciation at 40%. How much percent, guys? 40%. That brings me to my next adjustment, guys. Yes. Is the 11th adjustment. Yes. We'll keep 10 only on one page. So we'll take a new page here. Yes, let it save patiently. A lot of pages open. Yes, trust me, guys, this way of doing PGBP is very different, but it is very rewarding because we are targeting all the top adjustments that are asked in the paper. So how many adjustments done there, guys? 10. We'll do the 11th one. It's very common, guys. Depreciation, everyone. But first, before that, guys, let's recap what is depreciation, guys. Depreciation is given on which assets? Capital asset, but business asset. Which asset, guys? Business. I'm giving an example. On this projector, can I take depreciation? Yes. Laptop. But TV at home? No. Why not? Personal. So it is only on which assets, guys? Business assets. And on that, guys, you cannot take it any random rates. You have to take the rates mentioned in income tax, guys. Can you tell me briefly the rates? Building? 10%. Good. Furniture? 10%. Intangible assets? 25%. And plant and machinery? 50. Guys, general plant and machinery? 50. More common one, guys. Motor car? 15. Everyone. Motor car? 15. Laptops, etc. 40. So these are the common depreciation. So I'm writing depreciation. And please remember the common rates, guys. Remember which one? Common rates. And I'll write the common rates also, guys. Please tell me for laptop, 40%. Plus motor car, 15%. Plus building, 10%. And intangible asset, guys, 25%. Yes. Now, while this is one of the adjustments, what is the next adjustment in depreciation, guys? In the P&L account, they'll minus depreciation 1 lakh. How much? 1 lakh. And at the bottom of the page, they'll write the depreciation above is as per books of accounts. The right depreciation is 70,000. Will you take as per books of accounts or as per income tax rules? Income tax rules. So please, here, guys, I'll add depreciation, dep always as per income tax rules. Everyone, as per which rules, guys? Income tax rules. Sometimes they write that the above depreciation as per income tax rules. So is that the correct one? Yes. Next adjustment in depreciation. Guys, you forget depreciation. What have you done? Forget depreciation. I'll give you another example of forgetting depreciation, guys. You bought a motor car, you forgot to take depreciation. What do? Take it. You bought a laptop, forgot to take depreciation. Take it. So every time you forget, guys, please remind them and take the depreciation. Are we okay? Next, always decide on full year and half year depreciation. Guys, full year and half year means if an asset is put to use, what is it? Not bought, not when it's bought, not when this projector is bought, when it is put to use. If the asset is put to use for less than 180 days, you get how much depreciation, guys? Half your depreciation. Are we okay with this, guys? Yes. Now, this half year depreciation for your exam, guys, which is in Jan, guys, for half year depreciation, you have a leap year. What is it, guys? Leap year. So the date is 4th October, guys. What is the date? May students, or date is different, guys. Ignore this date. Yes. So for half year, guys, it is 4th October. Any asset put to use till 4th October. Full. After 4th October. Half. Are we okay, guys? So 4th October till 4th October, it is how much depreciation, guys? Full. I'm writing in bracket. Till 4th October, full depreciation. Everyone okay with this, guys? Yes. So if you forget depreciation, remind them. Do you need to buy hard the rates? Common rates you should know. Next, guys, they use the wrong rates. Guys, which rates have they used? Example one, exam question, guys. Intangible assets have been depreciated at 15%. At what rate? But they have minus at 50. So what you do? How much have they minus? 15. Added back, and the right depreciation. Yes. Let's take some depreciation examples, guys. Here. Depreciation includes 1200 as depreciation on what, guys? Trademark wrongly charged at what percent? 50. Have you already minused it? How do I know? Includes. Includes means already minus. So what do I do, guys? Add how much? 1200. Now remove. I have minus the wrong thing. Now I've recovered the wrong thing. But tell me what is the right thing? I'll tell you, guys. If 1200 is 15%, what is 25%? Everyone do this math. Yes. I'm waiting. I'm waiting. Do it, guys. You can't do this straight in the exam. Has to be done now only. So 1.5 months is an exam. 25 into 1200 divided by 15. So what is the right depreciation? 2000 will minus the right depreciation. Are we okay with this, guys? Everyone? Everyone? All right. Next to wrong rates, let's see what else depreciation adjustments are. Yes, very interesting, guys. Here there was only one block containing what? Computers, which came into existence only on 2nd April 2022. Full year, half year? Full year. When new laptops for 1,60,000, printers and scanners for 40,000 were purchased. So guys, what have you purchased? Laptop for how much? 1,50,000 plus 40. How much is the total? 2 lakhs. He charged depreciation at what rate? 60. Can you charge at 60%? No, but you already charged. So how much will you charge it at? 40. So everyone, so here, what is the depreciation, guys? Here, depreciation on computer, how much? Has it been minus? Yes. So what do you do, guys? How do you correct it? Excellent, guys. So first I will add how much? 1,20,000. Have I corrected it? Now take your calculators, guys. 1,60,000 plus 40. 2 lakh into 40%. So the right depreciation is 80,000. Are we okay, guys? This is the second example of wrong depreciation. Depreciation as a concept comes repeatedly. Everyone, everyone, everyone. Next, let's take one more paper. Yes. Guys, here there is no depreciation only. Read this, guys. Receipts and payments, there is no depreciation only. But is depreciation compulsory? Yes. So they have given you assets. You will calculate the depreciation, guys. Read these two lines and calculate depreciation. Point number 5. F. Nursing home equipment at what rate? 40%. No, 15%. So what is the rate? 15. Please tell me the amount. If it's life-saving medical equipment, then 40%. So please tell me this amount. 33,000. All right. Next, medical books into 40%. Sorry. 35,000 into 40%. 14,000. People who are not calculating, guys, I am not responsible. In the exam, you will hit a roadblock. I am very sure about it. Yes. Annual, they are books only. All books, even annual publication. Annual means they, after 1 year, they are no more useful. Still, you will take 40. No, for always. The highest rate now has been changed to 40%. Yes. Next, laptop, how much percent, guys? 40% into what rate? 40. So how much is this? 16,000. All right. See, guys, depreciation. 2 adjustments on depreciation. Out of 15 marks, 2 adjustments are always on depreciation, 1 or 2. Next, guys. Television purchase for which purpose? Nursing home. Is it business purpose? Yes. On which date? 21st September. Put to use on 3rd October. Everyone, guys, so smart. Guys, Yeah, we'll take it for your year. What is your year date? 4th October. Is it put to use on 3rd October? Full year, half year? Full year. So take on the calculators, guys. Television purchase, what is the amount? Purchase of television? 48,000 into what rate, guys? 15%. No, television is 15. Guys, laptop, etc. is what rate? 40. This is not laptop, no. So this is 15%. Yes, 48,000 into 15%. 7,200. Let's recap, guys. Why did you take full year here? 3rd October. Yes. Guys, next, why did you take year? All rates you should by heart it, so you should be able to know. And now, guys, this is the depreciation you will take 7,200. Yes. Some confusion people had on television. Television, what is the rate? 15. Only laptops and all guys have what rate? 40. Yes. Guys, television, people's houses, televisions are 10 years old. Laptops you cannot have such old laptops because they need to change. So laptops what rate? 40. Yes. Can't teach you rates today, guys. You need to know the rates. Go back home, read. No problem. Guys, we are doing a joint work. Some things I'll teach you, some things which you have to by heart. Let's not waste our time here. We'll do by hearting at home. So one thing you should know is rates of debt. I'll write it here only, guys. You should by heart the rates of debt. Remember the common rates. Are we okay with this? Yes. All right. Yes. No, it's always put to use. In fact, when I teach them called OP. You have to take depreciation based on OP. You should own the assets and put to use. So only for depreciation, nowhere else. Only from depreciation. It is from wherever it is put to use. Yes. Good. Any other doubts, guys, on depreciation? Depreciation is very important. Let's check what other papers have given on depreciation. Nothing here in 20 paper. 22. Yes, very interesting, guys. Additional debt, everyone. Guys, do you remember additional debt? Can we recap additional debt? Yes. If not, we'll recap. Don't worry. First, I will teach you the concept and then we'll apply it. Guys, additional debt is at what rate? 20%, and is given only to power manufacturers. Who? Power and manufacturers. So can Tata Power take it? Yes. Can manufacturer of this pen take it? Yeshas Academy? No. Manufacturer of pen can take it, but Yeshas Academy? No. And it is only given to plant and machinery, guys. Only for what? Plant and machinery, except second hand. Except? So except MOS. Actually, the shortcut is MOS. Everyone, what is the shortcut? MOS. All these shortcuts you will find in my quick book, guys, but not on motor vehicle, not on ships and aircrafts, not on second hand, not on office supplies. Yes. So on these four assets, you will not get additional debt. Everyone, can we recap? 20% additional debt on what? Plant and machinery, except MOS. Full form of MOS. Not on motor vehicle, not on office appliance, not on ships and aircrafts, and not on. So basically, this is what additional debt is, and what percent you'll get, guys? 20%. Yes. All right. Now, guys, I am buying a machine of 10 crore rupees. How much? The government says, listen, yeah, good machine. I'll give you a subsidy of 2 crore. I'll give you a subsidy of. So, guys, will I take 10 crore to my balance sheet or 8 crore? 8. Because whatever you have paid, yes, something similar is happening here, guys. Watch very, very, very carefully. Depreciation has not been debited to P&L account. The details of plant and machinery are given as under. We'll start, guys. Everyone, take your calculators. What is the opening value of the block, guys? 4,75,000. This is machinery, so what rate applies? 15%. Yes, no problem. So this is 15%. New machinery purchased during the year, payment made by account pay check. So 4,75,000 plus 7,25,000. How much? 12 lakh. And have you sold one machine? Yes, remember, guys, whenever you sell, you have to just minus it from the block. So 12 lakh minus 75,000 is 11 lakh 25,000. Is that the amount? Means yes. They have told you to ignore additional depreciation somewhere ahead, guys. They'll tell you. But anyways, we'll take additional debt also. Now there's a problem, guys. This calculation is wrong because of this reason here, guys. Read this. She receives subsidy of what? 20% on the new machine purchase. So out of the 7 lakh 25, guys, you have not paid 100%. You only paid 80%. So please do 80% of this. Confident answer, guys. 5 lakh 80,000. Now let's do this calculation again. 4 lakh 75 plus 5 lakh 80 minus 75. 9 lakh 80,000. Perfect. On this, guys, at what percent? 15. Do this maths. 1 lakh Guys, that will be the depreciation that this person called Nisha has to minus. This is depreciation. But let's say, what is she into, guys? She's in the business of, guys, they will not tell you. But if it's manufacturing, you have to also calculate additional debt. Additional debt is given on new plant and machinery, guys. Which is the new plant and machinery? 7 lakh 25. But how much did you pay? So everyone 5 lakh 80 into 20%. Super, guys. 1 lakh 16,000. By the way, if this is half year, then you will take 10% this year, 10% next year. So this is 1 lakh 16,000. God, it's stuck. Okay, so this is additional debt 20%. And guys, any subsidy, what do you do? Minus. Any subsidy you minus. I'm just going to wait patiently. All right. Till then, we'll think of some other common adjustments that happen. Yes, political donations done. Yes, very interesting. Next one, very, it has come 2-3 times before also. We'll talk about that, but only when my computer allows. I don't want to lose out on these 2 points. Clubbing, alternate years, clubbing of income just generally found. Set off, very important, clubbing alternate years, alternate attempts. So maybe 4 on 5 or 3 on 5. All right. Opening all the papers here, guys. Okay. Yes. The two adjustments, the 11th and 12th, let's repeat them, guys. What is the 11th adjustment, guys? Depreciation. On depreciation, you have to remember which rates, guys? Common rates. Remember, common rates. Plus, guys, if there is a subsidy, you will deduct it. I'm just adding that also. Subsidy, what do you do, guys? Deduct. Plus, sometimes you forget depreciation. If you forget depreciation, do you have to do it? Yes. Then you sometimes use wrong rates. So if you use the wrong rates, you have to correct. And it is as per which rules, guys? As per income tax rules. Yes. Next is additional debt. Additional debt is at what percent? 20%. Only for whom, guys? Power and manufacturers. Only for plant and machinery. Except MOS. Guys, anything that you can't figure here, guys, open the QuickBook there and you will find it. Because I can't write it again there and again there as well. So I'm just repeating it. And most of you guys, if you've been my student, you know it. If you don't know it, I'll repeat it here once or twice and you can use the QuickBook, guys. Yes. Next is 13 point. Yes. I recollect something that I want to explain to you guys in point number 13. Very common, it has come twice before. First, tell me relatives definition, guys. What is the definition of relatives? Clown. Next to you, spouse, siblings, children, parents, and grandparents. Now, guys, is it okay or will you pay anyone extra in life? Will you pay anyone extra in life? If vegetable vendor says vegetables 100 rupees, will you pay say no 150? No. If the auto wala here in Bangalore says to go to your house 100 rupees, will say no I'll pay you 500. No, never. But only when you pay extra, guys, when you're actually manipulating tax with your relatives, So the government has made a rule, and this is the rule, guys. If you're making an expense payment, guys, payment for what? Expense, guys, payment for what? And this payment for expense you're making to relatives, guys. Whom are you making to? Plus substantial interest holders, everyone. What are you making a payment for? Expense. To whom? Relatives or substantial interest holders, which is excessive, guys. You're making a payment which is what, guys? Excessive. That means you should have paid 1 lakh, you're paying 1 lakh 40. Everyone. You should have paid how much? But how much are you paying? 1 lakh 40. To whom are you paying this extra? Relatives or substantial interest, and the government says that extra 40,000 will not allow. So I'm giving an example, guys. You paid 1 lakh 10 when you should have paid only 1 lakh. What is the mistake on? 10,000. Have you minused it? We'll have to add back how much? 10,000. I'll tell you two questions where there have been asked this. You paid your brother 50,000 when you should have paid your him 40. 10 will be disallowed. You paid your sister, same. Sister-in-law. No. Why not? Not a relative. Guys, I'll show you where it's come from. So I'll just hoping I can spot it very easily here. Wait. This is These are the papers here. No, I can't spot it in this paper, but I can spot some other adjustments. Let's talk about this adjustment, guys. Everyone, the expense on professional fees paid includes means minus a sum of 1 lakh paid to Ronak without deducting TDS. How much is this allowed? So guys, 30,000 has to be added back. Just got tempted by this. So we've done this adjustment, we've done this adjustment. In fact, we should not take marking the adjustment, guys. Yes. All right. Next is this. I'm checking that excessive payment. Oh, by the way, excessive income is not a problem. Guys, excessive income is not a problem because higher the income, higher the tax. So only excessive payment. Yes. Which one? Only the excess. Excess, yes. Excess is this allowed. Not this one as well. Yes. Everyone read the first one. Read the first adjustment. Are you making a payment? Yes. Is it for an expense? Yes. Is it to a relative? Yes. And is it excessive, guys? Yes. She does not have any qualification only. So is the entire thing excessive only? So how much will you add back, guys? 3 lakhs. This has come again, guys. I want to just, no problem if it takes 2 more minutes, but we have to do this well. This is May 23, November 22, May 23. We'll open more papers. Not in this one. Not in this one. Not in this one. Yes. Here, guys, he sold some furniture. Is it income? Yes. Everyone. So income, there is no problem even if we charge extra. The problem is only on expense. Excellent, guys. Check this. The second part. The expenses on employees' remuneration and benefits includes. Includes means already deducted. Read the next one, guys. Payment of salary 25,000 per month to sister-in-law of Ashish, who was in charge of accounts and receivables. The normal salary is how much? Everyone. Is it a payment? Yes. For expense. How excessive is it? 5,000, guys. But this is sister-in-law, so no adjustment. Nothing, guys. What will be the adjustment here? Nothing. And you will write that this payment of expense is to sister-in-law, which is not in the definition of relative. Hence, no adjustment required. Are we okay with this, guys? Yes. There is one more question, guys. 1 minute. Let me spot that as well. Very common, guys. Over the years, I've realized that PGBP gets very predictable. Yeah, I know it's very sounds very unreal, but it's very predictable, guys. Let's read depreciation. I'm telling you, this is so predictable. Read this. Depreciation allowable as per income tax rules is how much, guys? 4 lakh 50. And see how much have you minus, guys? Depreciation 6 lakh 17. So what do I do? Add 6 lakh 17 and minus 4 lakh 50. Are we okay with this? Yes. But don't stop there. Continue reading the depreciation part. Motor car purchase for how much? 3 lakh for supply of finished goods to dealers on 25th August, on which depreciation has been forgotten, guys. Here it's written. During the year, following depreciation was not considered. So will you consider it now? Yes. On 3 lakh at what percent, guys? 15%. Are we okay with this, guys? Yes. What if this was 25th of October? Then half year. Yes. All right. So this is very common. I've just told you this is very common. This is December 21, May 22 paper. No. November 22 paper. Give me an idea when you want a breaker. No problem, guys. Here. Yes, everyone. No. Yes, this we've already done. And this is the last paper, I think here. Yes, everyone read the first one. Admin charges include how much? That means have you minus 46,000 paid as commission to whom? Brother. The commission is how much, guys? 36. So have you paid extra? Guys, repeat. Is it a payment for an expense to a relative? So how much extra, guys, have you paid? That is not allowed. If you minus it, we will add how much, guys? 10,000. Are we okay? So, guys, what time did we start our lecture? 1. So 2:45, 3:45. Just 2 hours. Can we do 15 more minutes? Yes. All right. So this is a very interesting one. Next, I've already remember next adjustment, so I'm just going to talk about that before this goes bad. I'll just save it also. This is top adjustments part 2. Yes, the next one is very simple, guys. Cash payment. Everyone, what is it? Guys, pretty simple. In reality, guys, are we using cash? Yes, but the government says don't use too much of it. You can pay up to 10,000 per person per day, will not have any problem. Or if you're paying to a transporter, goods transporter, you can pay up to 35,000 per person per day. Guys, I'm giving you some examples. Someone came to repair this TV, 12,000 rupees cash paid. Full disallowed, full, not 2,000, guys, fully disallowed. They're very strict about it. To a GTA, 33,000 allowed. Yes, so I'm just writing here cash disallowed. What is it, guys? This is so important. If you can by heart the section also, it will be great. 48.3, guys. What is the section? And what are the two limits? 10,000 per person per day, and the second limit is 35,000 per person per day. This is for whom, guys? GTA. Yes, very important. Let's see how many years it has come in. May 24, I think it's here only, guys. Everyone. Assessee paid 33,000 in cash to a transport carrier. Is this okay? And has it already minus it? This amount is included in manufacturing. So what do you do, guys? Nothing. But you'll write a note. Whenever this comes, you'll write a note that is allowed up to 35,000 per person per day. Yes, this is November 23. We'll go backwards, May 23. November 22. B part. Is it paid in cash? Yes. Cash more than how much is disallowed, guys? 10,000. So how much will be disallowed here? Full 60,000. Yes. This is depreciation. I'm just tick marking what all. Yes, guys. See this one. We've done this, right? Yes, television purchase we've done. I'm just tick marking so that we know we've done some of these. May 22 adjustment. Cash. Everyone, read this one. 25,000 paid to a creditor for goods in cash. You should have paid only. Have you paid 25? And guys, you already minus it because it's a creditor. Creditor means you already passed the journal entry. So what do you do, guys? Add back how much, guys? 25. Next. Cash. Family planning also. Yes. Everyone read this. Of course, not on this, but we can still discuss it. Everyone read this. Are you making a payment to someone? Yes. How much? 25. And have you already minused it? Yes. But you did not deduct what, guys? TDS. So how much will I add back? Please take your calculators to 25,000 into 30%. 7,000? That you will add back. Everyone getting it? Yes. Look at this one also. I'm just now going to see what all we finish. Written down value. Let's see what is the depreciation they've calculated, guys. Check. Have they calculated depreciation? Check. Guys, 90,000. That is wrong. So what do I do? Add how much, guys? 90,000. And can we calculate the correct depreciation? Yes. On professional books, 40%. Thanks, everyone. On professional books, how much percent, guys? 40. So 90,000 into what? 40%. How much is that? 36,000. Can I minus that? Yes. On computers, what percent? Please do that. 14,000. Can I minus that also? Yes. And guys, something at the top which we've already covered, guys. Check this. Everyone, purchase of furniture. Where have they put expense? Is it supposed to be in P&L? No. So where will we take it? And we'll take what on this? Depreciation. Please, on furniture, what rate? So we'll also minus 4,800. Guys, everyone, remember the laptop adjustment? Same. Laptop you had put in the expense. Guys, people who are not understanding this, please understand this really well. 1 minute. Guys, why are we taking this as a balance sheet? Capital expense. And you'll take what on this? I'm assuming this is full year, so I'm taking 10% depreciation. Are we okay? Yes. Computer 40%. Computer and accessories also. Laptops, computers, accessories 40%. They call it peripherals. Yes. All right. I'm going to some more question papers. Yes, guys, see this. Please read this and tell me what to be done in this case. Guys, what has he forgotten to take depreciation? Can we take it? 12 lakh into what rate? See, same thing, guys. Motor car twice it has come. So trust me, this is a very big trend of ICI. This is a depreciation. So 15%. And please read the first line and tell me what does this mean. Depreciation and books of accounts is same as per income tax. So that means whatever they minus here, guys, check what have they minus here. Oh, they've given you the profit only. So whatever they minus, is it correct? Yes. Only thing they have to not take in motor car, so we'll have to take this depreciation. Are we okay? Can we calculate 12 lakh into 15%? 1 lakh 80. Can I minus 1 lakh 80? Yes. All right. Let's do one more adjustment. I'm just thinking which other adjustment is very common. Hmm. Yes, read this also, guys. Is it common, guys? Yes. Have you already done this? Yes. This is the next one, which is pretty common. I'll just show it to you. Guys, as a businessman, can I donate money to Tirupati Trust? Yes. Can I donate money to PM Cares Fund? Yes. The government says donate all this money, but that's not allowed as a deduction where? In business, because that's not connected. Tirupati Trust has no connection to your business, guys. You believe in it, that's your personal thing. Yes. So everyone, a lot of times they put donations. What do they put, guys? Donations at business expense. Donations as what, guys? Business expense. Donations as business expense will be disallowed. Will be what, guys? But sir, will we get deduction under 80G? Yes. But in PGBP, it will not be allowed. Its prime example is the next paper only, guys. Check. Guys, this person, Krishna, debit means already minus. Read the first one. 20,000 paid to Guru. See, you believe in God, great. But that's not connected to PGBP. So if you minus it, what do I do, guys? Add. Guys, I want more confident answers. What do I do, guys? Add. All right. I'm just checking if there's one more like this. Yes. Pay through. So first, it's not from PGBP. Remove it. 80G will not get deduction because it's paid in cash. So those are two separate things. I'm not discussing that because we're not talking about deduction chapter. Yes. But does it belong to PGBP? No. So I'm adding it. I see the next one is already ready here, guys. Please read this fifth one. Miscellaneous expense include. Include mean already minus. How much have you minus? Guys, you believe in the Prime Minister's Relief Fund, good. But guys, that's not allowed in PGBP. You can take it where, guys? 80G. So this one, what do you do, guys? Add. It's pretty common, this one. Yes. Mr. Ashish made a contribution of 1 lakh in, sorry, no, not this one. Yes. Hey, this is other information. Other information means what? Adjustments have not been done. Adjustments have not been done. Yes, so adjustments have not been done. Just one last paper we'll see. Okay. So this is till now, guys. These adjustments we've reached till where, guys? 15 adjustments. I'm just going to save it here. All right, and we'll come back from the break and we'll try and see if we can do more PGBP adjustments, and then we'll go through these papers, guys, and we'll see how much we can solve in these papers. Guys, question number one is asking: is it mainly on PGBP? Yes, but does it have other heads of income also? Yes. And mainly it has deduction under chapter 6A. So I won't be able to solve those sums today because that belongs to computation, but this will give you a very, very good grip on what lies ahead in PGBP at least. Yes. So PGBP part we'll be able to solve, yes, with these adjustments. Ideal time to complete any question is into 2. So if it's 15 marks, into 2 is how many marks? How many minutes? 30 minutes. Ideal time. So just a general math is whatever marks into number of time. So, but MCQs sometimes help us. So some MCQs happen faster. If it's a 2 mark MCQ, sometimes it doesn't take 4 minutes. So you save some time. But the strategy is that you should do this question number 1 last, right in the end. So whatever time is saved, then you put all your energies here. Also, it's sometimes tricky. So you don't want to, hit something very tricky at the start. So first you do GST, then you start DT with the questions that the optional ones, and then you move here, and then you move to MCQs. Yes, yeah. How many questions are there for DT? Now the first one is compulsory, that is 15 marks, and then for 20 marks there are 4 questions. 5 marks. Yes, they split also sometimes. They don't give this kind of pattern, but the only thing they know is for first question is for 15 marks compulsory. There will be internal choice. Yes. Yeah. All right, guys. 15 points down. We'll of course wait for the screen to turn up, but we'll just discuss right now a couple of things before we move ahead, guys. While we're looking at PGBP, there are some incomes which I want to talk about and some new things I want to talk about. One thing I want to talk about is presumptive tax. Guys, everyone, what is it? Presumptive tax, also called presumptive income. Now, guys, how many heads of income? 5. Guys, 4 heads of income have no choice. Salary, whatever is your salary, is your income. Capital gain, whatever is your capital gain, is your income. IFOS also same. House property also same. Just in business, only in which room? Business. The government says, listen, I'll give you 2 choices. I'll give you how many choices? 2. Either you want to maintain your books of accounts, you do that. If you don't want to maintain your books of accounts, you can fall for which income? Presumptive income. So this, how many choices? 2 are only given in which room? PGBP. Yes. Now, what are the 2 choices and how does it work? It works for smaller businessmen. Yes. What is smaller businesses? Let me give you an idea. So 44 AD, what is the section? 44 AD, that is for business. 44 ADA, professions, and 44 AE is for GTA. Yes, in all these 3 cases, the government says don't maintain your books of accounts. Don't maintain what? And don't even go for audit. So are you saving money? Yes, you don't have to arrange what? Accounts. You don't have to arrange for a audit. So those 2 things you don't have to do. And you have to show fixed profits. You have to show what? Fixed profits. Now, is it compulsory to follow presumptive income? Not at all. This is 2 ways in Google Maps size. Can I follow presumptive income? Or I can maintain my books of accounts, whichever is lower. Whichever is lower. Now, let's again focus on presumptive income. Let's say all of us are doing the same business. We are one team, guys. And let's say I'm the CFO of the company and I maintain the books of accounts as a business. We have income of 10 lakh rupees. How much? 10 lakh. But you guys think that, listen, yeah, why show books of accounts? Our turnover as a business is 1 crore. How much? 1 crore, and everything is in the bank account into 6%. Into what percent? Is how many lakhs? 6 lakhs. So which is better, 6 lakh or 10 lakh? 6 lakh. So I can choose for presumptive income. But 44 AD, guys, makes it compulsory that once you choose 44 AD in 1 year, you have to choose it for the next 5 years. Next how many years? All right. Now, same thing again, but let's say we are a CFO. I'm a CFO of the CFO. Let's say, show profit of 20 lakhs. How much I show profit of? And let's say the turnover of the company is 30 lakh. And you maintain books of accounts and you show turnover 44 ADA, presumptive income, is 50%. How much is presumptive income? So 30 lakh into 50% is how much? 15. So you are saying income profit is 15. I'm saying profit is 20. Which one we can follow? 15. And here there is no compulsion. 1 year you can do presumptive income, next year books of accounts. So only 44 AD tells you that you have to follow this section for how many years? 5 years. 44 AD does not tell you. And let's say all of us are a transport company. I'm the CFO again. I have made profit of 5 lakh rupees, guys. As per my books of accounts, what is the profit? You calculate 7,500 per truck into the number of months, etc., and you say 4,70,000, which is better. 4 lakhs. So, guys, always you have two options. One is as per books of accounts, one is as per presumptive, and you can take whichever is lower. Everyone okay? Now, let's focus on what is presumptive. Presumptive means they tell you that we are presuming your profit to be what percent? 6% and 8%. Can you show higher? Yes, higher is not a problem, but you can't show lower. If you want to show lower, then the government wants to know how you arrange your accounts and please get it audited. Example, guys, you wrote a fabulous paper in the exam. You thought you'll get 60 marks, but you got 6 marks. Now, is that a problem? Yes. You will apply for what? Revalue. From 60, if you got 70? No. Guys, higher is not a problem. What is the problem? Lower. Same way here, the government says you expecting you to pay how much percent? 6 and 8. If you make higher, if you want to show higher, no problem. But lower, you should show. Yes. In that, the shortcut is up. What is the shortcut? No accounts to be maintained, A. No audit to be done, A. And fixed profits, P. AAP. Yes, everyone okay. ADA, what percent? 50%. And transport is 7,500 for light and medium goods vehicle. But if it's a heavy truck means those big trucks, then they're expecting 1,000 per ton. 1,000. So let's say the truck is for 15 ton. 15,000, 14 ton. And heavy trucks means more than 12 tons. More than how many tons, right? So in the exam, 10 ton, 7,500. 11 ton, 7,500. 12 ton, 7,500. But more than 12 ton, 1,000 per ton. Are we okay? Now they say that once we assume 6, 8, 50%, 7,500, I will not give you any more deduction in PGBP room. Which room is closed, guys? PGBP. So can I take more repair expenditure? No. More depreciation? Additional depreciation? Nothing. Which room is closed? PGBP shop is closed. You can't take any further deduction from this room. Are we okay with this, guys? Yes. So this is something that you should know. And is this available for everyone, guys? No, it is only available for small businessmen. Guys, 44 AD can be taken if your turnover is up to 2 crore. How many crore, guys? 2. A 44 ADA can be taken if your turnover is 50 lakh. How many lakh? And GTA only up to 10 goods carriages. How many goods carriages? You have 8 goods carriages. Yes. You have 11 goods carriages. No. As if you own 11 goods carriages, no. Exam question. You own 11 goods carriages, but you put to use only 9. Still you can't, because put to use, put to use is only for depreciation. Here you have to see how many you own. So basically, presumptive taxation is only for smaller businessmen. This limit has now increased. 2 crore limit has increased to 3 crore. How much? 50 lakh limit for professional increased to 75 lakh. Only if your cash transactions are low. Repeat, only if your cash transactions are. Guys, all of us are doctors. We don't accept any cash. Is our cash transactions low? Then what is the limit, guys? 75 lakhs. Profession. In business, if you don't use cash, 3 crore. So the new limits is only if you don't use cash. And you can use cash up to 5%. Up to how much percent, guys? 5%. Are we okay with this, guys? So have an idea about presumptive tax. I'll tell you why. Because presumptive tax is sometimes used. I'll show you how it's used, guys. Everyone here. This is point number 16. What is the point number 16, guys? Presumptive income. It will show up on the screen also in some time. So how many presumptive incomes, guys? 3. First one, 44 AD. Next one, 44 ADA. And last one, guys, is 44 AE. I'll show you how this works, guys, through a sum which is here. This is your sum. Actually, this one. Have a look, guys. Who is this person, Mr. Pramod? What kind of trader? Retail trader. Is he a businessman? How much is his sales? 70 lakh 80,000. So is he a small retail trader, guys? Yes. And all the sales are by account paid check. That means the money has come to which account, guys? Bank account. Now, guys, can we maintain our books of accounts? Yes. And we can find a profit. Let's say how much is the profit? Assuming how much is the profit? 10 lakh 46. But guys, this is one way. Google Map has how many ways? 2. First one is your books of accounts. Second one, guys, everyone watch here. See what is asked here. He opts to compute business profit under presumptive tax. Then in that case, guys, not other rooms, guys. Will presumptive tax impact his house property? No. Will it impact IFOS? No. It will only impact, and it's so simple to calculate, guys. Everyone take your calculator. If he opts for presumptive tax, 70 lakh 80,000 into 6%. 4 lakh 24,000, guys. That's his PGBP income final. Yeah, okay. 4 lakh 24 8. Are we okay? Guys, this is not his house property. House property is separate. IFO is separate. Only which room? So, sir, you can follow this one or you can maintain books of accounts. Which one you will take? Whichever is lower. Are we okay with this, guys? Yes. So, one of the things they said is find out as per presumptive taxation. Yes. So, this is something that you should know. Ideally, presumptive income 4480, 4480, and 44AA. Looking at the next adjustment already. Guys, everyone who pays you salary, your employer, everyone. Can you join EY? And EY will pay you what? Salary. After that, can you join KPMG? They will also pay you what? And salary is taxed in which room? Then why are we discussing it today? I'll tell you guys. Partners of partnership firm. Repeat with me, guys. Partners of partnership firm, they also get what? And that is called P salary, guys. What is it called? That P salary, guys, will always go under which head? PGBP. And same way, guys, can you earn interest? Yes, from bank account, guys. Where will it go? IFOS. But if you earn interest from a partnership firm, that is called partners interest. What is it called, guys? That will also go in which head, guys? PGBP. If you want to understand the logic, I'll tell you the logic. They say you're a partner. Partner means you're almost like running the business yourself. And that's why partner salary and partner's interest goes in which head, guys? PGBP. And the hidden meaning, I'll tell you the hidden meaning, guys. They don't want to give you a standard deduction. Really, the real reason is they don't want to give you. That's why they take it where, guys? PGBP. Are we okay with this, everyone? Everyone. Now there is limit. Partner's interest. Guys, imagine all of us are running a partnership firm. What are we running? Can we take bank loan? Yes. And can we pay interest? Yes. But if you pay interest to whom? Partners, you can pay maximum 12%. How much can you pay maximum? Heard of it before? Yes. So example, guys, we are a partnership firm. We have a partner from whom we've taken money and we are paying him interest at 18%. You can pay, but deduction only 12%. And for him also income will be only 12%. Everyone. For you deduction will be, and for income also 12. Example, guys, we paid 18%, 1 lakh 80. 18%. Have you paid it? The government can't stop us, guys. Cash. Can I pay cash 12,000? Yes, the government can't stop you, but they will disallow it. Same way, guys. How much did you pay interest? 1 lakh 80. At what rate? 18%. You paid, no problem. But deduction we will give you only of 1 lakh 20 at what percent? 12%. And same with the partner got how much? 1 lakh 80, but he will be taxed same to same on 1 lakh 20. Yes, by heart, same to same. What is the shortcut? So what was your deduction? 1 lakh 20. What is his income? 1 lakh 20. Are we okay? Changing it. You paid partners interest 10%, 1 lakh. You will also get deduction of 1 lakh. He'll also get income of 1 lakh. Same to same. Everyone. Now for salary also, guys, there is a limit. They say the higher the profit of the partnership firm. Repeat with me, guys. The higher the profit. If the partnership firm does well, can they pay higher salary? Yes. Guys, tomorrow, if your parents do well, will you get better pocket money also? Will your house look better also? Yes, same way. A partnership firm, if they do well, the partner salary can be well. So they say partner salary also they put a limit, but not percentage. Percentage is where? Interest. In salary, what they take is the profit. What do they take? What? Partnership firms profit. Everyone watch here. I'm talking about which salary? P salary. How do you determine the P salary limit, guys? They say first take the profit of the partnership firm. Example, the profit of the partnership firm is 10 lakh. How much? 10 lakh. Everyone. If you're not understanding this, let me give you another idea. If your parents do too well, can you get big pocket money? Yes. If your parents don't do too well, not big pocket money. Same way here, guys. If your partnership firm does very well, you can pay partner salary high. Yes. Partnership firm has a profit of how many lakh? They say we'll split this 10 lakh into up to 3 lakh. Up to how much? And above 3 lakh, which is how much, guys? 7 lakh. Up to 3 lakh, 90%. Above 3 lakh, 60%. This they are finding the limit. Everyone be with me, do the calculation with me. 3 lakh into 90,000, 90%. 2 lakh, 70,000. And 7 lakh into 60%. 4 lakh 20. Please add both these numbers. 6 lakh 90,000. That means they are saying, listen, your partnership firm, how much profit did you make? 10 lakh. How much profit did you make? On 10 lakh profit, you cannot pay more than 6 lakh 90 as salary to whom? Partner. But sir, I have paid 7 lakh 50. No problem. You paid 7 lakh 50, but you will get deduction only of 6 lakh. And same partner will get income also of 6 lakh 90. Same to same. It's very complex concept, but you understood well. Guys, can we repeat? The better the profit, the higher the salary. Repeat. The better the profit. So you first have to take the profit. How do you take the profit? Profit means income minus all expenses. Even interest at maximum what percent? 12%. and then that profit you have to split up to 3 lakh, above 3 lakh. Now I am changing the profit number, guys. Profit is only 1 lakh. Very disappointing, guys. Profit is only, so now up to 3 lakh is 1 lakh. Up to 3 lakh is only 1 lakh. Above 3 lakh is 0. This into how much? The government says 90,000 is too less. If this is such a low number, at least you can pay salary of 1 lakh 50. Everyone. So what is the minimum allowance? 1 lakh 50. That much you can. What if the partnership firm is making a loss? Still you can pay 1 lakh 50. Everyone. So guys, repeat with me. When a partnership firm is paying interest and salary to whom? Partners, there is a limit. On interest, what is the limit? 12%. Can I pay more? Yes, but you'll get deduction only of 12%. And partner salary depends on your profit. Higher the profit, you'll split up to 3 lakh, above 3 lakh, up to 3 lakh 90, above 3 lakh 60. And if it's too low, no, don't worry, still you can pay 1 lakh. This is not per partner, this is to all the partners. So this 6 lakh 90 you can pay to whom? All the partners in this. You want to pay more, make more profit. It's simple, no? If you're earning so much, then how can you pay higher salary? Are we getting the point, guys? Yes. This is a very common concept in the exams. Yes, this has come before, and we'll see how this has come here also. Let's apply this. I'm removing all this. I don't know why I wrote all this here. Yes, I'm just splitting it. Partner salary, guys, will depend on what? Profit. Everyone will depend on profit. You'll split the profit up to 3 lakh at what percent? And above 3 lakh at what percent, guys? 60%. Excellent. Now let's apply whatever we are learning, guys, into practical life, or sorry, exam life. Yes, here we go. I'll just show you one question. Yes, everyone read this point. Point number 7. They're talking about a lady called Nisha. Guys, is there a partnership firm? What's the name? Ramji Textiles. Are they paying interest of how much? 2 lakh. At what rate? They have already paid. They've already paid. But the government says sorry, sir. You can pay, but deduction only. So let's find out the number first, guys. If 2 lakh is 15%, everyone. If 2 lakh is what percent? 15%. If 2 lakh is 15%, how much is 12%? 1 lakh 60,000. So Ramji Textiles, you will get a deduction only of 1 lakh 60. But this question is not about Ramji Textiles. It's about the partner Nisha. So Nisha's income will also be how much, guys? 1 lakh 60,000. This is which interest? Where will this go? PGBP. I can recap it if you want, guys. First, how much did you find out? 2 lakhs. But that is at what rate? So 12% is what? 1 lakh 60. But Ramji Textile has done something wrong. He has already paid it. It's okay. But deduction only of 1 lakh 60. And Nisha, her income is also 1 lakh 60. Where will their income go? PGBP. Yes, this has come again a couple of times. So be careful here, guys. Everyone. All right. Next. Where will the? So, okay. She's got extra money, but partnership firm will pay the tax because they got deduction only of 1 lakh 60. So they paid 2 lakh, but they got a deduction only of 1 lakh 60. That 40 automatically they will have to pay tax. Partnership firm, I'll give you the numbers. Example, partnership firm profit is 10 lakhs. How much did they pay? 2 lakh. Yeah, okay, take the numbers here. Everyone watch. He's asked something very conceptual, not exam related, but conceptual. So watch. How much is the partnership firm paying? 2 lakh. So they want deduction of how much? 2 lakh. If they get deduction of 2 lakh, what is their income? 8 lakh. On which they will pay tax. Yes. But the government says, sorry, I'll not give you 2 lakh. On 10 lakh, I will only give you 1 lakh 60. So what is their income? 8 lakh 40. And who will pay tax on that 40? Partnership firm. And if you want to go one step ahead, guys, partnership firm will pay a flat rate of 30%. So they are getting 30% on that. But don't go into that level of it. Not required. Real life will teach you all this. From an exam perspective, guys, same to same. Repeat. Same to same. 12% there, 12% in the hands of Nisha. And salary, whatever the partnership firm gets, same in the hands of Nisha. If salary was there. Yes, everyone. Okay. Yes.
Salary, the 12% will be included. 12% will be deducted.
Yes. You can't minus 1 to, you can't. Okay. Good question again. when you're calculating profit of the partnership firm, can you minus 2 lakh or you'll minus 1 lakh 60? 1 lakh 60. Yes. So when you're calculating the profit, the interest you'll minus is maximum 12. Yes. All right. So this is another concept. I hope this is clear. This is slightly complicated. Yes. Yes. Sleeping partner can get interest. They can't get salary. Good question again, guys. Everyone's woken up suddenly. Guys, if I'm a sleeping partner, literally I'm a sleeping partner in my partnership firm back in Bombay. Because I hardly go to office and work. I'm the sleeping partner. I can't get salary. Because for what are you getting salary? For sleeping. So salary is not allowed, but I can get interest. Yes. This is real, guys. I have a partnership firm back in Mumbai. I take two things from them. I take interest. I take what? 12%. It's fixed. I introduce capital. I take 12%. And every year when we finish our calculations, the share of profit I take. Share of profit is exempt because who's paid the tax? Yes. On the interest, I have to pay the tax in my books. Yes. All right. So this is another adjustment. Let's go to question or point number 18, which I already seen the adjustment, guys. Let's talk about that. Guys, there are three kinds of businesses. Everyone, you know it already. One is called. So I'm just writing here, guys, types of business. Everyone, you tell me, guys, what are the three types of businesses? One is non-speculative business. One is speculative business. Can you give me an example of speculative business? Trading, intraday trading, and one is called specified business. Yes. Now, guys, you have to buy hard specified business. There's a shortcut in my QuickBook. You can use that, and you can buy hard specified business list. But just telling you derivative trading. Which trading? Futures, options, where you lose a lot of money, also make a lot of money. That is considered as normal business. Which business? So in the exam, they say that you have Yeshas Academy as a business. Normal business. You have McDonald's. Normal business. Starbucks. Intraday trading. Speculating business. But they say derivatives trading. Normal. So how does it matter? I'll tell you how does it matter, guys. This can be carried forward for 8 years. This can be carried forward for 4. This can be set off against anywhere. This is unique. So does it matter? Yes. I'm just reading something from the screen, guys. Watch. Read this line. This is the 6th point here. Is it a loss? From which trading? Derivatives. Which is the loss? Normal business loss. So can I set it off, guys, easily? Yes. If for people who take speculative business loss, you will not set off, and that will be a wrong answer. Yes, everyone okay with this? Yes, 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 yes. So derivatives is what kind of business, guys? Normal. I'm just writing here, guys, so that you are well aware of it. Derivatives. I'm just writing slightly better. Futures, options, swaps, many things, but overall they will not give you those details. They'll say derivatives. So derivatives is non-speculative business. Okay, going to the next one now. Thinking what next can come in the exam and what comes usually. Let me just check, guys. Very speculative, highly speculative. And just check what else is appearing in exams. Very nice, guys. We've covered so much already. Yes. I'll tell you one more thing, guys. Check if you are able to understand this, guys. Any personal expenses, everyone, repeat. Any personal expenses, are they allowed in your business? No. Personal expenses disallowed. Of course, this is very easy to identify. I'll show you what is personal expense and how is this disallowed, guys. Everyone, watch here. Guys, here there is a person called Bhasin who has some expenditures here. I'm reading one such expenditure, guys. Read this one expenditure here. 6th point. The expense on insurance premium of how much, guys? 72,000, guys. Where is insurance premium? Let's check, guys. Insurance. How much? 72. Have you minus it in PGBP? But this is insurance for whom, guys? Your spouse, guys. Where is it? Yes, it is for your spouse, your children, and for yourself. Is it personal? Yes. Have you minus it? What do you do, guys? Add. I don't think there is any challenge. Personal expenses you will easily identify. All right. Yes, very interesting again. All right. Perfect. Guys, you will tell me how will I tackle this. I bought a new laptop for 1 lakh rupees. How much? How much will I take to my balance sheet? 1 lakh. And what depreciation will I take on laptop? 40%. Out of that 1 lakh, guys, I paid 30,000 in cash. So how much will be disallowed, guys? 30. 30. Yeah, whole 30 will be disallowed. So everyone, guys, laptop purchase for 1 lakh. 70 I gave a check. Is it right? 30 I paid. That cash component, guys, will not be allowed to be taken to where? Balance sheet. In a nutshell, guys, cash has to be ignored, everyone. Cash has to be. So now I paid 1 lakh for the laptop, 30,000 in cash, 70,000 in check. So in the balance sheet, how much will go? 70. That's a punishment. Why did you pay cash? Now depreciation will be on 70. Guys, they are discouraging you to use cash. Guys, everyone read here. He purchased what? New furniture. Where did he put it? Income and expenditure, which is obviously not. It should go where? Balance sheet. But guys, read this. Guys, have you paid 18,000? Maximum, how much is allowed? 10,000. Have you paid more? So this 18,000 as a punishment will not be allowed to be taken where, guys? Balance sheet. So whatever is the amount of furniture, let's say furniture is for 1 lakh. 1 lakh minus 18. So only 82,000 will be allowed to take the balance sheet. Are we aware of this, guys? Okay. So I'm just writing here. Entire 18 will be removed. The balance, no. Cash, they are very strict. The moment you cross 10, no, gone. It's like a kabaddi game. The moment you touch it, you're out. So it's like that. Yes. I'm just writing here, guys. Purchase of asset in cash. More than how much, guys? 10,000 per person per day. Disallowed. That is, no depreciation can be taken. All right. Guys, since we talk about personal expenses, I'll give you another personal expense. See and think and let me know if you're understanding this. Motor car used for business. Everyone, motor car used for business. So can I take petrol expenses? Yes. Can I take insurance on motor car? Can I take depreciation on motor car? Yes, great. But one small line, 20% is used for personal purpose. So personal is how much? 20%. So insurance also now how much will be disallowed? 20. Depreciation also how much will be disallowed? 20%. Petrol also how much will be disallowed? 20. Are we okay, guys? So sometimes personal expenses are not the whole. Some part is personal, guys. Everyone okay with this? So personal expenses disallowed whether fully or partly. Yes. All right. Looking at more. I think we've reached that stage, guys, where almost everything has been covered. Yes, one small thing which is left. Let's cover that also. Guys, slightly tricky. Pay a little attention. You're a businessman. Who are you? As a businessman, guys, can you have employees? Everyone, everyone. To your employees, what will you pay? Salary. Excellent. Will you get a deduction for that? Yes. To your employees, can you pay PF contribution? Yes. NPS also. Gratuity fund also. Yes. So let's say, guys, all of you are employers. You all are the masters. Masters means employers. I call them master and slave, guys. Let's say all of you are employers and you all are paying salary of 1 lakh rupees. Will you get a deduction for that? Yes. Provident fund contribution 10,000. Will you get a deduction of that? NPS contribution 8,000. Will you get a deduction of that? And gratuity fund 18,000. Will you get a deduction for that? Yes. But the only thing is, guys, these three the government says I'll give you a deduction only if you pay. We've already covered it. M3. Only if you pay. By today, tomorrow, no. You have to pay by John, which is great. This is something you understood now. Next level, guys. Employee also wants to contribute. Let's call him slave. Slave also wants to contribute to his PF account. To which account? Let's take a number of 6,000 rupees. He wants to contribute how much? But guys, who is going to pay him salary? You are the employer. Guys, are you going to pay him salary? Yes. So he says, listen, from my salary only, can you take 6,000? Everyone, how much have you contributed to PF? 10. That's your contribution. Everyone, that's whose contribution? Master's contribution. Whose contribution? You have to pay by when? John. It's your money, you can pay by John. But slave says, listen, master, I also want to contribute 6,000. How much? Keeping a different number, guys, purposely. So you tell him, I'm going to pay you anyways salary. I'm going to pay you what? Your salary is 1 lakh. Out of 1 lakh, I'll take 6,000. I'll take what? and I'll pay it on your behalf. So that 6,000, is it master's contribution or slaves? Superb, guys. So everyone repeating, 10,000 is whose contribution? Master. It will be a deduction only if paid by when? John, which is great. But now, guys, slaves contribution is how much? 6,000. That is not your money. Don't misuse it. And people do misuse it. So the government has made a rule that 6,000 as PGBP income, it will be added first. Is it actually your income? No. But to deter you or to avoid misusing it, they say first we'll add it to your income, PGBP. And if you pay by next month, not John, you have to pay by monthly due date. Guys, which month are we in right now? November. If you pay by December, you'll get a deduction. But if you don't pay by December, no deduction. That means you'll have to pay tax. Very complicated, but understood really well. Guys, in the exam, master's contribution can be paid to John. But slave's contribution, guys, has to be paid by monthly due date. Yes. I'm taking a question here. See if you're able to understand or answer it. This is an RTP question, guys. Yes. Watch, no problem, guys. Take your time, but watch this. Yeah. Some of this we can discuss. Guys, read this. Guys, salaries include, have you minused it? Yes. So what do I do? Add. All right. This is something you know. See this one. We'll discuss. We'll discuss. You'll miss out on this. Keep it in your mind. Ask me the doubt. Guys, look at E. Is it already minus? What do you do? Add. Read this. Is depreciation right? Yes. It is as per which rules? But did you forget something? Yes. Guys, very common these adjustments. At what rate will you take? 15%. Yes. But I want something which closing stock, guys. Is it low? Your profit is low. What do you do? Add 25,000. It's very common adjustments now. Income tax refund. All this is okay. I'm not getting that one which I want. 1 minute. I'm not getting that one. Which concept did we do last? Just let me recap. Do you recollect, guys, which concept did we do last? Provident, yes. I'll just write here, guys. Master's contribution. To which account, guys? Provident fund, NPS, and which others, guys? Gratuity fund, allowed as deduction. If paid by when, guys? If paid by John. But slaves contribution, guys. Slave means what? Employee. Slaves contribution, allowed as deduction, only if paid by monthly due date. Which due date, guys? Monthly due date. All right. Before this also hangs up, I'm going to open a new sheet. 21 done. Good job. Yes. Doubt. You have some doubt. Okay. Clarified. Yes. Anyone else? Any doubt? All right. Yes. Income. We can try it. Yes. Guys, here. In fact, actually, there are 1 to more adjustments here. Let's see this one. Guys, this is Mr. Neeraj. He's getting interest on capital received from BSC at 14% in accordance with partnership deed. Guys, 12%. So the partnership firm will be allowed at what rate? 12, and your income will be also. So will you get 1,40,000 income? No, your income will be 1,20,000. All right. Share of profit from partnership firm. Exempt. Good going, guys. Salary as working partner fully allowed. If the firm is allowed, is this income for you? Yes. Which head, guys? PGBP. Interest from fixed deposit. IFOS, but you will not take the net amount, you will take gross. How do you do that? We'll see in TDS chapter. Interest on saving account. IFOS. Let's do this one, guys. See if you are able to answer this. Income tax refund received is 34,500. Not an income, but interest is So IFOS you will take, but not the entire amount, only 1400. Guys, getting it? Yes. Very good, guys. Net profit from wholesale business amounts debit include the following, guys. Is depreciation okay? But this is as per books. If it's wrong, we'll change it. If it's wrong, we'll change it. Right now, it's okay. Motor car expense okay? Municipal tax for shop okay? Yes. Guys, we'll talk about this for two half and all. But right now, guys, my thing is on the motor car. See, motor car, yes. Motor car acquired on 31st December 2021, 20% used for what purpose? Can you take your calculators? Everyone, everyone. One by one, guys. How much is a motor car expense? Split and make 20%, guys. 8,000 will not be allowed, guys. 32,000 will be allowed? Yes. Excellent, guys. Next. Depreciation on motor car, guys. 6 lakh 80. Calculate the depreciation first. Mostly are all going wrong. Half year. Half year. 68,000? No. First 68,000 into 7.5%. 51,000. From that, guys, do 20%. 10,000. 200 will not be allowed, guys. So how much will be allowed? 40,000. 800. Are we okay with this, guys? Yes. Only thing mistake, maybe the half year was a mistake, probably. So good. So this is also done, guys. Personal expenses also done. Now municipal tax. Guys, municipal tax, is it a tax? Yes. They will allow you deduction only if it's paid. Guys, you have to pay it by when? John. Let's see, guys. Payment for 1/2 year made on 12 July. Is it till July? Yes. Other half till December. So will you get 7,000? No, you'll only get. But sir, I paid. No, yes, but you have to pay by John. If you pay late, you'll get the reduction next year. Yes, getting it, guys. See, again, sense you guys getting better at PGBP, which is really nice. Now, guys, what is the depreciation they minus? Which is wrong because it's as per books. So what will you do? Add 34. How much, guys? And let's correct the depreciation. You tell me, guys. On computers, 40. Tell me the amount, guys. 96,000. And computer printer also 40%. Guys, is this the depreciation? Yes. Of course, on car also we had that 40,000. Yes. So as per book, sometimes it's wrong. So you'll have to add it and correct the depreciation. Guys, everyone common. All these we've discussed. Depreciation we've already discussed. Yes. Next. This is all different, guys. This is contribution to prime ministers. This is under 80G. This is insurance premium 80D. PPF is 80C. But we've not discussed deductions. So I'm just ignoring it right now. Yes. Anything else? Anything else? Okay. This is good to go. Yes. Here, guys. Everyone, another adjustment. In your PGBP income tax refund. But I've added it. Minus it. Take it where? Nowhere. Good answer, guys. Nowhere. But if there is interest on this, IFOS. All right. Next one. Income tax paid for the year. Why not, guys? It's a tax, no? You can take any tax except. So have you minus it? What do you do, guys? Add. Interest on GST. Allowed. Interest is, guys, interest is normal. You see, bank interest means you're paying the bank. This is you're paying GST. Except interest on income tax. Guys, just changing it. Interest on income tax. That is not allowed. Everyone. No, it's not like penalty. There is a separate penalty. That is not allowed. Okay, everyone, hear me out, guys. I need to pay 1 lakh GST. How much? If I pay, will I get a deduction? Yes. I was delayed by 2-3 days, guys. Is it a crime? No. So what do I pay on it? Interest. That's also allowed. But if I do something wrong and there's a penalty, that is bad and no, that's not. That's a good point to add, guys. Good timing also to ask that. That's a 20-second adjustment. Guys, anything that is bad in law, repeat, anything that is bad in law, another name for bad in law or illegal is disallowed. Can you give me an example of illegal expense? Example, bribes. Example, what? Bribes. There's a commission called secret commission. Which commission, guys? Secret commission, which should not have been paid only. And last is penalty, which is a very, very good point, guys. Repeating again, guys. Interest on GST allowed. Interest to bank. Guys, interest is not a crime. People assume, guys, think about it. Interest is just a small delay. Delays happen. Lecture supposed to start at 1:30. I came at 1:40. Is it a crime? No. Happens, no? You see, it was not in my hand. My other lecture got. So sometimes late payment happens, you pay interest. But penalty is because something wrong you've done. Are we getting it, guys? Yes, 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 yes. All right, everyone. So in the exam, if you get interest on bank loan, allowed. Interest on GST. Interest on income tax? No, that's not allowed, guys. That's an exception. Are we okay? Anything to do with income tax is not allowed. Yes. But interest earned on income tax? So smart. Guys, the government is so smart that they are taxing us. Yes. Everyone okay? Guys, this tax perspective, no, I'm telling you, has come many times before. It bothers a lot of people. So have the very good grip on it. I'll ask you one more time. Two, three taxes I'll ask you. GST paid. Municipal tax paid. Municipal tax paid for residential house. Not allowed. Excellent, guys. Interest on GST. Allowed. Interest on income tax. Not allowed. Anything to do with income tax? All right. So good. This is 22nd. We'll see what else we can do. Yes. Very good timing to ask that question also. Read this B part, guys. Anush, I'll ask you a question, answer your question in 2 minutes. Yeah. Guys, is this late fee? And they've only said it is what, guys? Violation of law. If it's violation of law, is it allowed? No. But have you minused it? What do you do? Add. Yes. Good, guys. Good. Amazing. Now, guys, a question has been asked by Dhanush here that if your wife is an employee of the company, if your wife is a employee and you're paying her life insurance premium, is it allowed as a business expense? First off, life insurance is not allowed only as a business expense. Of you also, employee also. Health insurance is allowed. Which insurance? So life insurance is a personal expense, guys. That's not allowed. So I'm just giving you an example, guys. Most people work in companies. They get a health insurance, medical insurance from the company. Is that allowed? Yes. Will the company get deduction for the premium they pay? Yes. But not life insurance. Only which insurance, guys? Health insurance. All right. Good. Ending this, guys. Very common now. I'm very happy. There were 22 only deductions. I think we are reaching that stage where we are all good. Yes. Prepared to do something different? Yes. Can we do something different, guys? I'm taking you to a receipts and payments kind of question, guys. See if you're able to answer that, guys. Slightly different, but I think now at the stage where we'll be able to answer it. Yes, everyone read this. Transport charge include 30,000 paid in cash. Allowed, guys. Are we okay with this? Yes. Yeah, perfect. 35,000 is allowed. This is PPF. All this is deductions, guys. We can't do it right now. This is interesting. We have to cover this yet. Yes. All right. Can we do this one? You know it, but it's slightly tricky. Everyone. Bank term loan. Forget term. Bank loan. Interest actually paid up to 31st March is how much? And paid in October is how much, guys? Balance. Everyone. What are you paying? Bank interest. Remember M3. What was I? Interest. Are you paying? Yes. By when you should pay? John. Have you paid by John? Yes. So will you get deduction for this also? And this also? And have you already taken it, guys? Yes. So here is bank interest, guys. Here. Interest to banks. All right. This is capital gain, not discussing right now. Good, guys. Okay, now let me just think. Audit. Yes, I have to discuss audit. Then political contribution, cash is done, excessive or relative is done, provisions. Yes. Guys, any provisions made in the as per Income Tax Act will be allowed over. Okay, let me rephrase it. I have an actual bad debt of 1 lakh. How much? Is it allowed as a deduction? Yes, because that customer is not paying you how much? 1 lakh. But I want to make a provision of bad debt 7 lakh. No, provisions are not allowed, guys. So I'm just putting the 23rd aspect here that any word called provision, any word called They'll make it sound very important. Provision as per scientific report and all. The word you say provision is not allowed where? Income tax. You want to take provision? Accounts. In accounts you can make because that doesn't bother the government. But in income tax, guys, provisions disallowed. Guys. Everyone, provisions disallowed. All right. Income tax we've discussed. Expenses, depreciation, scientific research. Yes, very important, guys. Everyone, do you know what is VRS? Voluntary Retirement Scheme. Guys, as a company, can I pay my employees VRS? Our employee says, I want to take VRS, I give him 50 lakh rupees. How much? Is it an expense for the company? Yes. But it's not allowed in one part, it's allowed in 5 parts. Please remember, this is allowed in how many parts, guys? 5. So I'm just writing here because it has come in one paper, guys, that VRS is allowed, but in how many parts, guys? Divide by 5 allowed. Yes. I'll show you also where it comes, but this is it. Next. Guys, Reliance Geo is in which business? Or Geo Telecom? Yes. So they have spent some money on family planning expenditure. Which expenditure? Can they do that? Who's stopping them? They can do. In fact, the government, just like scientific research, they say that if you spend money for which family planning, we'll give you a deduction. Revenue expenditure full, capital expenditure in how many parts? 5 parts. Repeat, guys. Yeshas Academy, Reliance, guys, are they in different businesses? Can they spend money for family planning? Yes. The government allows them a deduction. Revenue expenditure, full. Capital expenditure, 5 parts. But this deduction is only given to Indian companies, not to partnership. To whom? Has come before in the paper, guys. So I'm writing FP. What is FP, guys? Family planning expense. Yes. Even if it's not connected, you get the deduction. Family planning expense allowed, but only to whom, guys? Only to Indian companies. I'll show you how this has come in the papers. All right. Anything else? Okay, let me just show you this before we move ahead. Revenue expenditure 100%, capital expenditure in 5 parts. Yes. Bonus paid is also, but has to be paid. M3 has to be paid. Yeah. Yes, excellent question. We haven't done this, but I think you should be able to do it, guys. Everyone, look at point number C. Why, guys? Because this is municipal tax for house. So have you already minused it? What do you do? And take it where, guys? IFHP. Yes, good, guys. Look at the next provision also, next adjustment. Is there an opening balance? How much is the opening balance? 1 lakh. Will you get depreciation on it? What rate, guys? 15%. Please continue reading. But I bought an asset, no? But how have you paid, guys? Cash. So on this, will I get depreciation? No. Excellent, guys. Good. These are all adjustments from deduction chapter. I can't do it right now. This is from IFOS. This is from salary. Yes. Everyone read this one. Interest on education loan for son. Have I minus it in PGBP? What kind of expense is this? Personal. So what do you need to do? Add it back. Interest on housing loan. But it's interest, no? But this is not personal. This is in which head? IFHP. So I'll add it back here and take it where, guys? IFHP. Yes. All right. Just 1 minute. I want to show you that one adjustment on family planning expense. No. So if you already minus it, then add it back. Here you're buying an asset. Example, today Yeshas Academy buys a projector. Yes. Projector is for 1 lakh. They pay 25,000 in cash. So in the balance sheet, how much will you take? 75. What if the entire 1 lakh was in cash? So here, No. Here the question has two parts. Opening balance of the asset was 1 lakh. That you can take depreciation. But the new purchase 25 wasn't cash. So that 25 we have ignored. Yes. Alright, here we go, guys. No. Yes, everyone on the screen, family planning expenditure, please read point A. The expense on employees remuneration includes means have you minus, and for family planning how much have you minus, guys? Is it allowed? Yes, but check, guys, it's allowed only to companies. Who is it? Ashish, welcome to ICA. Yes, sometimes I give you this kind of tricky thing, but if you're aware, guys, what happens sometimes the first time it's tricky, next time it comes you can be careful about it. Yes, everyone, okay? This is family planning expenditure. Next one, guys, read this. I think we've discussed it. Sister-in-law, is that okay, guys? Yes, very good, guys. Excellent. Please read. Guys, whose contribution is this? Master's contribution or slave's contribution? Superb, guys. Whose contribution? Employee's contribution. It is whose contribution? Slave. Do you need to be very careful? Yes, I told you guys. It will first be added. You will get the deduction only if it's paid by monthly due date. Is it paid within monthly due date? After the sorry, no deduction. But how much will be added to what, guys? PGBP. So please pay tax on this 10,000. But sir, it's not my income. 1 minute, guys. Whose contribution is this? Guys, 1 minute. I feel this concept is slightly weak, so I want to repeat again. Whose money is this? Employees. Do you have to be careful? Pay within when? Monthly due date. If you don't pay, I will add, but I'll not give you a deduction. That means indirectly, when I add, you'll have to pay what on it, guys? Tax. That's the only way to avoid this is pay by time. Yes, pay on time. Excellent, guys. We've done almost everything. And VRS expense, I think I want to cover. Yes, everyone read the second point. Salaries and wages include. Include means minus. Check, guys. How much did you pay? 2 lakh 40. And have you minus 2 lakh 40? That's wrong. So add how much? And minus only 1/5. Please calculate 1/5. Minus how much, guys? 48,000. I have a feeling, guys, you guys are prepared now from exam perspective, scientific research that I have to discuss. Just one small point. Everyone, do you know what is scientific research? Yes. And the section called 35, if you're not aware, let me just recap everyone, very carefully. Guys, there is something very good in the economy which happens or society which happens, which is called scientific research. Which research? So example, guys, I want to start developing some cure for some disease. So I do scientific research. And the government says, thank you for doing which research. And they give me two benefits. Hear me out carefully, guys. They're giving me how many benefits? Two benefits. First, guys, any revenue expense. Let's say I start that business today. What is today's date? 21st November. Can I start that business today? Yes. Guys, from today onwards, of course, I'll get deductions for my expenses. But the last 3 years also. Last how many years? People who are unaware, guys, I hope you've read this. If you've not, be with me here. In the last how many years? Did I have the scientific research business? No. Business is starting today. But did I do some research? So those expenses of salary and raw material, which expenses? They will be allowed as a deduction even today. Guys, I'm starting Yeshas Academy today. Will I get deductions for 3 years back? No. Only for which research? Scientific. That's the first benefit. Second benefit, guys, in scientific research, if you purchase any capital asset, any example for the research, you purchase a microscope for 5 lakh rupees. For how many lakh? Where should you take that 5 lakh rupees? Balance sheet, because it's an asset. And you will get what? Depreciation. But the government says you are doing which research? So I don't want to give you just depreciation. That's for normal people. You are special. You are. So I'll give you full deduction. So how much is the microscope for? Everyone, how much is the microscope for? So you'll take to the balance sheet and you'll deduct how much, guys? Full 5 lakh. Because, guys, you are doing something very good. They give you high level of deduction. But you are supposed to use this for what purpose? Scientific research. If your friend says, "Very nice microscope, sell it to me," no, and you say, "Okay, take it, pay me 4 lakh and take it." Government like, what are you doing? I gave you deduction so that you can do research. You're selling it to your friend. How much did you sell it for? They'll reverse that 4 lakh. What if you sell it for 5 lakh? They'll reverse 5 because they first give you a deduction, they're taking it back. What if you sell it for 6 lakh? Then 5 lakh will be reversed in PGBP and 1 lakh that gain will go to capital gain. That is very important. Has come in the exam twice. I'll show you once at least. So please tell me guys, any asset for which purpose? Scientific research, you buy it, use it, you'll get how much percent deduction? 100%. But if you, whenever you sell, whatever amount you sell will be reversed where guys? PGBP. Sir, but I used the microscope for 3-4 years and then I sold it for 20,000. No problem. That 20,000 will be reversed. Whatever amount you sell it will be reversed. If you use it well and you sell it, you'll get only a small amount. Only small amount will be reversed. But tomorrow, new, brand new, from the box only you sell it, and you get 5 lakh 25,000. Then 5 lakh in PGBP, 25,000 in capital gain. Are we okay? I just saw a question on that, guys. Here, everyone read point number 5. Guys, how much did you purchase the asset for? 6 lakh. Did you get the deduction in that year? Yes. Now, how much are you selling it for? That 6 lakh will be reversed in PGBP. 2 lakh will go in capital gain. Guys, by mistake, see where the 2 lakh is. Where have you put it? PGBP. So you have to minus it from here and take it where, guys? Capital gain. Are we okay? Yes, slightly different level. I'm going to write this so that we are aware that we need to recap this also. This is the 26th adjustment, guys. I wanted to do 50, but I think at 26, I think we'll be done with PGBP. I think we'll be able to answer PGBP very well now. Guys, which asset? Scientific research asset. If sold, guys, if sold, then up to cost. Guys, up to cost, what will happen? Reversal under PGBP. Guys, reversal under PGBP. And above cost, it will be under which head, guys? Capital K. Everyone okay with this? Yes. Yeah. It is automatically there. I'll tell you how it is there. Yes. Let's say you buy the microscope for 5 lakh. Yes. You diligently use it for your business. So every year you should get what? Depreciation. They first only give you deduction. Now, after a few years, when the microscope is very old, you sell it for 30,000. They'll add 30,000. So indirectly, they've given you depreciation of 4 lakh 70. But instead of spreading it, they give it in the first year. Yes. It's very logical. The entire income tax act, of course, very greedy, but very logical. Yes. All right. Any other question that bothers you right now? It'll be, see, no gain is taxed at any particular rate, but it is short-term capital gain, so it will go in your normal and you'll be taxed. If it's long-term, then we have a particular rate of 20%. Yes. We'll discuss that in capital gain. Yes, everyone. All right. So this is where I'm ending this 26. This is the third adjustment list. Yes, top adjustments, part 3. All right, guys. So this is where all our hard work on PGBP ends. Unfortunately, we can't do proper sum question number 1 because that has deductions also. There is calculation of rates of tax also. There is capital gain also. We can't solve that sum. But I'm very confident that in 2, 3, 4 days, whenever we solve those sums, guys, we'll be able to answer it well. Yes. So it is great. This is our hard work on PGBP. Let me know any other adjustment. You can go through tomorrow. So tomorrow I'll tell you what to do. You go through clubbing of income sums tomorrow also. Okay. Then you also go through PGBP sums. If there is any adjustment which you've not understood, make a small note. We can discuss it. So clubbing PGBP now is in your code. Please do more sums and get back to me. But related to PGBP, don't make it related to deductions, etc. because those chapters we haven't done. And sums we'll solve in computation of income. These sums. All right. Now, guys, we can take 5 minutes and then we can start with return of income. What time are we starting? 1:40. So what time should we end? 5 hours from there is 6:40. So we have still 1 hour. Yes. Too much for today? Can we? Yes. Okay. So I'll take 5 minutes, guys, and then we'll get to return. Very small chapter, return of income. We'll see how that works. Just asking you, have you guys read return of income ever? Yes. Return of income never. Okay. Anyone else? Return. Then guys, please attend regular course. No, I'm okay. Fast track, we'll do a return of income. It's anyway the small chapter. And some changes also there. We'll see how that works. Yes. All right. People online, 5 minutes and we'll get back. Yes. I'm saving these top adjustments, guys. Just one thing. Yeah. Yes. Yes, of course, 100%. Why not? That's called the default scheme, no? It's applicable, but we can't do it till we do deductions. Once we finish deductions, the day, let's say tomorrow we do deductions, day after tomorrow we can do the new scheme of tax. Yes.
Capital gain is a new tax.
No. Capital, see, your amendment act, your exam is actually November 23. They've just pushed it to Jan 25. So your those new rates of tax and all are not applicable to you. Yes. I'll just save those sheets also for you all. Top adjustments, part 2 and part 3. That is the one applicable, which you are saying, no? That is in the new, in May 25 onwards. Yes. Don't confuse him, no? He's giving, you're both giving Jan, no? Yes, people are trying to open pages, handwritten notes, guys. You'll see these kind of handwritten notes, guys. This is a dollar sign. Guys, do you see these dollar signs? They will never open, guys. Yes, but we have same copies. So if you see this part 15, there'll be another part 15 which will open. This part 15 will open. Yes. So you'll always have copies which will open. And if you still have problems, you can let me know. I'll show you how to open those pages. Yes. Yeah. Where do you get this link? This link I have forwarded, no? Dhanush, we forwarded on the group. Are you a part of the group? We forwarded the link on the group. It is Dhanush C. Yeah. So if you're not a part of the group, let me know. We'll add you to the group. And if you're a part, then we've already shared a link there, Google Drive link. I'll upload everything to do with tax there only. Yes. All right. Time to begin. I don't want to keep you guys late. In fact, I don't want to be here till late. Actually, I have to go somewhere in the evening. So we'll do a nice discussion on return of income. Sums return of income we'll pour over tomorrow. That's how we'll move ahead. I think we are going very steady and very good. I honestly feel the number of questions that we are doing, if we top it up with some good studies, especially at the same time. Example, today we did PGBP and clubbing. If you go and work yourself on those two chapters, guys, I think you will do really well, and you will not be able to find it difficult to at least make the mark of like 50, 60 in the exam. Yes, of course, guys, in the exam, no matter how much you prepare, no, there will be something that will trick you. Yes. Now the idea is that if something tricks you, don't get so worried that other things also start tricking you. How I relate to it is, I relate to it like driving a car. And driving a car, you're expecting the whole road to be smooth without potholes, no traffic. Then you'll find very bad that you've meet a pothole. But on the road, if you have one pothole, it's part of parcel, guys. Move over it, go ahead. So same way, I feel a tax paper or any paper will have some elements which are difficult because ICI does not want to give 100, 95, 98 marks to people. It's not a 12 standard, 10 standard exam. So they'll keep something which is tricky for everyone, including rankers. And the balance is okay. Now the idea is the tricky part. If you find it tricky, spot it, leave it, move ahead. Keep doing the others and come back to it and try it. Yes. And even if you see the rankers marks, guys, let's say the recent ranker who got 31st rank here in Yeshas, or the Mumbai rankers of my match here, yeah, they've all scored 60s, 70s. That means, guys, if they scored 60s, 70s, that means have they got 100 marks or 100? No. So they've also gone wrong in many places. So if you're thinking, oh, ranker is no, guys, it's not 100 or 100. It's 72 on 100. That means, guys, that guy has also lost 28 marks somewhere, right? So, and where has he lost 28 marks? It cannot be MCQs, because MCQs either it's a right answer or wrong answer. So somewhere MCQs, but some questions also he's got wrong and right. So feel very comfortable that when you hit across something very tricky in the exam, it's a part and parcel of a competitive exam. Yes. So be that and move ahead. Ultimately, guys, if you get a rank, of course, it's a lifelong tattoo. I was just talking to someone that how rank is important. But otherwise, guys, even if you clear, it's a lifetime achievement. No one will ask you, oh, how much did you get? 52 or 48 or 57? No, it's done and dusted. Yes. So rejoice in the fact that, you know, marks, honestly, the more that marks is the clearing which is important, which we have to nail it. Yes. So in that context, starting off a chapter which is honestly a very underrated chapter. This chapter is so small, and it's so important, but the timing of the chapter is very wrong. Most people, wherever you take a lecture, guys, this chapter is discussed right in the end. And guys, your attention enthusiasm is through the roof in the first chapter, which is useless. Like introduction chapter is useless, and not just yours, anyone's enthusiasm level on day one, you kept all the books ready and all that, and you study like that chapter is going to come, but that chapter never comes. And by the time you've lost all your enthusiasm of life, and I'm just kidding, and you've reached return of income, and that's such a small chapter but important, and you don't want to do it. Yes, so what I would suggest is this is one of those chapters that you should probably do a little more and a little before the other chapters, so that does not spoil your understanding. And the last question, one of the last questions, guys, is on return of income generally. So it's a question where it's usually in the papers, and we'll also be solving questions from the papers tomorrow. Yes, but right now, guys, just starting, there is some new thing also there. We'll talk about the new thing also, and there is something which has been continuing from long. If you ever even read the chapter, I think it will be helpful for me to discuss the chapter better. Yes, so let's talk about return of income. Guys, while we call it return of income, my dad's also a chartered accountant. He never calls it return of income. He calls ITR. What does he call, guys? Income tax return. So when I tell him ROI, return of income, he's like, this is not, it's ITR. What is it? But guys, ICI material has a different plan. They call it return of income. So we also call it return of income, but it's income tax return. No matter what you call it, guys, it is to be filed only once, guys. It is to be filed only. And unlike GST returns, which are to be filed monthly, quarterly, etc., here they are saying that, listen, yeah, let the year get over. When does the year start? First April. When does it end? After that, collect all the information and write a letter to Nirmala Sitharaman that, dear Nirmala Sitharaman, this is how the year was. It was great. I made so much money. Here is my tax. See you next year. So basically, it has to be done once per year. It's once per year. And in this chapter, we learn when do you need to file the return, which somewhere you know, guys, when do you need to file, guys? Job. So timing, we'll talk about. More than the timing, guys, who needs to file the return of income? As India has a population of 1.4 billion and ever increasing. Yes. Do everyone file the return of income? No. So who needs to file the return of income? We'll see in this chapter. Guys, sometimes we are late in class also, in life also, in return filing also. So let's say the due date is July. Can I file it in August? We'll see. This is called late return. What is it called? Late. Late is also called, guys, belated. Next, when you file your return and in your exam, guys, when you submit your exam paper and then at home you realize there's a mistake, what can you do? Nothing. But in return, thankfully, if you file your return and you feel that there's a mistake, can you correct it? Yes, it's called revised return. What is it called, guys? Revise. Can you revise your return? Yes. Next, who helps you file the return? CA. But if CAs are not available or very expensive, then there are some other people, guys, who can also help you file your return. So there are people who help you file your return of income. Next, guys, your tax. Let's say your tax liability is very low, 2,000 rupees. When you file your return, can you pay your tax liability of 2,000? Yes. But guys, some of the tax liabilities paid much ahead. Advance tax, TDS, TCS, whatever balance has to be paid when you file your return. So you also pay any tax. And if you don't pay your tax on time, they will charge you what, guys? Interest. Yes. So all this and more. And now they've come up with something called updated return. What is it, guys? This is something new that we will learn either today or tomorrow. I'll plug that updated return concept also. I'll tell you important sections also. But mainly, guys, all this works on a section called 139. Guys, what is the section? Variations and subsection, but mainly it's section 139. Let's see first, guys, who needs to file return of income. So let's start with the first question, that in India, who needs to file their return of income? So that's what I'm starting off with. Who? Section is 139.1. What is the section? 139.1. The first thing they say, there are 4 Lakshman Rekhas. How many Lakshman Rekhas, guys? 4. Even if you cross one of them, file your return. Yes. The first Lakshman Rekha is the following people need to compulsorily file. Everyone. What is the shortcut? Compulsory file. Companies. Guys, what is C for? Private, public, one person. All companies need to compulsorily file the return of income. Guys, what if you have a private company, income is 0? Still file. And partnership firm. Which firm, guys? F for what? Firm. And when I say firm, LLP. These people need to compulsorily file. Are we okay? So please tell me, guys, Reliance Industries, compulsory. Zomato. Tomorrow Adani become bankrupt. Still, yes. Everyone okay? So this is the first Lakshman. Second, they say that if your income, guys, if your income is more than your basic exemption limit, what's your exemption limit? 2.5. If you're 60, 3. If you're 80, 5. So if your income is more than your basic exemption limit, example, your income is 12 lakh. Is it more than your basic exemption limit? Yes. So then you need to file a return of income. Are we okay? But they don't call it income. They, for a change, they call it GTI. What do we call it, guys? If your gross total income, that means before deduction. So if your gross total income is more than what? Your basic exemption limit, not total income. Gross total. The first time where we use GTI. And in capital gain, guys, we have some 54 series exemptions. Guys. Which exemption? 54 series. If you want to recollect, guys, when you sell one house and you sell and you buy another house, guys, can you get an exemption? Yes. That's called 54 series exemptions. You have to add both of these. And if that is more than what? Bell, then you need to file a return. Let's simplify this. You've got your first job. You've got your first job. Salary 4 lakh 80. Salary 4 lakh 80. Standard deduction 50,000. 4 lakh 30. 1 minute on, guys, mathematics. 4 lakh 80 salary minus 50. 4 lakh 30. Is 4 lakh 30 more than your basic exemption limit? Yes. So you need to file a return. Not rebate. Basic exemption limit. Your salary or your income is 1 lakh. How much? But you had sold a house, bought a house, 50 lakh exemption. Yes. So 1 lakh plus 50 is how much? 51. Everyone, not complicating it, guys. Just remember that your income should be more than what? Bill. What income? GTI plus your 54 series exemptions. Are we okay with this, guys? Yes. So please tell me, will Reliance check for the second one? No, because they are in the first. If you cross 1 Lakshman Rekha, don't even go ahead. Guys, here as a student, let's say you don't have any income. Then will you fall in the first Lakshman Rekha? No. Will you fall in the second Lakshman Rekha? No. But as a CA, your salary is 13 lakh. Which Lakshman Rekha? Second. So file it. Are we okay? Next, third. If you like having coffee, guys, what is the shortcut? Coffee. If you like having coffee, then you need to file a return of income. What is this coffee, guys? Guys, first, when you reach coffee, when you're not applicable here also, you're not applicable here also. Everyone. Guys, what if you were applicable here? Yeah. Then would you go till coffee? No. So if this is not applicable to you, this is not applicable, at least check for if you like what, guys? Coffee. What is coffee, guys? If you have spent money on foreign travel more than 2 lakh, more than how many lakh? You don't have income, you're spending on foreign travel more than 2 lakh. Your Instagram bio is wanderlust and all, guys. Yes. How are you getting your money? I want to know. File a return. If you are not filing here, guys, at least you'll have to file it here. Guys, foreign travel more than how many lakh? Either on yourself or you're spending on someone else more than 2 lakh foreign travel. Next, if in your current account, guys, which account? Current account, you have more than 1 crore rupees. Everyone. First of all, you have a current account. Then please, your business, please file a return. If you're not falling here, at least you'll fall here, guys. Everyone, please tell me, when do you go to the third Lakshman? When first one not fulfilled, that means your income is low. Still, you have current account in how much? More than 1 crore credit in the current account this year. Please, I want to know who you. Next, your electricity expense is more than 1 lakh. Is how much? 1 lakh. Full day, guys, AC on. You don't have income, ACs are on. How are you affording it? I want to know. Yes. And last, guys, if outside India, what is O? Outside India, if you have assets. Everyone. Outside India, you have lots of people say, listen, you should buy shares in America. Okay, buy it, no problem. But as a student, if you buy shares where America, even if you have zero income, you'll have to file your return of income. Complicated? No, guys. Just remember them as Lakshman Rekha. Anyone you cross, file it. What is coffee? Current account more than 1 crore. Outside India, you have assets. Foreign travel more than 2 lakh and electricity expense more than 1. This outside India assets, no, guys, is only and only applicable to ROR. To whom, guys? Because, guys, as a non-resident, where are your assets? Abroad only. As a RNOR also, can your assets be abroad? Yes, we have no problem. But if you're a ROR, then where should your assets be? India. If you have assets abroad, I want to know who you are. Are we okay with this, guys? Yes. And what does asset mean? All big assets, guys. Not a cycle abroad and all that. You have a cycle abroad of finding all big assets, property. You will see in IFOS what is the definition of property. And if you have small bank deposits, abroad up to 5 lakh, up to, then that's not considered in the asset. Yes. So which are not considered an asset, small asset not considered, and bank accounts up to aggregate bank deposit up to 5 lakh abroad not considered as asset. And last guys, something new. Business and profession saved TDS is what is the shortcut? Business and profession saved TDS. Guys, when will you go to this Lakshman Rekha? First three are not applicable. That means, guys, you're having hardly any incomes. Then the government says, listen, yeah, but I'll check this Lakshman Rekha. Newest entrant, guys. This is a rule called Rule 12AB. Guys, what is the rule? They introduced this very lately, and watch with this. They say if in your business your turnover is more than 60 lakhs, more than how many lakhs then? 60 lakhs. Maybe you're not making too much income, but if your turnover is more than how many lakhs? 60 lakhs, then file your return. I want to know who you are. If in your profession you're earning more than 10 lakh turnover, how much? 10 lakh. Business 60, profession 10 lakh. If in your savings account you have more than 50 lakh, more than how much guys? 50 lakh. Everyone. Guys, don't get too surprised by all this. It's very simple. They are like Lakshman Rekha. You cross anyone, file a return. Everyone. Guys, business turnover 60 lakh. Professional turnover 10 lakh. In your savings account, if you have 50 lakh, and guys, someone while paying you income, while paying you what? Income, they have deducted TDS. Everyone. Someone while paying you income has deducted TDS of 25,000. How much? Or for senior citizen, 50,000, and the government wants to know who you are. Yes. Guys, this TDS part, let's understand again. Guys, when is TDS deducted? Everyone. When is TDS deducted? Some person is paying me. Everyone. Some person is. If they are paying me, guys, they'll deduct TDS. That means, guys, people who have TDS deducted have earning income. 1 minute. If my client pays me, guys, will they deduct TDS? Yes. That means I'm earning what? Income. If your TDS is more than, that means someone deducted more than 25,000 in a year for you, or more than 50. 50 is for whom? Then the government wants to know who you are. Now, guys, I'm giving you examples. You tell me. A person having income 0 rupees. How much? But foreign travel 3 lakh. Yes. Electricity expense 6 lakh. Yes. Outside India shares. Yes. A person having salary income of 17 lakh. Yes. Which Lakshman Rekha? Second. You don't have to tell the government about this. You just have to say, and as per 139, you have to file your return. Yes. A company. A company having loss. A partnership of having 0 profit. Yes. Are we okay with this? So this is the most important one, guys. Who needs to file return of income? You will tell me all the 4 Lakshman Rekhas first. Compulsory to file. Companies have form. Second, when your GTI is more than your BEL. But of course, GTI plus 54. Yes. Third, coffee. Current account. Outside India. Foreign travel. Electricity expense. And last, business and profession saved TDS. Business 60. Profession, savings account, and TDS of 25 or 50,000. Are we okay with this, guys? Yes. And the second part, you already know. If you are supposed to file your return of income, will you file it on your birthday, on your wedding anniversary, on New Year night? No. Let the year get over. After that, guys, you have to file your return by John. But John means all 3 are your due dates? No. Only one will have one due date. Example, if you are someone who doesn't go for audit, that means you're a small businessman, then you have to file your return by which date, guys? 31st July. If you're someone who's big enough and you have to go for an audit, then you have 31st October. You have to file your return. And you're someone like Starbucks, BMW, international transactions, guys, then you have to file your return by 30th November. So, guys, Mr. A will have all 3 dates? No. Ask Mr. A. If he's subject to audit, October. If he's not subject to audit, July. If Mr. A has international transactions, are you okay with this, guys? Yes. Only thing you should remember here is if you're a partnership firm, guys, if you're who, and if your due date is 31st October, which is a due date, then all your partners will also have due date of what, guys? 31st October. Because, guys, you will pay them what? Salary. And for salary, they need to know your profits. Remember P salary, Yes. So repeating, guys. If as a partnership firm, your due date is what? Then all the partners will also have due date of 31st October. Not important, guys. Who will file is more important. Yes. Can we repeat? Section 139 tells you who will file. How many Lakshman Rekhas? 4. Anyone crossing? Will I check for the second one then? No. Any one crossing, I don't even check for the others. And when do you need to file, guys? July October or November. July for non-audit, October for, and November for interest. Yes, all right. Typical questions in the exam have been: there is a person whose gross total income is 4,60,000. Yes, because that's more than his wealth. There is a person who's 80 years old, has gross total income of 4,60,000. No, because his bell is how many lakh, guys? So these are typical questions. Um, a person has spent 2 lakh rupees on himself and his wife on foreign travel. Yes. Yeah, more than 2 lakh. Yeah, 3 lakh. Okay. Yes. Um, all right. These are some typical questions that have come from here. Now, guys, this is when, sorry, this is who and when. Now, let's talk about late. Can we file the return late? Guys, let's assume all of our due date is 31st July. What is our due date, guys? But 31st July, you were busy doing something else and you forgot. Is it okay to forget? Yes. The government says no problem. You forgot. When did you remember? In August, file it then. In September, file it then. But you said, no, no, government, I remembered after 5 years. The government, like, what are you doing? You can't do this. So the government allows you to file late, but maximum up to 31st December. Maximum up to which date, guys? So everyone, July, after that, can I file in August, September, October, November, December, Jan? No, not Jan. That year's 31st December. Assessment years, 31st December. Everyone. The year ends on which date? After 31st March, you can file by July, October, November also, December also, but not after December. Are we okay? Everyone, exam question. A person missed filing his return of income and wishes to file his return of income on the 25th of December. Yes. Will your answer change if he wishes to file on the 4th of January? Yes, he will not be allowed to file. As this belated return is allowed under section 139(4). What is the section, guys? 139(4). It's not called a late return, it is called belated return. What is it called, guys? So can we repeat, guys? Can I file my return belated? By when? By 31st December of which year? Assessment. But sometimes, just sometimes, the government assess you before that. Example, guys, your due date was which due date? 31st July. Who was waiting for your return? Government. They were waiting, sitting on the table, waiting, refreshing the computer. You forgot to file. Then on November 27th, the officer messaged you on email, guys. He sent you an email and listen, we are going to assess you. We are going to, after that, you cannot file it. So either 31st December or assessment, whichever is earlier. But in real life, they never assess so fast. So, guys, technically, which is the date? 31st December or assessment, whichever is earlier. But in reality, what is the date, guys? 31st December. Yes, everyone. Now, recapping the last bit again. You did not file a return on 31st July. Can you file it late? Yes. On the 5th December, you get an email from the government that we are assessing you. Whatever information I have, I am assessing you. And what's the date, guys? After that, you can't. Yes. So either 31st December or assessment, whichever is. And if you're getting confused, remember 31st December. Guys. That's what is asked. Yes. All right. Now, guys, if I can file my return late, then why will I file it on time? 1 minute. If I can file my return late, then why will I file it on? And what's the incentive? They say, if you file your return late, everyone, if you file your return, there are 4 punishments. 1 minute, you can file your return late, but there are 4 punishments. Everyone, lift. What is the shortcut? Lift. See, guys, otherwise, no one in India, guys, unless you punish people, no one follow. In Bangalore, guys, people wear helmet. The guy who's riding also person behind also. Why? Police. If they say, listen, you wear, you don't wear, they will not wear. In Mumbai, there is only rule for person ahead. So person behind never wears a helmet. What is that? If he dies, it's not okay, but there's no compulsion. So will people wear? No. It's, guys, will people wear if it's not compulsory? No. And I'm telling you, Bangalore, if you are so worried about people dying, the moment Bangalore police says you wear helmet for your safety, we will not punish you. Guys, everyone without helmet, what helmet? Nothing. So 1 minute. Guys, punishment is necessary. Otherwise, people will not file on time. So if you file your return late, first, can you file your return late? Yes. By which date? 31st December. But there are how many punishments, guys? 4. Lift. L-I-F-T. Guys, that F no is so dangerous, I'll tell you here. They say if you file your return late, what was your due date? 31st July. On 2nd August, 2 days late you're filing. Still, you have to pay a late fee of 5,000 rupees. How much? Guys, people at 5,000 rupees when they hear, right? They will file 5 days in advance, but never late. Because what is the late fee, guys? 5,000. Guys, LIFT. What is F? Fine. How much late fee? CA firm, guys. I know what happens. On the last day, people are queuing up because they don't want to pay how much? 5,000. And it's non-negotiable. You have to pay that 5,000 if you file your return late. Yes. So what is F? 5,000 or late fee. Everyone. Late fee of how much? 5,000. Next, guys, if you have to pay tax, if you have to pay, example, guys, with my return, I had to pay tax of 1 lakh rupees. How much? The government says LIFT. What is T for? Tax. That tax you have to pay, but you have to pay along with interest. Guys, the government is a money lender. Can you repeat? The government is a. They were expecting that 1 lakh by which date? 31st July. Did you pay late? Which month did you pay? August. So you'll have to pay interest for that one. I'll teach you details, but right now lift. LIFT. What is F? Fine. What is the fee? 5,000. T is tax. That too you have to pay, but not with that. You have to pay interest also. I for what? Interest. And the worst, guys, if you have any losses, have you already discussed that? If you have any losses, you will not be allowed to carry forward except HD. HD. 2 days back we did, guys. House property and depreciation. Yes, yes, everyone. No problem, guys. Yes. So please tell me, a person is filing his return late. He is filing it. He was supposed to file in July. He's filing in September. Is it late? First, can he file it? Section 139(4) says you can file it, but there are how many repercussions? 4. LIFT. First, late fee 5,000. Tax along with interest for 2 months now. August also, September also, 1% per month. 1%. So let's say the tax you have to pay is 1 lakh. 1 lakh into 1% into how many months? 2 months. And L is what, guys? If you have any losses, you will not be allowed to carry it forward. Are we okay with this? Now, guys, late fees how much? 5,000. Everyone wrote to Nirmala Sitharaman, what is this? 5,000 rupees. So she said, okay, you're not earning much, then we'll reduce it to 1,000. For people who are not earning much, how much? 1,000, guys. For people who are earning up to 5 lakh, everyone up to, guys, up to 5 lakh, there's no tax only, no? So late fee is only 1,000. So everyone, late fee generally is 5,000, but if you earn up to 5 lakh, if you earn less, the late fee is also less. All right. Everyone repeating whatever we've done. Who needs to file the return? How many Lakshman Rekhas? 4. When they need to file? John. Next, can they file it late? Yes. By which date? 31st December. But how many repercussions? 4. Okay. Now, guys, you filed your return. Everything. 31st July was your due date. On 30th July, very proudly you're telling everyone, I filed my return on time. Good. And then, guys, after a few days, your friend said, listen, yeah, did you take that deduction? Did you do this? You said, oh, I filed it all wrong. Then, guys, can you correct it? It's called revise. Can you revise it? Everyone, can you revise? The government says, no problem, revise it. No, when did you file your return? 30th July. You revise it how many ever times you want? Till 31st December. Till when? You filed your return on 30th July after 7 years. While going through your old DT notes, you saw, oh, I didn't take this deduction, guys. Can you change it then? No. Only till which date, guys? 31st December. Everyone okay? This is section 139.5. What is the section? 139.5. Can you revise your returns? Yes. You can revise your returns how many times? Any number of times. N number of times. How many ever times you want, guys? There are no charge. Every morning, wake up, go online, revise it. But maximum by when, guys? 31st December. And literally, guys, people revise their return. I'll tell you what happens. I'll tell you my firm case. There is a guy who's come to us on 31st July. Which date? 31st. Suddenly he's woken up from his sleep. He's come, sir, you have to file a return. Please help, please help. He said 31st July. And that tonight he'll come at 8 o'clock. And he'll say, no, no, please file a return. So what we do, I'll tell you guys. We file his return, blank return. Guys, what do we file? Why? What are we trying to avoid? 5,000. Guys, we filed this blank return. So what is the date of filing? 31st July. Is it on time? Next day we'll revise it, no? We have time, no, till when? 31st July, revise it. So most CAs do this. Of course, you should not do this. This is education purpose only. But most CAs do this, guys. Even if they are not ready with the return, they file a blank return. Yes. Was that? Server to obviously always is down. Yes. So on the, but that we can't help. Sometimes because the server is down and people tweet a lot, then they extend it also. Yes. Yes. No, that's the best part. Even of loss return, file a blank return. You put the losses later, still it will be in time. That means the moment you file your return, no, that stamp is comes on the time. That you filed on which date? 31st. So you are in time. Even if it's a blank return, even like 2, 3 things you fill and you file it. Then you can change it in August, September, October, November, December also. Now guys asking you, if I file a return on 31st July and then I change it in August, will they charge me a late fee? Late fee is only when you file late. Are we okay with this, guys? Everyone. Recapping. Section 139(5) can be revised a return. A return can be revised how many times? As many times as the assessee wants, but only up to 31st December or assessment, whichever is earlier. Here also that assessment thing comes in the picture. And guys, which returns can be revised? A return filed on time. Can it be revised? Yes. A return filed late. Can it be revised? Yes. A return already revised. Can it again be revised? Yes. A loss return? Yes. Profit return? Yes. Every return can be revised. Yes. Every return can be revised. Guys, why? Because the government knows that income tax act is very complex. And people may make mistakes and hence they've kept the room open for revision up to which date? 31st December. Yes. Always assessment. Previous year, though, nothing has happened only, no? Assessment year. So your year is 23-24. That year nothing happens. In the year 24-25 by 31st December. Yes. Good question. So who needs to file? We know. When they need to file? We know. Can we revise the return? We know. And can we file the return late? Yes. Now guys, do we have time? Yes. We'll do one more section. Yes. If not filed this year, you are filing next year. Why did you not file this year? We forgot. Okay. So then what they do is they have a lot of your information already. When you use your PAN number everywhere, when you shop, when you buy a motorbike, you give your PAN number. When you buy a car, I give my PAN number. So you give your PAN. They know a lot. They assess you automatically on their own. So they can assess you. But generally, if you have a high level of income, they will definitely send you notice that you did not file, pay a fee of 5 and all that. They will take money because recovery. Yes. All right. Yes. But technically, if you've not filed a return this year, can you file a return next year? Yes, that's allowed. All right. Any other questions? Okay. Let's discuss one more section and then we'll end. All right. Guys, when you have to apply for your passport, what documents you have to give? Aadhar card. What else? PAN card. Then that passport photograph, yeah? That criminal photograph. Yes. Most of us look like criminals on it. Yes. And what else? Some money. And we have to apply for passport. Yes. Guys, when you file a return online, do we need to attach? Example, I'm a businessman. Do I need to attach my rent agreement? People I pay salary, their resume. The government says I don't want anything. You just tell me what all details and you file your return. Basically, that means, guys, do I need to attach things? No. But they say I want some details. Example, if you're a businessman supposed to maintain books of accounts, send me your books of accounts online. P&L account, balance sheet, cash flow, etc. And if you're subject to audit report also. Everyone. Those details I need. If you don't submit those details, it'll be a defective return. Which return, guys? Defective. So example, guys, I'm a businessman subject to audit. Will I upload all the details? Yes. I don't have to attach anything. I just have to give details. But if you're not subject to audit, a small businessman, etc., then you have to just give numbers, your sales, your expenses, your profit, etc. Are we okay? Very basic, guys. Not important. Important part I've already done. So everyone, please tell me, do I need to attach documents with my return? No. I only need to give details. Details like my P&L account, balance sheet, cash flow, and auditors. If I'm not subject to all those, if I'm a very small businessman, then all numbers, your sales numbers, your profit number, your expense number, etc. And last, guys, the last section that I want to discuss right now, guys, in case you file your return, which is wrong. Example, salary income 5 lakh, other income 4 lakh, 5 plus 4, 9, but you wrote 10 lakh or you wrote 8 lakh. There's some mathematical error or some technical error. Guys, then what happens? It's called a defective return. What is it called, guys? Defective. Example, guys, you've selected that you are supposed to be under audit. You're supposed to be under, but you don't attach the auditor's report. Then, guys, that's called a defective return. What is it called, guys? So they will send you an email that knock knock, you submitted a return, but it is defective, and they will tell you also where it's defective. The best part, they will tell you also, listen, 1, 2, 3, 4, 9 defects. How many defects? And they'll give you 15 days to correct it. How many days? You go online, correct it, and submit it, no problem. But if you can't correct it in how many days? 15 days and you don't reply to that email, don't do anything, then your return will be considered invalid. What is the word, guys? Like you never filed the return. So how many days do you get? But guys, in those 15 days, you were supposed to get married, your marriage dates, or you're on a holiday, or your CA has COVID. Then can you apply for extension? Yes. Whose discretion is it to give you extension? Income tax. Everyone, that's called defective return. Everyone, what is it called? And how many defects were there? 9, because the section is 139.9. Everyone, section 139.9. How many defects? 9 defects, guys. Are you getting an email? It's an intimation on email. And will they detail the defects? What do you need to do? Correct them. Within how many days? 15 days. Or you can ask for extension. But if you don't correct in that period, invalid. This is it. A little bit tomorrow we'll do, and we'll do the sums also tomorrow, guys. But mainly this is the chapter. Some more details I'll tell you tomorrow, guys. Yes, updated return, etc. That tax return preparer, etc. But overall, guys, very simple chapter. Questions expected are they will give Mr. A and they'll give you his incomes. You need to file whether he needs to file return or not. How many Lakshman Rekhas, guys? Check. If it's A private limited, if it's A partnership firm, if it's A having income 18 lakh, yes. If having A foreign travel 5 lakh, A electricity expense 5 lakh, A foreign assets, yes. So you need to see whether Lakshman Rekha filed it. Then they can give an extension. If yes, when does he have to file his return of income? 31st July or 31st October or 30th November. Then they may say that Mr. A filed his return, now wants to revise his return. Can he revise it? Yes. By when? 31st December. Or assessment, whichever is. Mr. A forgot to file his return. Can he file his return late? Yes. Belated return. Lift. Just recap lift. Late fee 5,000. But late fee can also be 1,000 if your income is up to 5. T tax. Tax along with that interest. Guys, if you file late, the government wants interest. At what rate? 1% per month. And what is L? Losses cannot be carried forward. Yes. So these are some sections. I'll give you some shortcuts tomorrow on the sections also and the chapter also. Yes. In case you want to read the handwritten notes, the quick book is already there. In case you want to brush up tomorrow. So if I were you, what would I do tomorrow, guys? When I wake up tomorrow, I would do clubbing sums first. I would see which are the exam sums and I would look at the clubbing sums. Then I would look at those top adjustments again, PGBP, think about it, check some papers and see what PGBP is, where is my difficulty, and note down if I have any doubts. And then I would use my quick book, which is uploaded, or any notes, and I would see what is there in return of income before you come here to class. Is that okay? Yes. Let's set tomorrow's agenda then, guys. Tomorrow, of course, one agenda is return of income. That we'll start with. We'll finish return of income. Which other chapter do we want me to start? Capital gain? Okay. We'll do capital gains tomorrow. What else? A small chapter, yes. Which other small chapter? TDS is not small, but we could do TCS and advanced tax. We could do TCS and advanced tax. No, both we can do tomorrow. Yes. So, but we'll take some earlier chapters. Any earlier chapters? We can do IFOS. Capital gain and IFOS we'll do. Yes. So capital gain fully and IFOS we'll do like this only. Discuss it and then we'll pour over to the next day. Yes. All right. All okay, guys. Just want to check. Is the pace okay? Going a little fast, but what you can do is how you can slow down this course is mornings you can use to revise yourself and slow down. Example, clubbing of income, 19 sums, slow it down. Go through the sums yourself, you'll slow it down. Because if I don't go at this pace, guys, we'll miss out on many important chapters which I don't want to. Yes. All right. And yes, doubts. What I'm doing is if there is some doubt, of course, I'm trying to address, but if it's a big sum you want me to solve, etc., note it down and we'll do it at one go together. Yes. All right. Thank you and see you guys tomorrow. What time? Same. This time is convenient. Yes. 1:30, 1:40 around that time we'll start. Yes. All right. People online also. I hope everything is going okay. I will see you guys now tomorrow at about 1:30 or 1:40. See you tomorrow. Yes, starting day number I've forgotten, but I think it's 4 and of the crash course of DT. And we've looked at some good chapters. I'm just going to update the sheet as well on what chapters we've done and what are we looking forward to today. So here we go. This is something that we had done. This is DT. The fast track course is here. And we had done some chapters to do chapters. Yes. So this is the chapter list. We'll update it with the chapters that we're going to be doing today as well. So we'll see introduction, rates of tax, IFHP set off, residential status, clubbing. We also did one bonus thing, I think, yesterday. which is that one, guys, we did. So we'll put that as well. All right. So chapter number 7 we are putting here. This is chapter number 7, which we started. We have not done fully, but we started it already, which is called return of income. So we'll do that today. Besides that, which other chapter? So that is 7. We move to chapter number 8 today, which is capital gain. So we're looking at capital gain again, very exam centric capital gain we'll do, and then we'll look at chapter number 9, which is called IFOS. We'll see what we can do in that. Yes, so that's the agenda for today's session. Let's first look at return of income, guys. And return of income, what we will do is when we solve exam questions, we'll do them as at one go. But right now, return of income, yesterday we did some sections. 139.1, who needs to file the return of income? That we should know. 139.3, can we file a loss return also? Yes, but loss return has to be filed within due date. Otherwise, you can't carry forward your losses. Except how many losses, guys? 2. Remember H and D? Yes. Next, can we file a return late? Yes, that's called belated return. You can file it till 31st December. But if you remember lift, yes, that shortcut. What is the late fee? 5,000. Yes, and then can we revise the returns also? Yes. Can there be defective returns also? Yes. Now we move ahead to something which is slightly different but not very difficult. 1 minute. Yes, I'll have to just. So let's try and understand a few more concepts today before we can go to sums, etc. There is a concept of PAN number, guys. Do we need a PAN number to file a return? Yes. I don't know how many of you all have seen it practically, but your username on your income tax website is your PAN number. So we need something called PAN necessarily to file a return. Without PAN number, we can't file a return of income. And PAN is given in a section called 139A. What is the section, guys? 139A. That where all we need to quote a PAN number. Yes. So we need a PAN number first to log in. Next, guys, there are certain transactions. If you do, you need to quote your PAN number. Example, buying a bike or a car. What do you need to quote? You need to give the PAN details. Then buying jewelry more than 2 lakhs. Some of them you have to remember, guys. Car and bike, PAN. Jewelry more than 2 lakhs. Immovable property more than 10 lakhs. Yes. Then applying for a bank, credit card, debit card, you need PAN number. And some transactions, financial transaction where you're buying debentures, etc., more than 50,000. When you're depositing in a bank more than 50,000. Guys, people who have a demat account, you need a PAN number. So these are some places where you'll need to quote your PAN number. Why is the government asking you to quote your PAN number everywhere? Any idea, guys? They basically keep a track on you. Then they keep a track on you. If you're saying you're not filing a return of income and you've gone bought a car worth 50 lakh rupees, they know that you've done that because they have your PAN number. Now with PAN, guys, they need another detail which is called Aadhar. 139A talks about Aadhar, guys, here. And Aadhar and PAN, not just that, they need both the numbers, they wanted linked. They wanted. So you need to go on the income tax website, link your Aadhar and PAN. But this linking, a lot of people were postponing, they were not doing. So the government introduced a penalty section. They said that there's a section called 234H. H for home, guys. What is H for? Because Aadhar is a proof of your home. Yes. So they said you should link your PAN and Aadhar by a certain date of 2022. They give a date, and for the first few months they had a penalty of 500 rupees, guys. How much? This is early bird offer. If you pay, if you don't link for 3 months, there's a penalty of 500, and after that, if you don't link, there's a penalty of how much, guys? 1000. They don't call it penalty, they call it fee. What do they call it, guys? Fee. Everyone. So what do you need to remember, guys? The section. What is the section? 234H. H for home. This is for linking PAN and Aadhar, and if you don't do it, then there's a fee of how much, guys? 1000. Are we okay? That period of 500 has already gone, so it's not important from an exam perspective. Yes. So we learned what do you need to quote your PAN, Aadhar, we understood. Next is something called TRP, tax return preparer. Guys, whom do you generally go to get your return filed? CA, but CAs can get expensive. So the government has come up with the logic of TRP. TRP basically means they feel a lot of people who are graduates, no, semi-graduates, or sorry, post-graduates, etc., can apply and become what, guys? A tax return preparer. And what can they do, guys? They can file what? What is the name suggesting? Tax return. So all they can do is file people's tax return. So you can go to them and get what is the advantage? They will come at a lower cost, so it will come at a slightly cheaper cost. I don't think CAs would ever want to be called as a TRP because that's like degrading, like a doctor calling a compounder, so like that. So tax returns, they file tax returns for people and they charge a lower fee, of course, but they cannot file for people who are subject to audit, guys. For people who are subject to, so they cannot file. So if I am subject to audit, I can't get my return file from whom? And who cannot be a TRP, guys? These following people can't be TRPs, guys. If you're a CA, who are you? You can't be a TRP. Next, if you're a lawyer, who are you? Again, you can't be a TRP. If you're a person working in a private company, which company? Example, you're employed in a private company, you can't be TRP. And if you're a banker, who are you? Banker, let's say you work with ICICI Bank, you can't be a TRP for a customer of ICICI Bank. Are we okay with this, guys? Yes. Can we repeat? What is the full form of TRP? Tax return preparer. Most common question is that a person wants to go and get his return filed for a TRP. Can he do that? Yes. But that person is subject to audit. No. Audit assessees cannot get the return filed through a tax return preparer. Are we okay with this, guys? Yes. And one more thing here. Yes. Who cannot be TRPs? CAs, lawyers, employees working in private companies, and bankers with who have banking relationship with the assessee. Are we okay with this, guys? Yes. So very brief, not very important, but that audit person cannot go to TRP. That is something that is important. You should keep in mind. All right. Now, anything else? Anything else? Anything else? Yes, something that is updated. I'll tell you something that is new. Yes, there is a section called 139.8a, guys. What is the section? 139.8a. This is new and this has not been asked and could be asked exam. So let's first go to the basics, guys. Which is the previous year you are in? Previous year 23, 24, and this year you earn the income and you have to find your return in which year? Assessment year 24, 25. By when do you need to file your return? John, July or October or November? Okay, I forgot it. Late return? December. By 31st December, that means I'm putting a line here, guys. By 31st December, you should file a return. After that, guys, can you file your return? No. Can you revise your return? No. But I realize a mistake, guys. I realize a mistake after that day. Example, guys, I forgot to take my rental income in the return. Of which year? 23, 24. Did I make a mistake? But when did I realize the mistake? After 31st. Now you tell me, guys, as someone who studied return of income yesterday, you tell me, can I revise my return after 31st December? No. Can I change my return after 31st? No. So what do I do? So the government has come up with a concept called updated return. Which concept, guys? So update. You can update your return, everyone. What is this called? Updated return. I can't use my pen very well today for some reason, so I'm just going to write this here. You have to understand. It's called updated return. Now they say that you can update the return only if it is for the benefit of the government, guys. Only if it's for the benefit of. That means, guys, can you add incomes? Yes. Can you add losses? No. Can you reduce your income? No. You can only update it for the benefit of whom? Then why will someone do it, guys? I'll tell you in the end why will someone do it. Everyone. So, guys, updated return has to be for the benefit of whose? They don't say it has to be benefit of the government. What their language is that it can only be used to add income. It cannot be used to reduce your income. Everyone, it cannot be reduced to reduce your income. You cannot add your losses, guys. So the government basically wants updated return in whose favor? Now I'll tell you why first. What is the updated return, and then I'll tell you why does the government feel that we are so innocent that we will update our return and favor them. I'll tell you later. But right now, guys, which is the year assessment year? 24, 25. Which is the last day? 31st December. You need to update your return. Sorry, file your return, etc. Revise your return. The government says if you update the return in the next 1 year also, in the next 1 year also, no problem. I'll allow you to update. So there is an option of updating the return now on the income tax website. And whatever extra income, repeat, whatever extra income, you need to pay tax over and above the whatever is tax liability. You have to pay 25% tax extra. How much percent tax extra, guys? So example, you are supposed to pay normal tax of 1 lakh on that income. You will pay 1 lakh plus 25,000. Are we okay? Guys, 25% extra is very simple. On your calculator, you'll be able to do it. For how much time is this? 1 year. And if you file after this 1 year, guys, then you have to pay 50% tax extra. How much percent tax extra? So example, if my tax liability, example, let's say I forgot to put my house property rental income. Now can I update it? What will I put? Rental income. What will go up? Income. So what will also go up? Tax. Whatever the tax goes up, you have to pay plus 25%. If in the first year you update, and second year 50%. So basically that's the option. Now why would someone in the right mind do this? I'll tell you, guys. Because the government has a policy of assessment. What do they do? So if you don't put the rental income, guys, tomorrow the government can get to know your rental income. How? The person who's paid you rent, can they take a deduction? Yes. And can they quote your PAN number? Yes. And after 3 years, the government will send you a notice that listen, yeah, in previous year 23, 24, you did not show rental income. You did not update also. So then, guys, they will chase you and they will collect the tax also plus up to 300% penalty. How much? 300. So when they catch you, guys, there is so much penalty. It's better that if you know innocently you made some mistake and you can do the correction, update your return. Are we okay? Guys, this is called updated return, section 139 8A. And why would someone do this? Someone who wants to really hide his income will not do this. Someone who has black money will not do this. But if genuinely some income has missed and you are after which date? 31st December, genuinely you want to show, because guys, otherwise you know government can catch you very easy. I'll tell you very simple ways how government can catch you. I take a deduction in my salaries head for HRA, house rent allowance. Everyone, HRA, heard of HRA, guys? I take an exemption under HRA, and I in Bombay I used to pay rent to my mom. To get HRA exemption, I should actually pay rent to my mom and stay in their house and pay rent to my mom. And I used to take HRA exemption. Can I do that? Yes. But guys, when I would take a HRA exemption, I had to give her name and a PAN number. Now the government knows she has earned what? Rental income. If in her return she does not show rental income, guys, she can get a notice later. So people, guys, this is called cross-checking. This is called what checking, guys? Cross. The government can do that. And hence the government has now kept a provision for updated return. It has not come before. So Jan, May, November, September exams, highly probable that this will come in the exam. How will it come in the exam, guys? Can you file an updated return? Yes, section 139 8A. If you file it within 1 year of the assessment year, then tax plus 25%. And if you file within 2 years, after that you can't. So either 25% or 50%. After that you can't. Yes, everyone. Yes. Yeah. Question.
If we file the updated return for the rental,
Yeah, you can final amount, whatever final. But let's say you forgot SOP loss, then forget it. Are you getting it? So basically, the updated return should not reduce. You cannot say my income is reducing, all of my loss is increasing. Yes, that means there should be some payable in updated return. There has to be some payable liability. Yes. I'm just showing you this from the QuickBook here, guys. Here. Yes, everyone is reading. Guys, 139 8A. An updated return can now be filed within how many months, guys? 24 months from the end of the assessment year. That is assessment year 24-25. Then, guys, within 24 months you can file. This can be filed whether return of income you have filed earlier or not, doesn't matter. You can still update the return. The same cannot be filed to increase what? Losses, or to increase what? Refund, or to reduce what? Income. Basically, indirectly only for the benefit of the government. It has to be updated for the benefit of the government. Cannot be filed if updated return of year has already been filed and assessed also. As if your return has been filed and already assessed, then you can update it. Till assessment, you can update it and see what tax you have to pay. If the return filed after the due date, but within how many months? 12 months. How many months, guys? That means within how much time? 1 year from the assessment year. Then you have to pay additional income tax of how much? 25%. Of course, interest will always apply. Interest basically till you pay government, they will on the delay they will charge you interest. And if you pay after 12 months, but up to how many months? 24. Then what amount will have to be paid, guys? 50% addition. Yes. Let's take a number, guys. You forgot to put additional rental income of 10 lakh. How much? 10 lakh. On the 10 lakh, let's take a number, guys. Your tax is 2 lakh. How much is the tax? Plus 25%. Everyone on the calculator. 2 lakh. Yeah, no problem. I'll wait. No problem. 2 lakh. Yes, 2,50,000 you'll have to pay. And are you paying this 2,50,000 late? So there is a section, interest section called 234A. Which section? 234A, 1% per month. If you don't remember, we'll recollect it later. But guys, the government is like a money lender. Till you pay them the 2,50,000, they will obviously charge you interest on that. This is in the 12 months. What if you pay after the 12 months? Then 2 lakh plus 50%. How much is that? 3 lakh. Are we okay with this, guys? This is updated return. All right. You can till it's assessed. That means can you update it more than once? Yes, you can update it. There's no limit. There is no limit. But generally, it has to increase, keep increasing your income. I don't know why would you do that. And if you realize a mistake, you'll update it once only. Yes. Okay, everyone. All right. I'm just checking if there's anything else. Okay. You've taken a loan from a money lender. Yes. You take the loan today, 22nd November, and you pay him on 5th Feb. Tell me, interest will be from when? Same way, whenever 234A says, whenever 234A, 234, 234C, they will calculate it. Whenever it was supposed to be paid, they'll start calculating interest from there. Easiest interest is 234A. From the date you file your return, from after that one, after John, they'll start paying charging you 1% per month. Guys, if you don't know this interest, we can revise 234 ABC, but after not today, maybe tomorrow we can revise that ABC interest sections. Yes. All right. Yeah.
1% is of the 2 lakh amount of the
Interest you're talking about? Yeah, we'll talk about interest. Just imagine there's interest. Yes, because you're dealing the payment, so there will be interest. What percent, how, from when, we'll see tomorrow in 234 ABC. Yes. All right. I think this should be what it is. Now, guys, let's see the questions that come from return of income. Let's try answering them. Yes, here we go. Yes, everyone, start reading. The first one, the B part, please. Discuss the provision of section 139A1, which provides the persons who are compulsory required to apply for allotment of PAN number with the assessing officer. Not an important section right now, guys. This is 2019. That time they had made this provision. But I'm just telling you that if you're someone whose income is more than the basic exemption limit, or your sales turnover is more than 5 lakh, there are some people like that who need to apply for allotment of PAN. Guys, this is May 2019. This is way old. And now this provision has undergone a lot of less importance because now everyone has a PAN number. Yes. So we'll see the next one, which is still very important, guys. What is the fee for default in furnishing the return of income? 5,000 in case you file after the due date, and if your income is up to 5 lakh, then the default fee will be 1,000. To whom the provisions of 139 AA relating to quoting of Aadhar number do not apply. Guys, again, something that is very old now, does not, it's not there only now. This, but now that you have to link, now you have to link, and there is 234 age for that. Yes, you can read this question, but I would say don't attempt May 19. It's too old, and these provision, especially this and this, now do not matter. Quoting of Aadhar, now it's not quoting. Now you have to link it only. Yes. All right. We'll see the next one, and we'll see if there's a better question on the next one. Always, guys, the last question is from return of income. Yes. Elaborate the conditions, non-fulfillment of which would render a return of income filed by an assessee not maintaining regular books of accounts defective. As this is for 4 marks. Ideally, if I were you, I would not answer this one. I would answer this one because this is on TCS and it has 4 definite questions. But since we are discussing this, let's talk about it, guys. Guys, when can a return be defective? As per which section? 139.9. Do you remember, guys? 139.9. A return can be defective if there are some mistakes filed in the return of income. Now, guys, if you're not maintaining regular books of accounts, then what details you need to give? Details of sales, details of profit, details of expenses. All those details you need to give, even if you're not maintaining regular books of accounts. Otherwise, it will be considered as which return, guys? Defective return. Guys, there's nothing much to answer actually. If I were you, I would never attempt a question like this. This is such a simple question on TCS. We haven't done TDS, TCS, right? So when we do, we'll discuss this. There are 4 very, very basic answers here, and you get your 4 marks here. So generally, return of income is there, but it's an option. So sometimes it's a good question to answer. Sometimes the other one is a better question to answer. Like this one is very less to write here about defective return. You'll quote the section. You will say that you have to give 3, 4, 5 details. If you don't give, those are defective return. Yes. All right. Well, I'll see better questions, guys. Here, I'm confident there'll be better questions ahead. IFOS, which is this paper. Question number 4. There's no return of income only in this paper. Yes. Everyone, let's read this question. This is on return of income. This is a very good question on return of income, guys. Mr. Hari, aged 57 years, is a resident of India. He provides the following details of his incomes pertaining to 1920. Guys, read the details and tell me how much is the income of this person. Interest on NRE account. If you remember exempt income, is interest on which account? NRE is exempt. This is section 3. This is section 10 for 41 for 42. But besides the section, guys, this income is completely exempt. If you don't know this, you know how to go about it, guys. Go to my QuickBook, see the exempt incomes, because I in the fast track course I will not be able to teach you all. If you want that to happen, then we will not be able to do the sums. So that is the bargain. Yes. And I'm assuming everyone has gone through regular classes, so you know at least some exempt incomes. This income in which interest on which account, guys? NRE account is completely exempt. Interest on saving bank account maintained in the state bank. Where will it go, guys? IFOS. Interest on FD, where will this go, guys? IFOS. So total income is how much? 48,000. Will this go to my GTI? Yes. I don't have to see TTB, TTA reduction and all that. Right now, only GTI. If my GTI income is more than my basic exemption limit, should I file my return? Yes. What is this person's basic exemption limit? 2 lakh 50. And what is his income right now? 48. So should he file his return of income? No. He seeks your advice on the liability to file return of income as per the provision of the Income Tax Act. Which section will you quote, guys? 139.1. As per 139.1, since his gross total income, that is 48,000, is not more than his basic exemption limit, that is 2 lakh 50, he will not be required to file his return of income. Go to the next one, guys. Read the next two lines. What will be your answer if he has incurred 4 lakhs on travel expenses, guys? Yes, because, guys, as per section 139.1, as in case of expenditure on foreign travel for himself or for others more than how many lakh? It will be compulsory required to file what, guys? Return of income. Are we okay with this, guys? Yes. So this is question number Jan 21. We'll write also, but first we'll solve a few. Yes. Please read. There are two or both are a return of income only, guys. Everyone, please start reading. Yes, guys. Enumerate the cases where a return of loss has to be filed on or before the due date. Guys, in which cases all the losses you have to mention. Guys, loss from normal, non-speculative business, loss from speculative business, loss from specified business, loss from short-term capital loss, long-term capital loss from owning and maintaining race horses. However, the following losses can be carried forward even if the return is filed late or not filed. Loss from house property or unabsorbed depreciation. Yes. So this is 4 marks. I honestly would have probably written this or maybe seen the next one as well. In the following cases, the total income of the assessee or the total income of any other person in respect of which he is assessable does not exceed the basic exemption limit. Means, guys, do you have other incomes? No. You are required to state the reasons where the assessee is required to file the return of income. Guys, read the first, second, and third one. Let's read the first one, guys. Guys, does he have an exemption? Yes. He had a long-term capital gain of how many lakh? 12 lakh. Did he buy some bonds? Now we haven't done capital gain, we'll do it today. But guys, I told you guys, GTI plus which series? 54 series, guys. So GTI, I don't know, but 54 series is how much? 12 lakh. Is it more than basic exemption limit? Yes. So should he file his return of income? Yes. Manish and Sons HO should file their return of income. See the next one. Guys, is she a ROR? And does she have an asset outside India? But is car an asset, guys? I have not discussed IFOS chapter, but I just tell you there's a definition called property. What is the definition, guys? Property basically is MISB SAT job. Everyone, what is the shortcut? MISB SAT job. People, my student, you know it. Otherwise, I'll tell you guys what is property. Everyone here, MISB SAT job. People who will do IFOS today with me, you'll anyways do the shortcut. M is money. Everyone, M is I is Immovable property. S is shares and securities. B is bullion, and J is jewelry. Yes. People who are my students also are looking at this shortcut with a very surprising guys. 40 days to your exam. Don't be surprised. Yes. This all I've done many times before in the classes. And I've seen some of you guys attend my classes also. So clearly not revising. Everyone. What is the definition of property, guys? MISB, sad jaw. M is money, immovable property, shares and securities, bullion, and jewelry. Guys, sculptures, archaeological collection, drawings, artwork, all that is not important. So this is property. So I'm just asking you guys, watch, is it property? No. Shoes, laptop, no guys, all this is not property. Even car, guys, is not property. So will she have to file her return of income? No. Read the next one. Guys, this is how much, guys? More than how much? 1 lakh. So will you have to file a return of income? Yes. I would clearly not do this one, and I would clearly I would clearly not do this one. I would clearly attempt this question because one and a half, one and a half, one more writing I can do for those 5 marks. Yes, everyone, 4 marks. All right. Looking at more questions. Yes, everyone, look at the point C. Mr. Kailash. Everyone, we know this question pretty well, so please read and tell me what will happen here. Yes. Guys, is he a RNOR? Sorry, he's a ROR and could not file his return of income before the due date. Can he file his return late? But what are the consequences, guys? Lift. All lift, all. So first, late fee of how much? 5,000. If its income is up to 5 lakh, then 1,000. Then tax along with interest under section 234A, which we'll see tomorrow. And his losses will not be allowed to be carried forward except HD. See the next one. A businessman having a turnover of more than how many crores, guys? Or almost 10 crores, guys. Earlier, guys, a big businessman for more than 1 crore, they had to go for audit. They had to go for what? Now we have two limits, 1 crore and 10 crore. Anyways, so his turnover is how much? 10 crores. As a tax consultant, advise him what are the particulars to be furnished, guys. He will have to arrange his account. So he'll have to submit his P&L account. With that, he'll also have to submit his balance sheet, cash flow statement, and which report, guys? Audit report. Yes, everyone. I would honestly not do this. I would do the earlier one where lift was there because there were 4 different answers there. So, guys, choose well. If they've given you a choice, that means they are asking you to choose well. I would choose the first one as compared to Mr. Sitaram. I would choose Mr. Kailash. All right. So, this is another question. Yes. Again, two options, guys. The second one, first is the first one, which is very simple, guys. Read the first one. Which of the returns can be revised, guys? Very simple. Answer is yes, yes, yes. A belated return, thank you. A belated return can it be revised? Yes. A return already revised twice. Yes. And a return of loss filed under section 139, 3 yes. Now, of course, you can't write yes, yes, yes and get those 4 marks. Yes. It's for how many marks? 4. So, how will you explain this, guys? You will first explain section 139.5 that a return can be revised under section 139.5 by the due date of 31st December of the assessment year or assessment, whichever is earlier. In the following cases, first, a belated return, that is return filed after due date, can be revised. There is no problem in revising a return even filed belated. Second, a return already revised twice. Under section 139.5, a return can be revised any number of times and hence this return can also be revised. So basically you'll have to elaborate a little bit. and a loss return can also be revised. There is nothing you can write here, guys. Loss return, you can also revise that. But the next one, guys, is slightly better, I feel. There is some defective return. How would you deal with that, guys? How the assessing officer deal with the issue, guys? In case of defective return, this is a section 139.9. Will you get an intimation over email? You will get an intimation, and you would enumerate the details on which the defects are there. What are the consequences if the defect is not rectified within the time allowed? You can apply for extension at the discretion of the officer. Specify the remedies available if not allied. Okay. What are the consequences? But if you don't rectify the defects, will be considered as a invalid return. Specify the remedies available if not rectified within the time allowed. That year, guys, there were some remedies, but now there's no remedy. There's only one remedy, which is updated return. That updated return is with section now 139.8A. And by when can you update it? 24 months. What is the date? 24 months from the end of the assessment year. Are we okay with this, guys? Yes. That time the remedy was different, but now the remedy is updated return. Yes. Read the question number C. I'll just zoom in a little bit. Yes, guys, what happened to Mr. X during COVID? His business suffered, and what did he do? Wind up. Wind up means discontinue. Yes, okay. Now, the assessing officer entered a notice of AY 22-23 during AY 21-22. That is before year. Can he do so? Are there any exceptions to the general rule? Income of the previous year is to be assessed in the assessment year only. Yes, guys. Ships eventually leave avoiding danger. We are done on the first day, guys. Ships eventually leave avoiding. If you write those five, you get your 4 marks. Everyone okay? So does the assessing officer have powers to do so? Yes. In the following five incomes, the assessing officer may assess the incomes of previous year in the previous year itself. Yes. We've written it already. I told you while you were writing, this has come in the exam and we will see it ahead in the exam papers. Yes, everyone okay? All right. So let's try and write one and we'll see how we can write it. Why don't you attempt one? Let's try this one. Now, this is very theoretical. So yes, guys, let's try and write this one. Why don't you write and we'll see how have you worded it. I'll tell you where to correct it, guys. Everyone, this is July 21, question number, everyone, July 21, question number 4C. Try and see how you can word it. We have an answer for all the three. You just need to word it and give relevant details and section, guys. 139, one is a section. Yes, guys, how have you worded the first one? What have you worded as? So first you can give the facts. that Manish and Sons, always guys, try and give the facts first. Manish and Sons sold a residential house and invested in capital bonds under section 54 EC and got an exemption of how many lakh guys? 12 lakh. As per section 139 1, since the gross total income, including which one exemption under section 54 is more than the basic exemption limit, Manish and Sons will have to file his return of income for this year. Are we okay with this, guys? Yes. Next, what have we written for the next one? Always introduce first. Archana is a ROR, married in India, and has an asset that is a car abroad in Germany. As per section 130, as per section 139(1), in case an ROR has an asset abroad, the same person will have to file his ROR. However, car is not covered in the definition of property as defined under IFOS section 56(2)(10). Or you can just say it's not in the definition of property under the income tax law. Yes. So will not be required to file a return of income. What if this car changes to shares in Germany? Yes. Yes. All right. Next. So Dakar incurred expenditure of how much? 1 lakh rupees. Straight away you can say that as per section 139(1), in case of electricity expense more than 1 lakh during the year, the person will have to file his return of income compulsory. Thus, Mr. Sudhakar will have to file his return of income during the year. Yes. All right. So this is what you could do is whenever you revise return of income, go through a few questions, guys. But return of income sometimes can surprise you. Sometimes the question is so absurd, like which returns can be revised? They have given three, all three are yes. So it's more about presenting and how we write a BCom exams about, repeating a couple of things like that we have to elaborate, unfortunately. Because that revised return was such a simple question. Which returns can be revised, guys? All. Actually, the answer is a MCQ actually. All returns can be revised. But they've asked us a 4 mark question, and that time there were no MCQs also. They would ask these kind of questions, and we should be able to answer them. We'll go to more questions, but right now this is what we had written. This is a very good question, guys, for 4 marks. Which incomes can be taxed in the year? Yes, again, good question, guys. Everyone start reading. This is Rule 12AB. Please read and discuss. Let's discuss what this question talks about. Remember, guys, business and profession save TDS. Business turnover more than 60 lakhs. Professional turnover more than 10 lakh. Savings account deposit more than 50 lakh. And TDS more than 25,000. In case of senior citizen, 50,000. In the following cases, the person will have to file his return of income irrespective of his total income. So this is required under which rule, guys? Rule 12AB. Earlier, I had a different business and professions TDS save TDS. So this person, whoever is written, also use that shortcut. Can you see 60 lakhs, 10 lakh? TDS more than how much, guys? 25 or 50, and savings more than how many lakh, guys? 50 lakhs. Yes. Was it? No, that's not 12 AB. 12 AB is only these four. 12 AB is only these four. Yes. All right. So ending this here, return of income, guys, only has so much of importance. It always generally comes as an option. I'm sure we'll be able to answer it. If it comes as a very basic question, elaborate it, explain the section, elaborate the section, and elaborate the answer. We don't have any other option. And in case you get two, make the wiser choice of where you can write a bigger answer. Yes. On that note, guys, looking to start now in 2 minutes, we'll start capital gain. So, any difficulties in capital gain when you're solving sums or understanding what is it? Like people, I think you suggested capital gain. Who suggested capital? Yeah. What is the difficulty in capital gain? Like, so I can address that more detailed. Exemptions. Okay, good. Anything else? Rates. Okay. Rates. Okay. Exemptions. Anyone else in capital gain? Any particular thing? Okay. We'll talk about it. Give me 2 minutes and we'll start capital gain. Yes. In the meanwhile, if you have any doubts, we can discuss. That depreciation, try again later in the break or something, and let me know if you're getting it. This is from RTP. RTP, right? Yeah. Oh. Just one second. Yeah, just one second. Huh? Yeah, tell me.
Residential status.
Hmm.
Business. Business.
Business connection, yes.
That exemption.
Exceptions have been removed now. Thus, in India exports news, movies, and that has been removed. If you see which ICI module are you referring to, is there in the QuickBook, yes, but that has been removed actually. So I have to update the QuickBook. So, but that part has been removed. That India exports news, movies, and diamonds that has been removed. So now it's only that if there is a business connection from India, it will be taxable. Those exceptions they've removed it, kept it only for CA finally. Yes. Um, so just try and remove it in the QuickBook. Yes. Yeah. Yes. Yes.
Cross connections.
Yes. Cross connections.
The DCI material will be not the income, only the interest which has been earned. That will be clubbed in the hands of husband.
Yes. Yeah. So the income. Okay. If let's say I give your spouse debentures and you give my spouse an FD, that amount will never be clubbed. I can give debentures to your spouse, there's no problem. You can give FD to my spouse, there's no problem. But the income from that, the common amount income, will be clubbed.
To the extent of equal amount.
Equal. So first step one is that debentures transferred and FD transferred. 10 lakh I transferred, 9 lakh you transferred. What is the common amount? 9 lakh. So on 9 lakh, do both the calculation. Your spouse income will be clubbed in your hands, my spouse income will be clubbed in my hands. And whoever has an extra 1 lakh, that income will not be clubbed. She will have, or that person will have to pay the tax. Yes. All right. Okay. Yes, so starting a very different chapter today, one of the heads of income called capital gain. In reality, it's a great head of income because you make money without actually doing much. You buy a house, keep it for a few years. What happens to the price? Goes up. You buy gold, keep it for a some time. What happens, guys? It goes up. So these are assets. When you sell them, guys, the government says, listen, we need to be a part of it. I want some tax on it. So there are three parts of capital gain, guys. We'll discuss them, but we'll again discuss them from a very exam perspective, guys. So how exam asks. So all the exam questions on this chapter called capital gain we'll be solving. But first, let's see, guys. There are five letters in capital gains called ATPS. These five letters you might not even know, but still, guys, it's okay. But first is asset. What is it? Can you name a few assets? Land and building, plant and machinery. Okay, guys, not technical. Give me your life asset, guys. Gold, jewelry, diamond, shares, land. Guys, all these are assets. Yes. Calculator. Yeah, yeah. Capital assets. Yes. So, guys, in the exam, I'll tell you the because I'm looking from the exam perspective. They will never ask a definition of asset. They'll just give you most common are you sold what? Gold. You sold what? Shares. You sold what? Land. So these are most common under exams. Can be listed shares also. It can be unlisted shares. Guys, listed shares means you bought them on the stock market. You paid STT and CTT. And unlisted shares, you don't pay STT, CTT. Are we okay? So we can safely remove A because we don't need it from an exam perspective. They will always give you asset. Because if there is no asset, guys, there will be no capital gain only. Yes. Next, what is T? There's a full definition of transfer, but just guys avoid it because not asked. In the exam, guys, transfer means you're getting rid of it. Can you sell it? Can you exchange it? Can you do a barter? Can the government take a compulsory act? All of this is what, guys? Transfer. Everyone okay? Very simple. Next P, period of holding. This is important, guys, because period of holding can be long term or short term. People giving May exam, this is very tricky because your May paper will be very different in capital gain. You'll get confused. So be careful if you want to sit. Great. Otherwise, you can excuse yourself also, no problem. Yeah. So period of holding, guys, can be long term also and short term also, guys. How do you become long term or short term, guys? Let's talk about long term first. If you hold it for more than 12 months or 24 months or 36 months. 36 months is for all assets. 24 months is only for two assets, which is called LB, guys. No, no, UB. Guys, what is the shortcut? UB. Everyone. Okay. I'll go a little slow, but I want more responses, guys. A period of holding can be short term or long term. Long term if you're holding for more than 12 months or more than 36 months. Now, guys, 12 months is basically only listed shares, guys. Which ones? Of course, there's listed Zoom and all, but doesn't have to happen. Just anything which is listed. Remember, anything which is how much? 12 months. After 12 months, long term. Only UB, unlisted shares, which is and land and building if you hold for 2 years, and everything else is how many years, guys? 3 years. I'm giving you some examples. Gold, 3 years. Diamond, listed shares, 1 year. Unlisted shares. Are we okay with this, guys? So most common are these. In the exam, let's go back to most common assets. Land, 2 years. Gold, 3 years. Land and building, 2 years. Listed shares, 1 year. Unlisted shares, 2 years. Are we okay? We'll be able to put this in perspective. Now, cell consideration. Very, very important, guys. Actually, the shortcut should only be PSC. For someone who's giving the exam perspective, only PSC you have to look at. Now, let's see what is this PSC. P we know, S. If you're selling an asset, example, guys, you bought a house for 20 lakh rupees. Guys. How much is your house for? 20 lakh. And today, guys, someone said, listen, yeah, I am ready to pay 1 crore for this house. How much? So, what is your gain? 80 lakh on which you'll have to pay tax. Everyone, you'll have to pay. So, guys, in reality, people try to manipulate this. I'll tell you how they try to manipulate this. They'll sell the house for how much? 1 crore. Everyone here on the screen. Nothing, nothing. That book, if you had to refer, I would have told you read the book right now on the screen. So 20 lakh house you're selling for how much? 1 crore. So what is your gain? On that you'll have to pay tax. So people very smartly what they say, they have sell a house for 1 crore, but they tell the guy, listen, we'll make an agreement for 25 lakh. So 20 lakh house on paper is being sold for 25. So what is the gain? Lower the gain, lower the tax, and the other person will give them black money in a bag, guys, 75 lakh. Is that okay? So people manipulate the sale price. People manipulate which price? So the government says that we will not believe your sale price. We'll always compare in 4 cases. How many cases? The shortcut is buds. What is the shortcut, guys? In these 4 cases, they will compare whatever you are saying with some other value, and they'll take whichever is higher. So if you are saying 25 and the value is 1 crore, 1 crore. If you are saying 1 crore, the value is 1.5. If the value is 1.5, but you are saying 2.5, 2.5. What you are saying is right. Everyone okay? So this is buts. In 4 cases, they'll check the sale consideration. First is when you're selling land and building. What are you selling? Next, when you're selling unlisted shares. This ignore from an exam perspective. This is slum sale, which we'll discuss ahead. So from an exam perspective, bus. Buds will become what, guys? Bus. Now land and building. How much are you saying is your sale consideration for that house? No, you are saying 25 lakh innocently. On the paper is written how much is 25 lakh. But the stamp duty value of the house is 1 crore. How much is the stamp duty value, guys? So the government, what they'll do is will compare. But they'll give you a 10% margin. How much percent margin, guys? So they'll take your sale consideration and they'll add 10% to it. So 25 lakh plus 10% is how much? 27.5. Even up to this much, if your stamp duty value is there, we have no problem. Check the stamp duty value. 1 crore. So the government says, sorry, whatever you are saying, we can't take it. We will have to take in your sale consideration how much? 1 crore. Changing this. Your sale consideration is 26 lakh. Now, is it within 27.5? Yes. So basically, they're giving you a margin of how much percent, guys? 10%. Are we okay with this? Giving you some very different numbers here. Sale consideration 70 lakh. Stamp duty value 80 lakh. Which one you start with? Sale consideration. Always sale consideration. Plus, how much is that? But stamp duty values? Sorry. So we'll have to take how much, guys? 80. Changing this to 75. Then which one? Then whatever you're saying is right. Yes. Are we okay with this, guys? Yes. So they'll always check with which value? Stamp duty value, and they'll give you how much margin? 10%. Yes. Next, whenever you're selling unlisted shares, which shares? I have some unlisted shares of Unacademy, Swiggy, etc., and I'm selling them unlisted. How much are you selling for, and how much is the fair market value, whichever is higher? Simple. No 10%, nothing, guys. You are saying 1 crore, fair market value 1.2. 1.2. You are saying 1 crore, fair market value 90. 1 crore. Are we okay with this, guys? Yes. So it's very simple. This is buts. Right now it's bus. S is slum sale, which we will talk about later. I'll tell you, this is very common in the exam, the land and building 10%. Yes. And guys, can they give you 2, 3 stamp duty values also? Yes. So take whichever is lower. Take whichever is. So let's say stamp duty value 1 is 70 lakh. And stamp duty value 2, later on it became 90 lakh. Which one would you want to take? 70. They'll say 70 lakh you can take, but make sure that you receive some amount of token by modes other than cash that day. By modes other than. So guys, everyone, I'm giving you an example. You're selling your house and you want to take stamp duty value of 70 lakh for comparison purpose. They only say that we'll allow you to take 70 lakh, but on that day or before that day, you should have received a token. You should have received a not in cash, not in bearer check, not in cross check. CBC, not allowed. Guys, what is CBC? Cash, bearer check, account, sorry, cross check. These are not allowed. Then how do you pay? Account pay check? Allowed. Cross check, account pay check, guys, is slightly different. You should Google it. The difference is there. But guys, CBC, cash, bearer check, cross check, not allowed. Others not. Let's take an example. Your dad said today, Beta, we are selling this house. Today we are agreed on it. After a few months, we'll register it and the house will go away. Guys, which value, stamp duty value would you take if there are two? Lower one. And lower one is today. The government says take today's value, but prove that some token you received today by modes other than CBC. Yes, if you can prove that, you can take today's value. If you can't prove that, then you will have to take the higher value and your gap will be a lot and you'll have to pay higher taxes. Are we okay with this, guys? Yes. So this is as sale consideration. Now let's go to cost. Guys, cost is pretty simple. I bought my house for 20 lakh. What is the cost? 20 lakh. I added another floor to it, 5 lakh. What is my cost of improvement? 5 lakh. So basically there are two costs, cost of acquisition and cost of improvement. Are we okay with this, guys? Yes. Cost of acquisition, cost of improvement. Yes. Sometimes, guys, assets are very, very old. Your grandmother bought some gold many, many, many years back before 2001. Before the government says, listen, we don't have paperwork only for this. Guys, your grandmother in the locker, there was some gold bought in 1979 something. How do you have paperwork? So the government says, don't worry, it's old fashioned. What is it? So we'll give you two values. You can take whichever is higher. Original cost, if you know, or fair market value. What is old fashioned? Original cost, or fair market value, whichever is higher. Let me give you an example. Your grandmother's gold bought in 1981, 19, and she paid 1 lakh for it. So what is the original cost? 1 lakh. And fair market value on 1/4/2001. On which date, guys? 1/4/2001 is 3 lakh. 3 lakh. You'll take whichever is higher as a cost. Are we okay? So just telling you cost as old fashioned is the shortcut. What is OF? Old fashioned. This is for all assets bought before 1/4/2001. What is O? Original cost. And what is F for? Fair market value, as in 1 for 2000, whichever is higher. Next, very simple guys, bonus. Can you get bonus shares? What is the cost of bonus shares, guys? Zero. Next, very important guys, gift. Your grandfather gave you a gift of a house, everyone. Your grandfather gave you a gift of the house. The house that you stay in whose name earlier? Grandfather. Today is gifted it to you. Guys, he bought it for 5 lakh rupees, that house. How much? Now he's gifted it to you. So that gift should be taxed? No, it's coming from a relative. It's coming from a relative, so not taxed. Now that 5 lakh your grandfather paid for it, now it's coming to your hand. Now you're selling it for 25 lakh. Is there a profit? Yes. 25 lakh is the sale price. But what is your cost? Yeah, zero. Guys, what is your cost? Zero. But actually, no. In reality, guys, can the house have zero cost? No. Then who has paid? What cost? Five. That cost you will take. Are we okay? So if you have not been taxed, doesn't mean you have not paid anything. It will be the cost to the previous owner. But let's say some non-relative gives you a gift. Non-relative gives you a gift. House bought by non-relative 5 lakh. Gifted to you. When he gifted to you, will be taxed because non-relative 18 lakh. So you were taxed at how many lakhs? Now you're selling it for 25. What is your cost? 18. Are we okay? So I'm repeating, guys. If the gift is not taxed, then cost to the previous owner, like your grandfather. And if the gift is taxed, then whatever amount it was taxed in your hand, that you'll take the cost. Are we okay with this? Yes. And just saying, guys, all intangible assets, patent, trademark, copyright, all their cost is considered zero. All their cost is zero. Unless you buy it. Example, guys, Yeshas Academy, the brand name they created from scratch. What is the cost? Zero. Why zero? Actually, because they can't find out. But if I buy Yeshas Academy brand name for 10 crore rupees, then what is my cost, guys? 10 crores. Everyone okay? So in a nutshell, that is cost. Let's recap the cost once, guys. Cost can be old fashioned when the asset is bought before 1 for 2001. What is old fashioned, guys? Original cost or fair market value, whichever is. Bonus, what is the cost? Gift from grandfather, cost to the grandfather. And gift from a non-relative, whatever tax you are in. And all intangible assets. All right. Now that you know this, you can solve the sums, guys, in a basic manner. That first you'll have a sale consideration. Example, I'm selling my house for 1 crore on paper, 1 crore. What is my sale consideration? 1 crore. Next, guys, the government allows you 3 deductions. First deduction is if there is any expense on transfer. Expense on like brokerage. I paid 5 lakh brokerage. So 1 crore minus 5 lakh, 95 lakh. That's called net sale consideration. What is that called, guys? Net sale consideration. From that, cost of acquisition, cost of improvement, you can minus. There's no cost of improvement, let's say. I bought the house for 20 lakh. So 95 lakh minus 20. How much is it? 75. That is my long-term capital gain or short-term capital. Are we okay? So long-term capital gain, short-term capital, there's no benefit. Yes, there is. That benefit has now been removed for May, but for Jan exam, the benefit is still there. What is the benefit, guys? That, guys, your father or your grandfather, that time's money and today's money is the same value. No, guys, earlier and today there's a lot of gap in the valuation. So let's assume your father bought a 5 lakh rupee house 20 years back. Today, guys, will you get the same house for 25 lakh rupees? No. What has happened, guys? Inflation. What has happened, guys? Inflation. Like a lot of things, guys, even some prices, chart prices, food price, electricity price, everything changes. We've often heard our parents saying that in our days, 2 rupees we used to do everything, and you 2 rupees nothing happens now. So that is inflation. Now, to address that question, the government understands it. I'll give you a simple logic. The house was bought 20 years back for 5 lakhs. For how much? Today you're selling it for 1 crore. Guys, you're comparing today's value with the value which is how many years old? 20. Is that right? No. So the government says, listen, which is the 20-year-old value? 5 lakh. That is your cost. We'll index that cost. We will index means we'll increase that cost and bring it to today's value. And how they do that? They have inflation numbers. They'll divide it by the inflation number of that year, multiply by the inflation number of this year. So example, 5 lakh divided by 100 into 300. 100 into 300, 3 times. So 5 lakh will become what? 15. So actually, how much have you paid for that house? 5. You paid 5, but on paper now it will become how much? This is called indexation. Indexation is given only if your asset is long term. Only if your asset is long term. And listed don't get indexation. Which who don't get indexation is listed. Yes, very good. Let's recap, guys. Long term, short term, is there a difference? What is the difference? Long term held for more than 3 years, more than 2 years, more than 1 year. And the benefit of long term is we can get indexation. Indexation is on the cost or on the sale price. Is everyone okay? If you don't remember, IC. Indexation of cost. Yes. Now you take the cost of 30 years back, 20 years back, 10 years back, and you bring it to which value? Today's value. Sir, how will I remember indexation numbers? You don't have to. They will give you in the exam indexation numbers. Let's say you bought the house in 2012. So what will be the indexation number? 2012-13 and multiply by this year 2023-24. Are we okay? So that 5 lakh rupees can become higher. Example, 5 lakh will become 13-15 lakh. Is that the index cost, guys? Yes. Indexation is applies to all assets. True or false? False. Only to which assets? Long term. If I have a short term asset, no indexation. The government doesn't like short term. The government likes long term. That's why they give you indexation benefit. Indexation benefit does not apply to shares. Doesn't apply to. You can have bought the shares 20 years back, still you'll not get indexation. Anything listed, sorry, not shares. Anything listed. Unlisted you get indexation. Anything listed you don't get indexation. Are we okay with this? All right. This is the first part of capital gain. The second part is exemption, where she is wants some more details. So we'll go into details. And the third part is tax. Let's talk about tax first because that is something that's easy. I'm taxed on salaries. Guys. I'm taxed on. How will I tax? How will I be taxed on salaries? My salary is 15 lakhs. How will I be taxed? You will first take it to which room? Salaries. Then where will you take it? GTI. Then where will you take it? Total income. And on total income, I'll be taxed on which rates? Slabs. Up to 2.5, 0, 2.5 to 5, 5, 5 to 10, 20, and more than 10, 30. Same way, I'll be taxed on house property also, on PGBP also, IFOS also. But capital gain, they say that we'll tax you, but we have some special rates. We have some. If it's short term, the government doesn't give you any special rates, guys. If it's short term, no special rates. If I buy gold today, sell it after 3 months, no special rates. You add it to total income, slab rates. But if it's long term, the government gives you a special rate of 20%. But sir, what is so special in 20%? 20% is so high. No, 20% after indexation. That means you are selling your house for how many crore? 1 crore. You had bought your house for how many lakh, guys? 20 lakh. Guys, 20 lakh first they indexed. So your cost from 20 lakh became 60 lakh. So when your cost increases, profit goes down. No, 1 minute. Let's take numbers. You selling your house for 1 crore. Yes. In your mind, how much are you selling your house for? 1 crore. Cost is 20 lakh. What is your profit? 80. They're saying, no, we'll not take 80 lakh profit. They'll reduce. I'll tell you how. Selling is still 1 crore, but your cost of 20 lakh, they indexed it to 60 lakh. Now 1 crore minus 60 lakh, only 40. Earlier it used to be 80 after indexation, and on that 40, they want only 20%. So what if I'm in the 30% tax bracket? Still 20%. What if I'm Mukesh Ambani? Still 20%. Are we okay with this, guys? Yes. So that's called N20. I call it N20. What is N for? Normal rate. So if it's short term, normal. But if it's long term, after indexation. So I'm giving you some example, guys. I bought gold today for 30 lakh. In 2-3 months, I sold it for 35 lakh. Yes. What is my gain? 5 lakh. Where will I go? Capital gain, GTI, TI, and we tax on which rates, guys? I call it normal rates. I call it what rate? But guys, what if I buy the gold today and sell it after 5 years? First, I will index the cost. I will get what benefit? Indexation. So my cost will go higher. Everyone, my cost will go. As indexation, I say it's a chewing gum. It increases the cost. Cost will go higher. Your profit will go. And on the lower profit, you will pay tax only at 20%. What if I'm in the 30% tax? Still, I'll pay 20%. Are we okay? This is for all assets. But if it's listed, then the government says, I don't even want 20%. In listed, guys, the best time, that was a shortcut earlier, now the shortcut has changed. But the best time, actually, we are so close to the best time, guys. The best time to buy shares is 15-10. What is the best time to buy shares? 15 means short term is 15%. 15 is a shortcut. 15 is short term. 10 is. Let me explain that in more detail. Example, guys, I bought some Reliance shares or Zomato shares today and I sell it in 3 months. I sell it in how much? Short term or long term? Short term. The government will tax the 30 plus 35, 5 lakh into what percent? 15%. Everyone okay? So what is the ideal time to buy shares? 15-10. 15 means 15% for which? Short term. But if I buy Zomato shares today and I sell it after 1 year, then it is long term. The government says long term. I'm so happy you could hold it for long term. They will tax you only at 10%, that too above 1 lakh. So I buy Zomato shares today. After 1 year, I sell it. I buy it for 30 lakh, sell it after 35 lakh. What is my profit? Is it long term? They will not tax me on 5 lakh. They will only tax me on 4 lakh. At what rate? So can we decide on rates again? Dividing the class, other assets, listed assets. Other assets, what is the rate? N20. What is the shortcut, guys? N20. Short term, Normal rate. Long term, 20% after indexation. No, I'm not getting confident answers. So again, everyone gets all assets other than listed assets. N20. N means normal rate. 20 means for long term it will be after what? What is my usual rate is 30. Still 20. All right. And guys on listed, what is the ideal time? 15 10 short term and long term. So basically in the exam, no, you'll not get all of this together. I'll give you an exam question. Mr. A is selling listed shares. Then don't think about N20. Think about 15 10 long term listed shares. 10. So that's why you have to corner whatever number. Mr. A is selling gold. N20 long term 20. So are you getting? You have to direct yourself to the right number, guys. This is called tax on capital gain. What is it called, guys? Tax on capital gain. All right. So this is where we are now. The only thing left is exemption. So let's do that exemption as well. Yes. Till then, guys, besides the exemption, I'm just putting something on the screen. Try and see if you can solve this question, guys. Yes. Yeah. Sorry, you had a question. You can use a basic exemption limit. I'll show you how. Guys, very good question and very right time to ask this question also. Example, guys. My income from salary is 2 lakh. What is my income from salary? 2 lakh. And I have sold some gold, etc. And I have long-term capital gain from gold of 40,000. Everyone. So this is my salary income, and this is my long-term capital gain. We'll increase the amount slightly higher. Let's say salary is 3 lakh, and this is 40,000. Everyone. So what is my total salary? 3 lakh 40. So my total income is 3 lakh 40. Now, guys, everyone, salary will be taxed at which rates? Normal rates. Long-term capital will be taxed at what rate? 20%. So 20 into 40,000 is how much? 8,000. No, no, government is not like this. First, we can use your basic exemption. First, we can use your. So we'll use your basic exemption limit, and whatever is left, then we will charge. So this is also not the right amount. I'll change the number, guys. 2 lakh. You tell me, guys. What is the total income? 2 lakh 40,000. Everyone, I'm asking you some question on long-term capital gain. What is the rate? 20% on 40,000 is 8,000. Sir, am I supposed to pay 8,000? Not at all. Your basic exemption limit is how much? 2 lakh 50. First, you will adjust it here. How much gone? 2 lakh. Then you can adjust it here. How much gone? 40. In fact, your basic exemption limit is still pending. You don't have to pay any tax. And for this, I call it a menu card. I'll teach you the menu card, but a little too early right now to teach you that. In capital gain only, I'll teach you how to calculate. That means that 20%, 15%, 10%, you can adjust against your basic exemption limit. If it is more than that, then example, guys, you're a student. Who are you? You have no other income except share trading income, guys, and you've done some short-term trade in Swiggy shares, and you made an income of 1,75,000. How much? Do you have any other income? No. Listed shares, short-term, 15%. Listed shares, short-term, what percent? 15. On 1,75,000, 15%. No. Your basic exemption limit is how much? Adjusted. So can you adjust it against basic exemption limit? Yes. Only if it's more than that, you'll have to pay what, guys? Tax. I'll explain all that detail. But right now, guys, let's try and solve this ATPSC. Yes. 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 Yeah. So no, no tax. But what if it's above? Then which one will you adjust? I'll show you in that menu card. Just wait for that discussion. Yes. All right. I just testing your knowledge with a small question here. See if you can do it. I'll put a simple question. Mhm. This has exemptions. We can't do it right now. Yes. Guys, they're really old fashioned. Everyone, old fashioned means before 2001. Yes. In that, two things are there. Old fashioned. O for original cost. F is fair market. Example, guys, your grandfather bought a house in 1995. Which year? For 5 lakh. For how many lakh, guys? 5 lakh. So is it before 2001? So you have to take two values. Original cost 5 lakh. Fair market value 12 lakh. 12 lakh. But then, guys, this only immovable property, they will be compared with the ceiling maximum rate of stamp duty value. So OF is original cost or fair market value. Original cost 5 lakh. Fair market value 12 lakh, which is higher. But stamp duty value is 10 lakh. Then 10 lakh. That's a capping. That's a ceiling. Only in case of what? Immovable property. Guys, giving you another number. Your grandfather bought a house for 5 lakh before 2001. So OF, original cost 5 lakh. Fair market value 12 lakh. Which one will you take? Stamp duty value 15 lakh. So stamp duty value is like the MRP. Yes, you cannot go above that. All right, here guys, is a small question here. Try and see what you can make of. If there is an asset he's selling, just try and find out the cost, selling price, etc. Use indexation. Yes, guys. Let's see. He sold his vacant land for how much, guys? Guys, how much he is selling his land for? 10 lakh. But we always compare the sale consideration with stamp duty value. 10 lakh plus 10%. 11 lakh. Is stamp duty value within 11 lakh? No, stamp duty value is 14 lakh. Yes. So we'll take which value, guys? It's 14 lakhs. Are we okay with this, guys? Yes. All right. Let's repeat once again. Guys, what is the selling price? 10 lakh plus 10%. 11 lakh. And what is the stamp duty value? If stamp duty value was still 11 lakh, there would be no problem. But now we'll have to take how much value, guys? 14. So I'm starting sale consideration is now 14 lakh. Any expenses on transfer? Read again, guys. Any expenses on transfer? What is this 10,000? Register, but this is not on transfer, this is on purchase. Yes, so this is 14 lakh, this is a net sale consideration. Cost of acquisition, cost of improvement. Guys, is this the long term asset? So will we index it? Yes. Let's see the cost, guys. Is it an old fashioned thing? So what is the original cost? 1 lakh 80 plus 10,000, guys. So 1 lakh 90. Everyone, you will take all the costs, guys. So 1 lakh 90. And what is the fair market value, guys? 4 lakh. So which one will we take? 4 lakh. Everyone okay? So we'll take 4 lakh, but we'll have to index it. So everyone 4 lakh divided by which year? 100, into which year are you selling? 289. Please do this maths. 11 lakh 56,000. When you minus it, guys, what is the number you'll get? 2 lakh 44,000. Now, just asking you guys, at what rate will you tax this long-term capital gain? 20%. Are we okay? And for listed shares, then 10%. Yes. All right. So good. Here, what we learned is this old-fashioned thing we understood, and we understood indexation also. So this is good. We move to one more question. This is November 20, Jan 21. Let's see. Yes, guys, the second one. This is the second one. The first one we can't discuss right now for some reason, but the second one we can. Getting it? Guys, what is the selling price? Guys, he purchased the house for 9 lakh. He sold the house for 19 lakh. 19 lakh plus 10%, 20 lakh something. And what is the stamp duty value, guys? So obviously we'll have to take what, guys? 45. And guys, is this long-term asset? Yes. So we'll have to index the cost. Take 9 lakh, divide by 264 into 301. 10 lakh 26,136, and this is the cost 45 lakh. So sorry, selling price and cost. Will we get the gain? 34 864. This is my long term capital gain, taxable at what rate, guys? But you can invest ahead. Exemptions we'll discuss, guys, and how we can save tax ahead. So this is where we are. Let's try and see exemptions now. Yes. Now, guys, people feel bad that they have to pay a lot of tax, and hence the government says, listen, yeah, I'll come up with some exemption, but only the assets we like, only the assets we like. So they say that, are you selling a house? Everyone, are you selling a, and if in terms of selling a house, if in respect of that you buy another house, guys, everyone, what did you sell? House. Let's call it house number one, and you bought house number two. Then it means, are you selling one? And you bought one, you are investing in India, so the government feels very good about this, and they say, we'd like to give you an exemption. See how the exemptions work. When the house one is sold, example, guys, you're selling it for 1 crore. How much are you selling it for? Your cost was 20 lakh. So what is your gain? 80 lakh. This gain is called long term capital gain. What is it called? Yes, long term only get exemptions. Exemptions are only given to, I told you the government likes long term. So indexation also to long term, better rates also to long term, and exemptions also to long term mainly. What is your long term capital gain? 80 lakh. Does the government tax you? Yes. But the government says, I won't tax you if you promise one. Buy another house. So this is called house for house. You say, government pinky promise, I will buy another house in the next 2 years. In the next, if I don't buy, I'll construct in the next 3 years. So you are giving a promise to the government and taking an exemption under which section? 54. How much is the exemption, guys? 80 lakhs. So you're very happy because tax is zero. You made money, but there is no tax. But the promise that you're going to buy another house within, now who's watching you? Government. Every day they're watching you. Buy another house within 2 years. If you don't, or don't construct in 3 years, then how much exemption have they given you? After the end of the period, they'll add it back. Yes, everyone okay. So let's assume, so buying the house within how much, acquiring the house within how much time? 2 years. Constructing the house within how much time? 3 years. You can do a little bit before also, like buying the house 1 year before also you can do. Construct also you can start before, but you complete the construction in how many years, guys? 3 years. That means from the municipality, you get a certificate within 3 years. Until then, guys, how much money do you have? 1 crore 80 lakh. Can you misuse this money? No. They have a separate account called capital gain account. Which account, guys? You need to put the money. How much money, guys? 80 lakh. What exemption do you want? 80. Put that money in a separate account. Basically, don't misuse that money. Everyone, don't misuse that money. Because how much time do you have? 2 years and 3 years. You can misuse the money. So that put in a separate account, guys. Don't put it tonight. Don't put it tomorrow. Put it by John. Yes. Before you file your return, you have to just put the money and tell the government that I've put the money. Everyone. So repeating. Buy the house within, construct within, capital gain account by John. By John. Everyone. Yes. So guys, what if I don't put my money in capital gain account? Then in the return of income, you will tell I have not put the money. The government will not give you exemption. Are we okay? So when you file your return, you should have put the money in the capital gain account. And you have to buy within 2 and 3 years. This is locked in. What is it? Locked in. Basically, once you buy or once you construct, please don't sell it because guys, I've given you what? Exemption. So once you buy it, at least keep it for 3 years. At least keep it for how long? 3 years. All right. And anything else? That's it. This is section 54. What is it? 54. What is it? If you construct also, then don't sell it for 3 years. After 3 years, you sell. If you acquire after 3 years, you can sell. Yes. For 3 years, basically locked in because they've given you a benefit. Yes. Example for CA in the classes, guys, you say your parents, listen, I need a new laptop for CA studies. They buy you a laptop. After 2 months, if you sell the laptop on OLX, will they like it? No, they got you for this purpose only. So at least use it for how many years, guys? 3 years. That's what they're saying. Now, this is section 54. This exemption can be taken by you and me and by our families, individuals and HUF. The asset that you're selling should be long term, and the maximum benefit of exemption they can give you is 10 crores. What is it, guys? Example, guys, in Jayanagar, very palatial bungalow I sell, I have a long term capital gain of 12 crores. Can I have a long term capital gain of 12 crores? Yes. But the exemption you can take is only 10 crores. Are we okay? That's the maximum. Now, this is 54. You can use this section when you're buying your first house. Which house? Or you're buying your second house, but not after that. Everyone. And also, you can use this exemption to buy two houses also. 1 minute, 1 minute. You can use this exemption to buy because let's say your sons are separating. So the government says no problem, you can buy two houses, same thing. Both the houses should be bought within 2 years or constructed within one buying, one constructing. So buying 2 years, constructing 3 years. And how much money should I use? 80 lakh. Guys, one house for 30 lakhs, one house for 40 lakhs. How much have I used? 70. How much did I not use? 10. Then they'll tax you. So you have promised to use how much money, guys? 80. They are waiting for you to invest 80 lakhs in India. What if you invest 90? No problem. 1 crore? No problem. More is not a problem. Less. Exam marks. You wrote for 60 mark, you got 70. Will you tell anyone? No. But you got 6. Full court case, etc. Revaluation, everything will happen. Yeah. All right. So this is the first one. This is section 54. I have to take a very urgent call, but yeah, you have a question also. 5 minutes, guys. Yes, I'll be back in 5. If you have some capital gain notes, if with you all, you can read or do one some. I'll be back in 5. All right, so we finished one exemption. What is the intention of section 54, guys? That you have to sell one house and buy another house. You can buy also, but I just forgot to mention for two houses, your long-term capital gain should be up to 2 crore. Should be up to. In our example, what is a long-term capital gain? So can I invest it in two houses? What if it's 2 crore 80 lakh? Then I'll give you the exemption only for one. As the intention is for smaller people, not very rich people, they want to give the benefit of how many houses? Two houses. So if your long-term capital gain is up to 2 crores, you can buy how many houses? Two. If your long-term capital gain, let's say, is 2.4 crores, only one. What if I buy two? Then decide which one is a better one to take the exemption. Are we okay? Let's say my exemption long-term capital gain is 2.4 crores. How many? So exemption will be given only for one house. I bought two houses, one for 2.5 crore and one for 1 crore. Take it for 2.5, no, you'll get 2.4 exemption. Are we okay with this, guys? Yes. All right. So that is section 54. That's one exemption which is very common. Next, guys. Yes. No, you'll get for 2.4. 2.4. Maximum exemption is 10 crores. Yes. Yeah. No, in the if the HUF has a flat in their name, sometimes the HUF also has a flat in their name. So in that case, even the HUF can take this exemption. If Karta takes, he's an individual. Very common in the exam, guys. This one, you're selling what? One house, buying what? Another house. So can I sell shares and buy house? No. 54 is only for house. That combination is very important. Next, not very common, but has come in the exam once only. But here, guys, you're selling an urban agriculture land. What are you selling? Urban agriculture land. Which area is urban agriculture land in urban areas? Is it valuable? Cities? Yes, the land is very valuable. And hence the government says the same number, guys. How much did you buy the house land for? 20 lakh. How much are you selling it for? 1 crore. What is your gain? 80 lakh. The government says I'll exempt this 80 lakh, but promise you have to purchase another agriculture land within how much time? 2 years. Construct land within. No, you can't construct land. You have to purchase land within how much time, guys? 2 years. All other conditions are the same. For 2 years, can you misuse the money? No, you can put it in which number account, guys? Capital gain account. Guys, what if I file my return and I don't put anything in capital gain account? No exemption. You won't get for exemption. You have to put the money in which account? Capital gain. What if I don't buy the agriculture land after 2 years? After two, no, they'll give you the exemption because you promised. But then after 2 years, they'll add it back. Locked in for how many years? 3 years. Once you buy the land, you cannot sell. You should not sell it for how many years? 3 years. All other things are same. Like this is agriculture land. There's section 54B because barren agriculture land. What is B for? Barren agriculture land. Everyone. Just only difference here. And the last one, guys. Earlier one was house for house. This is agriculture land for what are you selling? Urban agriculture. Sir, what if you're selling rural agriculture? And rural agriculture is not taxed only in India. One. I hope you know rural agriculture land. Even if you sell it, there is no tax in India. So what are you selling? Urban. And what are you buying? Any agriculture land. Rural also urban. What you buy doesn't matter. What you sell is urban agriculture. And here the only exception is generally the exemptions are given to long-term assets. But for agriculture, the government has a soft corner. So at long-term or short-term doesn't matter. Are we okay with this? Yes, that's second one. Next, very interesting, guys. I'm selling my house and I have a gain of 80 lakhs. How much is the gain? I'm buying another house. I promise the government that I'll buy another house. But the house next one is only for 70 lakhs. Every month. Gain 80. I put money in the capital gain accounts also 80. But I bought the next house only for. So, guys, the government says, listen, yeah, you should have bought a house for 80. You invested only 70. So they'll tax my. So, not to avoid that, the government has proposed a scheme. They said, okay, you don't want to pay tax on the 10 lakh. Okay, then do one thing, buy my government bonds. Buy my. So, you'll take 10 lakh rupees, fill up a form, and you'll buy bonds under section 54 EC. Which section? So, guys, please tell me how much was your tax going to be on 10 lakh? You did not want to pay tax, so you have to fill up a paper. Think government, dear government, I want to buy a bonds worth how many lakh? 10 lakh. In 6 months. In how much time? 6 months you have to invest that money in which bonds? Government bonds. There are two bonds right now, NHAI bonds. National Highway Authority of India and REC bonds, Rural Electrification Corporation. Buy those two bonds within how much time? 6 months. Because it's 6 months, it's such a short period of time, they don't allow you or they don't want you to put money in capital gain account. Because 6 months is very short. Yes. So guys, if I sell my house today, within how much time? 6 months I need to buy these bonds. Yes. How much am I putting right now in this example? 10 lakh. So 6 months is okay. You're buying bonds. Which two bonds? NHI, REC bonds. And on the bonds, sir, what will you earn every year? Interest. That is taxable under IFOS. This is because you're investing in the bonds, the government gives you an exemption. And yes, the lock-in period is longer. The government wants your money for 5 years. Generally, lock-in. This one, how many years? 5. So you have to invest within 6 months, locked in for 5 years. In the 5 years, will you earn interest? Yes, that will be taxable under IFOS. One more thing, yes. Guys, this bond investment in 1 year cannot be more than 50 lakhs. Cannot be more than. So, example, guys, I want to buy bonds worth 22 lakh. Yes, 32 lakh, 42 lakh, 52 lakhs. No, sorry, you can't. So you need to only save how much long-term capital can you save, guys? 50 lakhs in a year by buying these bonds. The section is 54 EC, easy capital gains. What is the section? 54 EC, easy capital gain. That's a shortcut. Now, typical question in the exam, guys. You sold a house, you're buying bonds, but after 6 months you bought the bonds. Sorry, timing is very important. Timing is very important. You cannot buy after 6 months. The question that you solved, it has investment after 6 months. So it has to be within 6 months from your birthday. Then No, from whenever you transferred the house, from whenever you transferred the house. So the combination is very important. House for house, agriculture land for, and this bonds is house or land for bonds. You either sold your house or you sold your land, and what are you buying? Bonds. You have a very small house in Mysore, investment purpose. You bought it. You bought it for 20 lakh. You're selling it for 35 lakh. What is your gain? 15. Do you want to pay tax on it? No, simple. Buy bonds worth how many lakh? 15 lakhs. Are we okay? Yes, everyone. On the outskirts of Bangalore, you have a land. You bought it for 50 lakh, you are selling it for 92 lakh. What is your gain? 42 lakh. Do you want to pay tax on it? No, simple, buy bonds. The very simple mechanism of buying bonds. Within how much time? 6 months. But hold it for how many years? 5. Oh, sir, I bought the bonds. 4 years later, I removed the money from the bonds. Then add it back. Yes. Whenever you break the promise, whatever the exemption they've given you, they'll add it back. Yes. Okay. Um, yes. Something which not very common, but something that is on the screen here or also on the explanation front. This combination is very different. You don't have a house only in your name. In your name, there is no, but you have a lot of shares. You have a lot of, in your Demat account, you bought a lot of shares and you kept, and your shares are now valued worth worth how much? And you have bought them for 20 lakhs, now selling them for 1 crore. What is your gain? 80 lakh. The government says, listen, do you want to buy your first house? I'll give you an exemption. They're encouraging you to buy what? House. Here you're selling family assets. What is the shares called? Family assets. Gold, shares, diamond. You can sell any asset and buy what? House. Everyone. House for house done. Section 54. Land for land, also agriculture land. 54B. 54 EC. Bonds. This is different, guys. This is 54F. What is it? 54. What are you selling? Family assets like shares, like gold, like anything you're selling, but you're buying what? House. The government, let's see the same number. You're selling shares for 1 crore. How much is the share cost? 20 lakh. What is your gain? The government says, listen, yeah, I'll give you an exemption of 54F, but you have to buy a new house. They are also house for house. Here, it's not house for house, it's family assets for house. Same condition. Buy within 2 years. Construct within, till then put the money in capital gain account and lock in for everything same. Only thing in 54F, the government has got a little more greedy. Little more. Watch what has happened, guys. How much were your shares for? Everyone. How much were your shares for? 1 crore. What was the cost of buying the shares? So what was your gain? Is the government giving you exemption? Yes, so that you invest money in a new house. Within how many years? Construct within? Everything is the same like 54. Only thing is the government says, listen, yeah, I've got a little more greedy now. I want you to invest in India, but I just don't want you to invest 80 lakhs. You want an exemption of 80, so you should invest this entire amount. How much do you sell your shares for? 1 crore. They call it net sale consideration. Basically, whatever money remains with you, whatever money. So, how much did you sell your shares for? So, it's very simple. They want you to invest the bigger amount, the bigger amount. Everyone. Can we repeat this? You're selling gold worth 1 crore. You're selling gold worth. Your cost of the gold was 20 lakh. Gain. Do you want an exemption? They'll give you an exemption under F54F, provided you buy another house. Only thing is the house investment should not be 80 lakh. The higher amount. Okay. Now, guys, out of 1 crore, you invested a house of 1.5 crore. Government is smiling. Good investment, big investment. 2 crore, 5 crore. But out of 1 crore, guys, you invested only, let's say, 50 lakhs. Then what is the proportion? 50%. How did you get this proportion? The new investment versus your old sale. Guys, 50%. I can't teach you percentage, guys. Everyone. How much was your consideration? 1 crore. You bought a house, next house for 50 lakh. So what percent? Are we okay with this? Apply this percentage on your gain. You wanted a gain of how much? Exemption 80. They'll only give it to you for 40. Why, sir? Because if you are going to do 50% of your work, I will also do 50% of my work. Are we okay? Let's change the number, guys. Out of 1 crore, you invested 90 lakhs. Guys, 90%. Then out of 80 lakh, also they will give you exemption up to how much percent, guys? 90%. That is how many lakhs? 72 lakh. Guys, 1 crore you invested full 1 crore. Full exemption. 1 crore you invested 1.5 crore. Full exemption. So guys, if you invest the full amount or more than that, no problem. But if you invest less, then the exemption will be given proportionately. What is the word, guys? And how will you find proportion? Very simple, guys. Out of 1 crore, you are investing 60 lakh. Out of 1 crore, investing 60 lakh. So out of 80 lakh, how much exemption will you get? Do the math, guys. 48 lakh exemption. Are we okay with this, guys? Yes. Can we do another number? If this is confusing, you can do it in 2 steps. Out of 1 crore, how much are you investing? 60 lakh. Tell me the percentage. 60%. Apply on the gain this percent. So how much is that? 48. You can do whatever way you want, whichever way suits you. If the second one suits you, first find the percentage. First find out and then apply the percentage to the gain. Are we okay with this, guys? Here the government says you can use this to buy your first house. That means sell shares, buy your first house. Next time, sell gold, buy a second house. But after that, if you sell something and buy a house, you can do that, but I'll not give you exemption. Example, guys. You sold shares, buy your first house. Will you get 54 exemption? Yes. After 1-2 years, you want to buy another house, family is in becoming bigger. So you sell gold and you buy you second house. But guys, after that, can I sell my other shares and buy the third house? Yes. Who are you to tell me no? But I won't give you exemption. So when you sell your shares, you'll have to pay tax. You will not get exemption. Are we okay? So this is only up to how many houses, guys? 2 houses. All right. That is no, because bonds, the combination is you have to be selling a house. Here you're selling other things. That combination is very important. I joke in the class that idli, vada, sambar, chutney. It cannot be noodles and chutney and sambar. So that combination has to be very well. So let's see the combination. 54, house for house. 54B, agricultural land for agricultural land. 54 EC, house or land for bonds. And 54F, family assets for house. So house is a very common thing, guys. House is very common. Bond is also very common. Yes. So just see this combination and you'll be okay. Yes, everyone. Okay. Yes. Let me check your memory, guys. 54F, family assets for house. 54, house for house. 54B, agricultural land for agricultural land. 54 EC. No, bonds you're buying. House or land and bonds. And just one more, guys, where you are not selling, the government is buying from you. You have a factory. What do you have? But the factory is in Jayanagar, guys. Where is the factory? Jayanagar, in residential area. Full people are opening the house, full smoke coming out, guys. So the government says, listen, what are you doing? Jayanagar is residential area. You have a factory. You say, I started my factory 70 years back. So I can't help it. The government says, okay, we'll compulsorily acquire it. What will you do? Compulsorily acquire it. You open the factory for 20 lakhs. How much? Today they are paying you 1 crore. What is your gain? 80 lakh. Will it be taxable? Yes, but the government says I'll give you exemption if you buy another factory somewhere else. So this is 54D. What is the section? 54D for demand. Who demanded it from you? Government. Everyone repeating. Do you have an industry? Factory, industry. Yes. And did the government compulsory acquire it? Yes. They will give you exemption, but you have to buy a new factory. Guys, what do you have to buy? New factory, new building, new plant, machinery, etc. And guys, how much exemption do you want? 80 lakh. Invest at least 80. So everywhere you have to invest your gain. Repeat, everywhere you have to invest your. Only one section is greedy. F, where they want the higher amount. Everyone okay? Yes. This has come in the paper once. 54 is very common. That EC is very common. These three sections are very common. But this is exemption. Yes, okay. We'll apply practically in the question and we'll see how it works. Yes, yeah. Same 2 years. No, sorry, 3 years. Let's repeat the timelines, guys. House buying 2 years. House constructing 3 years. Because construction generally takes time. Agriculture land is plain land, so how many years? 2 years. 54F is again house, so I'm not even repeating same. Bonds, very simple filler form, so 6 months. And factory takes some time, so 3 years. Yes, everyone. So maximum time is how much? 3 years. And minimum time is 6 months for those bonds because bonds you have to just fill up paper. Bonds I bought practically. I'm holding bonds. I'll tell you what happened is Bangalore in Bombay. I had a small garage, and I bought a garage. And in Bombay, there's a culture that to park your car, you have to buy a garage. There's less space. So I bought a garage for some. Let's say I'll give you random numbers. I bought the garage for 10 lakh, and I sold it for 22 lakh. So what was my gain? 12 lakh. Now it is long-term capital gain. Now 12 lakh. I didn't want to pay tax on that. So then I just bought REC bonds. I filled up a form within how much time? 6 months. Of course, I filled up in 5 months, 4 months. They send me after 8, 9 months. But doesn't matter. You have to do your job within how much time? 6 months. And now I have those bonds. I have to keep it for how long? 5 years.
You got interest from that month itself.
When you pay by courier and all, they send it, it comes late. But when you pay, you from that day your interest starts. Yes. And simple interest I'll get for 5 years. Every half yearly they pay me interest. Interest goes under which section? IFOS. But guys, good thing. People are thinking, oh, bonds is bad. No, it's a good thing because one second, on 20 lakh gain, let's say 20 lakh, 20% is how much? 4 lakh. Upfront 4 lakh I say because I invested in bonds. And somewhere I would have invested the money, so I invested in bonds. Yes. Which section did I use here? EC. Whenever you buy bonds, it's 54 EC. Yes. All right. So tactically, you can use it, guys. Your parents are saying, listen, yeah, this house is too small. We'll move to another area, and they're selling a house, and they have to buy another house within how much time? 2 years. Tell your parents. A lot of people feel, oh, we'll sell this house, we'll go on rent. After a while, we'll buy. No, your time limit is if you buy within 2 years, you'll get this exemption, or construct within 3 years. Yeah. Okay. Perfect. Now, some small additional points so that we can do all the sums possible, guys. There is something called slum sale. Guys, everyone, what is it called? Slum sale. Guys, can I sell a car? Can I sell gold? Can I sell shares? These are individual assets. What are these? But if I sell my entire undertaking. Example, guys, I have two undertakings, A and B. Guys, what are the two units? A and B. I'm not selling my entire company. I'm selling the undertaking B to some person. Let's say I'm selling it for 100 rupees. How much am I selling it for? 100. Everyone. 100 crores, let's say, if that's better understand. So let's say a company like Britannia, I give Britannia example, guys. How many units do they have? Two units. One biscuit making, one let's say noodle making company. Yes. So how many units do they have? Two. They want to sell one of the units. Can they sell it? For how many crores? Are they selling one asset? No, they're selling the entire undertaking. Now the government said this is a capital gain. This is what? How much are you making? 100 crores. Minus the cost. Minus of which undertaking? B. You can minus and balance will be considered as what, guys? Capital gain. Everyone okay? Simple, guys. You're selling something. But instead of single asset, you're selling entire undertaking. That's called slum sale. That is called. Now 100 crores I'm okay with. I'm getting 100 crores. Yes. But what is my cost of this undertaking called B? Gold I have a cost. Shares I have a cost. But what is the cost of the entire undertaking? They say, listen, you have to take the net worth. You have to take their assets. Take the assets minus the liabilities. Of which unit? B. Guys, liabilities mean loans, creditors, etc. That you minus. Assets mean debtors, current assets, fixed assets, etc. So let's say, guys, for this unit B, guys, all the assets are worth, let's say, 70 crores. How much are the assets worth? Liabilities, let's say, 30 crores. So 70 minus 30, 40. So your cost is what, guys? 40. Basically, everyone has a net worth. Even you have a net worth today, guys. Yes. Whatever your assets are minus your liability. Same way, I'm taking the net worth of which unit? B. Going slow. Concept is called slum sale. Are you selling one asset? No. You're selling the entire undertaking. For how many crores? They will compare the 100 crores with your cost. But what is the cost of the entire undertaking? It's net worth. You will take all the assets minus the liabilities. Are very simple. Whatever you owe to others. What are assets? Fixed assets, current assets, etc. But they say assets, you have to take the good value, proper value. You cannot take inflated value. So if I have land of 5 crore, what if I inflate it to 20 crore? My net worth will be high, guys. Then my cost will be high and my profit will be low. So they say no, you cannot manipulate the asset value. Repeat, you cannot manipulate. If it's a revalued asset, then original value. So example, land of 10 crore are revalued to 18 crore. Go back to 10 crore. Then let's say depreciable assets are for 100. I take 100 only. No, depreciated value. Which value? If this is confusing, just work on assets, guys. So assets, guys, if they are something like land, then we'll take which value, guys? Original value. Which value? Can I take revaluation? No. If land is for 10 crores, I've revalued to 18. Go back to 10. And depreciable assets, you take which value, guys? WDV. Which value? Example, guys, I had some machine for 1 crore. How much? Depreciated value 60 lakh. Which one will I take? 60 lakh. Everyone okay with this? All right. Yes. And one amendment, guys. Remember buds, which we made as bus. B for building. U for unlisted share. This is when they check your sale consideration. Remember building, they add how much percent? 10%. Yeah. Now S, slum sale. Right? How much are you selling it for? 100%. But what if you've only mentioned 100 crores on paper? And reality you're selling for 120 crore. And 20 crore you're getting in cash. You're cheating whom? Government. Everyone. On paper you're showing 100. In reality you're taking So the government says whatever you are saying 100 crores, I'll compare the fair market value with what value, and we'll take whichever is higher. 100 crores versus 120. 120. You are taking 100. Fair value is 80 crore. 100. We trust you in that case. Are we okay with this, guys? Yes. All right. So this is buds. Everyone, what is the S in buds? Slum sale. So whenever in the exam there is slum sale and they say that you are selling your undertaking for 60 lakh. How much? Fair market value 65 lakh. 65. You'll take whichever is. So that S is that slum sale. In case of slum sale, question has come in the exam. I'll tell you what is the question in the exam. First, your fair market value comparison. That has been the point. Second, the land has been taken at revalued value, original value. Then assets depreciation you forgotten. So you have to depreciate and then calculate the net worth. We'll do a sum on that also. Yes. All right. So this is what it is. There's only one thing that is left. I think that is agent cost. Anything else? Okay. Let me explain to you this. Slightly complicated. Do we have the time right now? Yes, we do. And I want to explain it right now only. Earlier, if you ask your parents about it, they'll tell you that two things used to be exempted in India. First, any dividend. Any? You earn dividend, no tax. Why? Because, of course, and companies are already paid the tax. Companies already paid the. That has changed now. Now, if Reliance declares dividend to you, will it be taxable? Yes. I'm not even talking about that. Second, the government says that if you buy any shares, if you buy any, which market? Stock market. If you buy any shares on which market? Stock market. And let's say you hold for more than 1 year, that means you're making them long term, then whatever gain used to be exempt. Like remember 1510. Earlier it was 15-0. Guys, everyone. You buy what? Shares. Hold it for 1 year. They become long term. Shares worth 30 lakh become 35 lakh. That 5 lakh exempt. And that exemption they removed, guys. Because of that, there was a problem. Watch on the screen. Something complicated, but hoping you've learned this somewhere. And maybe with me only, I can revise it, or somewhere else I can top it up from there. Guys, you bought some share for 1000 rupees. How much? And you were hoping, let's call this share of Zomato, guys. What is the share of? Zomato is recently listed, so we'll call it shares of Reliance, everyone. What is this? Share of Reliance. How much did you buy it for? 1000, and you bought it in the year 2000, let's say 17. When did you buy it, guys? 2017. And you were very hopeful that you will hold it for at least 1 year. They will become long term, and when you sell it, there will be no tax. So you were hoping and you were holding that asset for long term, and suddenly, guys, in the year 2018, guys, on the 31st of Jan, guys, which date? 31st. What's so special about this? This is called budget day, guys. What is it called? On the last day of Jan, there's a budget, and let's say this share was what in 2016. When was it? What? 2016. Before you go, I want to explain this very simply through another example, guys. There is a restaurant which is opened in Jayanagar where they serve unlimited pizzas for 100 rupees. Unlimited pizzas for? Nice, great offer, right? So after class today, you enter that restaurant. You're hogging, you're at the fourth pizza. And you've already ordered the fifth one. Because unlimited pizza, how much? 100. You're hogging. Suddenly, guys, they change the board. Ahead of 100, they add one more zero. How much? 1000. While you're eating, guys, now you stop eating. And now you're wondering, what will you pay? You tell me, guys, what will you pay? Why? But they've changed it, no, 1000. Same feeling, guys. You bought your share in which year? 2016. When it was what price? 1000. You decided to hold it long term and you would not pay any tax. And while you were holding in the middle, they changed the law. On the 31st Jan 2018, the finance minister was Arun Jaitley that time. Who was it? He is no more right now, but he introduced a law. He said from now onwards, we'll tax it at 10%. We'll tax it at. That's why we have that 1510. So, guys, suddenly is he changing a rule? Yes. So everyone got very upset. They said, listen, this is not right here. When we entered the restaurant, what was it? And how can you change it? The government said, listen, Arun Jaitley said, listen, when you sell the share, come to me, I'll give you a fair price. So when did you buy it? 2016. When did it change? And in 2022, let's say you finally, and this day, guys, the fair market value on a speech day was 1800. How much was it, guys? You bought the share for 1000. It became, and finally you sold it for 2000, guys, or finally you sold it for, let's say this became, once again, 1000, it became 1500. How much? And finally you sold it for 1800. Everyone finally sold it for how much? Everyone. Slightly confusing. Last thing we're doing, then capital gain is over. You bought the asset for how much? 1000. When the law was changed, and then you sold it for, and you went to Arun Jaitley, do something. I don't want to pay tax because when I bought it, it was tax free. It was tax. He said, no problem. I can't change your selling price. Your selling price is what? 1800. I can't do anything about it, but I'll try and give you a higher cost. I'll try and give you, because higher the cost, lower the gain. So I'll try and give you a higher cost. So we said, okay, give us a higher cost. He said, okay, follow these two steps. Step number one and step number two. Everyone, how many steps? Two steps. First, take the higher number. First, take the, and in the second step, take the lower number. Right, everyone. How many steps? Two steps. First step, second step, lower. So they said, first take the original cost, guys. What was the original cost of the shares? 1000. Or take the new cost, which I'm going to help you with, guys. So original cost or new cost, whichever is new cost, we don't know yet, guys. Everyone. See, how much did you pay for the shares? But Arun Jaitley is trying to give you a higher cost. What is this higher cost? They say, what was the fair market value when Arun Jaitley changed the 1500 or the selling price, which is 1800, whichever is lower. Confusing, yes, but we have to deal with it. This is called ON. What is it called? ON. O is, you'll have no problem with the original cost. N is new, and for that we have to go to step number two, which is fair market value. As on which day? His speech date. His speech date. How much was that? 1500. And selling prices, which is lower? So I'll take 1500 here. And which is higher? So finally, guys, my cost will become how much? So actually, guys, how much did you pay for these shares? 1000. But your on paper it will become how much now? So now tell me, guys, 1500 cost, selling price 1800. What is the gap? So they are going to tax you only on. So what he is trying to tell you is, when you bought till when I changed the value, how much was your gain? 500, on which there is no tax. After that day, what is the gain? I'll only tax you on that. Yes. We'll repeat this, guys, with a small understanding again. Guys, this is only and only used in case of listed shares. Which shares? When it's held long term. Everyone, listed shares, when it's held, and you have to buy it before Arun Jaitley's speech. Buy it before. LLB is a shortcut. Guys. What is the shortcut? What are you buying? Listed shares. Are you holding it long term? And you bought it before which speech? Arun Jaitley. Are these conditions fulfilled? Then please find out the new cost. You will tell me, guys, step number one, step number two. Higher, lower. Original cost, new cost. Original cost, example, new cost, fair market value or selling price. Fair market value, selling price, which is lower, you will take 1500, and which is higher. So in the exam, sir, will it be very difficult? No, guys. Once you do it one sum, you practice, guys, the second sum will be easy. But you have to practice one sum with me. Sir, when will I use this? When I buy gold? No. When I buy a house? No. When only when you're buying listed shares, which are held long term, and you have to buy it before his speech and sell after. Guys, today if you go to that pizza place, now he's changed that 100 rupees to what? 1000. Now when you enter, what are you seeing? 1000. So you will pay 1000. So now when you buy listed shares long term, 10% is what you will pay. Earlier there was a problem because of change in law. Yes, this is complicated, hence do it last, guys. It's in my QuickBook also, the same thing, ON. Only thing, what is fair market value? Share price. But quotation, the changes, no. Stock market morning price, evening price is different. Take the highest price. No. Take the, on his speech date, take the highest price. Are we okay with this, guys? Yes. Great. We've been in class for about 2 hours, 2 hours, 15 minutes, guys. Yes. I think we'll take a break now. We'll come back. Yes. So it's right now 4 o'clock. We'll come back at about 4:20. Yes, 4:20 or 4:25, somewhere there. And he'll continue. Capital gain sums we'll do back to back, or exam sums we'll do. We'll try and see some ICM material sums also. And if we are comfortable, then we'll go to the next chapter. Yes. Not important from an exam perspective. But I'll explain. If the government is paying you, then you have to buy the asset within how much time? 2 years, 3 years, etc. If the government is paying you, that time period starts from when they pay you. Yes, but not important from an exam perspective. Yes. Sorry, what do you say? Enhance. Oh yeah, we have to discuss that. We'll talk about it. We come back from the break and we'll talk about it. Just remind me. That's same. Actually, it's the same. It's section 45. We'll talk about it once we come back.
Share purchase before the speech you select will get on the exemptions to law.
Yeah, you'll get 1 lakh. Yes. Only about 1 lakh, they'll tax you at 10.
Before
पहले कुछ नहीं था, पहले कोई टैक्स ही नहीं था. फिर जब टैक्स किया, नहीं सी एक्चुअली क्या हुआ, फ्री चीज को टैक्स कर रहे, तो पीपल आर शॉक, तो उनको पैसिफाई करने के लिए बोला 1 लाख तक नहीं करेंगे. पहले तो पूरा नहीं करते थे, अभी 1 लाख नहीं, उसके ऊपर टैक्स.
so now we are getting higher cost also and under exemption.
हाँ, बट एज कम्पेयर टू प्रीवियस तो टैक्स भर रहे हो. पहले तो कुछ नहीं भरे थे. पहले इट्स लाइक लालबाग गार्डन एंट्री वाज फ्री. नाउ दे आर सेइंग 15 मिनट्स फ्री, देन यू पे टैक्स. सो उसमें पहले बेनिफिट था, अभी नहीं है. बट गवर्नमेंट वांट्स टैक्स, सो निकाला है.
It's not from the JLLB.
But you've not attended my classes.
I have not written it.
Of course you will. It's there in my handwritten notes. You can go to the folder. When did you attend classes?
As was like giving said that March only finished this.
Okay. This,
Yeah.
this definitely is written.
That's why I'm not.
Check.
So like, is it before exemptions or after?
This is in LLB, no? So it's in the additional points. In additional points. So what you do is when you're reading handwritten notes, all the shortcuts you can highlight. So somewhere it'll register better. No, it's just you'll identify it in the exam very easily. The moment you see listed share, actually the moment you see 31st Jan 2018 in the exam, you know they're asking to solve this. Wait for the sums, you'll get a better idea of this. Okay, capital gain. You'll solve sums, you'll get a better. Yes, guys, long break, but we are back and looking to complete capital gain. Guys, capital gain, just like PGBP, is a fairly large chapter. And we are done with the main concepts. A few more here and there concepts, whatever you feel and whatever I feel are exam related, I will discuss here. So here we go, guys. Some small concepts that need to be done. Guys, I am selling my house property to a cousin of mine. Everyone on the screen, I am calling these additional points. Let's discuss them as additional points, guys. This is the house. I bought the house. My cost of the house is 20 lakh rupees, guys. And I'm selling this house to my cousin for 1 crore rupees. Everyone, is there capital gain? Yes. I'm selling this house in the year 24-25 to him, but he's my cousin. He said, I'll pay over 5 years. Over how many years? I said, no problem. I trust you. You're my cousin. You pay over 5 years, guys. When will the government tax me? Guys, will they tax me in the 5th year? Will they wait for 5 years? No. They say, listen, we'll tax you in the year of transfer. Which year? So they don't check when you get the money, guys. They will tax you in the year of transfer. Are we okay with this first additional point? Very simple. In the exam, they say that you got the money in 3 parts. No. Year of, when did the house go from you to that cousin, guys? That is the year of transfer. Are we okay with this, guys? Second, guys, sometimes the house gets destroyed. Example, guys, this is the house. Unfortunately, the house caught fire. What happened to the house, guys? Caught fire. So the house is destroyed, but you had fire insurance. The fire insurance paid you money, guys. Are you not sold it, but indirectly, guys, are you making money? Yes. You bought this house again for how many lakhs? 20 lakhs. The fire insurance company paid you today's value, that is 1 crore, guys. Will it be taxable? Yes. If you're not understanding this, remember, guys, transfer means you're getting rid of the asset. You're getting, even fire means the house is getting rid of, so you will still be taxed under capital gain. But this will not be taxed in the year the fire took place. This, whenever the compensation is received. So year of receipt. What is it called, guys? Year of receipt. Are we okay? So generally it is a year of transfer. But guys, in case of insurance, if you don't get the money, how will you pay the tax? So it's a year of receipt. Next, compulsory acquisition. What is this? Compulsory acquisition. That means, guys, did you want to sell your house? No. But the government said, I want to buy it. The government said what? I want to buy it. House was for how many lakhs? 20 lakhs. The government said, you want how much? You said 1 crore. You said how much? The government says, no, no, no. I'm not going to pay you 1 crore. I'm going to pay you 90 lakhs today. How much? 90 lakhs. Are you upset over it? Yes. First, hear the whole story. How much did you want? 1 crore. The government is paying you. You are upset. You went to the court. The court saw, yes, the house is for 1 crore. Why are you paying 90 lakhs? So the court ordered the government to pay you enhanced compensation of 10 lakh. So 90 lakh plus, did you get that 1 crore? Yes. Now taxability. First, because the government pays you late, guys, it will be taxed in the year of receipt. Everyone, when will it be taxed? Because sometimes the government can delay it and it will be taxed in the year of receipt. Now, how is it taxed? First, they paid you how many lakh? After that, they paid you how many lakh? 10 lakh. Whichever year you are getting this money, it will be taxed. Now, tell me what is the cost? 20 lakh. You'll minus it here because the first time you receive 90, you'll minus how much? 20. What is your gain, guys? 70. Can I minus 20 again? No. In enhanced compensation, you've already minus your cost. So enhanced compensation, you can't minus cost again. Guys, with one $1 ticket, how many people can enter? One. Not again and again same person can enter or different people. So one cost you minus here. So what will you minus here? Nothing. Unless, guys, to go to the court, you had some litigation expenses. Which expenses? That you can minus here. Are we okay, everyone? So please tell me, this is called original compensation. What is it called? This is called enhanced. Where can you minus the cost? And enhanced, can you minus anything? Yes, litigation expenses. Which expenses? And guys, don't worry, because of the delay, if you are delayed and you're wondering what happened to the delay, you'll get interest. What will you earn? Interest. On that interest, guys, the government will take it to IFOS. Where will they take it? Because if there is income, there will be tax, but it will be taken to IFOS. And in IFOS, we'll see you get a 50% standard deduction. How much percent, guys? But that we'll discuss in IFOS. Everyone okay? So first, it will be taxed in which year? Year of transfer. But in case of insurance, etc., year of receipt. And in case of compulsory acquisition, again, year of receipt. But how many times you can tax it? Twice. Next, guys. You had some stock, everyone. What did you have? Stock. Oh, sorry. You had some asset. Example, guys, I have 3 apartments. How many apartments, guys? 3. Are they my assets? Yes. Now I said, who'll care? Who'll have 3 assets? Why should we have 3 assets? So I started a real estate company, guys, and I converted my asset into stock, guys. I converted what? Asset into stock. Remember, guys, everyone. You had some extra money. You bought 3 apartments in Bangalore worth 111 crore. How many crore? 3 crore. How many apartments? 3 apartments. You said what to do with 3 apartments? So you started a real estate company of selling apartments, and you introduce those assets into what, guys? Stock. Today's date, guys. Today is what day? 22nd November. Everyone, is there any money you made till now? No. You only bought how many assets? 3 apartments for how many crores, guys? 3 crore. Now, guys, on 22nd November, asset is converted into stock. And finally, guys, next year, that is year 25, 26, you finally sold the stock. 3 apartments you sold for 5 crore rupees. How much? 5 crore. If 3 apartments are confusing you, let's talk about 1 apartment, guys. You had 1 apartment for how many crore? 1 crore, and you finally sold it for 1.4 crore. Everyone. Now think logically, guys. How much did you buy it for? 1. How much are you selling it for? Forget assets, stock, etc. You're selling for 1.4. What is the gain? Should you be taxed on it? Yes. But the government says, where will you be taxed? Stock is taxed under PGBP. Asset is taxed under capital gain. So where will you be taxed? They said, till the date you convert it. Till the date you, this period, whatever is the amount, guys, will be taxed under capital gain. And here the amount will be taxed under PGBP. So you'll be taxed on 40 lakh only, but in 2 different heads, guys, because asset is taxed under capital gain, stock is taxed under. So they'll say, find out the fair market value on this day. Let's say the fair market value on this day is 1.1 crore. How much? So how much is this gap? 10 lakh. How much is this? 10 lakh will be taxed under which head? Can from this, what is the gap? 30 lakh. That will be taxed under where, guys? PGBP. Are we okay? But both these, they will tax you only when you sell. Only when you, because until you sell, you'll not get money, guys. Until you sell, you'll not get money. Everyone. These are 4 exceptional cases. So we need to by heart this and understand this also. First, any asset will be taxed in the year of transfer. Will the government wait till you get the money and all? No, that's your problem. Next, in case of insurance, when you receive. In case of compulsory acquisition, when you receive. And in case of conversion of stock into asset, sorry, or asset into stock, asset will be taxed under capital gain. Stock will be taxed under, but this entire tax will happen in the year of sale. Simple logic. Till you get the money, how will you pay the tax? Are we okay with this, guys? Yes. So this is some additional points in PGBP. Sorry, in capital gain. Anything else?
So what would be the 22nd date known as? Like,
date of conversion. Date of conversion.
our intention to convert? Or
No, date of conversion. Opening a business. So the date of conversion. They will tell you this is the date of conversion. On that day, what does the fair market value? Yes. All right. Yes. A company going into liquidation. Not important, but just discussing, guys. A company going into liquidation. Best example, Kingfisher Airlines. Yes, Kingfisher Airlines is now no more. And what happens to the company? Liquidates. Is the company closed down? Yes. No capital gain on the company, guys, after they close down. Now on the shareholder, let's say you and me are shareholders of Kingfisher Airlines and we hold large amount of shares. Let's say I hold 10 crore worth of shares. And Kingfisher Airlines comes up with a deal where they say, I'll give you an asset worth 12 crore. I'll give you a asset. Example, they give me a plane worth 12 crore and I give them the shares worth how many crore? 10 crore. For me, is it a capital gain? Yes. Guys, what did I hold? Shares. Am I giving rid of the shares? For a, not for money, but for an asset worth how many crore? 12. So will it be a gain? Yes. Of how many crore? 2 crore. Are we okay with this, guys? Yes, everyone. Remember, company going under liquidation, will the government tax the company? No. But for the shareholder, guys, there will be a tax. And if you're not understanding this, guys, am I giving away my shares? But not for money, but for asset. But still, that is an exchange, guys. Even that is subject to capital gain. Shares of 10 crore given away for a stock asset of 12 crore. What is my gain? 2 crore. Shares of 10 crores given away for asset of 9 crore. Loss. Same gain, loss. Same mirrors, guys. Say gain or loss. Now let's go back to gain. Guys, I gave up shares worth 10 crores for an asset worth 12 crores. What is my gain? 2 crores. Now there is some angle which is connected to IFOS. When we discuss IFOS, we'll talk about that deemed dividend part, guys. Right now, avoid it because it will confuse you. Okay, anything else? Anything else? Anything else? Yes. Guys, my neighbor wants to buy my house and he has given me a token of 5 lakh rupees. Everyone, he's given me a token of, he's like, don't sell this house to anyone, I'll only buy it. I said, okay, you pay me the balance within 3 months. Within how many months? He has not paid me the 3 months after balance only. And we are entered into agreement that if you don't pay me within 3 months, that amount will be forfeited. That amount will be. So guys, now I'm very happy today. Why? That 5 lakh is cancelled. It's my money now. Where will it go? IFOS. It's called forfeiture. What is it called? This same forfeiture, if it happened before 2014, before, the government has a different way of taxing. I'll tell you half before 2014, same number will take. How much did the neighbor give me? 5 lakh. This is before which year? 2014. That time, guys, if it's forfeited, the government says, I won't tax you now. I won't tax you. We'll wait for you to sell it the next time. So I tried to sell it to my neighbor. Did the transaction happen? No. I have how much money with? The government says, enjoy the money. I won't tax you now. Whenever you sell, you come back to. Okay. So after 2, 3, 4, 5, 7 years, I'm selling the asset. I go to the government. Government, I'm selling it for 1 crore. How much am I selling it for? Government says, good. 1 crore is selling it. Great. What is your cost? I say 20 lakh. What is my cost? They say, no, not quest. Out of 20, you already recovered how much? 5. So your cost is now only 50. Are we okay with this? So indirectly, how they're taxing me? Lower the cost, higher the gain. So indirectly, they're taxing me on 5 lakh. This used to happen before. So in the exam, they say amount forfeited 2019, IFOS, 2018, IFOS, 2024, IFOS, 2013. Then how much did you pay for the asset? 20 lakh. Out of that, how much have you already got? 15. So now your cost is how much? 15. If you want to index 15. You can't index 20. First, and then you index. Are we okay? Everyone. So 20 will become 15 and you will index 15 if you want to index the cost. Okay. Anything else?
So if the cost is earlier and then 5 lakh of advances after many years of purchase.
Still, indexation was on the smaller amount. Let's say you bought the asset only for 7 lakh. Now you got 5 lakh. So 7 lakh minus 5. Then 0. Then you won't get any cost only. I know it sounds a little unfair, but that's how it is. They say first you minus, then you index. Otherwise, what will happen? No? When you index, cost will become very big. So see, the government also has to run a country, right? So they say, I can't give you such a big cost. So you first minus, make the cost smaller, and then you can index. Somewhere I understand what you're saying. It's a small pain, but that's how it is. See, tax overall is a pain. Who wants to pay tax? I don't want to. Yes, I'm not getting any facility. But the government has framed the tax law in such a manner that somewhere, in many cases, it benefits them. In some cases, it benefits us also. I'll tell you one case. It's old-fashioned. What is old-fashioned? Original cost or fair market, whichever is. Guys, they're giving you higher value. And higher the cost means lower the gain. So there are some cases they benefit us, some cases they take the benefit. Yes. All right. Anything else? I think they're now ready to take some. Yes.
And in the case of liquidation for company,
yes.
we are giving book shares and they're giving the asset.
Yes.
The asset will be valued at book value or fair?
The current fair market value. Always fair market value. Yes. All right. There's a concept of deemed dividend there, but you won't understand it right now. After IFOS, we'll plug in that concept. Yes. All right. I think we are now some ready, guys. Yes, I am very confident we'll be able to solve sums. Yes, only thing is capital gain. When you study and the sums, they seem very different. So if you start following from this angle, from the sums perspective, I think it will go very smooth. Yes, so let's start doing it from the sum perspective. Let's start, guys. We'll start from May 19 and we'll target all the different exam sums from capital gain. Even if it's a small part of the sum, we'll do it. Yes, everyone looking at a very small part here, but we're doing every part of capital gain which is there in the papers. Let's start capital gain. First, we'll do all the papers question, then we'll do the ICI material questions. And if there's something pending over, then you can obviously do it at home as well and we can discuss. Let's see, this is a May 19 paper, guys. Point number 4 is where he's selling some unlisted shares. Guys, we will read together and guys, you will look at not ATPSC. We'll try and look at 3 letters PSC. Yes, everyone, let's start. So here we go. Let's see what he's selling. He purchased how many shares, guys? 4,000 unlisted shares of which company? Sham Limited, many years back in 2008 for how many thousand? 80,000. Company declared a bonus, guys. So congratulations, your 4,000 shares became 8,000. And February only got 8,000 shares. And now out of that, guys, you're selling how many bonus shares? 3,000 bonus shares. Bonus means they've come to you for free. Guys, so how much are you selling it for? 2 lakh. Sounds confusing? Don't worry. PSC will help. Guys, PSC, period of holding. You got these bonus shares in which year? 2008. Selling in which year? 2018. Unlisted shares become long term after 2 years. So is this long term? Yes. And can I index the cost also? Yes. Great. What is the selling price, guys? 2 lakh. I should compare it ideally with the fair market value, but they've not given me, so we'll take 2 lakh only. And next, what is the cost of your bonus shares, guys? 0. So, sir, you should index 0, guys. Anything you do with 0 is 0. Yes, mathematics rule. So, this is what it is. So, your selling price is 2 lakh, your cost is 0. So, what is my long term capital gain, guys? 2 lakh. Everyone, just going one step further. When you tax this will be taxed at 20%. What rate? Sir, 1510, that is only for listed. This is unlisted. So what rate, guys? 20%. Everyone. We'll try and look at more and more questions on capital gain. Whenever we find something on capital gain, that's what we will attack. This is capital gain. Do you see this 2 lakh, guys? Long-term capital gain. Yes. This Roy question, you're not prepared right now to do it. Probably we'll end it with it because he's selling one house, buying another, selling the other one, buy another one. Don't worry, we'll do it, but in some time from now. Yes. All right, let's look at the next one. This is November 19. We'll see what capital gain comes here. This is house property. Yes, this is on capital gain. Very interesting sum. Here, 3 questions are there on capital gain, guys. Oh, by the way, did I tell you about that Arun Jaitley thing? Yes, I have a small pro tip there, guys. An Arun Jaitley thing. In Arun Jaitley thing, in the exam, how will you identify? Because someone asked me LLB and all that. You don't have to say LLB and all that. Guys, very simple. Your exam year is which year? 23-24. In the year 23-24, you will see in the question paper date 31st Jan 2018. That means Arun Jaitley. That means that tell you that find out that ON etc. Yes, are we okay? Everyone, let's see. Quickly, we'll look at PSC. You will help me look at PSC in this case. He sold, Mr. Rajan sold how many shares? 10,000 shares of A Limited on which date, guys? 2018 at how much rupees? 650 per share. Guys, it is a listed company. These shares were acquired by Rajan on which date? 2016, 2018. Guys, is it long term? Yes. But because listed, I won't get what, guys? Indexation. All right. So long term, I know something that is long term now. All right. So P is done. Let's move to the next letter. How much are you selling it for, guys? 650 per share. Everyone, can we do the mathematics? 650 into 10,000 is how much, guys? 65 lakhs. Yes. So I'm putting the number there, guys. This is 65 lakhs. 1 minute. Yes, here. What is the selling, guys? 65 lakhs. So selling is also done. Now, what is the cost? Guys, these shares were acquired by Mr. Rajan at rupees 100 per share. So is it 100 into 10,000? So what is the cost, guys? 100 lakh. I was almost about to solve when I saw that something is wrong here, guys. Guys, they've given me 31st Jan 2018. So I checked. Are they listed shares? Yes. Are they long term? And are they bought before Arun Jaitley's speech? Yes. So I need to find AJ cost, guys. So my cost here will not be 10. Guys, ON, everyone. What is the original cost? 10 lakh or 100, guys. What is the original cost, guys? 100. What is the new cost? We don't know. For that, fair market value or selling price? Tell me the fair market value, guys. On 31st Jan, highest price, average price, or lowest price? Highest is what? 300. Selling price is 650. 300 or 650? 300. 100 and 300. 300. So, guys, 300 into 10,000. So, what is my cost, guys? 30 lakh. Everyone. Check Arun Jaitley cost. Yes. We'll write it and see how this works. But for those students who've been a part of my lectures, we've written this in class. Yes. The others, guys, let's do the mathematics now. Now that we know PSC, what is your selling price? 65. What is your cost? 30. What is your gain? 35 lakhs. Stop. Are they listed shares? Long term, they'll be taxed at 10% only, not on 35 lakh, 34 lakh. Everyone. Okay. Yes. Person behind, okay. All right. We go to the next one, guys. What is this guy selling now? Mutual fund. Same work. PSC, guys. You will tell me when, as and when we read, guys. When are you selling? 20th April 2018. Are they listed, guys? These units were acquired. Do you see STT? Yes, STT was paid. Only at the time of transfer, yes. Mutual funds you only paid once. So, guys, period of holding, guys. Listed. You bought it in 15th April 2017, 20th April 2018. Long term. Guys, what is it? Guys, think about like a birthday. Guys, do you know your birthday? Yes, 1 year. Yes, 1 year is already completed from 15th April to 15th April. Next, what is the selling price? 50 into how many units? 1000. Please do the maths. 50,000. That's your selling price. What is the cost, guys? How much did you buy these for? 10 rupees. Everyone, how much did you buy it for? 10 into 1000 is how much? 10. I was almost about to write it when I saw 31st Jan 2018. So, guys, Arun Jaitley. ON, whichever is higher and whichever is lower. What is the original cost? 10. New cost, we don't know. Fair market value for mutual funds is called the NAV, guys. So, what is the NAV on the Arun Jaitley speech? 55. And what is the selling price? 50. Which is lower, guys? And which is higher? 50. So, guys, my cost is now 50. The new cost 15 to 1000 is how much, guys? So, guys, this I'm very happy because I'll not be taxed because my gain is what, guys? 0. Everyone, the better you do is Arun Jaitley cost, guys. It gets better. Don't worry. One sum, second sum, we'll have more opportunities to do Arun Jaitley cost. But is this okay? Yes. All right. Looking at the last one. Again, guys, PSC. You will tell me PSNC. Sold how many shares? 100 shares. Of which company? C Limited. Guys, everyone. C is what company? Unlisted. Got it? You got it when? Sold it in 2018. So what kind of? Long term. So guys, long term. And can I index it? Yes, it is unlisted, so you can index. What if it's listed? No indexation. What is the selling price, guys? 100 into 200. Everyone. Very simple. Guys, do it. 100 into 200 is how much? 20,000. That's my selling price. What is my cost? You bought it as bonus. But even then, guys, are they old fashioned? Yes, everyone, guys. Any asset bought before 2001 is old fashioned. So now you tell me, guys, what is O4? Original cost of bonus is 0. What is the fair market value, guys? 50. Which is higher, guys? 50. Everyone. Are we okay with this? Sir, bonus shares, why did you take old fashioned? Any asset bought before 2001 is old fashioned. Yes. Now, guys, this 50 we need to index. Because what kind of shares? Unlisted. Guys, how do we index? 50 divided by 100. Into which year are we selling? 1819. What is 1819? 280. So please do the mathematics. Everyone, how much is the cost? 140 into 100 shares. 14,000. That is my cost. So what is my long-term capital gain, guys? 6,000. Don't worry, guys. We'll revisit it. I know some of you guys are confused. The confusion will only happen. I'm telling you today that in your Jan exam, the confusion will happen on the cost. So be careful. Any asset bought before 2001? Old fashioned. Tell me here, is it 2001 before that? Yes. So what is the original cost? Zero. What is the fair market value? So which one did you take? 50. Step one, freeze that. Now because it's unlisted shares, that 50 can get indexed. So you'll do indexation. What is the value now? 140. How much is the value now, guys? 140. Everyone. If this sum is bothering you, it is already on my handwritten notes folder, guys. This year is which year? 2019. Make a note, guys. 2019. Yes. And if you're ever bothered, guys, don't worry. Your handwritten folder is with you. Open the handwritten folder. Whatever you can see, there you can those you can solve and revise. Can someone explain the two steps here in cost? Why did I take the OF? And why did I index it? Because you index all assets. You index all long-term assets except listed shares. Yes. Actually, bonds also, but all that you don't have to worry about. Yes. And I forgot to mention slum sale. There is no indexation. Which sale? So that is 2019. We're done with two papers, guys. May 19 and 2019. 2020. Guys, we've done this, so I'm not doing it again. Everyone see, have we done this? 10 lakh, 14 lakh? Yes.
So in some sense, you'll be taking net worth of the
Asset
Yes.
on that day of
Of the day of transfer. Yes. I just check here a minute. I don't know if you remember it, but we had to solve this sum, guys. 14 lakh minus 11 lakh 56. Remember 2 lakh 44,000. Yes. Yes. These houses thing, one in the second sum, guys, we both will come up to both these sums. Roy also and this also, Krishna also, but in some time, not right now. I'm just keeping them open. Guys, we did one question here. We can do the second one now, guys. If you remember, guys, Mr. A is the owner of residential house. Now we can do 54 exemption also. Everyone, I will quickly recap this, guys. PSC. We've done this, but I want to do this with this line also now. So very quickly, guys. PSC. Period of holding, guys. When was the house purchased? 16. When was it sold? 20. Is it long term? Yes. Every time you see long term, put indexation here so you don't forget indexation. How much are you selling it for? 19 lakh. What is the stamp duty value? 45. So how much will I take, guys? 45. And what is your cost, guys? How much did you buy it for? 9 lakh. Everyone index it, guys. 9 lakh divided by 264 into 301. We've done it, but I'm doing it for another reason. 10 lakh, 26, 136. Excellent, guys. Everyone now, this is your cost, this is your sales. Minus it, guys. 45 lakh minus 10 lakh, 26, 136. My long-term capital gain is 34 lakh, 73,864. The government says, listen, please pay tax on this. I said, I don't want to pay tax on this. Is there a way? He said, what have you sold? House. Either you buy another house. Section 54. Or you buy bonds. 54 EC. Let's see what I've done. Guys, he has bought what bonds? NHI bonds, both how many lakh? Guys, the only thing is you have to buy these bonds within 6 months. Guys, when did you transfer the house, guys? He sold the house on 4th September. October 4th, November 4th, December 4th, Jan 4th, Feb 4th, March 4th. Guys, what is the date? So can you get the deduction? No, exemption under 54C is not available because the investment was made after a period of 6 months. You'll have to put that as a working. Everyone. So it's a good question. We answered this one, but we had not done that time. Now let's see this one, guys. Again, another time to revise AJ cost, guys. Have a look and tell me PSC. Guys, when did you sell it? 2021. What did you sell, guys? Listed shares. You bought them in which year? 2017. So what are they, guys? Long term. But will I get indexation? No. So I'm canceling it. So I know I don't have to take indexation. How much are they selling these shares for? 550 into 10,000. Everyone. 55 lakh. Now what is my cost? You paid how much at the time of buying the shares, guys? 395. So I was writing 39 lakh 50,000, but then I stopped, guys, because I saw 31st Jan 2018. Everyone, let's do ON. Guys, what is O? Original cost. What was the original cost? 395. New cost we don't know. What is the fair market value, guys? 390. And what is the selling price? 550. Which is lower? 390. And 390 and 395, which is higher, guys? So 395 is my cost. Again, it is the same. Yes, we try to give you a new cost, but sometimes the same. So 395 is 39 lakh 50,000. Everyone. Now all the boxes are ready. Take your calculators, guys. 55 lakh minus 39 lakh 50. How much is that, guys? 15 lakh 50. It will be taxed at 10%. What rate? Why? Long term. But only above 1 lakh. So not 15 lakh 50, only 14 lakh 50. All right. Guys, just below this is slum sale. Let's do this question also on slum sale. Yes. So we'll get a little practice on slum sale.
One lakh exemption is for what you
Long term, if it's listed shares. Remember 1510? Yes. So what shares are there? Listed shares. Is it a long term gain? They will not see earlier full was exempt. Now 1 lakh will exempt above that 10%. So example, you have long term capital gain of 7 lakh. They will not tax you on 1 lakh, they will only tax you on 6 lakh. At what rate? 10%. A little confused, too much of capital gain has happened. Yes. All right. Guys, see this next question, everyone. Yes, zoom in. Yeah. Everyone, not going into too much detail, but overall first discussing, guys. What is he selling? Guys, he transferred his shop by way of slum sale. Overall, guys, please tell me PSC. Guys, when is he selling it? 2021. And guys, this is 2018. So is it long term? Yes. But I don't get indexation, by the way. Yes. How much are you selling it for? 40 lakh. He transferred his shop for 40 lakh. The professional fee in brokerage is how much, guys? Can I minus brokerage? Always, guys. Sale consideration minus expenses. So we can always minus. I'm just keeping it here. I'll minus 80,000. Main thing, guys, in slum sale is the cost. The cost is the net worth, everyone. Cost is what? You need to take what? Assets minus liabilities. Guys, can we take the asset minus liabilities, everyone? Please tell me the assets. Yeah, 1 minute. 1 minute. Okay. So short term. Sorry, my bad. Now, guys, let's take the assets minus liabilities. Is building asset, furniture, debtor, other assets. Own capital is not liability. Bank loan is liability. Trade creditors and unsecured loans. So how many assets? 4. How many liabilities? 3. But there are some adjustments, guys. Watch. No individual value of asset is considered. Yes, I know that's called slum sale only because we don't sell individual assets. Next, other assets include what? Trademarks valued at how much? 2 lakh, on which no depreciation has been provided. Stop, guys. First, we'll not calculate. First, we'll do the maths in our mind. Guys, other assets is how much? Worth 8 lakh. Out of 8 lakh, 6 lakh is not the problem. What is the problem? On 2 lakh, guys, I have not taken depreciation only, guys. For how many years, guys? 1 year. Guys, everyone. At what percent? 25. I'm not doing any maths right now. Don't do any maths, guys. First, make up your mind. Yes. So on this 2 lakh, I'll have to calculate depreciation. Next, furniture of 1 lakh 50. Again, guys, I've not taken what? So again, on furniture, I'll have to take depreciation. Yes. Don't do any calculation right now, guys. You have to do double times. Next, unsecured loan is how much? Is advance received from wife, which she has agreed to waive off. So that means will you have to pay this? No. So I'm just changing the numbers now, guys. My unsecured creditors will reduce by how much, guys? 50. So the new number is what? 2 lakh. Everyone. Add it up. 5 lakh plus 2 lakh plus 2 lakh. So my liabilities are worth how much, guys? 9 lakh. Now the only thing left is I have to finish the assets. Let's see where's the no problem, guys. Other things are all okay. Guys, building is okay. Yes. So building is how many lakhs? 5 lakh. Debtors is okay. 5 plus 2. 7 lakh is not a problem at all. Plus other assets, 6 lakh is also not a problem. Whatever is not a problem, I'm adding, guys. So only 2 lakh I need to work on. And furniture also, guys, only 1.5 lakh is a problem. Yes. So what is the balance of furniture? 3 lakh 50. So whatever is right, I'm putting it here, guys. 3 lakh 50. I'm just tick marking. Building okay. Furniture okay. Up to how much, guys? 1 lakh 50. Otherwise okay. Debtors okay. This okay. So I've taken everything. Now I only have to take these two after depreciation. Understanding, guys, everyone? Let's check. Guys, this balance sheet is on which date? 31st March 2021. So which is the year we are in? 2021. Let's see now, guys. Let's do the depreciation. Trademarks is 2 lakh. We'll have to take full year depreciation. Yes. So please do 2 lakh into 25% minus is equal to 1 lakh, 1 lakh 50,000. Is that okay, guys? What have I taken? Depreciated value. And furniture, guys. Purchase on which date? Full year, half year. So 1 lakh 50 minus 5% minus is equal to 1 lakh 42 500. Guys, can we add all these assets numbers? 7 plus 6 plus 3 lakh 50 plus 1 lakh 50 plus 142 500. 7, 6, 3.5, 1.5, 142 500 minus 9. What is the final number? 10 lakh 42,000. That's your net worth, guys. This is your net worth. Your okay. Now take your calculator again, guys. How much are you selling it for? 40 lakh minus 80,000. 39 lakh 20. Where's your calculator? How can you come to class without calculator? 39 lakh 20. Yes. Minus 10 lakh 42 500. What is the number you're getting, guys?
38
lakh
38 lakh
28
28,775. Is that okay, guys? This is short term capital gain taxable at normal rates. Yes, all good, everyone. All right, again, guys, some things you can practice later. This is July 21 paper. We're trying to do as many as we can. We go to the next paper, which is December 21. Guys, read this and see what you can do for the capital gain year. Yes, guys, who acquired the land? Government. Guys, everyone, PSC. Guys, period of holding, long term, short term? Long term. Can I index my cost? Yes, 1 second. This is long term, so I'm indexing my cost. How much am I selling to the government for? 12 lakhs. So my sale is 12 lakh. What is my cost? 2 lakh. Let's index it, guys. 2 lakh divide by 117 into 301. 5 lakh 14,530. Okay. Now, guys, such property purchased by him, he purchased another. Okay. So here purchase and other is basically the exemption part. All right, let's do the mathematics, guys. Everyone take on your calculator. 12 lakh minus 5 lakh 14,530. 6 lakh 85,470. Is this your gain? The government says pay the tax or else buy another land. Within how many years, guys? Construct 3 years. So guys, another plot of land in 2021 for how many lakhs, guys? 6 lakh. So 6 lakh you'll get an exemption, guys. This is under a section called 54DD for demand. So what is the gain? This will be taxed at 20%. Take your time, think about it. Long term, short term? Long term, yes. And why did I get an exemption of 6 lakh? Because you bought another industrial land building within how many years, guys? 3 years. Yes, yeah. Sir, what about the interest? Now, guys, of course, you have some background of IFOS already, so I'm just telling you, interest always go to, and you get a standard deduction there of 50%. If you didn't know it, we'll revise it in IFOS, but otherwise, standard deduction of 50%. Yes. Check questions, doubts. Everyone okay? Yes. Yes, yes, you're there everywhere. Okay. All right, that's 21. All right. Now see this next point. This is paper May 22. Point number 9, everyone. What has she sold? Gold bracelet. Now I'm not doing PSC. You will do PSC, guys. Everyone, take a rough paper, write PSC. Yes. Please see when did you buy this jewelry and when are you selling this jewelry, guys? Guys, you sold it in 2021. You bought it in 2005. Please put a box next to P and write LT. Without this, it will not happen, guys. Please do it. I'm watching. Everyone, put a box next to P and write LT. And next to cost, you will do I. What is I for? Index. Put a I, guys. All right. Next, how much are you selling it for? 5 lakhs. So put S, put a box and write 5 lakh. Now there are two costs. We'll do one at a time, guys. First, there is cost of acquisition. How much did you buy the ring for? 40,000. Take your calculators, guys. 40,000. When did you buy it? 4,5. Divide by 113 into 317. 1,12,000. 212. Please write it next to cost. 1,12,212. Yes. Next, what is the cost of improvement? When did you put the diamond? 2007. Take 50,000. That will also be indexed. See, once the asset is long term, both costs will be indexed. So 50,000 divide by 129 into 317. 1 lakh. 1,28,000. 122,868. Yes, 122,868. Add both the costs, guys. 235. All right, minus 4 lakh. Sorry, minus 5 lakh. That's why, guys, it's important to write and then do the maths, guys. If you do everything on calculator, you lose out. Yes. So in the exam also write PSC, do the writing. And can someone confirm what is my long-term capital gain, guys? 2 lakh 60, somewhere around 260. Yes. Okay. And taxable at what rate? 20%. Yes. Just some question I have here. How many costs were there? 2. And will you index both costs? Yes. As the asset is long term, you have to index everything. Yes. Indexation is basically on the asset. The asset is long term. Indexation you don't get on which shares? Listed shares. All right. Slum share also, yes. Everything has a logic, guys. I'll try and give you logic also so that you understand things better. Guys, why listed shares the government doesn't get indexation? It's not fair, no? Guys, all assets you get what? Indexation. This girl got on the gold jewelry also indexation. Why on my listed shares no index? The government says on listed shares, I'm just taxing you on how much percent? 15 and 10. I'm anyways not taxing. That's the logic. Are you okay? Next, on slum sale, why don't you get indexation? I'll tell you guys. Slum sale, you don't sell one asset. You're selling the entire business. Now, in the entire business, let's say if I'm selling the entire Yeshas Academy, guys, when did I buy one AC? When did I buy one furniture? I will not know whether it's long term, short term. One AC could have been bought 5 years back, one AC could have been bought 2 years back. So we don't know, hence that they don't give indexation. Yes. So every time they make a provision exception, there's a logic to it, and this is I'm trying to also explain the logic wherever I can. All right. So this is May 22 paper. Just checking if there's anything capital gain.
And for bonds,
Bonds also. Bonds logic, how price doesn't change only. Yes.
The bonds usually are listed or unlisted.
If they're listed, anyways, you won't get indexation. If they're unlisted, then actually indexation is not given because bonds generally don't change in price. Bonds are like your FD. If you make a 1 lakh FD, 1 lakh FD will remain 1 lakh. You only get interest. Same way, bonds, 100 rupee bond will remain 100 rupees for 3 years. You only get interest on it. Unlisted, 20%. Yes. But generally, I'm telling you, in bonds, you don't get gains. I'll tell you why. Let's say I buy a bond today of Reliance, 1000. After 3 years, they'll give me 1000. So what is a, you don't get gains, you get interest. Guys, I forgot to mention one very important thing. In capital gains, you don't get deduction for STT and CTT. You don't get deduction of what? STT and you will pay STT CTT, but you will not get deduction. In PGBP, you would not get it in capital. Everyone. So please remember, it's there in the short, in the quick book. Anyways, it's also in my handwritten notes. But in capital gains, which room? Will you pay STT CTT? Yes, but you will not get what, guys? Deduction. But the logic again. So why are you not giving STT CTT here? You get it in PGBP. Here I'm giving you better rates. Guys, I'm giving you what, guys? Better rates. So that's how the advantage is. Guys, recent papers, residential status is asked so often. Please be very careful with residential status. Yes, please read everyone. Entire sum to be done by you. PSC will be something that is helpful. Don't do Vedic maths, do calculator maths. And put the numbers, guys. Everyone, PSC. I'm zooming in so everyone can see it better. This is the question. On the next page, guys, is your cost inflation index. Do you want to note it down so that I don't have to scroll? Yes, take a picture also, no problem. Laziness, no, smartness actually. All right. All right. Yes. Let's try and see, guys. He inherited the house from whom? Father. So when I say PSC, guys, everyone, period of holding is long term. So will I index my cost? Yes. But guys, the problem is I have no cost. My cost is zero. Excellent. So how much did the father pay for that house, guys? Guys, the house was originally purchased by the father is 10 lakhs. But guys, that is OF, old fashioned. So what is the original cost? 10 lakh. And what is the fair market value, guys? 13 lakh. Which one will I take? But it should be subject to stamp duty value of, so is there any stamp duty value given? No. So 10 or 13, how much is the value, guys? 13 lakh. Now will I get indexation? Yes. So I'll have to find index cost. Okay, so cost is sorted, 13 lakh I'll have to index. Now how much are you selling the house for? The house was originally purchased by the father for 10 lakhs. On 10/5/2003, the house was sold. Okay, yeah, no problem. So how much are you selling it for? 75 lakhs. All right. Where is it improved? Expenditure in connection with transfer is 50. So yeah, yeah, one. I'm just whatever I'm reading, I'm minusing. This is expense on transfer 50,000. And where is that? In the year 2013-14, further construction improves the cost of how many lakhs, guys? 10 lakh. So 10 lakh, 13 lakh will also be indexed, and how many lakhs will be indexed, guys? 10. So we'll index both, and that will become our cost. Yes, everyone. So let's index, guys. 10 lakh we'll index first. That's easier. 10 lakh we'll index. From which year was it? 13-14. So we'll divide it by 13-14. 10 lakh divide by 220 into 348. 15 lakh. Perfect. And the other cost is how much? 13 lakh divided by 100 into 348. So those both are your cost, and you have your sale price. But don't forget to minus expense. How much is the expense, guys? 50,000. So I'll tell you how it will look like. Sale consideration 75 lakh minus 50,000. That is net sale consideration minus cost of acquisition, cost of improvement, and final number. Yes, everyone okay? All right. So this is what it is. This is May 24. Acha, exemption is also there. Okay. Where was this question? Yes. Yes. In 20th December 2023, purchased a residential house for 10 lakhs. He does not own any other house. So what is he selling, guys? House, and he's buying another house. So he'll get exemption under which section, guys? 54. Everyone okay? Yes. So you'll minus 12 lakhs. Just make sure it's within 2 years, guys. When did he sell this house? 2023. He bought another house in 2023. So is it within the time period? Yes. All right. He'll be charged? No. Why? No, in May he's sold the house, and in that same year, December, he's purchased another one. So at the end of when he files his return, getting it right. See, you have 2 years. If you had not bought it now, then all that would happen. So, example, May you sold the house, there was gain, but by December you bought another house, so the gain reduced. So when you file your return, you will tell the government this story. This is my gain, 12 lakh I invested, the balance I can tax, I can pay tax. Yes? No. What are you going to? When did the transaction happen? No. When did the transaction happen? Which month? No. 1 second. No. No. I'll tell you. Which month was the selling? Not date. Which month? May. Which year? 23. So May 23 he sold his house. Then he went for a holiday, came back, etc. Purchased another house. Which year? Which month? In a few months he purchased. He'll file his return next year. John, he'll tell the government, dear Nirmala Sitharaman, I sold, I purchased, etc. This is my gain, tax me. No revised return, nothing. Guys, what if he had bought it next year? Then what would happen is by John he has to put the money in which account? Capital gain. And the government will give the exemption with the promise that you will buy it. Yes. Everyone okay? Alright. It's very simple, guys. It's like this. You joined a company and the company said, listen here, we are sending you for training program. We are sending you for, but you please, the training program is very expensive. 5 lakh rupees training program to UK we are sending you. But sign a bond that you will work with us for 3 years. For how many years? You signed the bond. They sent you for a training, spending how many lakhs? Will they wait for 3 years to spend? No. They spend the money with the promise 3 years. And if you leave within 3 years, you have to pay the 5 lakh back. Now next year you got a better job opportunity. So you're leaving, what do? Pay 5 lakh. Same way, this year, if you deposit the money in capital gain account, they will give you the exemption with the promise that you have to buy the house within how much time? 2 years, or construct within. If you don't do it, then whenever that period gets over, that time you have to pay that capital gain which you exempt, it will be taxable. Are we okay with this? Yes. All right. See, all these timelines, no, I'll tell you, all this timeline, no, will bother you till you hit articulation. And the best part is, exam does not ask you for these timelines. Exam will only ask you a timeline of 6 months, which is very easy to calculate. All this, when did you file your return? What day? Nothing. Just first find out the gain. Did you find out the gain? Yes. Did you buy the asset within 2 years? Yes. Take the exemption. Are we clear with this, guys? Yes. So, guys, this is where I'm putting an end to the capital gain questions here. there are about we did a lot of questions with some small, some big, some small, some big. There is one paper that is September 24 paper that we can do the paper at one go at the end, and you can have a look at the ICI material. First, start with test your knowledge. I don't think they'll be very challenging. You start with test your knowledge, and then you go up to the illustrations as well. Yes, but the trend here is very simple, guys. The trend is there is a person who has some asset. The most common assets we saw was house, shares, and that is being sold. Yes, PSC will really help you. P is what? Period of working. Either it's long term, then you put I. I means this small working of PSC will help you make your question better. Once you get your gain, then ask yourself that you want an exemption. Yes. Then 54 is house per house. 54 EC is house for bonds. Like that, what is the exemption? Check the date. Like I checked the date. I sold my house in 23. I bought the next house in 23 only. Perfect. No problem. Yes, exact details. I'll tell you what happens. Exact details in my firm. What we do during the year, whenever someone sells a house, no, we tell them that listen, you sold a house, there'll be capital gain. They said no, I want to purchase a house, etc. I said oh, no problem. Take your time. You have 2-3 years. So what you do is till then, whatever gain you made, not today, but by the end of the year, whatever gain you made, you put this in a separate account. So what that client will do, he will go to the bank, open a separate account, he'll put the money. And now we're sitting with the client in John, and we're filing his return. We ask him what was your gain. He said my gain was 80 lakh. Then we say, okay, show me your bank statement which you put. He shows 80 lakh. So we'll take an exemption. How much are we taxed in this year? Zero. So my long-term capital gain 80 lakh, less exemption, zero. So total zero, I submit the return. But now the timer is on. That he has to basically do this within how much time? And not just your timer. Government also keeps a time. They also watching you. Technically, yes. And next year he buys a house. So when he buys a house, you have to again in the return somewhere signify that you purchased the house. Yes. And the timer stops. And what if you don't? Then the 2 years timer, whenever it gets over, in that year, if you've not acquired, or in 3 years you've not constructed, then they tax you back. Yes, everyone, simple. Okay. I think my laptop is conked off for some reason. But this is capital gain. No, it's still all right. Yes.
Now we have sold it for profit in 13 lakh 44.
Yes. Minus 12 lakh.
The remaining 1 lakh 44
Will be taxed at 20%. If you want to, yes, and you can buy another house also later. Yes, but that's not given here.
But exam, how do you do?
Nothing. What is done is what is done. So 13 lakh, whatever is the gain, minus 12 lakh. The balance is long-term capital gain taxable at 20%. Yeah, we don't have to advise him in the exam. No, I'm answering your question. If they ask advise what to be done, then you can say with that money you can buy bonds also. With that money you can buy another house because you can buy how many houses? 2. So technically, if I was my client, whatever say 12 lakh you bought one house, take this money and put it in capital gain account. Or worst, take this money and buy bonds only. Simple. Yes. Realistically speaking, you're right. What to do with that money? But here we don't have to advise. So it's yeah. All right. Yes. Okay. Guys, getting a sense of confidence at capital gain. Now, how do you build more confidence, guys? Yes. When you go tomorrow at home, guys, build solve a few more sums. You'll get a little more confidence. And we haven't solved any sums, so I want to solve 1-2 sums. So you know how to present also. Technically, guys, let's mentally see how well you can present this. First, let's talk about it. Yes. What will you start with? Last line. What is the last line, guys? Computation of capital gain of Mr. Surinder for AY 24-25, PY 23-24. Particulars, amount. Guys, what are you selling? Sale of house. So you'll write under particulars, sale of house or residential house. You'll underline, you'll put a semicolon next. Sale consideration. How much is the sale consideration? 75 lakh. Less. Expenses on transfer. How much? 50,000. In brackets. Next line. Net sale consideration. 74 lakh 50,000. Next. Cost of acquisition. Working note 1. So all that, grandfather, father has gifted, all that will go in working note 1, but you'll do the indexation. So you'll put 13 lakh, divide by, multiply by, and put the number in the inner column in minus. Next, cost of improvement, 10 lakh divide. Now there's no working note for it because working cost of improvement is improvement. And you'll put the minus there and you'll get the number 13 lakh, whatever in the outer column. Now, less. Exemption under section 54, house for house and all you don't have to write. Exemption under section 54, new residential house purchased within 2 years, and you'll minus how much? 12 lakh, and the balance 1 lakh whatever you'll write long term capital gain taxable at the rate of 20% under section 112. Yes, everyone, 112. These small sections are there. You can use my QuickBook and refer. I don't want to confuse you with the sections right now, so I'm just explaining the concepts here. Now, working note. What is the working note, guys? The house was purchased by the father in the year 2000, and hence the cost will be higher of. You cannot write old fashioned, and hence the cost will be higher of original cost, that is 10 lakh, or fair market value, that is 13 lakh. So that is the cost will be considered as 13 lakh. Since the asset is a long term capital asset, there will be indexation as under 13 lakh divided into multiply and then the new cost. Yes, everyone okay? So this is how you present it. Guys, as a habit, every chapter you do, of course, not for the theoretical chapters, because I remember for law, for audit, etc., I didn't write even one page. I know other faculties can differ. I'm telling you my experience. For law, I never wrote even one answer. When I was studying, honestly, I never wrote even one answer. For audit, I never wrote one answer because that is my opinion. It worked for me, it might not work for you. But what I thought is, instead of writing that one answer so long, I can revise more. And literally, I revised law so many times. I would revise. In the morning class today, I was telling how I used to do law. Let's say the book is 300 pages, and I want to do law in like 10 days. So every day I have to do how many pages? 30. I would do 30 pages. Now, instead of writing and all, guys, I would just keep revising. Yes, I had used a different author, but that's different. In any case, you can choose depending on what your faculty is saying. For tax, I have a slightly different opinion. You can be very strong conceptually, but till either you don't do this mentally, how we did it mentally, full make a picture, computation of this particular, mentally you're making a picture. This is as good as writing because closer towards the exam, every question you can't write. But if you do this mental maths, guys, everyone, it'll help you. And if time permits, for the main chapters, guys, try and write a few sums. It'll really help. Yes, try once you solve the sum, once you know the answer, try and present it. It'll take 5-10 minutes, but it'll give you a sense of confidence, especially in practical questions like accounts, like tax, etc. You'll have to write. It'll help you. Yes. Okay. So that is what I want to do in capital gain. You can practice more sums. Come back again, and we can discuss. Right now, what next in capital gain? Anything else? Any pain point? Um, this is usually it. There are many things like Kingfisher and all that, guys. Liquidation, all that doesn't come. Very simple. This guy is selling a house, buying a house, all that comes. Um, rates of tax, handwritten notes are there with you. QuickBook is with you. Sums, ICM material you can refer to. Yes, perfect. Sections, I'll just tell you the sections mainly, guys. Remember N20, that 20 is 112. What is the section? 112. And remember 1510, that is 111A and 112A. A is for listed rate. A is for what? Listed. 111A and 112A. Long term is always 112 because that's a bigger number. Short term is 111. So N20 is 112, the 20%, and 1520 is 111A and 112. If you want to remember the sections, otherwise you can plug it later on. All right. What we can now do is start looking at the next chapter, but I'm a little jaded. I'm a little tired today. I'm thinking what we can do now. IFOS. Yeah, leave. Yeah. What's that? Salaries now? No, salaries is easy. SAP and SAP. Too much, yeah. Too much, yeah. Okay, so we can end. We'll end right now. Um, I'm just thinking, can we solve like a small sum here, and can we end on capital gain only, so it'll give us a sense of what we understood. Yes, I'll just surprise you with a small sum from an RTP. Yes. Yeah. This is 21 RTP, November 21. Guys, this is a question on the screen. I just want you to answer about what is the capital gain in this case. Everyone start reading this and just PSC. Yeah, this is an MCQ. This is what is case-based MCQ, guys. So they'll give you a case like this and they'll give you MCQs at the bottom. No. it will be a mix. Sometimes it's 2 marks, sometimes it's 1 marks because it's 15, right? So if they give all 2, it'll not total to 15. So they'll have to balance it. So the one which has more calculation will get 2, and simple one will get 1. Yes, any answers, guys? How much? 1.7. 17 lakh. Okay, tax is okay. So here, guys, is the question. Here is the answer. Amount of capital gain would arise in the hands of Mr. Animesh on transfer of shares. Guys, your capital gain is still 18. In your GTI also 18. In your total income also 18. But when you calculate the tax, it will be how many lakhs, guys? 17. When we do computation of income, I'll show you how to calculate the tax also. Yes. Anything else we could do here?
You mentioned about the difficult question like what too many houses.
Yes.
Bought and sold many houses. The first sum we saw,
Mhm. Mhm.
only bought and sold.
We can do that. Yes, but try it. I don't want to do it because it'll confuse. It'll whatever hard mark I do, it'll vanish everything. Yes, but you can try it on your own, and you can come back to me. You try it. It's May 2019, Mr. Roy. Yes. But I know what that question does. It just takes you to a different level. So first get all your concepts strong, then try that Mr. Roy question. Yes. Yes, guys. Interesting question again. Again an MCQ. Can you solve this and let me know the answer? Yes. What is the option, guys? 13 lakh 78. Anyone else? 975. Good, guys. Variety is good. All right. Guys, PSC. Guys, what is the period of holding here? Long term. So PSC, this is long term and this is indexed. Now let's see. What is the selling price, guys? The stamp duty value. Okay, 1 minute. Sold for 80 lakhs. So selling price is 80 lakh. Guys, is it old fashioned? Yes. So what is the original cost? 20 lakh. And what is the fair market value? 25. Which one will I take? 20 or 25? 25. But the stamp duty value is how much? 22. So I cannot take more than 22. As I told you, ceiling. Yes. So now 22 lakh is my cost. I have to index it, guys. Everyone 22 lakh. Divide by 100 into 301. 66 lakh 22,000. Please minus it. 13 lakh 78,000. No problem, guys. People who got it wrong, did you realize the mistake? Yes. All right. Just 2 minutes, learn question, and then we leave. Yes. Yes. See, also, I just want to tell you something, guys, that you need to prepare yourself and not scare yourself. Yes. What I mean to say that is that when you prepare a chapter, look at most questions. 99, if 95% questions you're getting, and one question you're not getting and is bothering you, leave that question away. Yes. And if it's a really old question, the trend has changed of asking question, leave it. Yes, because I know what happens is when you focus on that 5% so much that you forget all the 95%. What I mean is there is a question that one guy sold one house. Then he bought another one. He has to hold another one for how many years? Then he sold that one, he bought another one. So basically, what you're trying to do is the same exemption again and again and again. Now, there is some amount of up and down there calculation. You might go miss. Now, if you focus too much there, you might miss on AJ cost, which is regularly asked. You might miss on 54 EC, which is regularly asked for. So first get all your concepts right. Once it's done, then try that sum if you can. Try it once more again and see if you're understanding. If it's too much, especially, and doing it today doesn't matter, guys. Will you be able to revise it one day before the exam? Will it bother you? So make sure you're doing those kind of sums which are comfortable, good, challenging also. What is something very challenging bothers, leave it. Maybe it will not come in the exam. If it comes in the exam, you'll try and work it around. Yes, I'm telling you, and I told you this yesterday also, guys. Even the toppers don't. I'm not trying to discourage you, but even the toppers, this time 31st rank, 13th rank also I got in Bombay. His score in tax is 66. 66 means he's lost out on how many marks, guys? 34. Now 30. He's 30. AIR 13. Like there are only 13, 12 people above him, guys. Yes. So I'm just trying to tell you that even he's missed out on something. But what I want to value are preparing. If you focus on those, then you're not preparing yourself, you're scaring yourself. Yes, and that's a very different tangent to go to. Don't go to that. First prepare yourself, then challenge yourself. Yes. All right. I'm just showing you one probably other question. Last question we'll see. Yes, this is a good question. This is an MCQ. Let's see if we're able to. But for this, we need to know agricultural income, guys, and rural agricultural land and urban agricultural land. Long back, you might have heard something, guys. Everyone, what is urban agriculture land? In urban area. Is it which area, guys? Urban. So if a land is in Jayanagar, urban. But urban is how far, guys? From a big city up to 8 kilometers. Up to how many kilometers? 8. If it's a smaller city, 6 kilometers. If it's an even smaller city, 2. And if it's the smallest, guys, 0. Let's read and let's figure out which is his land, guys. Mr. A, who's how many years old? 45 years old, sold an agricultural land for how many lakhs? 52. Guys, what if this land is rural agriculture land? Then I'll not even bother. So let's see what land is it, guys. Acquired at a cost of 49 lakh 25 on 13th 9 2018, situated at 7 kilometers for the jurisdiction of municipality having a population of 4 lakh. Guys, if the population is more than 10 lakh, more than how many lakh? Then it's up to 8 kilometers. If it's between 1 and 10, 6. So is this beyond 6? So this land is rural agriculture land, guys. What is this? So any hard work here is waste because this is rural agriculture land. I repeat, guys. More than 10 lakh population, 8 kilometers. Between 1 and 10 lakh, 6. Between 10,000 and 1 lakh, 2 kilometers. Yes, confused? I'll just write it here, guys. Everyone. This is a big, very big town. More than how much population? 10 lakh. Is Mumbai, Bangalore like this? So up to how many kilometers? This is urban. Beyond that is rural. Does it fall there, guys? What is the population? 4. No, it doesn't fall there. Next, guys, any with a population between 1 lakh and up to 10 lakh, guys. Then up to how many kilometers? 6. Is it falling there? Yes. So up to 6 kilometers is urban. This is how many kilometers? 7. This is what land? Rural agriculture land. And in that, I'll not calculate only because not taxable only. All right. Let's move to the next one. Also sold another agriculture land for how many lakhs? 53 lakhs at a cost. This is how many kilometers, guys? 1.5 from the municipality having population of 12,000. Guys, is it between 10k population and 1 lakh population? Yes. In that, up to how many kilometers? 2 kilometers. Is it within 1.5? So let's. This one is urban agriculture land. Which, guys? Urban agriculture land. This one solve PSC. Everyone. Did you get it, guys? Why is the first one rural? Because beyond 6 kilometers. Yes. One by one, guys. Please tell me P. When did you buy it? 2018 February. When did you sell it? 2019 December. It is short term because it's not after 2 years, guys. So period of holding is short term. This is wrong. This is wrong. Next, what is the cost? How much did you buy it for? 46 lakh. No indexation concept only here. How much are you selling it for, guys? 53 lakhs. Please tell me the difference. 7. So what is the answer, guys? Short term capital gain of how many lakhs? 7. Yes, people who wonder, guys, how do MCQs come? This is not given by me. This is given by ICA only. So these kind of MCQs asked in the exam also. Yes, and they challenge you now, guys. This is a chapter of capital gain or agriculture. It's a mix. So they are expecting you to understand both the chapters and walk into the exam. Yes, everyone. And for such chapters, you can always watch revision videos also, guys. They'll be helpful and you can revise using those. I've discussed these concepts in revision videos. Concepts 20%, sums 80%, you'll get better. If you want, open RTPs and start solving these MCQs wherever. After you did a lot of chapters, then you can go to these MCQs and start solving them as well. Yes. All right. So ending capital gain here, actually ending the session also here. I'll see you guys back. But tomorrow, guys, let's prepare. So tomorrow, what happens for you in the morning? You look at which sums? Capital gain sums. Which other chapter do we want to do tomorrow, guys? Yes, we'll do salaries, that is big, and IFOS. Is that okay, guys? Yes. So we'll start with salaries. There is no leftover, so tomorrow we can straight away start with salaries, and then we can look at IFOS. So I think both chapters will happen tomorrow. What you can do is wherever notes you've studied salaries from, look them up. Yes. You have all the morning for yourself, guys, till you come here at about 1:30. So look up whatever sums you can. Yes, and I'll see you guys back. All right, we move ahead in the fast track course, guys, and looking to do two things today specifically. Of course, from a very, very exam perspective, I'm looking to do a chapter which is called IFOS, income from other sources. While this is a very last head of income kind of a thing, every year some or the other thing comes from IFOS. I'm not saying very important or very big or very complicated, but something or the other always turns up from IFOS. People, there is not a major amendment, but for May there's an amendment. So I'll talk about it for Jan people. You all don't have to worry about that amendment. There's a small amendment there in IFOS. So we'll start the session with this, and we will first look at the concepts, but we'll spend 20% of our time for the day on concepts, and then we'll do sums, IFOS back-to-back sums. Again, ICA material sums, and then past paper sums. And after that, guys, I'm looking to start a chapter which is called salaries. So when you get your first job, how will you be taxed? How was I taxed? How are people taxed? So we'll talk about that. And we will also look at salaries again from ICA material and from the past papers. But we'll center it not on every discussion, but exam-centered discussions only. So let's start, guys, today's session on IFOS. The chapters we've completed are here. Let's update the chapter list. Here we go. This is DT, CA Inter, this is fast track course, and these are the fast track chapters. We've done introduction, rates of tax, IFHB, set off, residential status. Just putting the importance, residential status is 5 on 5, clubbing is 4 on 5, return is 5 on 5, capital gain, which we did yesterday, was 4 on 5. IFOS we're doing today, and the 10th chapter we'll do today, which is basically salaries. So good progress, guys. And once we are comfortable with DT, then only we will start GST. Yes, all good. So this is the intention and this is the agenda for today's session. Let's start with IFOS. But again, guys, IFOS we'll do from a very exam perspective, guys, not like I'm teaching you IFOS for the first time. Yes. So in your exam, they'll always give you a P&L account in the first sum. And in the P&L account, guys, here are the expenses. But what is this? Expense. And here are the incomes. And in the incomes, guys, they will be talking about some incomes like this. You tell me, where should they go, guys? Interest on FD. Where should this go? IFOS. Interest on savings account. Casual income. Dividend income. Rent of furniture. IFOS. Rent of house property. IFHB. Yes. Can you move this side only so we can have a more better discussion here? So these kind of incomes will go in IFOS, and we just have to do one thing, is when we solve this sum, we have to do IFOS and put those incomes in those heads. Yes. So typical are these incomes that we find. Interest, casual income is very common in the exam. Interest, casual income, dividend, pretty common in the exam. Now let's step ahead and see what are the other things that are there from IFOS, guys. Very common in the exam is something that you'll find is called gifts. Yes. I'm not going to go to detail, but gifts are free, guys. Gifts are what? Free. So if someone gives you a gift, then you have to see that is it on an occasion like marriage, relative, etc. There's a set of Lakshman Rekha. If the Lakshman Rekha anyone also you spot, then you will not tax it. Example, gifts of 50 to 1,000 rupees from relatives, non-taxable. From non-relatives, taxable. From non-relatives on marriage.
Not taxable.
Yes, because the moment you see one Lakshman Rekha also marriage, so there are some steps which we will talk about. These free in those situations will not be taxed. But otherwise, will it be taxed, guys? Yes, but only if it's more than 50,000, it will be taxed, and that is aggregate. What is the word, guys? Example, one person gives me a cash gift of 30,000, another person gives me another cash gift of 30,000. Is it taxable? Yes, because more than how much, guys? And the entire amount always will be taxable. So this is gift taxation. Gift is always seen from the receiver's perspective, guys. In gift, there are always two people, the giver and the receiver. Always from whose perspective, right? Receiver. And the section is 56 to 10. So whenever we write gifts in the exam, we will quote the section 56 to 10. All right. So let's now see the situations. Very common situations we'll see, guys. Of course, we have a shortcut for it, but I'll tell you the shortcut in some time. We'll talk about the common situations. As gifts received on marriage, gifts received from relatives, gifts or money received from a trust. From what, guys? Trust. Or amount received from some person on death. These are the more common ones. Now let's go into detail, guys. There's a statement here. And if you've been my student, you know the statement. If you're not, I'll introduce you to the statement. Yes, the statement goes like this. Don't tax tip. Guys, what is it? Don't tax tip and COVID money. Which money? COVID money received from LAHUF. Received from LAHUF. Now, we'll not go into all the details, guys, but we'll go brief details from. All right. Guys, on death or inheritance, if you get some money, don't worry, it will not be taxable. Example, if let's say some grandfather is not there and the grandchild gets the money on death of a person, the government says we will not tax that kind of gift. Next, if you get some money from a trust, similar to a trust is a fund and similar to fund is a local authority. Example, guys, you need some money to do your higher education. Some trust gives you money to do higher education. Will that be taxed? No. You are unwell and you want some trust to help you with medical expenses. They help you. Will that be taxed? No. Next, guys, in COVID, if someone paid you for a treatment or on death, someone paid someone money, then it's not taxable up to 10 lakh for death. Next, very important is marriage. Next is relative. Guys, relative everywhere the definition is what? Clock. This side, spouse. This side, siblings. This side, children and parents and grandparents. But only with gift tax, the government said, listen, let's make the net wider. So a lot of more people can give you gifts and they'll not be taxed. So they have made the gift very wider gift tax relatives definition, and they have made a definition called 232. What is the definition called? What is 232? It's two spouses, three brother and sisters, and two LAs and LD. What does this mean? Is your spouse is your relative. Next, three brother and sisters. Your brother, Your sister. Are they your relative? Yes. Your spouse's brother and sister also your relative, and your parents' brother and sister also your relative. So, guys, my sister. Yes. My spouse's sister. My dad's sister. My mom's sister. My spouse's dad's sister. No, not that. Only three brothers and sisters. And everyone LA means above me and below me. That means my parents, grandparents, great grandparents. My children, grandchildren, great, whatever is there in that scheme in the family tree. This is 232, and whoever I mentioned here, they're plus one. Example: my sister, her husband; my brother, his wife; my children, they are better half. So everyone's plus one is included, guys. They have made the definition very very wide. I'll tell you exam question of what has come. Wife's parents have gifted you something. LALD means yours also and your wife's also is two LALDs. So not it's a relative. Your wife's sister, relative. Your children, your wife's children. Katya. All right. So guys, same of course. Your parents, grandparents. Yes. But when you go to grandparents, paternal means dada dadi, not nana nani. Are we okay? Yes. Now why is that? The Income Tax Act knows, guys. We don't know. We just explain what they have mentioned. All right. And guys, if the HUF gives you any property on partition, on what occasion, guys? Partition, then it's not taxable. If you spot these, I'll tell you the more common ones in the exam, guys. Marriage, very common. Relative, very common. Trust, very common. Are we okay? The others are all time pass, nothing very important. All right. Now, just keep the money amount in mind, guys. It should be more than how much? 50,000. And I'm very, very confident if gift comes in the exam, you will never, never, ever go wrong. But what is similar to gift is something that you're getting, but you're not paying full money. Example, I'm buying jewelry of 10 lakh. How much am I buying jewelry of? 10 lakh. But I'm buying it only for 3 lakh. Only for what? Guys, the government says this is not possible. People use black money. People use what? No one gives a jewelry of 10 lakh for 3 lakh. So I paid 7 lakh in black. And the government doesn't like that. So they say this is called IB. Everyone, what is it called? That's a shortcut. Everyone, what is it? IB. Are you paying inadequate? How much inadequate? And that's your benefit. That is what, guys, your benefit. And the government taxes that if it's more than 50,000. If it's more than how much? So that means you can buy 10 lakh jewelry for 9 lakh 70, 9 lakh 80 also. But if you buy it for 3 lakh, what is the gap? Any gap more than 50,000, the government doesn't like. Are we okay? Sir, how do you identify in the exam? I'll tell you. Whenever you're buying something, just make sure you're not buying it below the market price. Much below the market price. Yes. Jewelry of 10 lakh for 9 lakh 80. What is the benefit? No problem. Jewelry of 10 lakh for 9 lakh 70. No problem. And this is only they check when it's in the definition of property. In which definition? iPhone of 1 lakh for 60,000. They won't even check, guys. Only if it's in the definition of property. Guys, the benefit should be up to how much? 50,000. Only when you're buying an immovable property. What are you buying? Example, you're buying an apartment, 1 crore apartment for 60 lakh. How much? Is it IB? Yes. Guys, how much inadequate? Is that your benefit? Yes. But they say your 50,000 is very less, so they'll take A and B two numbers. One is 50,000, one is what? And the next number is 10% of your sale consideration. So what is your sale consideration? 60 lakh. 10% of that is how much? 6 lakh. Basically, what they are trying to tell you is then other things you can bargain up to 50,000. But in case of immovable property, they allow us to bargain more because immovable property obviously is more expensive. So 10% of what? Sale consideration. So you can bargain up to 6 lakh in this example. Changing the number, 70 lakh. 7, 80 lakh. So the higher you pay, the more the bargaining capacity you have. Are we okay with this, guys? Yes. And guys, what if there are two stamp duty values? Let's say this is 1 crore and there's one more stamp duty value of 90 lakhs. Then which one would you want to take? 90 lakh. But the government says no problem. I'll give you 90 lakh. How are the two stamp duty values? Over a period of time, stamp duty values change. Like your petrol prices, like CA Academy prices, guys. Prices change. So same way your prices change. Earlier it was 90. Now it has become 1. Which one do you want to take? 90. It's allowed to take 90, but provided, guys, some amount of money you have paid by modes other than CBC. Example, guys, when I was buying this flat on 90 lakh date, I paid some token of 1 lakh. How much? Is that okay? Then I can take 90 lakh. I paid no token. Then you can't. Then you have to take which amount? 1 crore. Are we okay with this, guys? Yes. So, guys, everyone, gift tax is done. Very simple. Important thing is gift tax. You should know the relative definition. Are you okay with that? You should know the limit of 50,000. You know that gift system from whose perspective? Receiver. And section you should know 56 to anything else is noise, guys. You don't need anything else. And for these are free gifts. And IB you should know. What is IB? Example, shares of 5 lakh I bought for 7 lakh. No benefit. Because you're paying more. See, paying more is not a problem. When you pay less on paper, that means you're paying black money. So if shares of 5 lakh, you're buying for 2 lakh. What is the benefit? 3 lakh, they'll tax. Yes, everyone okay with this? All right. Full. Full. Government. If it's a cash gift of 52,000, how much will they tax? Full. They're not interested in the small money. They full money they want. Yes, everyone. All right. So that is another concept that we saw. Next is basically a very different concept. In the exam, they say that Reliance Industries give you a dividend of 1 lakh. Is it taxable? Yes. Where will you tax it? IFOS. Facebook abroad has given you an income of 1 lakh. ROR. Are you taxable? Yes. So dividend is generally taxed because it's dividend. Now sometimes no companies don't call it dividend. This is a company, guys, and let's say it's a profit of 20 lakhs. How much is the profit, guys? 20 lakh. Who has the money right now? Company. Have they paid tax on it? Yes. All taxes left after that in their reserves, in their P&L account, guys, lying nicely is 20 lakh and staring at the shareholders. The shareholder says, listen, your company, give it now money to me. The company says, if I give it, I have to call it what? Dividend, and you will be taxed again. So let's try and give the money out without calling it what? Dividend. So what the company does is, instead of calling it dividend, they call it assets given. What given? Example, they distribute gold coin on Diwali. The government says, we know what you're doing. This is assets. This is deemed dividend. This is what, guys? You're not calling it dividend, but it's still the same thing. Guys. Everyone okay with this? Yes. Next, guys, if they give out any bonds for free, bonds for, so they're giving out bonds, no, not money, but against the bonds, they will pay what? Money. Right now, they're giving out what? B for what? Bonds. But guys, bonds, against the bonds, they'll have to pay the money later on. Everyone. See, bond is like a paper where you get money later on. So if they give bonds or preference shares or which shares, preference shares, then that is also which dividend, guys? Deemed dividend. Everyone. A for asset, B for bonds, debentures, preference shares, not equity shares. Because against equity shares, they don't necessarily have to pay you money. Next, what if they close the company only to save tax and they declare money assets on closure of the company? Guys, on what? Closure, liquidation. Then still it is what, guys? The government has a very simple logic. The money is with whom? Company. Let it remain with it. If you are taking it out, only take it out by calling it what? Dividend. Any other way, we'll call it dividend. In fact, I'll give you a pro tip, guys. If you don't want to remember all of this, just remember hands of the company, no problem. Hands of the shareholders, dividend. It has to be called. No, but sir, I'm not calling it dividend. Then it's deemed dividend. There are no third option. Everyone okay with this, guys? Yes. So there is no third option. Group 1, Group 2, there are two options. You can't give Group 3 and C enter. Same way here, it's dividend or deemed dividend. There's no third option. If you want to remove money from where? Company, and give it to whom? Shareholders. Next, guys, D. Again, guys, very simple. They decrease the share capital. On paper, if your share is worth 100 rupees, they make it less and they give you money indirectly. Again, that is also what, guys? Deemed dividend. So all this is not important in the exam. Important the exam is the next one, guys. Everyone watch this, the next one. Guys, how much money did the company have? Who wanted it? Shareholder. Guys, he takes a loan. What does he take? The government says this is also deemed dividend, but it has some special characteristics, very important from an exam perspective. They say, shareholder, what did you take? Loan. If you want a loan, go to a bank. There is HDFC Bank here. Across the street, ICICI Bank. Who told you to go to a company to take money? If you go to a company to take money, this is also deemed dividend under which section? 222E is exceptional. Why exceptional? Because it does not apply to all companies, only closely held companies. Which companies? So if this is a closely held company, it will apply. If it's a public company, it will not. So applies to whom? Closely held company means private companies. It will apply only if the shareholder is a BIH. So if a shareholder has 2% share, take the loan, no problem. But 10% or more share, then deemed dividend. Please repeat this. What is E for? Exception. Which company? When it's gone to BIH. Alright. Next, guys. Only, guys, the government wants to tax you on deemed dividend only up to how many lakh? 20. That is the profit. What if the profit is 40? Then up to 40. What if the profit is 50? Up to 50. Example, guys, profit is 20, but you got a loan of 22 lakh. Then deemed dividend will be there, but only up to 20. What if the profit is 10? 10. 5. What if the company is a loss making company? Then there's no concept of deemed dividend. Deemed dividend is basically only based on profits. Repeat, only based on, if the company doesn't have profits, the government doesn't want any deemed dividend tax. Are we okay with this, guys? Yes. So this is 222. There are 5 cases. For May students, there's one more case, 222F. You can look at your books and revise that. Yes. All right. So this is 222E. Now, I'll just tell you how this comes in the exam. Typically, guys, this loan thing comes very often in the exam. So there will be a random sentence that Mrs. B has taken a loan from a company, private limited company. Now, the moment you see, loan is never taxed. I'll give you an example. I want to buy a house in Jayanagar for 2 crore rupees. I go to ICICI Bank, take a loan of 2 crore rupees. Is that loan taxable? No, because that's a loan. I have to give it back. It's not my income. So loan is never taxed. But the loan is coming from which company? Private company. Then you have to question. Then it is deemed dividend. Only if there is profit. Only if there is profit. Yes.
Will be taxed if we it will be deemed dividend if we give bonds for 3 years.
Yes.
But what if we give it for 99%?
No problem. 99, 100 rupees bond, right? 99% discount. You got 1 rupee, but 99 you'll give no later on. When these bonds are ready, what is written on the bonds? How much value? 100. You're giving a 99% discount, but guys, their value is 100. When you pay back on this bonds, you'll pay 100 only.
Company is paying.
Company is only paying. So money is going out from the company.
Yeah, but for the 99 there is no dividend.
Ultimately, answer well, two simple questions. Who has the bond?
Company has the bond.
No, now who has the bond? Shareholder. Will they get the money on this bonds? Yes. Whenever they get money, money will come out. So these bonds also they will be deemed dividend.
So the 99.
Yes. See, I'll tell you. See, forget 99 or 100 or 2 rupees or 5 rupees. Forget the number. Is money going out? From whom? Company to shareholder. If it's to bondholders, no problem. But you give it to shareholders. Free bonds. Yes. Let's imagine all this entire classroom are all bondholders. What are you? I am Reliance. I am issuing you bonds. No deemed dividend concept only. But this girl here, this guy here, they are shareholders. I am issuing free bonds to them. Or 1 rupee bond, 2 rupee bond. Later I'll pay them money. So in that case, that is deemed dividend. Yes. This is all ways of removing money from the company. Yes. And in reality, guys, who wants to pay double tax? Dividend is double tax. Company has paid already what? Tax. I'm getting the money, I'll pay again tax. So people find it so bad that that's why this concept has come out to remove money without calling it dividend. Yes. And guys, CA inter students, I'm telling you what is there in your exam in a nutshell. In a nutshell, the money is with the company. Who is getting the money? Shareholder. Whether you call it asset, whether you call it bond, whether you call it closure of the company, whether you call it loan, is it with the shareholder now? That is deemed dividend only up to profit. Exam question, literal exam question. Mrs. B holds 25% shareholding in a company. She has taken a loan of 5 lakh rupees from the company. The company is a private company. Which section? 222A. But the company has never made profit. Zero. Deemed dividend, but zero. The company has made profit of 1 lakh. The company has profit of 7 lakh. Then 5 lakh. Then whatever loan you're taking. Are we okay with this, guys? Yes. So basically, it is deemed dividend only up to profit, never above profit. Are we okay? So the government has the eyes on that 20 lakh or the profit. Everyone okay? This is deemed dividend concept in a nutshell. Now we move ahead to the last point in IFOS. Profit of the company, of the entire company. Yes, company's profits. Of course, shareholder share of profit only.
So what is the limit? Shareholder share of profit is
Shareholder share of profit.
not the entire.
But you don't give it to one shareholder, you give it to all shareholders. So it's basically the entire profit. Yes. See, dividend and dividend all concept is not for one share. It's never, Reliance will never give that only I'll give shareholders in Maharashtra, I'll give dividend. No. Once you declare dividend, it goes to everyone. Same way these concepts are applied to everyone.
The loan is taken by only one.
Then his share of profit. Yes, absolutely right. His share of profit only. You have to calculate that. Yes. Alright. Guys, now we come to the last part, which is general part. In that, there are some small things. I'll tell you. I would remember if there is income, there will be tax. Means government has to tax you. Casual income. Where will it go? IFOS. Dividend income. Interest income. Interest on FD. IFOS. Interest on saving. Interest, any type of interest, guys, put it here. Next. Guys, you won some random contest. I gave an example of McDonald's in my class. Guys, McDonald's, you let's say have a veg burger and it's non-veg by mistake. And they compensate you by paying you 2 lakhs. Is that also income? Where is it? IFOS. In capital gain, we saw yesterday forfeiture. My neighbor paid me 5 lakh rupees and I didn't sell him the house. Is that money cancelled? That amount will also go where, guys? So basically, IFOS is like the dustbin where nothing else goes, you put it in IFOS. Because the government has how many heads? 5. The first one has to be what? Salary. The second one has to be from your house. The third one has to be from your business. Fourth one has to be from your asset. So fifth one can be anything. Tomorrow, guys, in the dark, you go down at 8:30 and you find a bag, you open it full cash. You go to the bank, deposit it on Monday, guys. That is also IFOS. Any income, if there is income, There is tax, and they have to put it in one of the heads, so they put it in IFOS. That's called the residual section. What is it called, guys? Residual. But there are some peculiar incomes also which only go to IFOS, like casual income, dividend income. Guys, dividend income of a share trader. PG, it should go to PGBP, but they made a rule that dividend will always go to IFOS. Even if you're a share trader, your dividend will go where? Rakesh Junjunwala, he's no more, but his wife is there. Her dividend will also go where, guys? IFOS. Are we okay with this? Yes. Alright. Now, net amount, gross amount, I'll teach you when I do TDS, not right now. What else I want to teach you in IFOS? Yes. Keyman insurance. Guys, what is Keyman insurance? Reliance can take a Keyman insurance on Mukesh Ambani and recently on Anand Ambani. Yes, he's also important for Reliance now. Yes, so if something happens to you, he goes in all these wild elephants and also one elephant stamps him. Something happens. Then don't imagine all that, guys. But then what happens? The company gets the money. The company gets. Is it life insurance? Yes, but it's a twist that this life insurance is always taxable. It's always. That's why I have a shortcut called KT. What is the amount called KT? Now let's say Reliance takes the insurance and Anand money, and something happens to him, and the company gets money, guys. It is taxable under PGBP. But so life insurance, yes, it is taxable. Next, if by chance you as an employee get the money for some reason, then it is also taxable under salaries. And if your family gets the money, guys, it is also taxable under IFO. How family will get all that, don't get into that. In the exam, if you spot, because see, this is fast track. I want to see from an exam perspective. In the exam, you'll see the word Keyman insurance. Is it a life insurance? In your mind, KT. Keyman insurance is taxable. Then see who's getting it. If the employer is getting it, company is getting it, PGBP. If you are getting it, salary. If your family is getting it, IFO. Just simply go and park it there. Are we okay? Now we can discuss what is Keyman, how is it, what is the premium calculate. We can do all, but we don't have the time right now to do that. Yes, we are exam centric today. But if you want to know anything detailed, we can always discuss in the break, post the class, etc. All right. Anything else? KT we discussed. Non-business contract we discussed. Yes. Guys, remember in capital gain, I did not want to sell my house, but the government bought my house compulsory acquisition. Remember, they paid me 90 lakh. How much? But I wanted 1 crore. So I went to the court. They gave me additional how many crore? How many lakh? 10 lakh. So 90 plus 10. How much did I get? That is in capital gain. But guys, because they delayed the money for 3 years, they delayed. How much? So 10 lakh, they paid me 30 lakh interest. How much? Is it taxable? Yes. It's interest, so will go to, but it's 3 years interest. So it should go to 3 years. The government says, sorry, that train has left the station. That train has, you can't go back and open 3 years returns. So the 3 years interest will be taxed in this year and it will be taxed with the standard deduction of 50%. How much? Standard deduction of 50%. Are we okay? Now in real life also this happens, guys. When Bangalore airport was made, that land never belonged to the government. It belonged to people. So the government went to people like all of you all that, listen, we want to buy that land. And did the government pay? Yes. Was there a delay? Maybe. So you will get what? Interest. That goes under which head? And you get standard deduction of 50%. Are we okay? Without any thought, standard deduction of 50%. Alright. That covers more or less your incomes. There is one tax called angel tax. That angel now is disappeared from our portion, thankfully. Jan also not there, May also not there. I'll tell you a little bit about it. Earlier startups used to issue shares. Startup used to, and there was some tax on that share issuance. Thankfully, that's out. Not from a portion, but from overall only. Thankfully, the finance minister has said, listen, that's cancelled. We don't want that tax. Yes, so that's out. Anytime you see a sum in the paper and all, ignore that sum. Alright, anything else in IFOS? Yes. Now, guys, IFOS also, there are deductions. What are they? One deduction, you know, standard deduction of how much? On interest on compulsory acquisition. Interest of which acquisition is compulsory. Next, guys, can you get pension? Yes, sorry, we forgot to discuss. Pension is taxable under salaries, guys. Pension is taxable under, you do a job, salary. After you have no job, you retire, you get what? Pension. That also goes where? Salary. That means you get a standard deduction of 50,000. But cut to you not being there in like in the world. Then who gets the pension, guys? Your better half, family pension. That family pension is taxable under IFOS. So pension has two ways. If it's given to you, salaries. If it's given to your family, are we okay? We have a shortcut called PT. Pension is taxable. Now, if it goes into your family's hands, the government says, listen, I'm sorry, family, I have to tax you. Everyone. But it's not right to tax pension. So the government gives you two amounts. Whichever is lower, you can take a deduction. One is 1/3 of the amount. What is one? Or 15,000, whichever is lower. Whichever is. So lower, higher, I can't remember. If you can't remember lower, higher, guys, whenever it's income, whichever is higher. Whenever it's deduction, whichever is lower. Are we okay with this, guys? Yes. All right. So everyone recapping pension. Family pension, guys, where will go? IFOS, and when you take it, you'll get deduction of A or B, whichever is lower. And one more, guys. Yes. Honestly, one of my favorite incomes to earn is dividend income. Of course, I know it's taxable, but why is it favorite? You don't do any hard work for it. Tell me, how do you earn dividend? Just sit just like this, probably on a sofa watching TV, and you read the news. Company has declared what? Dividend. Enjoy, guys. Life is good. You're getting dividend, which is great. Now, the company also knows, everyone knows you don't do any expenditure for earning dividend. So, the earning dividend income, there is no deduction except what? The shares you bought on loan, the shares you bought on, and on that loan you'll pay interest. That is allowed as a deduction, maximum 20%. Example, my dividend income is 10,000. What is my dividend income? The government says I'll give you interest deduction, but maximum of 2,000. Maximum how much, guys? 2,000. Are we okay with this? So three deductions you have to keep in mind. One is that 50% standard deduction that has come in the exam before. One is dividend, maximum how much? 20. That has not come in the exam before, so it's important. And family pension is not important. 1/3 or 15,000, whichever is low. Now, guys, while IFOS is great, the government says, listen, there are some expenses I can't allow. You go for a business trip, you go for income trips, I can allow you, but you're going to go out with your friends and you spend 20,000 rupees, I can't give you a reduction. So which expenses, guys? Personal. Now I'm come to disallowances, guys. Which part of IFOs have come to disallowance? The shortcut is this: poor wins cash income, guys. Poor wins cash income. Very simple, guys. No hurry here. This is wins, everyone. Poor wins cash income. Let's recap this. The government says, listen, these are expenditures. What are these? That means you spend money, everyone. You spend, but for some reason, I'm sorry, I can't give you one, guys, deduction. Are we okay? Everyone. Poor wins cash income. Are you spending money? But the government says, sorry, I can't give you. Example, guys, you spend money on personal expense. Or which expense? Government says, sorry, personal expense, there is no chance I'll give you deduction. You bought a car, used it for IFOS purpose. Take deduction. But you bought a car, used for personal purpose. Don't take. Sir, how will you know? Exam will tell you. Real life difficult. Exam very simple because they tell you all this. Yes, everyone. Next. Guys, from winnings. Winnings means casual income. From what? Casual income. The government says, sorry, I can't give you any deduction. We've discussed this many times before. I'll discuss one more time with you. Guys, you won a lottery of 10 lakh rupees. How much? You are very happy because that is called which income? Casual. But to win the lottery of 10 lakh, you bought a lottery worth 50,000. No deduction. And you know the slogan, guys. If you get lucky, repeat, if you get lucky, the government wants to get lucky on the full amount. Everyone full amount. So your lottery was for how much? 10 lakh. How much deduction do you want? 50. So you want to be taxed on 9 lakh 50. Government says, sorry. How much you got lucky on? 10. We also want to get lucky on 10. Goa casino. My personal experience, 10,000 rupees I lost. Who's not with me? Government. They say, what? Who are you? I don't know you. Same night, if I had won 1 lakh rupees, they would be with me and they would tax me on 1 lakh or 1 lakh minus 10. 1 lakh, full 1 lakh. Are we okay? So from winnings, there is no deduction you can take. Next, they say, listen, you are spending money, no? Don't spend it in cash. Don't spend it. Paytm karo, GPay karo, kuch bhi karo, but cash mat karo. Because if you do cash more than 10,000, more than on a single day to a single person, that will be fully disallowed. Example, guys, someone came to your office to do some work and you paid him 12,000 cash for 1 day's work. Easily circumventable. One day you pay him 9,000, next day you pay him 3,000. No problem. But in the exam, if they say 12,000 paid, fully disallowed. So poor wins cash income. Cash not allowed more than 10,000. But a lot of people feel that extra will not be allowed. No, fully disallowed. Everyone, fully disallowed. Winnings we know, personal expense we know. Next, income tax. Very, very interesting, very common. We've done this in PGBP, guys. So I'm not going to spend too much time, but quickly recapping. In IFOS, you paid income tax. GST? Yes. Municipal tax? Yes. But income tax? Not allowed. You paid interest on income tax? Not allowed. Interest you paid? Not allowed. You got refund of income tax? Not an income. But you got interest on the refund? Yes, that will come. Are we okay? So I'm not discussing that. We've discussed it in PGBP. Next, guys, we've also discussed this. You are paying someone outside India. In your IFOS work, guys, you're paying someone on which the government told you, listen, you're going to pay outside India. Please deduct. You said, I'm not going to deduct. The government said, I'm not going to give you deduction. You don't do that, they don't do that. Are we okay with that, guys? You said, no, government, I'll deduct TDS. Then I'll also give you deduction. Yes. Technically, you should know how much deduction you get. I'm paying 1 lakh abroad. How much? Government told me to deduct 20%. So 1 lakh minus 20%. 80 I'm paying to whom? Abroad. 20 I'm paying to the. I'll get deduction of 1 lakh. 1 minute. Repeat, no problem. Not from an exam perspective, but real life perspective. Let's say someone developed my app abroad. I'm paying him 1 lakh rupees. How much? Government said deduct 30,000. So I'll pay 30 to whom? That's that abroad guy's tax I'm paying, and him I'm paying 70. For I am paying how much? So I'll get deduction of 1 lakh. Are we okay with this, guys? And if I don't deduct that full 1 lakh, I'll pay to whatever, but I'll not get deduction. Are we okay with this? And if you're paying to a resident in India, whom are you paying to? Then please be careful and deduct TDS. If you don't deduct, I'll not give you deduction, but you're in India only, so I'll not give you 30% deduction. Example, same number. Let's take a bigger number. You are paying someone in India 10 lakh rupees. How much? The government says, listen, please deduct TDS. Please deduct. You said, government, I'm not going to deduct TDS. You paid just like that. And you're in Jayanagar 3rd block. He's in Jayanagar 5th block. So you told government chase him. No, get him. No, he's in 5th block only. The government said, listen, I'll chase him. But I told you to deduct what? If you don't deduct 30%, I'll not allowed. So how much did you pay? 10 lakh. Out of 10 lakh, 7 lakh deduction you can take. How much you can't take? 3 lakh. But government is okay, guys. They are saying that I will ultimately give you the deduction when I get the tax. The guy you paid was in which block of Jayanagar? 5th block. Tomorrow, guys, he earned how many lakhs from you? 10. Tomorrow, will he pay the tax to the government? Yes. When he pays the tax, you'll get the deduction. The government wants what, guys? Tax. Whether you deduct it unpaid or that guy earns it and pays, guys, the government wants tax. Can we repeat this, guys? You are paying someone 6 lakh rupees. How much? Someone in Mumbai, from Bangalore to Mumbai, 6 lakh rupees. Let's say you're paying your CA. The government said deduct TDS. You forgot to deduct. The government is upset, but only how much percent upset? So out of 6 lakh, 70%, that is 4 lakh 20 you can take deduction. But 1 lakh 80? No. So when will I get this deduction, sir? Whenever the government gets the tax. That Mumbai guy, whenever he files his return, pays the tax, you'll get the deduction. Are we okay? Exam centric. I'll tell you exam question here. Very, very, very common. They will, and very easy to spot. You have paid someone without deducting TDS, and they'll write word like resident in India. But I've deducted 100%. Add back 30. That means I've deducted 100. 70 is okay. You'll add back 30. Same way outside India. But I've deducted 100. Add back 100. Yes. See, correction is very easy. Correction is like going in a wrong lane. If you've gone to a wrong lane, come out and go to the right lane. Simple. Yes. Everyone. All right. So let's say you were supposed to come to Yeshas Academy. You took this wrong lane. You went in the lane ahead. What will you do? Come out and come to the right lane. Same way. So if you minus 100, you have to add 100 back. Yes. All right. Nice. Surprisingly, so fast IFOS is done. We've been in class for 33 minutes only. Yes, and we finished IFOS discussion. It takes me almost about 3-4 hours to just teach IFOS as basic. And that's why, guys, fast track batch is great because we can focus that kind of time now on sums. Yes. Everyone. Okay. Any questions on IFOS? Understanding IFOS. Things you should have understood. Compulsory acquisition interest. Standard deduction of family pension. Yes. Yeah, you should have understood that. Just keep in mind you should have understood that. KT. Yes. Casual income. You get lucky on full amount. Yes. Then dividend, you get only how much percent deduction? 20%. Next, shareholders dividend. Okay, share traders dividend also will go under IFOS. Then if a company, you can take a loan from a bank, no problem. But if you take a loan from a private company, oh, by the way, I forgot to mention one thing in 222E. 222 exception. I was taking a loan from which company? Private company. And I am a beneficial interest holder. Is that all the conditions met? I'm taking a loan of 10 lakh. How much? The government says this is deemed dividend. If you have to take a loan, you have to go to this is a banking company only. This is a lending company. Then government said no problem. BPL, what is it? If it's a lending company, if it's a lending, then you can take a loan because you are going to a lending company only. P, if it's a public company, no problem. And if it's a business advance, guys, difference between business advance basically means you're taking some money for the purpose of the business only of the company. Are we okay? Guys, Mukesh Ambani removes 100 crores from Reliance to pay for Jio Spectrum. Is he getting the other son married? No. He's using it for what purpose? Business purpose. Are we okay? Are you getting the difference between business advance? Guys, you took from your family, guys, you took money and you bought a Mercedes car, personally. But you took money from the family and invested in the family business only. Then it's not a loan, it's a business advance. Are we getting the difference? Yes, okay. In these three cases, it's not deemed loan. BPL, business advance, public company, and lending company. Perfect. Now, we will go to all the exam questions and we'll see what are the IFOS incomes and expenses which come from there. Here we go. Yes, let's take the first sum also, and we'll see. Yes, yes, 60% plus 25 plus. Remember that 115 BB. That any unexplained income, investment, asset, expense, anything unexplained, 60% plus 25 plus 4. Yes. All right, everyone looking at this, please tell me where will this income go? Yes, please read this line. Dividend how much? 13 lakh. Guys, earlier there was dividend distribution tax. All this is now gone, guys. This is an older paper. So now where will you take this dividend? IFOS. Interest on saving account. Lottery winning. But how much will you take? Not the net amount. Always the gross, guys. And if you're not confused about, if you're confused with net and gross, take the bigger number. Take the, so if this is 21,000, guys, everyone, I'll teach you how to take the bigger number, 21,000. We've not done TDS chapter here in fast track, but guys, 30% TDS on casual income. So this is 70. This is what? What is 100? And if you don't understand this, I'll go very basic, guys. If you get a casual income of 100 rupees, how much will the government give you? 70. Everyone. If you have casual income of 100, how much will you get? So you've got 21. How much is the full amount? So whichever way you want to go is before this basics, I don't know facts. This is the only way I can teach you. Yes, everyone okay. All right. So this is typically how IFOS is asked. They'll give you some income, then you'll have to figure IFOS. I'll just check if there's something more in IFOS here. Okay. This chapter only had this sum only had this. Yeah, we'll go to deduction. TTA, TTB, we'll in deduction chapter. We can take deductions tomorrow, guys. Yes. Yes. Guys, this is that angel which disappeared. Can you read? MLX Private Limited was incorporated, having a paid up capital. To order increased capital, the company issued further shares. Earlier, there used to be a tax. Now it's removed. Every time they remove it, guys, I'm happy in two ways. First, one, tax has gone out of India. Second, students have to study something less. So this is something that we had to study. Now we don't have to study. Are we okay with this, guys? Yes. So then, first sum only. We'll go to the first sum. Everyone. Consultation fees, PGBP. Salary. Rental income from house property. Dividend from foreign companies. IFOS. Are we okay with this? Yes. Receive 40,000 in interest on saving bank account. IFOS. Of course, there's a deduction TTA, but I'm not speaking about deduction because we haven't done the chapter yet here. Please read quickly this Julie one, the first one. Guys, what has Julie taken? A loan. If you have to take a loan, you should go to a bank. But you've gone to a private company, guys, and taken a loan. Is she a beneficial interest holder? What is the loan amount? 222E. Will she be taxed? Yes. How much? 5 lakh. No? Only up to the profit, which is 2 lakh. Are we okay with this, guys? Yes. Next. Again, I'm not going to discuss in detail, but guys, received interest on enhanced compensation. How much is the interest? Is it for different years? 16, 17, 17, 18, 18, 19. As you already know this, but we can't go back. The train has left the station. So we'll tax it in the year you receive it. And how much percent standard deduction? 50. So 5 lakh minus 2.5 lakh. That is how much, guys? 2.5. But what about 1 lakh she paid for the advocate, guys? After standard deduction, we don't know you, you don't know us. Yes, standard deduction means the end. Yes, everyone. Okay. How many marks, guys? 4 marks. It has come again. IFOS frequently comes for 4 marks sometimes like this. Okay, I'm just keeping it if there's any doubt. Yes. We'll try and write also 1, 2 new questions we'll write. These are some that I've written in class already. Yes. Nothing in IFOS here. Nothing in IFOS in the entire paper. Yes, guys. Interest on PPF. Guys, interest on PPF is exempt. This we will discuss in salaries, how PF works. Interest on saving bank account. Interest on national savings certificate in the third year. Confused? Good time to discuss what is national savings certificate. Some of you guys know it, some you don't know. I'll teach, guys. Everyone, national saving certificate. You want to make a NSC, where will you go? Post office. You go to the post office, say I want to make a national savings certificate. They'll say how much amount? You say 70,000. How much? So you fill up a form, give them how much? 70,000, then give you a certificate, national savings certificate. Guys, it's locked in for 5 years. How many years? Every year you earn what? Interest. But it's not paid to you. It is invested back. So next year's interest 5,000. Invested back. Next year's interest 6,000. So actually you not earn the interest. You earn the interest finally when, guys? After how many years? 5 years. Are we okay with this? So all this money is basically reinvested. Everyone okay? I'm just showing you here, guys. See the explanation here. This is the July 21 paper. Have a look at what they've explained here. For PPF, we'll discuss ahead. This is public planning. Yes. Less items credit but not taxable under head of income. So this is not under PGBP. How much have they removed here? 60,000. How much have they removed from your 20 and how much have they removed from your 21? Basically, they removed all these numbers from PGBP because this does not belong to PGBP. Where will this 20,000 go? Have you seen it here, guys? Where will this 25,000 also go? IFOS, but it's reinvested. It is. So you'll also get a deduction under ATC. Yes, I can repeat, everyone. You made an NSC of 70,000. How much? You get a deduction under ATC. We haven't discussed deduction, but you should be little aware, guys. Yes. So you got a deduction of 70,000. Next year, interest 5,000. Is that your income? Yes. It will go into IFOS. It's earned, but you don't receive it. It is reinvested. So you'll earn it also, and you'll get a deduction under which section? ATC. Now let's see third year. You tell me, guys. Third year interest 6,500. IFOS 6,500, and you will get a deduction under ATC. So basically, what they do is they add and they minus it. Net impact? Zero, because they have not got the money. Everyone okay with this? Yes. All right. So this is what it is from IFOS here.
That invested, wherever it is invested for that, it is.
No, you get the final money later. Final amount you get the later. So example, 5 years is locked in. So 70,000, it will keep getting reinvested. After 5 years, let's say you get 95,000 back. So that 70,000 and 95,000 you get it back.
For that, it is.
No, it's always taxed. Here also it's taxed. I'm giving you a sense that it's added and minus. Okay, here, read this. What is this? Interest on national savings certificate. Is it taxable? Yes, I've taken it where? I have. I'm saying you get a deduction also, so nil impact is zero. Net, okay, let me give you another example. Your salary is 1.5. How much is the salary? Is it taxable? Yes. Where will it go? You'll get a salary reduction of 50,000. So finally, 1 lakh. You take that 1 lakh, you put it in PPF. Or you put it in PF. You'll get a deduction under ATC of how many lakh? So that means your salary is not taxed. It is taxed, but they gave you a deduction. Are we getting the point, guys? Yes. So this is interest is taxable, but they give you a deduction under ATC. Everyone okay? Okay. And ultimately, guys, after 5 years, it's 70,000 will become 95,000 and will get that money back. Yes, everyone. I'm happy to discuss more if you want. NSC is important, has come before. 1 lakh? Oh, you put so much money. Then ATC, then 1 lakh. Then 1,60,000 will be a good question. 1,60,000 will be added to IFOS, but deduction will be only 1,50,000. Yes. But I've good. But no one puts so much money. But yes, you can technically put. There's no restriction. Yeah, let's say there's nothing else. So here you'll get 1 lakh. Ignoring nothing else is there. If this is the only thing, you at least get 1,50,000. Yes. Good. All right. This is July paper. Yes, here, guys. By gross profit, PGBP. Profit on sale of scientific research asset, PGBP. Winning from lottery. Guys, you will take 31,500 or full amount? Full amount. So 31, everyone can do that. 31,500 divided by 70 into 100. How much? 45,000. So in your IFOS, how much will do? Oh, by the way, how much will I remove from PGBP?
31.
Superb, guys. Logic. How much did you by mistake add to PGBP? So you'll from PGBP you'll minus only 31,500, but there you'll take how much? Are we getting that point, guys? It's only logic. This is not tax. This is only logic. Mistake was 31,500, so we corrected that mistake. All right. There's nothing else on IFOS, guys. I've kept the chapter name for a reason. It's not there. Yes. Yes. Above cost. If you remember microscope, so if you sell it above cost, so this was, yes, this was capital gain, because if you, I can show you the sum here. This asset was purchased for 6 lakh and you sold it for 8 lakh. So 6 lakh will go in PGBP, 2 lakh will go in capital gain. All right. Now, guys, again IFOS. Let's see what is there in IFOS here. Commissions of charges, interest. Yes, guys, this interest. We've done this, but you tell me, guys. She's a partner in Ramji Textile and she's earning interest. Why interest? No, but partner's interest, PGBP, partner salary, PGBP. All right. Was it? Yeah, of course. No, I'm just saying where will it be taxed? Yeah. We discussed it. Actually, the partnership firm gets less deduction, so they indirectly they pay the tax. Yes. All right. There's nothing here in IFOS. Nothing. Yes, guys. Here. Guys, receipts and payments. I'm going to the receipt side. You tell me which of these receipts will go under IFOS. Dividend from shares. But net or gross?
Gross.
Always gross. 1 minute. Always. If you get confused, guys, always take the which number? Bigger number. Now, sir, you've not taught us net or gross in this. Guys, we'll go to TDS. In that, for people who know TDS, I'll tell you guys. In TDS, on dividend, in TDS on, they say that if you're going to get 100 rupees, we will deduct 10%. 1 minute. If you're going to get dividend of how much? So they'll deduct how much? So you'll get only 90. This is 90. If you want, let's do the gross amount. Everyone, 18,900 divided by 90 into 100. 21,000. Only if the dividend is more than 5,000, this TDS applies. Yes, we'll do this in TDS section tomorrow. We'll do deduction and TDS. Yes, yeah, you're saying something. Oh, you're saying the number only. Okay. All right. Here, fees received, gifts. Yes, guys. Gifts received from relatives or patients. He's a doctor. It's a great time to discuss this, guys. We've not discussed it. We discussed gifts, right? Gifts generally go under. 1 minute. They generally go under. But if it's gifts in relation to business, PGBP. If it's gifts in relation to employment, salary. Yes, salary time we'll discuss that. But PGBP gifts. This is a which gift, guys? PGBP. Will it be taxed? Any gift, any amount. Any gift. We discussed PGBP, but we missed this. Yes. Everyone recapping. Gifts in 3 categories. First, IFOS. Only more than 50,000 and all that. All relatives, etc. PGBP gives any gift, any amount. What if it's 32,000? That also. And in salaries, we'll see in salaries today. Yes. Very interesting, guys. Honorarium for painting services in Jai Hind Art School. Guys, you're a doctor. On the side, can you have other incomes also? Where will this go? IFOS. How much? Net or gross? Always gross. That question is invalid, guys. Always. How do you net or gross? We'll see in TDS chapter. What is the TDS rate? Yes. Next. Income tax refund. Super. Only interest of 1,500 will go where, guys? IFOS. Are we okay with this, guys? Yes. Please read the first one. Is there interest on enhanced compensation? You will tax it with how much deduction? 50%. Does it matter which year it belongs to? No, you can't go back. Next. Very interesting, guys. Narayan transferred how many shares of BS Limited to AB? So this is Narayan. He is a transferor. He is given shares to whom? AB. Guys, shares are for how much? No, they are worth 3 lakh. How much are they worth? AB is only paying how much for it? 2 lakh, guys. IB. I told you, if you pay less, there's a problem. If you pay more, no problem. So is it inadequate? And what is the benefit, guys? 1 lakh. Benefit up to how much thousand is okay? 50. Is it higher? So entire 1 lakh will be taxed in the hands of AB. Yes. If you want to understand the logic, I'll give you the logic, guys. The government says in case of property, in case of money, immovable property, etc., why are you paying less than the stamp duty value fair market? See, vegetables, they ask for 100 rupees, you pay 90, it's okay. iPhone 1 lakh, you pay 90,000, it's okay. A t-shirt on Amazon, 800 rupees, you pay 700, it's okay. But when it's gold, when it's all these precious property, why are you paying less and how are you paying less? That means you're not paying less. You're paying black money. What are you paying? Up to 50,000, they're okay to pay less, but above that, the entire amount will be taxed. Yes, have a look at this. Yes.
So the same logic applies in land and building.
Same. Only thing is, land and building, they don't just give you 50,000 benefit, 50,000 or 10% of sale consideration.
So the person who gave the money,
He'll be taxed in PGBP for land and building. We discussed that. Right? So AB only paid, no? He paid 2 lakh for shares of 3 lakh. So that 1 lakh will be taxed under IFOS. I'm happy to stay here, guys. No problem. Let's discuss this in detail. Everyone, on guys, you got some shoes of 10,000 rupees for 4,000. Is the government interested? They say, I'm not interested in all these things. Only if the definition of property. Gold of 10 lakh you bought for 3 lakh, then talk to me. A property of 1 crore you bought for 70 lakh, then talk to me. Only if it's in the definition of what, guys? Property. And they're okay, you're getting a benefit of 50. Then, sir, why are they not okay here? 1 lakh. If this was 48,000, the government would not bother you only. But because it is more than 50,000, they're taxing on that 1 lakh. That is from the transferor's perspective. See, okay. I bought a house for 20 lakh many years back. I'm selling the house to you for 1 crore. Forget from my perspective. From your perspective, doesn't matter to you how much I bought the house for. Think about it. I bought gold. Let's say my mom bought gold for 30,000 rupees. I'm selling it to you for 80,000 today. I'm giving you a discounted price 80,000. Will it matter to you? It matter to me in my capital gain, but will it matter to you how much I bought for? No. So this amount, we'll talk about it, but we'll talk about from Narayan's perspective. Right now, I'm looking for AB's perspective. Yes, today's market value is this. When the fair market value of the consideration on the same date is 3 lakh. Today's value is 3 lakh. You're getting it for 2 lakh. Yes. Now that is and we've done capital gain, guys. So let's talk to Narayan, guys. Is Narayan transferring? Yes. How much is he? PSC, everyone. PSC. Guys, period of holding is long term. How do I know? Cost is indexed. May people ignore it. Close your ears. Yes. Index cost doesn't matter to you all. Everyone. So PSC, what is it? Long term. Yes. How do I know long term? Index cost. How much are you selling it for? How much are you selling it for? 2 lakh. But guys, remember buds. What is buds? Bus. In unlisted shares, they will take the fair market value. So how much is the fair market value, guys? 3 lakh. And what is your cost, guys? 2 lakh 75. So what is your short term or long term capital gain? 25,000. No problem. We'll do it again once. I think it's confusing for many people. First, tell me, guys, from AB's perspective, have you understood IFOS?
Yes.
Guys, because IB, have you understood that? Let's go to Narayan's perspective and very carefully do Narayan's transfer. PSC. What are these shares, guys? Are they unlisted shares? Yes. Is it long term?
Yes.
But how do you know it's long term? Because the cost has been indexed. So that is done. What is the cost? 2 lakh 70. So now only thing is selling price. How much are you selling it for? 2 lakh. But the government says, listen, for unlisted shares, whatever you're selling it, we'll compare with fair market value and we'll take whichever is. So here also they take how much, guys? 3 lakh. And 3 lakh minus 2 lakh 75. 25,000 is your long term capital gain. Everyone okay? Okay.
Sir, for AB cost of acquisition will be 2 lakh.
For AB now it's being taxed on 3. So it will be 3. When selling it will be 3. Absolutely right. Yes. Don't go too much into detail. This is what it is. Recap it once. See, from the receiver's perspective, which head of income?
IFOS.
From the giver's perspective, which head of income? Are we okay? And the problem only happened because they bought a 3 lakh asset for how many lakh, guys? 2 lakh. That's the only problem. Yes. I know it's difficult, but with a shortcut. For the receiver, use IB. For the receiver, use. And for the giver, guys, PSC or ATPSC is the capital. And last, guys, read the third one. Is it a trust? Are you getting money from a trust? So will it be taxed, guys? No. Interest on savings bank account.
IFOS.
Winning from lottery. Net of cost of lottery tickets 500. Sorry. This net we don't understand. We take gross 99,500 plus 500. How much? 1 lakh. Rent received, house property. Here we go. Rent from house property. Rent from furniture. IFOS. I'm unable to scroll here for some reason, but here. Guys, dividend. I can't even see anything, but I know dividend is always under where. Yes. And gross or net amount always gross. So we've done all the exam questions here where I have force implications till your May 24, September 24, we'll do the entire paper only at one go. Yes, yeah. Doubt? Yeah. Yeah. No, total dividend you take it, total dividend you take in IFOS, and then ask yourself, have you to buy those shares, have you taken a loan? Then minus the interest, but only limited to 20% of the dividend income. You can buy foreign shares also, Indian shares also, any shares. Private limited company, public limited, anything. Guys, although we understand dividend as public, did you know even private companies declare dividend? Yes, but not many. Because I'll tell you guys, me, my father are directors in a private company. Only two directors, me and my father. Guys, is there a company? It company has already paid tax. The company has already paid. The company now has 1 crore rupees. If we take a dividend, again we'll be taxed. So me and my father said, listen, let's not declare only a dividend. The company has 1 crore, let it be. But we want to buy a new car. We buy it in whose name? Companies. Only for education purpose. Yes, we want to do something, guys. We want to buy a new phone. Company's name. So a lot of people do this. Of course, is it right? No, of course not. Then people have to justify that this is for the company. But many private companies don't declare dividend because of this reason. That private company, so if the company has the money or you have the money, is the same thing. In your bank account, company's bank account is the same thing. So many people, guys, they go on foreign travel. And whose expenditure? Company expenditure. They buy their car and which expenditure? Company. Because it's stupid, no? They will not take out dividend. The moment they take out dividend, they'll have to pay double tax. And that's very wrong. So, of course, it is wrong, but they are doing it because the government has played it wrong. The government should ideally say if it's a private company, there should not be no dividend tax. But the government has said no, both will be taxed. So then people play around it. Yes. All right. All this you will understand better when you do articleship. I know he is doing work in a CA firm in Mysore, his father's firm. So if you now you will be able to see, or maybe from there you will be able to understand this better. And this is what happens when you read CA final also. You clear CA inter, that confidence and articleship, you do a lot of, you see a lot of things happening, you learn, and then when you come to CA final tax lectures, they go much smoother in your mind because you know in real life what happens. You've seen a client where dividend has happened, where deemed dividend has happened. You probably had a discussion with the principal about 222E. So when you come to a class, then those discussions are much better there at CA final level. Yes. Anyways, so we've done all the exam papers. Now we go to ICI material. How many of you all have ICI material with you all? Okay. There, that guy, anyone has ICI material? Okay. No, no one? Okay. You have? No, no one. Okay. We'll pick up ICI material now. I'll show it on the screen also. No problem. मेरे ना इधर यहाँ से बहुत फ्लास्क पड़ा है, ब्लू कलर का फ्लास्क, एक ब्राउन, वो रख देना ना बाहर कहीं, क्योंकि मैं भूल जाता हूँ फिर सुबह लाने को प्रॉब्लम होता है कॉफी. Guys, IFOS, can we open our ICI material? All right, now guys, let's try and do this. We'll try and do all the sums first at the back, and then we'll do the illustration as well. How many sums, guys, totally? Oh, only 4 sums. Okay. I'm reading. You tell me, guys, where will it be taxed? Everyone? Rental income, for house property after 3 years. Guys, if you don't recollect this, this is a builder, guys. This is who? Guys, who holds property as stock, guys? Only builders. After how many years? After 2 years. If you don't sell, remember in house property we did, after 2 years it will be taxable, either PGBP, generally this is house property. Salary received by a partner from a partnership firm, PGBP. Rental income or machinery. But if it's done as a business, PGBP. Guys, anything. If I'm an author on the side, IFOS. If I'm a full-time author, PG. So any income can be taken in both ways. Winning from lottery, this only and only in IFOS. Guys, this is very interesting. Winning of lottery by a person having the same as business activity. Sell. Guys, lottery guy also wins the lottery. Then also it's IFOS only, yes. Salary received by member of parliament, guys, we've not discussed this, but salaries generally goes where? But guys, when MPs, MLAs get salaries, it will go to IFOS. It will go where, guys? I'll teach you that in salaries, but right now, guys, this is IFOS. I'm just revising. So there are two salaries which don't go to salaries. Repeat, guys. There are two salaries which don't go to salary. P salary. PGB. No, P salary. PG. Partner salary goes to PGBP and MP's MLA salary goes to intention again. Sir, why have they done this? Very simple intention. They don't want to give 50,000 rupees standard deduction. For that 50,000, they've annoyed us 50 times. Yes, everyone, please tell me, salary should go where? Everyone, salary should ideally go where? But for not giving standard deduction to two people, they made them go to other heads. Yes, so partner salary, PGBP, and MP's MLA salary, IFOS. Receipts without consideration is gift. Where will it go? In case of retirement, interest on employees' contribution and provident fund is unrecognized. We'll see in salary chapter. Rental income in case a person engaged in the business of letting out properties. Anything which is done as a business will always go to. So this is pending for salary. First one, a builder has to sell his house property within 2 years. If he does not sell or rent it out, after 2 years it will be considered as deemed let out property, if you remember. House property. Yes. Alright. Next, guys, this is such a big sum but so simple, guys. I'm not even reading. You will read and you will tell me if you're okay with it, guys. Everyone, question number 3. For people who don't have ICI material, this is on the screen. The moment you know the sum, stop reading it only, guys. Very simple sum. How many years? 2-3 years. Will you go back? No, guys. Very simple. I'm not even reading, not even discussing. Everyone, please tick mark and write E. We wasted 2 minutes here. In life ahead, don't waste 2 minutes on this question. Yes, yeah, 50% standard deduction. Yes. Fourth also, guys. First only write E. Very, very simple. And let's do first question number 4. Is it taxable? Because how much amount? And it's not on marriage, it's on marriage, anniversary and all that. That's not allowed. So this is taxable. Next, diamond necklace worth 2 lakhs. Taxable? Why not? Sister, relative, so not taxable. What about sister's husband? Not taxable. Remember 232 very bad. Oh, I didn't discuss this. What about sister's daughter? Taxable. 1 minute, 1 minute, 1 minute. Guys, can you repeat the relatives for gift taxation? 232. 2, spouse. 3, brothers and sisters. My brother, my sister, my spouse's brother and sister, my parents. LA, LD. People above me, people below me. My sister's daughter. Oh, so this is confusing. Very simple. You only like your children. You only like. So anyone else's children giving you gift, guys, will be taxable. You only like your. But it's very simple. She can give it to my sister and my sister can give it to me. Yes, I forgot to mention it. Yes, you only like your children. In real life also it happens like that, guys. Yeah. Alright. Next, guys. Please read. Will it be taxable? Not taxable. Guys, are you getting on marriage occasion? But it's not your marriage, it's your daughter's marriage. So this will be taxable. If you're taking your daughter's gift, we'll tax you. This should go to whom? Daughter. Then it will not be taxed. Yes. Of course, in real life doesn't happen, but in the exam, yes, maybe. Again, guys, please mark E. Don't look at this sum ever again. Now I want to show you something that happens very often. This same sum, guys, came in the paper, and ICI material always had it. They put it in the paper also, so you'll also find it. When you do all ICI material sums illustrations, you'll see it that some of those questions have come in the exam. Very, very similar. Here, see this. Who transferred? B. What did he transfer? Shares to B company private limited. Shares today was valued 5 lakh. B company got it for 3 lakh. Is it IB? So they will be taxed on 2 lakh. Same thing we've done. In fact, the numbers are almost the same. And Mr. B for him is capital gain. PSC. Is it long term? Because index cost. Yes. What is the selling price? We don't know. What is the cost? 4 lakh 45. Now selling price ideally, how much is he selling it for? 3 lakh. What is it? Unlisted shares. So I'll take 5 lakh. 5 lakh minus 4 lakh 45. 55,000 is your long term capital gain. Are we okay? Same question in the exam but different numbers. Yes. Next one. Don't even answer, guys. Read it, and when you understand it, stop reading it. Where are you getting the money from? Trust. Is it taxable, guys? No. Trust is not taxable. Marriage is not taxable. Relative is not taxable. Yes, everyone. Well, guys, what about relatives for you is 232. What about your HUF relatives? Who is the relative of your HUF? All members. So for you, it's 232. For example, if I'm the HUF, just say, if I'm the HUF and one of the member gifted a thing, is it taxable? No, because that's also relative. Yes. For a company who was a relative, there's no relative only for company. For partnership firm, nothing. Yes. Only for individual and HUF, there is relatives. Yes. All right. Yes. So that is it. This is 4 questions here. Now, guys, we'll go to the illustrations and we'll see how the illustrations look like. Just skipping and going to the illustrations. Yes, illustration number 1, everyone, Rahul.
Gaming income is it
Which income?
gaming online gaming?
Online TDS is there, and if you win, that's casual income. IFOS, yes, that's also casual income. And but there is TDS on the net amount, 194 BA. We'll be doing it in TDS chapter.
Casual
Casual income only.
gaming.
Yes, online gaming. You are doing gaming full time on those gaming apps. I'll check. It's still I goes on IFOS only. I'll just check once. Guys, everyone, very simple. Which company is this? Is it a private company? Yes. And guys, what are they giving a loan of? 5 lakh, profit of 4 lakh. Is Rahul holding beneficial interest? Is it deemed dividend? Yes. But what if the company is the company in which public are substantially interested? Then no. The first point says public are substantially interested. Then in that case, there is no deemed dividend. Only in which case, guys? Private company or closely held company. Next. What if the company is a private company?
Yes.
Yes. Sir, what about lending? No, no. The wording is different actually. When they say what is this company? Lending company is a private company. The lending company means they are lending money to Rahul. So not the entire company. Actually, it's a manufacturing company. See here, guys. The company is envisioned manufacturing. They worded it very badly. So people who have the ICI material, guys, just cancel this lending word only. It will create a lot of confusion. One day before the exam, we don't want this kind of confusion. Let's go to illustration number 2. Guys, do you see this table in your book, guys? This A private limited, yes. Now this entire thing has now been removed. When did you take these ICI materials?
May 21st January.
Okay. So this entire thing, what is it? Exam. So this is an amendment. This has been removed now. This A, B, C. So angel tax, or when a company issue shares, the tax has been removed now. Let's go to the next illustration. Look at this, guys. Look at this diagram. If someone sat for 15 minutes and with this diagram, they'll forget whatever is IFOS. I can promise this diagram. You go in this diagram, you don't come out only. I've done this. When I came up with the shortcut of step 1, step 2, step 3, guys, it's so simple. Step 1 is the gift should be in the definition of property. Whoever's been in my lectures, guys, the gift should be in the definition of property. Guys, step 2, it should not be in one of those situation, marriage, etc. And step 3, it should be more than 50,000. Money 50,000, more than 50,000, immovable 50. This is the same concept of IB and that. But this, you just at your own risk you enter, guys. And it's like one of those maze in a amusement park. You never get out the way. These arrows take you straight to nightmare, to hell, guys. These arrows are pointing towards hell. I'm not mocking the ICM material. Of course, to summarize this in one page is very difficult. I use shortcuts like IB. They can't use shortcuts. If they use shortcuts like IB, dear income, people will wonder what's happened. So they have to explain properly. I have that opportunity to talk to you guys, so I can explain it in that language. All right. Guys, very, very interesting question. The next one. Let's read this question from a receiver's perspective. Mr. A is a dealer in shares. Please tick mark this question and mark it as D. Do it again whenever you can. He's a dealer in shares. Receive the following without consideration. Guys, everyone, I want to talk about IB once again. Guys, I'm getting 10 lakh jewelry for 3 lakh. What is IB? 7. I'm getting 1 crore house for 30 lakh. What is IB? 7. But guys, I'm a jeweler and I'm getting 10 lakh jewelry for 3 lakh. Is there a benefit? Yes. But I'm a jeweler. They will tax me, but not under IFOS. So repeating, guys, if it's stock, everyone, if it's anything to do with stock, IFOS will not come in the middle. Straight away, PGB. Guys, I'm a builder. Who am I? I'm buying a 1 crore property for 30 lakh. Is there a benefit? Yes, but I will be taxed under, not under IFOS. Yes. Start reading with me. He's a dealer in shares. Receive the following without consideration. Without consideration means gift. No, without. Inadequate means you're paying something. Without means free. Cash gift of 75,000 on his anniversary. Taxable. Bullion means precious metal, guys. The fair market value which was 60,000 on his birthday. Taxable. A plot of land at Faridabad, the value was just 5 lakh. Taxable. Yes, anything above 50,000 is taxable, guys. Money also. Movable property also, immovable property also. Everyone. See, you're getting surprised because no one gives land and all. Yes, no one will give you 60,000 bullion also maybe on your birthday. But guys, this is a paper. You have to admit and take tax. So are all three taxable? Because they are more than how much, guys? 50,000. All right. Let's see the next one. Mr. A, that is the person, guys, purchased from his friend Mr. C, who is also a dealer in what? Shares. 1,000 shares of X Limited and how much rupees? When today the value was how much, guys? 600. Guys, this is IB. 600 share for how much? 400. Guys, 600 shares you can pay 700, but if you pay less, there's some problem. But he's a dealer in shares. He's what? Check, guys. Who's Mr. A? See the first line. Mr. A is a dealer in. So we will tax this 200 benefit, but we will not tax it in IFOS. Where will we tax it? PGBP. Are we okay with this, guys? Yes. I'll tell you also how it will tax this. I'm a dealer in shares. Everyone hear me out. Practically, I'm a dealer in shares. The shares are worth 600 rupees. How much? I buy it for how much? 400. Is there a benefit to me? Yes. But that benefit will be taxed when I sell the shares. My cost is 400. It will go in my opening stock. When I sell it for, let's say, 650. So 400 and 650. What is the gap? 250. It will go in my sales. Indirectly, it will tax in PGB. Yes. See, practically, I'm telling you, I'm a dealer in these cameras. This camera is for 10,000 rupees. How much? I got it for 7,000. Guys, where will you go? Which room? I'm a dealer in cameras. So where will you go? PGBP. How much have I got it for? 7. It's in my stock now. It's in my stock. Some customer came, I sold it for 11,000. That 11 will go in sales. And indirectly, I'll be taxed on 4. Getting the point, guys? Yes? Alright. So this one will entirely go in PGBP. Next, very interesting, guys. Mr. A took possession of an office building. So what is Mr. A buying? Office building. Yes. He booked it 2 years back at how many lakhs? The stamp duty value today is how much? 32 lakh, and that time it was how much, guys? 23 lakh. First up, there are two stamp. You cannot work with two stamp duty values. I want one stamp duty value. Which is the lower one? Just check on 23, guys. Had he got some money, he had paid 1 lakh by which check? So can he take 23 lakh? So in my mind, I'm removing 32 completely, guys. I'm removing what? Complete 32 I'm removing. Okay, so now only focus on what? 23. Guys, 23 lakh property you're getting only for? Government says dal mein kala hai. Guys, everyone, you pay more, no problem. But if you pay less, how much less?
3 lakhs.
Stop. IB. You are getting a 23 lakh property for how much? First, you can't stay with how many stamp duty values? 3. You have to have only one, which is 23. Now, what is your benefit?
3 lakhs.
The government says no problem, have a benefit of either 50,000 or 10% of sale consideration. What is 10% of sale consideration? 2 lakh. Either 2 lakh or 50,000, which is higher, guys? 2 lakh. So you could have taken a benefit up to 2 lakh, but your benefit is, so we'll tax the entire thing. Happy to repeat it. This is a D question again, guys. How many stamp duty values were there? Guys, forget there were two, only 132. Now you tell me, guys. If there's only one value, 32. How much is the value? 32. How much are you buying it for? 20. Is it IB? What is your benefit? 12 lakh. Benefit up to 2 lakh is okay. But your benefit is 12 lakh. They'll tax you on the entire 12. But here, guys, because of 23, will be taxed only on 3. Think. We'll be writing this question also. On 1st March, he sold the plot of land for how many lakhs, guys? 7. Guys, he bought a plot of land for how many lakhs? He didn't buy it only. He got a gift. But was he taxed on that gift? Yes, he was taxed up to how many lakhs? 5 lakhs. So your question. When now he's selling this land, what will his cost be? 5 lakh. Understood? No problem. Didn't understand? I'll explain it when we write. Yes, let's start writing this question. So you know how to present it also. Please write illustration number 2. And for you guys, if you're wondering where to write, have we done this chapter in our regular class? Yes. So go to the last, where we leave one side after every chapter. You can write it there. Yes. You tell me, guys, how will you start? Yes, people who are giving the exam in Jan, how will you start? Computation of IFOS and capital. Everyone, please start writing. This is ICI illustration from IFOS. Computation of IFOS and capital gain of Mr. Who is this person, guys? A. For PY dash AY dash. Particulars amount. Just 1 second. I have solved this sum here. Yes. Guys, everyone, let's start writing exactly how I've written it. You'll write it. What is the first thing you're writing, guys? Gift. And it is for, is it more than 50,000? So you'll write cash gift, receipt, and anniversary. We've written this actually, but there's something more. We've written it only from IFOS angle. Here there's capital gain angle also. So if you want to write it, otherwise no problem also. IFOS and capital gain. So there are 3 gifts, 75, 60 and 5 lakh. Sorry. Guys, can you summarize all the gifts in one also? Yes. The following gifts will be taxable under section 56 to 10, and you can do write 1, 2, 3 also. You can choose whichever presentation way you want. Then shares are received for NRV consideration, but since it is stock, it will be taxed under PGBP. Don't total it up. We have to put capital gain also, guys.
Be taxable under PGBP only when sold.
Only with sold, yes. But you're actually they didn't ask for PGBP. If they had asked for PGBP, then we would have said, "हाँ, anyways नहीं आएगा." But I'm just saying I'm directing it towards PGBP. That's what I'm trying to say. Or under? हाँ, not under IFOS, absolutely. In the exam, this capital gain slightly you have to show better. I'll show you how. But right now I'm just writing it here. 5 lakh minus 7 lakh minus 5 lakh is 2 lakh. Just once again, I want to total it up. 5 lakh 60, 8 lakh 60, 9 lakh 35. Guys, people who are of course seeing this sum from your book, Yeshas book, we solved this sum. Yes, I told you all the ICI material sums anyways I've taken it in the Yeshas book. Just one question I have: that land you got for free, then why when you sell that land your cost is 5 lakh? Because you are already taxed on 5 lakh, so now that becomes your cost. Yes. For capital gain, how will you show, guys? You'll show sale consideration 7 lakh, less cost 5 lakh, and you'll show in the outer column 2 lakh. I've shown it directly because of lack of space. And guys, we figured a nice shortcut that we cannot have two stamp duty values. You have to have only one. So you have to figure out which one, and you have to stick with that one only. Do you guys also get numbers from absurd codes like 91 is India plus 96 plus 86? All these are scams only, spam. Pakistan is plus 92, I think.
Yes.
Yeah, so that to definitely you have to avoid.
Now in April, they'll mention that it's scam.
Okay, in Airtel.
So,
But Jio is not informing yet too. Truecaller does, but I've removed Truecaller only. Truecaller was supposed to be protected from menace, but Truecaller became the problem later. Alright. CBC, cash you can't pay, bearer check you can't pay, and cross check. Cross basically means you cross it, but you don't write account pay. And cross and these checks, no, bearer check is like cash. Cross, if I give you, no, you can give it to her, she can give it ahead. So they are transferable. The government doesn't want that to happen. Anyone understands what is the logic of this, guys? Why have they put this condition of CBC? Yes, I'll tell you guys. Today's stamp duty value 32 lakh. How much? See, if you can understand, you'll get an idea of how easy you are understanding tax or not understanding tax. So today's value stamp duty value 32 lakh. Yes, I am buying the building for how much? 20 lakh. Everyone, I am buying the building for 20. What is today's value? 32. What is the gap? And is that my benefit? So I'll be taxed on how many lakh? 12 lakh. My CA calls me up that listen here, there's a problem. You'll be taxed on 12 lakh because it's IB. It is IB. So I say, listen here, CA, go back no few months back. Check no when the stamp duty value was low. So CA goes back and says, okay, sir, 6 months back, the stamp duty value was low. It was just 21 lakh. You can take that, you will be saved. So you say, okay, take that. We'll enter into a small agreement with the builder that I agreed to buy this house that day. So people are fooling the government like this. So what people would do, they would go to a stamp duty value which was low, 6 months back, 1 year back, 2 years back. So government is like, what to do? Then government has a team, guys, which notices all these. And then they said that this is a problem. So they made a condition that okay, you made an agreement, no problem. But can you prove that that day you paid some money? Then people said, yeah, I can prove also. Builder says, yeah, he gave me cash. They said no. Then they so step by step. First they made the rule that can you prove you paid some money, and people violate that rule also. So then they said no cash, no bearer check, no cross check, only account. Basically, it should reflect in that person's account, and then you can say that you booked that flat. Yes. So all this is all practical application. As a student, because it's first time you're learning tax at Inter, I don't go into those kind of details. But some of you can understand it easily. If it's okay, if you don't understand, also it's okay. But if you understand this level, it's great. Yes. All right. Can I end this page here? Yeah. All right.
This case happened in Gurgaon.
This case happened in?
Recently. They had changed the stamp duty value all the buildings.
No, stamp duty value keeps getting revised, no?
Yeah, but then while selling the plots,
Yeah.
that changed, and then they got the records how much they sold it for.
Okay.
Then they got arrested.
Okay.
for builders.
Okay. Builder lobby में. Yeah. हो सकता है. Yes. All right, guys. Moving to the next illustration. This is illustration 2. Let's see which is the next illustration, guys. Same. Next is illustration 3, guys. I'm not even discussing. There are some gifts. Just discuss the third one, guys. Everyone look at the third one. And tell me, is it taxable? I'll just zoom in for everyone. Third one. But it's only 100 shares into 100 rupees, no 10,000. But jewelry worth 45. And it's always aggregate. What is the word, guys? Aggregate. Yes. Guys, what if 10,000 was cash and 45,000 was jewelry? No. Guys, every category is separate. Money is separate. Mobile separate. Guys, one minute. Money 10,000, not taxable. Mobile 45, not taxable. It has to be in one category more than how much, guys? 50. How many categories are there? 3. Money, mobile property, immobile. Is there in my QuickBook, guys? MMI is a shortcut. Money, mobile property, immobile property. Next, guys, which is the next illustration. Yeah, very good sum. All right, everyone, dividing the entire class. This class, you guys, left hand side class, we'll be looking at Hari's case. Whose case? And right hand side of the class, you'll be looking at Rajesh's case. Everyone, there are two people here, Hari and Rajesh. And there's no third case, so I'm just going to watch and wait. Yes, this said Hari or Hari is Rajesh. He's actually in the middle, he can go anywhere but Rajesh. Yes. Everyone here, Hari. Is Hari a property dealer? And is selling a building. Yes. So guys, how much is he selling the building for? For 90 lakh. So he's telling the government my sale consideration how many lakh guys? 90. The government says listen, we'll compare with stamp duty value. How many stamp duties are values? Can we stay with the stamp duty values? No, we need one. Which one will we take? We can't take 1 lakh 40 guys because it is with check. So we have to take which value? So stamp duty value is 1 lakh 50. Everyone stay with me here. Now they always take, we have done this in PGBP guys. People who revise it from there. They take 90 lakh plus they add 10%. How much is that? 99 lakh. They said if a stamp duty value is still 99 lakh, we have no problem. But guys, stamp duty value is how much? So Mr. Hari will be taxed on a sale consideration of how much guys? 150 lakhs. Are we okay with this guys? Guys, he's a builder, so this will go on PGBP. This will go where? Because why guys? He's a property dealer. Cut to Rajesh, that side.
If it goes on the PGP, that plus 10% won't come.
No, they always check you. See, how much are you sell? See, logic. It's a 150, 1.5 crore property. You're selling it only for 90 lakh. There's a problem. I'll tell you what's the problem. They take 90 lakh and they say, okay, 10% margin we're allowing you. So stamp duty value should have been.
But that was the IFOS.
Hmm.
10%.
But both, we have done in PGBP also. Both have to be seen. Example, if you and him are copying in the exam, both will get caught. So here, IFOS, he's paying black money. This guy accepting black money. We discussed this in PGBP. I remember discussing an additional points. No problem if you've not discussed. So they'll give you a margin of 10%. If your stamp duty value is reversed up till 99 lakh, no problem. But your stamp duty value is how much? 150. So they'll take 150. Yes. In reality, everyone does this math already, and they keep the value on 10% only. Next, guys. Yeah, I'll only in the case of that. Guys, who is this person now? Rajesh. Everyone, Rajesh is a dealer in automobile spare parts. Maybe IFOS will apply to him if it's IB. Guys, what is the sale consideration? 90 lakhs. And guys, here, what is the stamp duty value? So guys, is it IB? Yes. You are buying a 150 lakh property only for 90. What is your benefit? The government says benefit up to 10% of sale consideration. Well, how much guys? 9 lakh was okay, but you have 60 lakhs, so this will be taxable. In a nutshell, guys, tell me what has happened. He is taxed on how many lakhs? 60. And he's also indirectly taxed on 60. I'll tell you how. You wanted to show 90, but you have to show. So how much extra? Why? In reality, guys, people do black money transactions. They transfer the 60 lakh in black, and hence the government catches both of them. Yes. See, in reality, it works very differently. People know the law. I'll tell you what builders do. First up, builder says the property is for 1 crore. How much is the property for? You go to the builder, yeah, I don't want to. In reality, guys, education purpose only, but you have to know it. Yes. So you go to one builder in Bangalore, and the builder is very popular, and you say, listen, yeah, amazing flat, I want it. He says stamp duty value is 1 crore. How much? And I'll sell it to you for 1.2 crore. How much? There is no IB here. There is no IB here because 1 crore property being sold for 1.2. But you have black money in your cupboard, under your bed. You want to use it. So you tell the builder, yeah, let's say 1.2. No, I'll pay you 1.2. But on paper, let's show 95. Let's show. Great. So 25 lakh black money has been used. Everyone. And this is reality. Now no one gets caught here. I'll tell you how. You've done it so smartly that now everyone remove the black money part. Yes, on paper you made an agreement for 95. How much? You paid him 25 lakh in black, but that we'll not talk about it only now. Now on paper, let's go on paper. On paper, what is the stamp duty value? 1 crore. How much is the stamp duty value? 1 crore. How much did you enter? 95. So what is your benefit? 5 lakh. That benefit up to 99.5 lakh is okay. So they'll not catch you. Are you getting sure? Black money also gets used and you don't get caught. But there'll be a stupid person. I'll tell you what the stupid person will do. He'll say, I'll buy this property for 1.2 crore, but builder, I'll pay you 40 lakh black. The builder says, don't do this. We'll be in trouble. He says, no, I'll pay you 40 lakh in cash. So how much is he paying in cash? 40 lakh. Agreement made for 80 lakh. Agreement made for. Now guys, forget the cash element. Stamp duty value 1 crore. Agreement made for. What is the gap? 20. The government says no benefit only up to 10%. That is 8 lakh. You'll get caught. So people never get caught because they're smart. They have CAs who advise them. Yes, unfortunately or fortunately. Yes. So they never get caught in this manner. They manipulate up to only 10%. So can you charge low? But you only charge up to that much amount. Yes. I know this is not right, but guys, government makes the rule, people flaunt. Yes, I've seen people not wear a helmet when they are on a signal, they suddenly wear the helmet, after that they'll remove it. Yes. So everyone's doing it everywhere. That's how. Now the deal is that we should be able to understand it at least. Even if we don't use it in real life, we should understand that this exists and this is how it works. Yes. But I've also seen people going to a builder. Let's say for me, most of my money is white. Everything is tax paid. So when I go to a builder to purchase an apartment, guys, I never say black money. I say, listen, how much is the flat for? He says 2 crore. I say, no, you reduce the price. Give me a good discount. I'm not even thinking because I have only white. Tomorrow, guys, if you're a C and you work and you are partner at EY, your entire money will be what? White. You've never seen black money in your life. I know people who've never seen black money. How will you generate black money? If all your life you've done salary, guys, how are you earning salary? In your bank. So it's all white money. So not that everyone has black money, guys, but people who have, they've tried and manipulate like this. Yes? Everyone okay? All right. Guys, all this is not exam oriented, so I'm not discussing all that in more detail, but I just want to give you an idea. All right. So guys, both of them. Now, how will you present this, guys? Let's try and see if this comes in an exam, how will you present this? Everyone. First, what would your answer if Hari was a share broker? Guys, we'll talk about that later, but right now, let's see the first one. Discuss the tax implication in the lands of Hari. Let's first start with Hari. Guys, you always give the facts first. Who is Hari? Hari is a property dealer and is selling a property for 90 lakhs with the stamp duty values 150 lakhs and 140 lakhs at the date of booking. Next line. Since the amount was paid by cross check, the stamp duty value to be considered is 150 lakhs. Since the stamp duty value is not within 10% of sale consideration in the hands of Hari, the taxable income will be 150 lakhs. Are we okay? This is Hari's case, PGBP. Now, next paragraph, guys. Who's the other person? Mr. Rajesh is an automobile spare part dealer buying a property of 150 lakh for 90 lakh. In bracket, the stamp duty value of 140 lakh will not be considered because of cross check. Since the benefit is of 60 lakh, it is more than 10% of sale consideration. The entire benefit, that is 60 lakh, will be taxable in the hands of Mr. Rajesh. You can word it in your own words, but you have to give some things like 10% of sale consideration. That has to happen. Like stamp duty value, cross check, those kind of words have to reflect. Yes. Now let's see the next one, guys. What would be your answer if Hari was a share broker? Guys, everyone focus on Hari. In this case, who was he? Property dealer. So it was taxable under which hand? Guys, if he's a share broker, the entire thing is the same. Nothing changes. But it will be under capital gain. Which gain? Because guys, when you and me sell our building, it will be under capital gain. When a builder sells this building, it will be under PGBP. Are we okay? I have a feeling this is a tough question. So write D. Look at it again later when you can. And if possible, we'll also write this question. If that's the last question that we have to write, we'll write it also. Illustration 5 is an exemption, guys. You can read it. Was that BC? Yeah. Guys, in illustration 5, you're getting some money on a calamity. If you have been my student, guys, we have done an exemption, guys. If on a natural calamity you get some money, guys, 1010 BC. Big calamity. What is the section? 1010 BC. 1 minute. I'm just putting it here, guys. 1010 BC, big calamity. If you get some money in that case, it is not taxable, it is exempt. Yes. For those who don't know these exemption, guys, simple. Go to my quick book, see the exemption, go to a revision video and see the revision video on exemption. Yes. Have I uploaded the revision videos for you guys? Yeah. Quick book is there. Is there, no? Have a look. Guys, here, illustration number 6, I'm not discussing. Check, guys. Are you all comfortable with this? We've done a lot of sums on this. Please check, everyone. Interest on what compensation? So we've done a lot of questions on this. We'll not discuss this now. Yes, that's it. So we'll write that Hari and Rajesh's question, guys. It'll be good because later on, guys, you'll not struggle with it when you are reading it. Please write illustration number 4, ICI material. You guys can also write, guys. We've not written that. Illustration number 4, ICI material. Very good session on IFOS. I feel after the usual IFOS what we learn, I think this is a great thing, and I feel it's a good top up. Are you guys liking it? Yes, good. Although exam is a little far away, watch this later on if you can as a recording. Okay. Guys, we are looking at illustration number 4. If you want to quote the page number also, you can quote from your ICI material. Yes. Let's start. Just write tax implication in the hands of Mr. Hari, underline semicolon. Tax implication in the hands of Hari, underline semicolon. Next line. Mr. Hari is a property dealer. Always start with the facts. Mr. Hari is a property dealer and has sold a building for rupees 90 lakhs and has sold a building for rupees 90 lakhs when the stamp duty value is 150 lakhs. Full stop. Next line. The stamp duty value of 140 lakhs will not be considered when the stamp duty value is 150 lakh. Next line. The stamp duty value of 140 lakhs will not be considered since the amount has been received by cross check. The stamp duty value of 140 lakhs will not be considered since the amount has been received by cross check. Full stop. Next line. As per section 43 CA. As per section 43C. This is how you spell it, guys. 43, capital C, capital A. Since the stamp duty value is more than the sale consideration plus 10%. Since the stamp duty value is more than the sale consideration plus 10%, such stamp duty value that is 150 lakhs will be considered as his income. Such stamp duty value that is 150 lakhs will be considered as his income. So guys, Hari was trying to show his income was how much lakhs? 90, but we will have to put how many lakhs? 150. Yes. So we'll continue with Hari only. In case, next line, in case Hari is a share broker, in case Mr. Hari is a share broker, the same amount would be taxable under capital gain. The same amount would be taxable under capital gain. Section 50C. These sections are not important, honestly. If you have the time or the mental bandwidth, by heart this. Otherwise, I've given you important sections. For fast track batch people, guys, top 50 sections. There's a folder. I'll update that. Just keep reminding me if I forget, and I'll keep uploading them. Yes. In case Mr. Hari is a share broker, the same amount will be taxable under capital gain as per section 50C. So concept is the same. You'll take the sale consideration plus 10%. Concept is the same. 1% is under PGB, 1% under capital gain. I'll give you an example. You have a gold ring of 10 lakh rupees. How much? You're selling it for 12 lakh. What is your gain? If you're a jeweler, PGBP. If you are not a jeweler, capital. Same concept. Same taxability is there, but one under PGB, one under capital. Yes. And from Rajesh's perspective, yes, question. If he's shown 90, we'll show 150. That's how I'm gonna. He's purchased it for. So indirectly, so that will be the income. Right now, sale consideration will be 150 lakh, and purchase price you will automatically minus it. Yes. All right. Next line, guys. In case of Mr. Rajesh, I'll tell you. I'll tell you technically. Write the next line. In case of Mr. Rajesh, who is a dealer in automobile spare parts. In case of Mr. Rajesh, who is a dealer in automobile spare parts. There is a benefit of 60 lakhs. There is a benefit of 60 lakhs. Open bracket. 150L minus 90L. In the hands of Mr. Rajesh, who is an automobile spare part dealer. There is a benefit of 60 lakh. How is it 60 lakh, guys? Open bracket 150 lakh minus 90 lakh. Full stop. Since this benefit is more than 10% of the sale consideration. Since this benefit is more than 10% of the sale consideration. The entire amount would be taxable as per 56(2)(10). Since this benefit is more than 10% of the sale consideration, the entire amount would be taxable under section 56(2)(10), which is here on the screen. Yes. Yeah. Now, guys, what he's asking, see, how much did Hari purchase the building for? 75 lakhs. So now, as a property dealer, guys, see, understand business. As a property dealer, when you purchase a property, it will go in your stock. It will go where? And when you sell it, it will go in your sales. You don't do one-to-one relation. Example, a jeweler will buy so much jewelry. It will all go into stock. And as in when he sells it, go in his sales. So same way, that's how I have considered it. His purchase price is 75. And in his sale, it will consider 1,50,000. So the difference will be taxable as PGBP. As in when he sells it, yes. Alright. I don't think they will give such a big question, guys, in your exam. They'll give it from one angle. Or even if they give it from both angles, they will not give that extra line below. Yes, they'll try. Or best is they can give this as an MCQ. Which is actually, you might think, oh, it's too much. But actually, guys, MCQ is very simple because in those 2-3 minutes, a 2-mark MCQ will get 4 minutes. How many minutes? Now in 4 minutes, you'll be able to do this maths, guys. And at least get the right answer very easily. I'll tell you how to do this math. Stamp duty value, how many are there? 2. You'll take which one? 1. 150 lakh. And how much are you selling it for? 90. 90 plus 10%. 99. So 99 cannot be taken. It's 150 will have to be taken. So if they ask you for Hari, what is the income, guys? 150. Same similar thing for him for IB. Yes. All right. The more you practice, the better it'll get. I think IFOS, this is what I want to do. It's been about 1 hour and 52 minutes that we're looking at IFOS, but it's a good 1 hour 52 minutes. It's well worth the time and effort. We'll take 5 minutes here. We'll come back and we'll move to a chapter, guys. Salaries. Yes. Very comfortable today. I felt it's very okay. Do we want to take a long break right now? Want to take a long break? Okay. So how long? 20 minutes? Yes, 20-25 minutes. Okay. So right now it's 3:45. Let's come back at 4:10. Yes, 4:10. Yeah, have your tea, coffee, whatever. Take a walk, relax, go to sleep. 4:10 we'll continue, and we'll continue with salaries. All right, so just evaluating. Today we are looking at salaries. Tomorrow we look at TDS and deductions. Of course, TDS, I mean TCS also, advanced tax also. And day after tomorrow we look at rates of tax and computation. What chapters I've not touched? Exempt income, guys, you can read. And actually, exempt income, there's no chapter in the Income Tax Act or the portion. I've taken all the exemptions and put them at one place. So that's how it is. And rates of tax we've done on the first day. We'll just, I think it's pretty commendable. Tomorrow is day 6 and 7. So 7 days we'll finish DT, which is a big part, and we've done quite in detail. Of course, having said that, there are 2 more days. We'll see how it works. And from next day, so that is 23rd. Today is 23rd, 24th, and 25th. We'll finish DT. Then 1, 2, 3, 4, 5, 6 days for GST. Nice, nice, guys. We'll do well. We can do some accounts audit also, I think. Yeah, no, I'm just kidding. But 6 days of GST. I think till first I have my lectures. Yes. So I think we have good amount of time. Yes, we'll finish comfortably. And towards the last, guys, we'll try, if there are any doubts, we can solve that as well. I usually have, of course, fast track batch. I'll just tell you guys, the others know. On one day of the week, we have doubt solving session. Usually it's about, it keeps changing, but right now it's about Tuesday nights. So I'll send you a Zoom link. You can just join that Zoom meeting on Tuesday nights. It'll be there. The passcode, everything is there. I generally post on social media. If you're following me on Instagram, I keep posting it. Otherwise, guys, on Telegram groups also, I'll post it. It's a standard same Zoom link. Every Tuesday it opens up. You collect your doubts, you ask them. And we address it, so that helps others also, and your doubts also get addressed at one go. We don't have a specific number on which you ask doubts, and also on that Zoom link only you can ask for doubts. Collectively we can solve doubts. Yes, for me people it's a little too early to ask too many doubts. Yeah, I'm seeing you guys in class anyways. For the others, because after first I think your other course will start, which is accounts. So if you have doubts, you can come on that Zoom link and ask doubts. That Zoom link is active for about 1.5 hour till whenever doubts last. Sometimes there are many doubts, so it's over 2 hours. Sometimes there are hardly any doubts, so the 15-20 minutes we finish the Zoom link. Yes. So that's how I want to tackle the doubts. And if you want to solve the September paper, and the last day we'll solve the September paper also. So yeah. All right. Now, guys, looking to start a new chapter, which is nice progress. So this is what we are going to be doing today. Salaries is what I'm looking forward to. Yeah, this is where we'll start. It's right now at 4:15. Let's see how long it takes for us to first conceptually discuss salaries, and then we'll see it from an exam perspective. Yes. All right. Guys, salary, I could literally discuss salary in just one point, that salary is basically an employer and an employee. I don't call it employer-employee because it sounds very repetitive, so I call it master and slave. The employer is a master because he dictates the terms, and the employee is a slave because they work very hard, in India at least. So master and slave is a relationship, and it's pretty simple. Whether you call it salary, whether you call it any other name, any amount which goes from the master to the slave, is it taxable? Yes. So let's take an example. This is a master, let's say EY. I worked at EY, so I'm taking an example of EY. And this is a slave, let's say an employee. And without even going ahead on anything else, I'm just asking you some things. You have to keep in mind only one simple rule. Any amount going from whom? Master to the slave is taxable. Salary, allowances, perquisites, basic salary, commission, provident fund amount, taxable. Guys, provident fund also, you'll get exemption, but right now it is. So exemption also works like this. First you add and then you minus it. NPS account, taxable, gratuity, everything is taxable, then you get exemptions. HRA allowance, traveling allowance. So first everything is added. At the first level, everything is added. Then if they give you exemptions, you can minus. An example, because your work involves a lot of travel, he gives you a traveling allowance of 1 lakh rupees. How much? So first what do? Add. Because everything coming from the master, you first add. And then depending on exemption rules, like for traveling is the amount spent. Let's say you spend 90,000, so you can take an exemption of how much, guys? 90,000. Are we okay with this, guys? Yes. So this is how it works. We'll not go into too many details right now and confuse you. We'll go from an again exam perspective. So exam is very simple. Mr. A is working for ABC Private Limited. Or Mr. They don't use actual name. Mr. A is working for Sadhguru Builders Private Limited. Something like that they'll give you. And then they'll give you details like basic salary, guys. So will you add it? Yes. Then they'll say commission received from the employer. What will you do? Add. Then they'll say some allowance received, guys. What will you do? Add. But you'll add the net amount. That means you'll add the first amount, then you'll minus the exemption, whatever the net amount you will add. Yes. Then, guys, I divide the entire chapter into 6 parts. That is called SAP and SEP. What is the chapter called? SAP and SEP. This is a shortcut for the entire chapter, guys. Let's see how this works. First up, you can get salary, which is in terms of money. When I say salary, I also mean basic salary, DNS allowance, commission, whatever name you call it. Then A for
Allowance.
you can get traveling allowance, HRA allowance, different allowances. Then you get P for perquisites. What is P for?
Perquisites.
What do you do with SAP? Add. Then you get a standard deduction of 50,000. For May, guys, it's become 75, but only in the new scheme. Yes, so but I'm catering this fast track course for Jan. So Jan, what is the limit, guys? Standard deduction is 50,000. You get an entertainment allowance deduction, which has never been asked in the exam paper before, and you get a professional tax deduction, guys. Professional tax, whatever you pay. So we'll talk about it, but again, catering to the exam and from the exam perspective. Yes. So exam, guys, gives you two angles. But first we'll see the employee angle, that is the slave angle, that is the person who's earning the income. Yes. Let's talk about it, guys. S is what? Salary. Salary is taxed, guys. It's very simple. Your master is paying you salary, so it's taxed. But it's taxed on due or receive, whichever is earlier. That means, guys, salary of the month of March. Which month? My employer said, I'll pay you in April. I'll pay you. The government said, whenever he pays you, it's okay. But due or receive, 2 Lakshman Rekhas. Is it due? Taxable. In March, you took next April and May salary in advance. Is it due? No. But is it received? Yes. So confusing. Okay. Simple. Due or received are 2 Lakshman Rekhas. Anything crosses, you will tax. Yes. And salary has many parts, guys. One is called basic salary. What is it called? I call basic salary as B. What do I call it as? B. Why B? Because we'll use the shortcut ahead. Okay? So whenever I say basic salary, you can think of as B. Next, there is called DNS allowance. What is this called? Now, sir, DNS allowance, what is it, guys? Expensive cities. Bangalore is getting expensive. Mumbai is very expensive. To stay in such cities, guys, they give you a DNS allowance. Next, guys, they can also give you commission. What is this? Commission. Then they can give you other things like bonus. Every Diwali, every New Year, every Dasra, they can give you bonus. And they can give you other amounts called remuneration, wages, etc. Doesn't matter what they call it, guys. Any amount going from the master to the slave is taxable. Everyone okay? Now, DNS allowance are two types. One which forms part of retirement, one which does not form part of what, guys? Retirement. If it forms part of retirement, we'll call it D. We'll call it what? If it doesn't form part of retirement, we'll call it OD. Only shortcuts. B, basic. D for DNS, retirement. OD, DNS, not retirement. Yes. Commission, sometimes commission is given just like that, fixed commission. Sometimes it is a percentage. If it's a percentage, then it will be called C. What will it be called? Example, guys, you made sales of 1 crore, 1% of that is your commission. Then it's C as a shortcut. And guys, if commission is fixed, let's say every month you'll get commission of 15,000, that's called OC. Guys, what is it called? OC, which in Kannada is free, but right now it's OC means other commission. Yes, everyone okay? So this is just a small summary of what is taxable. Honestly, you will study all of this, and in the exam question is a very simple question that this person has got salary of 90,000 per month. 90,000 into 12. Forget 50,000 a month. 50,000 into 12, 6. So that will be tax under salaries. Are we okay with this, guys? Yes. So this is salary. Just remember B, D, O, D, C, and O, C. Everyone okay with this? Yes. So this is salary. All of this money you will tax under salaries. Next is called allowances. What is it called, guys? So let's see what is allowances. Everyone, we'll tackle and we'll see what the allowances part is. Allowances basically is not given by every employer. Some employer will give it, some will not give it. Yes. So example, you work with Google. Whom do you work with? They are rich. They'll give you a lot of allowances. But you work with someone who's a small entity, guys. They don't have that kind of money or that kind of inclination to give you a lot of allowances. The typical allowances they give you in companies, guys, big companies, HRA. What is it? House rent allowance. If your work involves a lot of travel, they'll give you traveling allowance. Which allowance is this, guys? If daily small expenses are there, they'll give you daily allowance. What will they give you? And guys, if you are, let's say, in Bangalore, but your work involves touring Mysore, Chennai, etc., they'll give you tour, guys. Which allowance? Because, guys, when you're on an official tour, are you supposed to spend your own money? No. So they give you these kind of allowances. Now it's very simple. Doesn't matter what the name is. You will first add it. What will you do, guys? I call it A for allowance, A for add. Everyone. A for allowance, A for add. So simply take the money and add it. Yes, people who live stream was not working, we've just begun salary. Don't worry, salary is basically an employee, and there is SAP and SEP. So we are looking at SAP and SEP here. So SAP is S for salary, A for allowance, P for perquisites. We're right now at A for allowance. So guys, what do you do with allowance first? Add. Example, guys, in the exam they give you travel allowance 1 lakh. What do you do? Add. They give you HR allowance 90,000. What will you do? Add. Tour and transfer allowance 60,000. What will you do? Add. Simply go and add. And then, sir, can we minus something at least? Yes, you can minus. There's a shortcut which I'm going to teach you here, guys. It is called HRA. What is it called? HRA can demotivate. What is the shortcut, guys? HRA can demotivate and hurt heartbeat. What is it, guys? And hurt. Of course, it's a big one, but it's very helpful, guys, to revise also and in the exam also. What this basically means that if your HRA is one of these, HRA can demotivate, hurt, heartbeat, then you will also get an exemption. So this sentence is all about the exemption. First exemption you get for HRA. Then for conveyance allowance, what is C? Conveyance means traveling allowance. Then what is D? Daily allowance. Helper allowance, office help. Uniform, you have office uniforms like pilots have uniforms. Research and tour and transfer. So guys, these allowances, if you see these names in the exam, you can get an exemption. Let's see the easy ones first, guys. Guys, for conveyance, whatever amount you spend, example, guys, you got traveling allowance 1 lakh. What will you do? Add 1 lakh. And then the exam question says you spend 70,000. So what the government is saying that we are not taxing you. If you spend the amount, we will not tax you. If you don't spend, then obviously it's your income will tax you. Logic, guys. Yes. How much did you get allowance? 1 lakh. How much did you spend? That will not tax. What is not spent? That will tax. So can you spend 80? Yes. You spend 90. You spend 1 lakh. So 1 lakh minus, you spend 1 lakh 3.
1 lakh.
You can only minus how much? 1 lakh. Yes. Everyone okay. So what is C for? Conveyance. You'll minus the amount spent. Here also daily allowance, you'll minus the amount spent. Helper, uniform, research, tour and transfer, all these allowances first you'll add and you'll minus the amount that is spent. Are we okay? Common questions in the exam, traveling allowance. 1 lakh rupees. What do you do? Add. No other detail given. Don't minus anything. Guys, only if they say amount spent, you will minus the amount spent. Are we okay? And the logic is, guys, if the amount is coming to you and you don't spend it, it's your income. If you spend it for which purpose? Office. For which purpose? Office, traveling, etc. Then you can minus it. Are we okay, everyone? In traveling allowance, there's one small detail you should know. Guys, your office is in Electronic City. Where is it? And you stay in Jayanagar. Jayanagar to Electronic City, Uber and back on Uber. That you can't minus. Because that's your job to go to office. From office, wherever you travel, you can minus that expense. Are we okay, everyone? So repeating, guys, HRA can demotivate and hurt heartbeat. We're doing it the non-traditional way from an exam perspective. If you see any of these words, what will you do? Add, and then you minus the amount that is spent. Are we okay? So inner column you'll add, and then inner column you'll minus, and the outer column you take the final number. Are we okay, everyone? Next, guys, helper is office helper. U is uniform, office uniform. R is research, and T is tour and transfer. Next, heartbeat. These allowances, government says, listen, I can't monitor how much you spend. So I'll keep a fixed amount. Your children are going to a hostel. Your employer gives you hostel allowance. You will add it and you will minus amount of 300 per month. How much? Very disappointing. It has not changed from 300 years. But we can't help it. It's 300 per month. Poor child. What if you have 2 children? Take it for 2. What if you have 3 children? No, only maximum 2. Next, for education. Not yours, your children education. Your children are going to school. Can your master pay for it? That's called children education allowance. What will you do with it? Add. He is not paying a school fees. 1 minute, guys. Your employer is not paying the school. He is giving you money. Guys, allowance is getting money. 1 minute. Your children are studying in some school. Is your employer paying that fees? No. He is paying you some money so that you can pay the fees. So it's an allowance. Can you misuse that money also? It's yours. Yes. So in that case, you get 100 per month. Guys. How much? For 2 children? Yes. For 3 children? No. Only 2 will go to school. No. All will go to school. You'll get exemption only for 2. Are we okay with this, guys? Yes. So what is H for? Hostel. What is E for? This has come before. This next one has not come before. Blind. For people who are blind, deaf, mute, handicap, like handicapped people, in that case you get 3,200. How much is it? This is per month. This is a good amount of exemption. Sir, what do you do? Just buy these exemptions. In the exam, first add the amount. Amount can be whatever your master decides, but exemptions are fixed. Again, hostel, 100 per month per child and 3,200 per month. Next, area-based allowance. Guys, some areas are very difficult to work in. Example, you are working in some underground area, some tribal area. So the government, not government, the employer gives you some allowance. Add that and you minus a fixed amount that will be given in the exam. Example, in mines, underground area, you get 800 per month exemption. How much? Sir, I'm getting confused. What is exemption? Is very simple. They will say that we don't want tax up to this much amount. So example, if your allowance is 40,000, 800 per month into 12, that amount they will not tax, rest they will tax. Are we okay with this, guys? Yes. And last is transport sector, guys. If you are working in the transport sector, example, you're a bus conductor, you're a TT like Mr. Dhoni, you're a pilot, then in that case, guys, whatever allowance you'll get, you'll first add and then you'll minus A, the amount received. What? Or B, 10,000 per month. How much per month, guys? 10,000 per month. This is 70% of the amount received. Yes. Going a little fast, I'll slow it down. You are a pilot. Indigo Airline says we'll give you an allowance of 1 lakh. How much? So A is 70,000 or B is 10,000 into 12, 1 lakh 20, which is lower one. 70, you'll get that. Why lower, guys? Exemption deduction always lower. Yes, everyone. So I'm getting to HRA, but can we repeat this, guys? C for daily, helper, uniform, research, tour and transfer. What will you do first? Add minus the amount spent. What if amount spent is not given? Zero. Don't minus anything. Fully taxable. Next, guys, heartbeat, hostel, education, line, area based, and tour and transfer. Sorry, transport sector. This transport sector is A or B, whichever is lower. Are we okay? And last, guys, is HRA. This is very common in the exam, and that's why I'm going to go very slow here. The master says, your employer says that listen, yeah, all PwC employees will give you HRA. What will we give you? Guys, because we assume you're staying on rent. So everyone, they don't give it to 111 employees, guys. All PwC employees in India, 2,000 of them all get HRA of 2 lakh rupees per month. How much? Not per month, 2 lakh rupees overall in the year. So what do you do first? Add, because it is allowance, or add because any amount going from the master to the slave will first be added. Then the government says, if I tax you, guys, if I tax you, then how will you pay your rent? If I tax you, how will you pay your rent? So the government says, I'll give you an exemption, which is A, B, C. A, B, C, whichever is lower. So C, how much did you get allowance? If the government taxes, you will not be able to pay rent. So they give you an exemption, not the full amount, A, B, C. A is always amount received, which is how much? B is rent that you're paying. Rent. Are you in Bangalore? Are you on a job? Are you paying rent? The rent that you're paying minus 10% of salary. How much percent of salary? And last is, if you are in a metro city, 50%. If you're in non-metro city, 40% of your salary. You will calculate all the three amounts. First amount, you don't have to calculate. Amount received. Second one, rent paid or payable minus 10% of salary. Sir, what is salary? BDC. What is salary? BDC. B is basic. D is dearness, which is retirement. And C, commission, that is a percentage. You'll take that and you'll take 10% of it. Yes. Everywhere, guys, it's BDC only, except a few times when I'll tell you. And last is 40 or 50% of what, guys? Salary. Now, let's assume this number is 2 lakh, this number is 1 lakh, this number is 80,000. Which is the lowest? You'll get an exemption of 80,000. Are we okay? So they're giving you an exemption, but they can't give you high exemption. They'll give you least of the following. Guys, what if this is 2 lakh, this is 3 lakh, this is 4 lakh? 2 lakh. Are we okay with this, guys? Yes. Now, guys, this exemption you can get only on one condition. Please show them the house that you've taken on rent. If you don't take a house on rent, allowance you can get, because allowance is given to all employees, but exemption you will not get. Everyone, you have to take a house on rent. Everyone. I used to use this. I have told people also that I used to stay in with my parents and I used to pay my mom rent. And that's not even illegal. I'm paying my mom rent. I'm taking which exemption? HRA. But sir, your mom will be taxed. Yes, her basic exemption limit is 3 lakh or 2.5 lakh. She's not taxed. So I used to pay us only so much rent that is below her basic exemption limit. Are we okay with this, guys? Yes. But what if in the exam says you've not taken a house on rent? Then you'll add, but you'll not get exemption. Are we okay with this, guys? Everyone. Yes. Let's repeat. Guys, SAP. S for A for allowance. What do? Add. You'll add the allowance and then you'll minus some amount only if it's in this sentence. HRA can demotivate, hurt, harden. Travel allowance. Add minus amount spent. Conveyance allowance, same. Daily allowance, same. Helper uniform, same. A transport sector employee. 2 amounts, whichever is lower. HRA, 3 amounts, whichever is lower. Hostel, education, blind deaf, 3,200. Now HRA, because it comes very often, will repeat. What is A? Amount received. Whatever the amount received will minus. B, rent paid minus 10% of salary. What is salary? So if they give you multiple numbers, carve out B, D and C and take 10% of that. And 40 and 50% of salary. 40 is non-metro, 50 is metro. Metro means? Yeah. How many? 4. Yeah. Only 4. It's Mumbai? Delhi, Chennai, Calcutta.
Not Bangalore.
Bangalore? No. If it's Bangalore, then 40. Don't feel bad, take 40%. Yes, they will change it, but right now it's 4 metros. Yes, everyone. Thankfully, guys. Otherwise, every time they add metros, there'll be an amendment. And you'll wonder, oh, sir, amendment. Good, 4 metros is good. It's okay, we'll feel bad about it, but we'll live with it, guys. Yes? Alright. So, otherwise, I'm telling you what will happen. Every year, they'll add one city. And then tax aside, you'll buy in cities, geography. Yes, so it's good they put only 4 metros. Yeah, all right. So this is your allowances. Now, as in the exam, medical allowance. What do you do? See, now you got money. What do you do? Add. See, any money you get, you have to add, and you can't minus anything. Why? It's not in the sentence. Yes, everyone okay. And some people, guys, the allowances we give them full exemption. Like some important people, like High Court, Supreme Court judges. Which judges? High Court, Supreme Court judges. When they get allowances, 10 lakh. Full exempt. Then UN employees working in India, full. And guys, remember our person was working abroad in France when we gave him allowance. So some important people we don't tax the allowance because guys they might get upset and we don't like that. Yes, High Court, Supreme Court judges, UN employees, and people work abroad for whom? Government of India. Are we okay? I'm going from a very exam centric discussion, not like every one line I'm discussing. Yes. So in the exam, how will this come? So they will give you some allowance. I'll tell you the 3 common allowances they've given, which I know of. Traveling allowance. Add. Nothing else. Zero. Then one time they gave HRA allowance. Add minus ABC. So you have to actually calculate and minus. Working note, you can calculate ABC and show the working note. And what else have they given you? Hostel, they haven't asked yet. Education, they've asked. Yes, you'll add and minus how much? 100 per month per child. Yes, these are the allowances that have been given till now. Yes. Alright. And last is what, guys? Perquisites. Before perquisites, let's go to SEP because perquisite is slightly big, so it'll take more time. SEP is what? Deductions. Yes, SAP and SEP. SAP is income, SEP is deduction. What is the standard deduction? Everyone gets 50,000. In the new scheme also, old scheme also. Now it has changed in the new scheme, but for Jan 25, it's still 50,000. Yes. For May, I'm just telling you, people are watching. If they watch this recorded, May it will become 75, but only in the new scheme. So you want the old scheme, only 50. So automatically you'll go where? New. So government wants everyone to go to the new scheme slowly, sadly. After 2 years, your cousin brother who's studying now thinking of doing CA, he will not study this old scheme. He'll study only new scheme. And he'll not study deduction chapter only. Full chapter gone out. Yes, because they are removing deduction in the new scheme anyway. And so only 3 deductions we'll discuss. Their deduction chapter only not there. So out of 14, 1 chapter out. Yes. Was that? So no deductions only because you know guys in the new scheme there are no deductions. Alright, yes. Yeah, people feeling bad, don't feel bad. I give 8 in the paper, guys. You're giving 6. Let's talk about that. Yeah, if you're talking about bargaining and you're feeling bad and all, I am feeling even worse. Yeah, I had to clear 8. Anyway, and there was ISKA, what is that called? SM, no. SM is still there. EIS. Yes, EIS is a nightmare. And nightmare at both places. There was Inter also. Inter, it was called EIS or something like that. Finally called ITSM or something like that. Oh my god, crazy. Yes, we had to study about computers where computers also you don't know that. In the museum, those computer techniques you were learning. Thankfully, I said, listen, get rid of it. Trust me, we were using one computer, studying about computers 10 years back. So it was crazy. And there's no reason to complain, honestly. Yes. Okay. Now, what is the next thing I have to teach you? Yes, SEP. E, entertainment allowance. So this is allowance, yes, you will minus it. You will not get an exemption, you will get a deduction. But this deduction is only for government employees. For which? So entertainment allowance anyone can get. Even you can get, you're working with PwC, but deduction only government employees. They're not very common in the exam, but first there are 3 amounts, whichever is lower. A is always amount received. Yes, B is 20% of your basic salary, and C 5,000. So they are basically trying to give you 3 numbers where they put 5,000. That means the deduction can never be more than, because if A is 6, next is 7, but this is 5. This is straight Zomato strategy. 40% off on pizza, 40 rupees. So what then a number they put, they don't want to give more than that. So same thing here also, guys. ABC, whichever is lower. Yes, so that is entertainment. You can watch it, but it's not important. And last is professional tax. Has come before, will come again. As professional tax is a small tax you pay, roughly about 200 per month. That you will get a deduction only when you pay. Why, sir? Only when you pay? Because you're paying the government. So the government says only if you pay, you'll get deduction. You'll pay faster. Just like municipal tax. Only when, guys, the government is so smart. M3. Remember M3? What is T? Tax. The government is so smart. They said, listen, pay only then we'll get deduction. So all government taxes are being paid immediately. Yes, without any worry. So they are getting the money fast. Yes. But anyways, think like the government. So they want the money faster. So they put this provision. All right. So SAP done, P left, SEP done. Professional tax standard deduction though is very very important. In fact, the section is also important. Standard deduction section is 16(1)(a). What is the section? 16(1)(a). By heart it because you will write it. There has been almost always a paper where salary standard deduction has to be there. Partner salary. PGB. Will you get this deduction? No. MP, MLA salary? No. That is also going to IFOS. Alright. Otherwise, all salaries will get standard deduction. Alright. At EY, a lot of people are given an option that you want to be an employee, you will get salary, or you can get professional fees. So when you join EY, many employees are given that option. Guys, as a salary, you have only 3 deductions. How many? So very less deductions. As a professional fee, you can take many deductions, like your petrol bills, your Wi-Fi expenses. So generally people go under which, guys? Professional fee. Yes, just saying real life examples. All right, now guys, we go to the last one, which is perquisite. So what's the difference between S, A and P besides the spelling, guys? Yes, S is salary. A is, this is in terms of money. This is in terms of, this is perquisite is not in terms of money, it is in terms of kind. Example, guys, they give you a car to use. They give you a house to stay. They give you clubhouse membership. They pay for electricity. So all this is money given in kind. Everyone okay with this, guys? And if you want to remember the difference between allowance and perquisite, guys, practically, guys, this is what the difference is. You are craving a pizza. Your mom says, here is 500 rupees. You order what you want. That's allowance. That is what. Can you order 300 rupee pizza? Apply the offer, make it 250 and keep the 250 with you. Yes, that's allowance. But if she says, no, wait 15 minutes, I'll make a pizza. No scope, then you can't save anything. Then that's a perquisite. What is that called, guys? So allowance is money, perquisite is a facility. Everyone, and that pizza example will help you understand allowance and perquisite very easily. Now perquisite, no, it's very very simple. Actually, when I teach you for the first time, it's very elaborate, but right now it's very very simple. In perquisite, you have to answer 2 questions: who's paying for it and who's benefiting from it. So who should be paying for it? Master. And who's benefiting? Slave. So guys, a benefit is coming when master is paying, slave is benefiting. It's a perquisite. I'll give you a simple example. There's a club here called Cosmopolitan Club. You are working at EY. EY says we'll give you a membership of this Cosmopolitan Club. Membership fees 2 lakh rupees a year. How much? Who's paying? Master. Who's benefiting? Slave. So that's a perquisite. Value 2 lakh. Oh, what if they take you 20,000 from you? Then 1 lakh 80. Simple. Yes. Your friend says, listen, I'll treat you. The bill is 500 rupees of yours. He takes 100 rupees from you. 400. So benefit is 400. Are we okay with this, guys? So I'm just listing on perquisites. Very, very simple. The simple ones we want not even talk about. The difficult ones we'll talk about. First one is clubhouse, guys. What is it? Who's paying? Who's benefiting? Slave. Next is credit card. What is it? Guys, credit card, who's paying for all the expenses? Master. Who's benefiting? Slave. Guys, everyone, EY has given you a credit card. You entered in some shopping on Myntra and EY paid it. Rare case, but is it a perquisite? Yes. But you use the credit card to buy office stationery for your office. Is that a perquisite? No. Perquisite means it should be a personal benefit. Repeat, which benefit? Everyone. You're sitting at home, your AC bill, your master is paying. Perquisite. You're sitting in office, your AC bill, your master is paying. Of course, he has to pay. Yes, so it is a personal benefit. What is perquisite, guys? It's a personal benefit. P for perquisite, P for personal. Next, in your house there is a servant, guys. We don't call it servant, we call it house help, guys. What do we call? House help, guys. It's in your house, you should pay the bill. Who's paying? Master. Perquisite. Easy ones I'm not even going to discuss, guys. I'm just going to list them down like this. Next, you have in your house gas, electricity, water. What is it? Electricity, water. In your house, you should pay the bill. Who's paying the bill? Master. So it will be added. Only if master is Tata Power and you're using Tata Power, guys, or master is Bestcom and you're using electricity by Bestcom, then they will add the cost, not the market value. They'll add which value? Example, market value 2000, cost 600. 600. Are we okay with this? Next. Guys, you've taken a loan. Guys, what have you taken? Loan. Important. So important ones I'll discuss in more detail. You wanted to buy a car for 10 lakh rupees. You didn't have the money. Your employer has an option going on that you can take a car loan from EY and they'll charge you 2% interest, where SBI charges 10%. SBI charges? Your EY is charging you. The government says there's a benefit of how much percent? And benefit from master to the slave. So it will be taxable. Guys, what is the loan amount? 10 lakh. What is the beneficial interest? So 80,000 is the benefit going from whom? Master to the slave, which will be taxed. Are we okay? Guys, this loan is not taxed if it's a medical loan. If it's a, and if the loan is up to 20,000. Guys, loan is up to, so your loan is 18,000. No perquisite. 28,000 perquisite. Your loan is a medical loan. Doesn't matter how much amount. Yes. And guys, which rate will we compare? Always the employer's rate with the SBI rate. Which rate? But sir, SBI rate keeps changing first day of the year. First day of the year, 1st April. Are we okay with this, guys? That's loan. So repeating, guys, if in the exam they say loan, then you will see which bank. You'll compare with this rate, your master's rate, and you'll find out the difference. SBI is charging you 10%, master charging you 4%. 6. SBI charging 10%, master is also charging 10%. SBI is charging 10, master is charging 12%. Change your employer. Yes. Something wrong there. Yes. He doesn't like you. Alright. Anyway, so this is loan at beneficial rate. Only if it's a benefit, it will be a perquisite. Alright. Next, ESOP. What is the next one, guys? Employees stock option plan, or also called sweat equity shares. What are they called, guys? Literally, guys, you work with Swiggy. Swiggy has said that, listen, I'll give you shares for 10 rupees. How much? Today market price, let's say not right now, but let's say the market price is 100 rupees. You're getting it for how much? 10. As you said, definitely I'll take it. You took it. And now tell me your benefit, guys. How much is the value right now? 100. You got it for? So what is your benefit? Going from the master to the employee, that is tax. Now, guys, you pay tax on the 19 salaries. Now you want to sell the Swiggy shares for 400. What is your cost? 100. Because you already taxed on 100. Are we okay, everyone? Repeating. ESOP. Your master says pay 20 rupees. The share is worth 50, but I'll take only 20 from you. What is your benefit? 30. Now you got the share, it's with you. You paid the 13 salary tax also. Now you're selling that 50 rupee share for 70 rupees. 20 will be taxed under capital gain. Are we okay? Like sometimes the cost, actually you don't pay the entire cost, but whatever you're taxed on becomes your cost. Everyone. Alright, ESOPs. And this ESOP entire taxability happens only when the shares are allotted. Only when you say yes, no, whenever the shares are allotted. Guys, just reality, ESOPs are not given on day one. When you join Swiggy, guys, they will not, otherwise you'll take it and you leave in 5 days. Before the Swiggy delivery comes, guys, you'll leave. So, guys, they don't trust you. They give it to you with the thing that will allot you after many 4 years, 5 years, etc. That's called vesting period. What is it called, guys? Vesting period. That is a period where you work hard. Alright. Next. Education facility, guys. What is it? Everyone. Sir, education allowance is already done. Yes. Allowance means they've given you money. Here they've not given you money, they paid your fees. They paid your, guys, you want to do higher education. You're the employee, you're the slave, you want to do your MBA, fees is 20 lakh rupees, master says I'll pay. Who's paying? Who's benefiting? Slave. But this is not taxable because they say that you will get smarter, the company will get smarter because you'll work for the company eventually. Yes. Your wife is also doing some higher course, interior designing course, and the master pays. That is a perk. Your children are also going to school. And who's paying the fees? Master. Again, you'll add it. Everyone. It's very simple, guys. Imagine the entire family, guys. You, your spouse, children, all are doing education. Who's paying? Master. For you, there's no purpose. Because you will get smarter. The company will get use your smartness. Wife, spouse, children, etc. It will be added. Example, guys, your child's school fees 3 lakh rupees. How much? Who's paying? Master. It will be added. Guys, because master is paying your benefit. How much will be added, guys? 3 lakh. But guys, what if you work in Reliance and your children also go to Reliance school? Then manipulation, guys. 1 minute. I'll tell you what manipulation happens. Your children are going to which school? Reliance school, and you work with? You tell Reliance, when they ask you know how much you paid fees or how much is the fees, say 3 rupees a month. Government is like, you can manipulate it. So I'll not ask you. Reliance, if you're working in the same company and you're sending your children to the same school, they ask for neighboring schools. So if Reliance is saying some other amount, they'll take the neighboring schools. Are we okay? Complicated? Let's recap. All schools are third party schools. 3 lakh fees. What will be your perquisite? 3 lakh. Paid by whom? Master. You are working with Reliance and it's a Reliance school. Then they will not even ask Reliance. They will ask neighboring school because this can be manipulated. Are we okay with this, guys? Yes. Alright. The government wants the perquisite value higher or lower? Higher. Because higher the perquisite, higher the income, higher the tax. So that is education facility. Now, medical facility. Which facility? Guys, what is the difference between medical allowance and medical facility? Medical allowance means I'm giving you 1 lakh. You're coughing too much, here is 1 lakh. Go to some doctor. You can do whatever you want in that 1 lakh. That is allowance. But they say, listen, you're coughing too much, go to a doctor. I'll pay the doctor's fees. That is medical facility. They say medical facility, we will not tax only if you send them to one hospital. GMC hospital. Which hospital? GMC. Like Apollo hospital, there's a new hospital which is GMC, shortcut. What is G? Government. So if it's a government hospital and they pay, no purpose. M. You work for Reliance, it's a Reliance hospital only. And C, commissioner approved hospital. In these 3 hospitals, guys, are you getting medically treated? Yes. Who's paying for you? It will not be. Yes, it's in the quick book, guys. Medical facility I'm writing here, guys. What if it's GMC? G for M for and C for commissioner. In that case, guys, who's benefiting? Slave. Who's paying for it? Master. Still, it will not be a perquisite. And any word like private comes in. Private doctor, private clinic, private hospital, it will be taxed. Are we okay with this, guys? Yes, yes, yes. This has come in the paper. I'll give you the exam question. You are working in a hospital, guys. You are working in a, and your son got treated in that hospital. 1 minute, guys. Let's put that Mrs. A. She's working in True Care Hospital. Which hospital? Exam question only. And her son got treated surgery in True Care Hospital worth 60,000 for free. So let's go to basics. Who's paying? Master. Who's benefiting? Slave. So is it medical facility? Then check for GMC. Is it master role? Yes. Then take the benefit, will not tax. Are we okay with this? Yes. All right. Now medical, this is medical facility in India. Where is this medical facility? Then there is medical facility abroad also. Where are you going, guys? Abroad. Serious. Now medical facility abroad means something seriously is wrong. So the government said, listen, yeah, I know something seriously is wrong. So don't worry. STT. Guys, what is the shortcut? Are you going to stay abroad? Yes. Are you going to travel abroad? And are you going to get treatment abroad? Everyone, STT. Stay, travel and treatment. Where? Abroad. Then the government says, okay, if the state travel treatment is abroad, then whatever the master is paying, example for state travel treatment, 2 lakhs, 2 lakhs, 2 lakhs. How much? Who's benefiting? Slave. Who's paying? No purpose. Because it is a grave. It's an expensive thing. Let's keep the number as 5 lakh, 5 lakh, 5 lakh. How much? 15 lakh. Who's paying? Master. Who's benefiting? Slave. No problem. Only thing, it should be the 2 conditions fulfilled. It should be within RBI limits. What is? RBI limit is 14 lakh. Then we'll not tax 14 lakh, we'll tax 1 lakh. It should be within which limit, guys? And second, guys, what if people fool the government? What if you want to go for a foreign holiday to Canada? You want to see snow, etc. there, Canada, you have friends, and your master is paying, but it will be taxable. So you fool the government saying, I went for medical treatment. They say, this travel, which part? We will not tax you only if your gross income or your income is up to 2 lakhs. Everyone up to? Everyone's income is up to 2 lakhs. So indirectly, guys, people have fooled the government. Gone to Singapore, full holiday, all Disneyland, Hong Kong, Disneyland. Full, they've taken pictures on the amusement park and they're saying we've gone for medical purposes abroad. So guys, 1 minute, what happens in both the cases? 1 minute. Who's gone abroad? Slave. Who's paid for the bill? Master. Is it a perquisite? The slave doesn't want to get taxed. So he said medical purpose. The government says everyone's fooling. India's a good hospitals, everyone's traveling. And everyone's putting pictures on Instagram. Government saw those posts. So then the government is saying cancel it. Travel will be taxable unless your income is only up to 2 lakh. So repeat, guys. STT. State travel treatment. Where is it happening? Will you be exempted? Will you be taxed? No, you will not be taxed. For stay also, travel also, treatment also, 2 conditions. RBI elements, and second, if it's travel, then your income should be up to 2 lakhs. Yes, which is obviously not the case. Everyone's general income is. I'm not saying students also expected to have 2 lakhs income, but when you're working in a company, guys, you will get 2 lakh income. Yes, I think. Yes, I'm very confident. Yes, and other sources also totally 2 lakh. So basically, what they've done in one stroke, they've said that if you're going abroad, we will tax you. Unfortunately, yes. All right. That's medical facility. A lot of perquisites done. Let's take stock, guys. Clubhouse, credit card, servant or house help, gas, electricity, water, loan, ESOP, education facility, medical facility. Very common, guys. Your employer pays for your health insurance premium. Which premium? That's good, no? And if you're healthy, you'll come to office regularly. That's a way of remembering, guys. So that's not a perquisite. Whose insurance? Slave. Who's paying? Not a perquisite. Health insurance. But life insurance premium? It's a pro. Some student argued, sir, life insurance is also good, no? Because if you're alive, you'll go to office. Yeah, but I'm trying to put a shortcut, guys. So health insurance is not a perquisite. Life insurance is a perquisite. This has come in the exam. Life insurance premium of the employee paid by the employer. Perquisite. Health insurance? No. Your telephone at home, your Wi-Fi at home, guys, you are not paying the bills, master is paying. No perquisite because work from home. So he has to pay. Yes, everyone. Even if it's not work, that's a logic, guys. Even if it's not work from home. So everyone, I'm just writing here, health insurance, not a perquisite. I'm just writing here life insurance instead. Life insurance, perquisite. Health insurance, not a perquisite. And Wi-Fi, telephone, not a perquisite. All right. Anything else? I want to go to accommodation and car in some time, but right now I'm here. What's that? Yeah, lunch, dinner, coffee, tea. Yes, everyone. All right. So one of the reasons why you would join a fancy office, you get very good perks. Like your tea, coffee is good, snacks is good, lunch is good, and if it's evening job, then dinner is also good. The government says, don't worry, eat as much as you. Go sit in the cafeteria only and work. No problem. There is no perquisite. You can have a number of teas, coffee, etc. No problem. Who's paying for it? Who's enjoying the benefits late? But no, guys, because the government, they could have taxed, but how will they tax? Who will stand next to the coffee machine counting, let's say 4 coffees at 40 rupees to his income? So the government says lunch, tea, coffee, snacks, no problem. But then they had two conditions. They said in lunch and dinner, guys, they had a condition. They said that if it's more than 50 rupees, more than per meal, then excess will be taxed. Yes, I know it's a very small amount, but small amount, guys, hostel 300, education 100. So we know small amounts. Yes. So lunch and dinner 50. What is the lunch and dinner? 70 rupees. 20. Sir, who's keeping a check? Generally, they don't keep a check. I'll tell you what happens practically. In EY, the lunch is 80 rupees. How much? They know how many employees will be taxed on? 30. Very painful. So they make employees pay 30 rupees. So how does it work? Benefit total 80. What is the total benefit? How much have you paid? 30. What is the net benefit? 50. Not taxable. Are we okay with this? So we used to do that at EY. We had to buy a coupon of 30 rupees for lunch. Now, why was that? The lunch, the caterer would charge 80 rupees. 80 is my benefit. How much have I paid? What is the net benefit? 50, hence not tax. Are we okay? Otherwise, guys, 30 rupees to add to our income. Very painful. Yes, so this is the way people do it. This HR and all, they do this. Yes. All right. So this is lunch, tea, coffee. Lunch, tea, coffee, snacks. Now, if you're in remote location, which location? KGF, some gold fields, gold mines, very, very far away from everyone, guys, you are, or some other place in Rajasthan, some desert place, etc., very far away. Then, guys, who's going to give you tea, coffee there, lunch? So, master has to give you. So, in that case, no purpose. No 50 rupees, no 80 rupees, no purpose. In which location? Remote. So, giving an example, tea served in office, coffee, snacks, no purpose. Lunch, above 50. Lunch in remote location? No, fully exempt. Are we okay with this, guys? Yes. Yeah. Keep reminding me any other purpose.
Per meal. Is it
Per meal 50, yes. Per meal only. Aggregate meals 50 meals. 50 per meal is also very low, I think, nowadays. Yes. Idli vada.
We do not get idli vada also.
Yeah, we get. No. I had masala dosa yesterday, such a nice one for 40 rupees. I wanted to post it online, but also students, please go there. Yeah, it's so cheap for students. It's a great thing. And it's a nice to enjoy. Nagaroni. Next time I go, I'll post on social media. Yes. Leave travel. How can we forget that? Before that, holiday, guys. What will we talk about? Holiday. So let's increase this here. Holiday. You are going to go on a holiday, guys. You stay at Taj Resort. Where are you saying? Taj. 4 days, 40,000 rupees. Master says, I'll pay for it. Very generous. Master is paying. Who's benefiting? State perquisite. Government is also smiling. You are going to go. Who's smiling? Government. Because when you add it, they'll get what? Tax. Everyone okay? You've gone from business conference to go. Then no. It has to be which benefit? You work at Taj Hotel and you stay at Taj Hotel. Then they'll not check with Taj only. They'll check with similar. Are we okay? Like that's cool. Then was 2 minutes. We'll take the question up as well. That is holiday, guys. Next, LTC, leave travel concession. Guys, it's important to take leaves, and the government has recognized that. They say that in a span of 4 years, in a span of, if twice you travel, let's say, guys, in a span of 4 years, let's say you work in Bangalore and you want to travel, let's say to some far off place, so let's say Manali. Where are you going to? Manali. Or let's say where direct flight goes, guys, Delhi. So you're in Bangalore and you want to go and travel where, guys? Delhi. You want to see Delhi, and you, your spouse, and 2 children are traveling. How many people? 4. And you have to do air tickets. Your master says, don't worry, these air tickets are on me. Who's paying? Master. How much? 40,000. Is it a perquisite? Yes. So first you'll add how much? But the government says, don't worry. In a span of 4 years, if you do it twice and the master is paying it, we'll not tax you. That means how much will you first add? And then you'll get an exemption of 40. That exemption is called leave travel concession. That's why most government employees, guys, they travel India. But this exemption is only when you're traveling in India. Everyone, conditions. The travel should be in India. The travel should be shortest distance. Bangalore to Delhi. Now you cannot go Bangalore to Chennai, meet some cousins there. Chennai to Bombay, meet that long lost aunt there. Yes. Then Chennai, Bombay. No, it has to be shortest distance. Yes. And you can choose any mode of transport, but in flight, they'll give you exemption only for economy class. Yes. What if you only travel business class and your employer also gives you business class? Then you'll add business class, but exemption will be only of economy. Yes. So only within India, shortest distance, economy class for flights. Otherwise, all deluxe class and all. And main, guys, it's only for 4 people. How many people? 4. Let's talk about the 4, which is complicated. You, your spouse, and 1 child. Life is good. You, your spouse, and 1 child. How many people? 3. You, your spouse, and 2 children. Okay. You, your spouse, and 3 children. No. Delhi only 4 will go. 1 will lock at home, guys. Keep food and lock at home. Yes, no. You will take 5. So my employer will pay for 5. So how much will you add? 50. But exemption you will get only for 4. Now let's complicate this even further. You, your spouse, and 1 child first, and then twins later. The government said, what happened? The twins happened. What happened? Twins happened. Now, 1 minute. Guys, you did not plan to, you cannot plan twins. What happened? Now the government says, how many people in the house? 5. They'll give you full 5 exemption because the second twins you could not plan. But you, your spouse, and twins. Now how many people already? 4. Stop. Small family, happy family. Small family, but guys, 5th person happened in the family. Then they say exemption only for 4. So repeating, guys, first single child is good. Then twins, no problem. First twins. Then stop. Then stop. Small family, happy family. Yes, everyone okay with this? Yes. All right. So LTC is this twice in a block of 4 years. But sir, I travel every year. No problem. Employer pays for me every year also, but exemption can be taken only for 2. And in case you can't take 2 exemption in 1 year, 1 can be carried forward to the first year of the next block. That means, let's say in 4 years, twice. I could not take it once. That 1 will go to the next block, but in the first year. So next block I will get how many? 3. Alright. Exam question, guys, could be that you are traveling somewhere in India. So first you will add and then you will exempt. Yes, everyone has not come before yet, but yeah, you never know. Alright, so that's LTC. Anything else? Yes. Movable asset. Let's talk about movable asset. Actually, salary is nothing but perquisites only, guys. Yes, otherwise the chapter is all good. Even this is all good. I'm telling you, when you see the sum, you'll be able to easily find it. Movable asset. Guys, you work in an office, they give you a laptop. What do they give you? They give you a mobile phone. The government says no problem. LMJ. What is it? LMJ. Laptop, mobile, journals. Repeat. Laptop, mobile, journal. Who's paid for it? Who's using the benefit? Slave. Even if you watch Netflix on the laptop on weekend, guys, no problem. LMJ, they will ignore completely. They use. But let's say there is a project, or let's say forget projector. Employer has given you a car. What has employer given you? And you for office purpose, but you take it for personal. Or forget that. Let's say projector only. Employer has a projector. What does employer have? You've taken it home and you put it in your house, guys. Is the personal use? Yes. And that is a perquisite, guys. Who's paid for it? Master. Who's enjoying the benefit? Slave. So that is a perquisite. Whatever the projector was bought for, you'll take 10% of that original cost. So projector for 1 lakh. 10,000 will be added to your salary because that's a benefit coming from the employer to the employee. What is every year? Till when? If you use it only for 6 months, I'll add only 5,000. Depend proportionately. Yes. All right. Guys, what if the projector has two values, market value also and original cost also? Original cost. What if the projector is not owned by the master? He also rented it. Then whatever rent is paying is actually for you only. So that is a benefit in your hands. Focus. Yes, everyone. This is called use of shortcut LMJ, laptop, mobile, journal. Are we okay with this, guys? Yes. Now, 10% of original cost per year will be taxable. Because see, there is some asset you are using of the employer. So we need to add some amount. What amount can I pay? I cannot add the whole projector value. So it's, yeah, but see, projector will last for 5-7 years. If I add first day only everything, it's not fair. So 10% of the value this year. Yes. If you use it for 2 years, 10% this year, 10% next year. Yes. On the original cost always. Yes. All right. Now, guys, I told you about it that PwC had this policy. They would give a BMW car to the partner or to their high level employees. Now, let's say you get a car from your employer. Can you use the car? Office purpose, no purpose. But you're leaving the office. You say, listen, yeah, I like the car very much. I have my sticker on it, etc. I want to buy the car. I want to. This is not use of mobile asset. This is sale. This is what? Sale. This is no problem. The BMW car or whichever car, let's say, was bought for 50 lakh. How much? The depreciated value today, depreciation of 20 lakh. So 50 minus 20 or 10 lakh. 50 minus 10, 40. The value is now for 40. He said, okay, I'll give it to you in 5 lakhs. How much? Is there a benefit? How many lakh? 35 per customer. Benefit going from the master to the slave. Let's take another example. Another car 20 lakh. How much? Depreciation 5 lakh. So 20 minus 5, 15. He says, I'll give it to you for 2 lakh. 13 lakh is the value. Yes. So whatever benefit you get is a purchase. Are we okay? So what value will you take first? Original. Then will you depreciate it? Yes. And the depreciation value will compare it how much you're selling. Now the only problem here is depreciation rates are not the same. You know, in car and PGBP, what is the rate? 15. Here is not the same. I'll tell you the rate. See, only 3 rates. One on computer, laptop, anything with memory. Anything with memory. Yes, 50%. So with laptop and all, there it was. Here it is 50. Guys, there motor car and all 15. Here it is 20%. And all other assets 10%. So 50, 20, and 10. Are we okay with this, guys? So laptops and all 50. And motor cars and all 20 and others 10. Are we okay? Let's do a sum on this, everyone. On the screen, I'm giving an example. Let's say your employer bought a car for 50 lakh rupees. How much? And guys, he used it for 2 years before selling it to you. How many years? So what depreciation will you take? On motor car? 20%. Yes. So please do 50 lakh into 20%. 10 lakh. How much is that? 40 lakh. On 40 lakh, 10%. 20%. 8 lakh. How much? 32. The WDV is how much, guys? 32 lakh. And let's say he's selling it to you for 30 lakh. 2 lakh is a benefit which will be added as a purchase. Are we okay? So, guys, new depreciation rates 50, 20, 10, 5 to 1. Any shortcut? 5 cars, 5. No shortcut. It's slightly higher actually. It's slightly higher. That could be the rate. Laptop 40 year 50. Motor car 15 year 20. Slightly higher, guys. Here. Alright. And there, guys, remember half year, full year. That is not here. That year is completed. Here it is. Your employer used it for 2 years, 2 months. Only 2 years. 2 years, 9 months.
3 years.
2 years. Only completed years depreciation. Yes. 3 years, 6 months. You don't have to round off. Just whichever is completed, take those many years and calculate that's many depreciation. Everyone okay? LMJ is not here, guys. LMJ is only in use. Everyone. So let's segregate the class. Use and sale. What are you using? LMJ. No problem. Use it only for personal purpose. Make all the calls from that phone to your friends. No problem. Others 10% of original cost. Yes. That is use. Sale. First find a depreciated value. How will you find a depreciated value? 50, 20, 10 based on completed number of years. Yes. And here, guys, the asset is the shortcut is a 10 trade. What is the shortcut? Example, guys. That car is now 10 years old. How many years old? Guys, the car, every time it starts, 10 minutes it drives, 10 minutes it stops. It's very old car. The government says, listen, after 10 years, if you're selling the asset to an employee, also no purpose. Let him enjoy it. Even there's a benefit, will not tax. 10 trades. And guys, the car is a Hyundai car and you're Hyundai only. Which company? Hyundai. And which car is the car? Hyundai. Then no problem. The projector is for Epson and you're Epson only. So if you trade in that goods, then there's no purpose. Can we recap slowly? For sale. Guys, I am working at PwC. That PMW car I want to buy from them. First, which value will you calculate? WDV. The WDV of the BMW car is 32 lakh. I am buying it for 20 lakh. 12 lakh is a purchase. Are we okay? That BMW car I am buying after 14 years of use. No purchase. It's not PwC. I work with BMW. No purchase. So 10 trades. 10 after 10 years, and if you trade, manufacture that product, then there's no purchase. Years doesn't matter. So 10 and trades both are separate. Yes. Alright, I know guys it's too much, but guys this is perquisite and it's not so detailed in the exam. First of all guys, salary questions hardly asked in the exam. Last 2 attempts they've been asked, but of course there are optional questions. But even then, I'm telling you, if you know SAP and SEP, basic knowledge of SAP and SEP, and I mean basic means really basic, you'll get the answer. Only thing is now guys, only last focus that I want to discuss is accommodation. There is a small change there which has happened, so I want to discuss accommodation. Everyone on the screen. Guys, accommodation means what? House. Accommodation what? Who's giving the house? Master. Who's paying for it? Master. Who's enjoying the benefit? Slave. So is it perquisite? Yes. As we'll divide the house into 2-3 categories. First, it's a government employer. Guys, who's it? Let's say you work for the government, you work for Indian Oil, Indian Railways, etc. Then it's a license fee. Which fee? This is so simple, guys. If the license fee is 1 lakh a year, 1 lakh, 2 lakh. How will you know the license fee? They'll tell you in the exam. Yes. So if it's a government employer, license fees. Very simple, very simple. Second, if it's not a government employee, let's say it's PwC guys. Who's giving you the house? PwC. PwC said, listen, you're in Bangalore. Don't worry. Don't search for a house. I'll give you accommodation. Just go there and start staying there. Guys, who's paying for it? Master. Who's enjoying the benefit? Slave. And it's owned by PwC only, guys. That accommodation is owned by who? So now, guys, in Bangalore, the accommodation is owned by who? PwC. The house is worth 1, 2, 3, 4 crore rupees. We can't add 1, 2, 3, 4 crore rupees. So they say, we'll take it on as a percentage of your salary. As a percentage of what? Salary. We'll talk about it, everyone. First, who owns the building? PwC, master. And are you staying in that building? Yes. So is it a perquisite? Yes. Now, what amount do I add? They say that depending on the population. If it's a city like Bangalore, will it be expensive? Yes. So it is 15% of your salary. How much percent of your salary? 15. If your salary is 10 lakh, let's assume your salary is 10 lakh. How much will it be then? 1 lakh 50. If it's a smaller city than Bangalore, let's say Mysore, then they say it will be 10% of your salary. How much percent of your salary, guys? 10. And so there were different rates. These rates have changed now. So I'll tell you old rates also, new rates also. But just remember, it's a percentage of your salary. The percentage I'll plug in, otherwise you'll get confused right now. Everyone. Government license. If it's owned by the master, percentage of your salary, remember 1% guys, 15%. How much percent? This is in most crowded cities, guys, because the more crowded the city, the more expensive is accommodation, so more valuable will your perquisite. Yes. If you're getting lost, it's a natural. Don't worry. When we solve a sum, you'll get a better grip on it. Next, third, if PwC does not own the house, guys, they've only rented the house. That means, guys, in Jayanagar, they've only taken on rent and they've given it to you. So are they paying your rent? Yes. So rent paid. What is it? Rent paid, or sometimes the rent can be very high. So the government says 15% of salary. How much percent? Whichever is less for a change. First time, whichever is less. I repeat, everyone. The numbers have changed. I'll give you the new numbers also. But right now, guys, this is the number. Everyone, from a Jan perspective, this number is also useful. Yes. Everyone. PwC has taken the apartment on rent. So it is a rent paid or 15% salary, whichever is less. Everyone. Okay. Now, fourth. Guys, they've not given you an apartment. They've given you a service apartment. Which apartment? That means someone comes and makes the food, someone cleans everything, or they've given you in a hotel. Guys, this is called service apartment. What is it called? Or a hotel. Guys, then in that case, a hotel always has 24 floors. Repeat. Hotel always has. So the rent that they are paying to the hotel, or 24% of what, guys? Salary. Why 24? Because the hotel has, and logic, guys, hotels are more expensive. So hence 24% of salary. Everyone. This is difficult, and that's why I'm bringing one of the end accommodation perquisites. Yes. So government, if it's owned, 10% of the salary, 15% by hotel. If it's rented, rent paid of 15% of salary, whichever is. But sir, it should be higher. Yes, exception. And last, guys, if it's a service apartment or hotel, rent or 24, whichever is less. And last, guys, what if they give you furniture also in the house? This we've already covered. Guys, yes, furniture is movable asset. What is furniture? Guys, remember movable asset, they take 10% of the original cost per year. Now, guys, some exceptions. You are in Bangalore, Amazon, you work with Amazon, and Amazon saying, listen, we need to shift you to Delhi. We need to shift you to. Now, in Delhi, you can't find an accommodation in 1 day. So, up to 15 days if they give you a hotel accommodation. Up to how many days? So, I'm writing next to the hotel, I'm writing up to 15 days. Up to how much, guys? That's an exception. What is it? Up to how many days? 15, there will be no purpose. Because, guys, in Delhi, how will you stay? Where will you stay? So, up to how many days? 15. Who's paying? For whom? But it will not be added to your salary. Up to how many days? 15. If it's above, then the above will be taxable. Next, if it's a remote location, which location? Guys, KGF, some place in Gujarat, Rajasthan, in the very remote areas, no accommodation only. So who has to give you accommodation? Master. Who's paying? Master. Who's enjoying? No perquisite. So as a pro tip, in remote location there is no perquisite. Yes, not even food, not even accommodation. And last, guys, sometimes they give you two accommodations. How many accommodations? So what will a person do with two houses? One house Bangalore, one house Delhi, because you're moving where? Delhi. Then they say if we give you two accommodation, repeat, if we give you, then up to 90 days, up to how many days? Guys, sometimes it happens that to move to Delhi, you need time. You are here, your house is here, your wife, children need to come out from here and move there. So up to 90 days, they will take one accommodation, whichever is lower. But if you still after 90 days also use both houses, and who's paying for it? Master, then I'll take both. Everyone. So guys, exceptions for hotels up to 15 days. Up to how many days? 15 days. Remote location, no perquisite. And guys, if you have two houses, up to 90 days, they'll take only one house perquisite. After 90 days, guys, while I'm teaching you all this, guys, it's very, very, very simple. It's not so complicated. And I'm telling you something about salary that you might be surprised, but I'll tell you something, guys. When you go into these kind of details of salary, first up, salary is not a very common question in the exam. Even if it is, 90% of the question you'll be able to answer even without going into these kind of details. That little 10% is the worry. And what you're trying to do is, when you do this in too much detail, especially 1 day before the exam, you're spoiling other chapters. So make sure salary is one of the last chapters you do if you're confident of all the other chapters. Otherwise, with basic SAP and SEP knowledge, you'll get 90% of the sum right. And I've already given you the maths. Even the toppers guide gets 60, 70 marks. That means they're also losing on 20, 30 marks. I'm not saying it's okay to lose, but sometimes, guys, you have to accommodate to lose. Otherwise, what will happen while you study this? There are so many other concepts which you lose out. Yes. So this is where I'm ending it. I'm going to give you the percentages. Yes, on the screen. Watch it. But keep in mind, guys, higher the population,
Higher.
more expensive the house, so higher the percentage. So higher the population, higher the percent. This percentage they have changed in the middle of the year, and I hate it when they change in the middle of the year. But I have a feeling they'll give you either end of the year or the start of the year. They'll not give you the middle part. So that means you have taken a house only, a job is only from November onwards. Then you'll use which rates? New rates. You had a job only for April, May, June. Old rates. And if it confuses you, trust me, guys, one of the things that you can give up is accommodation. If it comes in the exam, think of 1% and apply that. If it's rented, you know. And if it's furniture, you know. If it's hotel, 24%, that you know. Some things, you know, 1 point give up. If it bothers you too much, I'll try and still teach you that from the screen here, guys. Yes, everyone watch and see if you're able to understand this from the screen here. I'm taking you to the Word document. This is salary and this is accommodation. Accommodation owned by the master, guys, up to which date? 31st. So when did the change happen? 1st September. Let's see the earlier dates, guys. What is the amount? 15, 10 and 7.5. 15 when the population is high, 10 when the population is mid-range, 7.5% when the population is up to how many lakhs? 10 lakhs. Imagine, guys, on 23rd November, if this looks difficult, imagine opening the sheet 1 day before the exam. Yeah, I know what happens. I know. So this is what people will focus on. They'll walk in the exam by hearting these rates after 3 hours of by hearting these rates. And in the exam, no trace of salary. Yes. So please, a lot of you guys are very smart. You understand what I'm saying very easily. Some of you guys resist it. That no, sir is saying no, but I have to do it. No problem, guys. It's your exam ultimately. Yes. No, no, sir has some ulterior motive. No, I have no ulterior motive. I can keep this on the screen. I can teach you 5 times also, no problem. But I'm telling you, this has come only and only once in 10, 7, 8 years of papers. And there's something else after this. The definition of salary is different. Then after this, you'll go to definition of salary. So it's crazy. But I'm going to attempt and teach you guys what is the percentage. 15, 10, 7.5. I'll give you a shortcut, guys. In the exam, forget population. If they say very populated cities, 15. Very less populated cities, divided by 2, 7.5. And the middle somewhere is 10. Everyone. Can we make a shortcut out of it? We can make life easier, guys. What is the highest rate?
50.
What do they say? Very small town, 7.5. And if it's mid-range, 10. Are we okay? So it's divided by 2.5 in the middle. Next, guys, the new rates. What happened is, guys, salaries have increased now a lot. If they take 15% salary, becomes a very big amount. So they've reduced the percentage, guys. What is now 10? Half of 10. Is it similar, guys? Here also half, here also half. And somewhere in the middle is what, guys? 7.5. So there is method to the madness. Let me give you method to the madness. Earlier, highest, divide, 7.5. In the middle, 10. Now, 10, divide. In the middle, are we okay with this, guys? So somewhere you can make a some logic or some shortcut here, and the population don't by heart it, guys, because it's the only thing you'll remember. Yes. And now the definition of salary, guys. Everywhere the definition of salary was BDC. What is the definition of salary, guys? If I say 10% of salary, it was BDC. B for dearness, retirement, and C for commission percent. Only here, guys, the definition is not BDC, guys. The definition is SAP. Everyone, what is the definition? What is SAP, guys? SAP. First, take all salary. A is allowance. P is perquisite. What are you trying to calculate? So don't take that. The definition is SAP, but don't take perquisite because you're calculating perquisite. In allowance, only take taxable allowance. Which allowance? Let me explain. Traveling allowance 1 lakh. Traveling allowance, spend 70,000. So only 30. Only 30 because taxable. Yes. And salary will take everything except POW. Except what is POW? O is OD. Dearness, not retirement. A is areas of rent you will not take, and P is PF contribution. Yes, means P will not take. PF, areas, and OD. 3 things you will not take. Yes. This is welcome to the Income Tax Act 1961. This is what they do. I'm waiting for the direct tax code because guys, all this will vanish there. They'll make it very streamlined. They'll not complicate it so much. Yes. Anyway, so this is SAP and this is accommodation. Yes, I'm doing it right in the end because it's really complicated. Right now it's 5:25. I'm going to give you 2 minutes to just recap this accommodation part. Yes. In the exam, if accommodation comes, first you'll check population. If they say city like Mumbai, 15%. If they say very small city, 7.5. In the middle, 10. Somewhere we have made peace with it. New rates from 1st September onwards. 10. Half, 5. And in the middle, 7.5. Are we okay with this? Hotel has how many floors? 24. And if it's on rent, you'll take the highest rate. What is the highest rate? 15% or rent. Whichever is lower. And now 10% or whichever the higher rates is. Higher rates earlier was 15. Now it is 10. So we'll take that or rent it for a rented accommodation. And remote location, all that is not important. That 90 days also is not important, guys. Yes. Why I'm saying it's not important, guys, because it's a very small part of your salary sum. Yes. We'll do sums also on it and you'll understand. Motor car I'll not teach you today, otherwise you'll get confused. It has CC and all that, guys. So your CC, yeah. Right now, motor car you're not prepared with. Anything else I want to teach you? Yes. Instead, let's use this time to understand Provident Fund because very common in the exam. Yes. So I would rather have your discussion on Provident Fund. So everyone, Provident Fund is what? It's like a bank account. It's like what? You put money in the bank account and can you remove tomorrow? Yes. Day after tomorrow, can you buy a bike with it? Yes. The government says PF is also like your bank account, but don't remove it now and then. Remove it on retirement. So let's say all of you guys work with EY and EY has opened a Provident Fund account for you. Which account? You'll get a passbook, you'll get a number also. And let's say I work for the government and for the Indian Railways, I also have a Provident Fund. The only difference is my Provident called SPF. My Provident Fund is called SPF, Statutory Provident Fund. Your Provident Fund called RPF, Recognized Provident Fund. Let's first talk about me. SPFs, statutory provident fund. Imagine it's like a bank account opened with the government. So who's keeping that money? Government. And I get a passbook. It has my name on it. It has a PF number on it. Imagine SPF written. Now, guys, my employer, let's say Indian Railways, can put money in it. Who else can put money in it? I can put money. And what do I earn on it? Interest. And after a while, can I remove it on retirement? Yes. Now, my contribution we'll see in 80C. Now, employer puts 1 lakh rupees in it. Guys. How much is the employer putting? The government says, thank you so much. So, first amount going from whom? Master to the slave. It's not come to me, but it's directly gone to my account. So amount going from master to the slave will first be added. So how much will you add? 1 lakh. But guys, who will get to use this money? Yeah, I will get to use after many years. Who will get to use it for those many years? Government. So the government gives me an exemption, the full 1 lakh. What if the master puts 1 lakh 20? Full. 1 lakh 40? Full. So guys, please repeat. Master's contribution. Have your master's contribution fully exempt. I also put money, and then the total I got interest. I earn what? Interest also fully exempt. And guys, after 15, 20, 30 years, I withdraw that money. That withdrawal also fully exempt. Yes. All right. Dhanush will discuss that question. Sorry, I missed it, that ESOP question. But after the PF discussion, I'll discuss that question. All right. So guys, in the exam, SPF never comes. I'll tell you why. Because any amount is, there's no challenge only, guys. In SPF, there's a master's contribution. Exempt means you'll add and you'll minus the full amount. Interest, exempt. Withdrawal, exempt. So they ask yours, RPF. What is your call? Now they say in the RPF, again guys, all of you guys will get a passbook. Your name at the top, recognized provident fund, and there'll be a number like your account. Who's putting in money? Master. Can you also put in money? And what will you earn on it? Interest. And can you withdraw after a few years? Yes. But there are some rules. They say that when the master puts in money, example, your master also puts in 1 lakh. How much? Guys, who's going to use the money? Government. Exempt. You earn interest. That also exempt. When you withdraw also exempt. So here also E. Exempt. 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 You're also exempt. 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 Then sir, why aren't the same? I'll tell you. Your exemptions are subject to a small condition. A small condition. What is the condition? They say, guys, remember SOP? SOP interest, what is the limit? That means, can I pay 2 lakh 10? Yes, but I'll get deduction only because they want to give me a benefit, but only up to how many lakhs, guys? 2 lakh. Everyone okay? Now, same thing they say, master's contribution. Who's contributing? They say only up to 12% of your salary. Only up to, example, your salary is 10 lakh. Let's always keep salary at what lakh, guys? 12 lakh. 12 lakh into, sorry, 10 lakh. 10 lakh into 12%. Everyone, your salary is 10 lakh. What is 12%? So if the employer puts up to 1 lakh 20, there will be no tax. Employer puts 1 lakh, no tax. Everyone understanding? Yes. Employer puts 1 lakh 10. Employer puts 1 lakh 20, no tax. Employer puts 1 lakh 30. Then you will add 1 lakh 30 and you will minus only 1 lakh 20. Are we okay? So please repeat. Is the employer's contribution exempted? Yes. But there's small condition. What is that condition? Up to. And every time you get mixed up with this condition, remember SOP. Easiest to remember. There was a limit of how many lakhs, guys? 2 lakhs. Simple. Here it's not lakhs, it's a percentage. Next. Are you earning interest? Your interest is, let's say, 6%. What is your interest? The government says, I don't want to tax it. 7? No. 8? No. 9? No. If it's more than 9.5, if it's more than, then on the excess I'll tax. Example, your interest is 1 lakh 10%. 10%, that is how many lakh? 1 lakh. They'll say 9.5, that is 95,000 I'll not tax. How much is the excess? 5. So how much will you add interest first? 1 lakh. And you'll minus 95, so taxable will be 5. What if you get 7% interest? No, the government is not interested only in taxing. So basically the government is okay exempting you up to certain limits. Master's contribution, 12%. Interest, and you can withdraw the money also, but after 5 years. After how many years? Government says, let me use the money for 5 years, withdraw after that, I'll not tax you. You withdraw after 7 years, no tax. Withdraw after 6 years. Withdraw in 3 years, then I'll tax you. Are we okay? Everyone. How it works, taxation, whatever the employer has put money, that will be taxed in salaries. And whatever the interest that you earn will go under IFOS. Everyone okay? Yes. So please tell me, SPF, RPF, which has better benefit? SPF. Which has next better benefit? 12%, 9.5% after 5 years. Within 5 years also you can withdraw if it's because of some 3 reasons called DIL. If you're disabled, if you're ill, or if you lose your job. Disability, illness or loss of job. I've put the quick notes. I have the shortcuts in the quick note also, quick book also. And last, guys, there is a company where it's a very, very small company. No one knows about that company. It's a company which has started just few days back. They don't open this account. In the office only, guys, they have a locker. What do they have? Locker. And in that locker or in that drawer, guys, they write URPF. Which PF? Unrecognized. The government has no idea that locker exists, that drawer exists. And you're the employees all are working in URPF in that company, guys. He puts 1 lakh rupees in that URPF. He puts how much? He says, listen, I'm not going to the post office to deposit, I'm putting it here only. Now tell me, guys, is this money going to be exempt or going to be taxed? Tax, but it's not come to you yet. It's where? In the locker. In your hands, is it taxable? No. Right now, no exemption also, no tax also, because it's not come to you yet. He opens the locker next year, he puts interest also in there. No exemption, no tax, because it's not come to you. When you're leaving the company after 7 years, you say, listen, open the locker, give me my money. He opens the locker and he gives it to you guys. Fully taxed. Why no exemption? Because the government has never seen their money. So why will they exempt it? So fully taxable. Whatever has come from the employer, salary. Whatever interest, IFOS. Guys, can we repeat? Everyone, this is important. Let's take 5 minutes, but we need to figure this out really well. 3 kinds of provident fund which will never come in the exam. SPF, because exempt, no challenge there. Yes, it's like ROR. Yes. Next, RPF, recognized provident fund. First, whatever they contribute, you will add, and you'll minus only 12%. What if they added 1 lakh? Add 1 lakh minus 12%. Interest 9.5 and withdrawal after 5 years. And guys, URPF, everything is not taxable till you receive it, then it's everything is taxable. So in URPF, there is no exemption. Why? Because government doesn't use it only, so no exemption. Government can only exempt it when they get some benefit from it. Yes. So this is 3 things that you should understand. Arrears not important at all. That arrears of salary, guys, not important at all. You don't do it, walk in the exam hall confidently, walk out even more confidence. I'm telling you because it doesn't come. They don't have the marks to give you a 35 marks. And salary, it's a fantastic chapter because CA final it never comes. Trust me, CA final, this chapter of salary, I'll tell you 2 chapters which never come at CA final, as salary and house property. How I feel bad because house property is nice, it should come. But salaries they don't look at only. Because at CA final, they're focused not on individual. They're focused on companies. So they'll ask questions on PGBP, capital gain companies. So I'm very happy at CA final, there is no, it's a part of your portion but doesn't come in the exam. Yes, all right. So that is salary, that is PF, that's about it. Yes, I know it's 7:35, but I have discussed salaries with you. Sorry, 5:35. I need a break. Yeah. What we will do is we'll just do one sum after. I'm going to take like 2-3 minutes break here, 5 minutes, and then once you come back, we'll do one nice big sum on salaries, and you yourself will understand that it is without going into all these complications. 90% of the sum you'll get right. That little extra 10% you might have a problem, but guys, okay, let's say full-fledged salary sum comes. Yes, 5 marks. How many sums? 5-6 marks. Let's say you know 90%, guys, you'll get 4 marks. I know people who write 100% and they're at 60% on the marks. Yes. So if it's a battle that you don't want to win, guys, this is one battle you don't want to fight only. Because I know, guys, while I'm teaching 6 months before the classes, also it's great to learn salaries. 3 months before salaries is great. 1 day before exam, guys, salaries is a nightmare. So what we can do is you can watch the revision video, and I promise you, if you know SAP and SEP well, guys, 90% of a thing will be right. Yes. Now, beyond this, guys, there's something called retirement benefit. What is it called? That means when you retire, you get some money from the company, like gratuity, leave salary, all those. Now, I'll tell you some simple shortcut for that, guys. In retirement benefit, while you're working, if you get any benefit, example, I'm working at EY, it's been 5-6 years I've been working, I've not taken leaves. So all those leaves I collect and I take it in one. That's called leave salary. Are you in job? Everyone, are you still working? No exemption, guys. Any retirement benefit, repeat with me, any retirement benefit while you're working will be fully taxed. They say you are a job, no, you can pay taxes, everyone. Only when you retire, those retirement benefits have some exemptions. I can share a document with you, you can read it at your own risk. Because again, guys, it's a very, has it come in the exam? Yes. In the last 10 years or in the last 10 papers, it has come once or twice for about 1 mark, 1.5 mark maximum. Now it's something that you can do. I'll share the document with you. Read it. If you have doubts, happy to help. But I'm just telling you again, guys, you're not studying for 23rd of November. You're studying for that one day before the exam. Yes, and sometimes it is retirement benefits versus full income tax act 1961. Yes, so again, it's a very delicate balance. I would happily not do retirement benefit. In fact, I can't call that ranker here and make him talk. But this ranker who got the 31st mark, he was telling me, sir, I didn't do anything beyond your notes. Handed a note, sums, and I walked in the exam. I said retirement, he's like, I didn't look at it only. And didn't come also. So is it important? Not at all. But will you still want to do it? Maybe at your own risk. I'm happy to help you if you want. That sir, I didn't understand this part of gratuity. You read it. I've explained it very easy, handwritten notes. You can do it, but it's not important. Yes, we'll try and see how it comes when you are in the job. Example, guys, in the exam, Mr. A is working for PwC. Where is he working for? He has got leave salary of 1 lakh, fully taxable. Fully, while you're in the job, any retirement benefit fully taxable. Everyone okay? Yes. All right. Let's take 5 minutes. Let's see one sum, and then we'll probably end the session by about 6 o'clock. 6:05 we'll end. Yes. 5 minutes for it. Then I was just looking at your question. In ESOP, from employee point of view, if he sells shares, what will the cost be in capital gain? So whatever he was already taxed on, that becomes his cost. Example, Dhanush, ESOP was for 100 rupees. You got it for 10. So you paid 10, you were taxed on 90. So 90 plus 10, 100 is your cost.